this panic winds down, then people will be able to sort out, what sort of bailout.
This market is still pulling back, man. The Boeing is dumping. Oh my goodness.
To the airlines, and then what will the terms be?
And so that's let me put this down on YouTube. All right, good. All right. We are live. All right. So we got one or two people in the building here. I know you guys are busy on this hump day. Again, try to get some of this this Fed money, right? Run that Fed money, right? Don't come over here without that trick, right? All right. So again, today is a very great day to be invested in the markets. When I say invested in the market, I mean understanding what's going on around you, learning from a place of just sitting on the sideline sometimes, just watching the market, how it reacts, seeing how it responds to certain news reels, certain sound bites that's coming out of the White House, anything that's coming out of the Federal Reserve, how they're trying to pump more money into the market to stabilize it. This is a great moment to sit still and just watch all this stuff unfold. And if you do have enough conviction and courage to jump in the market and trade it, or even take some positions long, then understand that you're up against a big headwind now with this coronavirus. So be very methodical and be very solid in what you choose to trade, right? So again, above all things, we preach discipline over here, and we preach due diligence, right? Those are the two topics that we always going to discuss above all things when it comes to investing and trading the markets, right? Due diligence and discipline. All right. So with that being said, guys, I have some errands to run. I do have my screen. I'm gonna share my screen and let my trades run. You guys know how I've been trading lately. We do have some family on the panel too. We have Over Chaos Rain in the house, and we also have Over Chris in as well. So if you guys do want to come on the panel today as well, as always, I did post a link in the back chat. You might want to come on and discuss some of your trades, what you might be looking at, what you think about looking at. You might want to discuss some stuff dealing with the coronavirus. You might be discussing some stuff that might be dealing with your community, for response things that dealing with the coronavirus in terms of treatment, test kits, this, that, the third, whatever the case. But more importantly, the floor is open for you guys to come on as well as always and share what you got going on, right? And so I should be back within about an hour's time frame, somewhere around there. Then I'll kind of finish out the rest of the day, definitely going into the power hour, which will be pretty much very interesting. Looking at where the market's at right now, we're getting ready to break some key levels here. We've already broke that 235 handle. Some of you guys may not be familiar with that, but the 235 handle, 235 handle on the S&P 500 was that 50 level retracement level on the Fibonacci bands, right? That was a major level of support for the markets. And so most of the real big technical gurus out there are already mapping that if we break through that 235 and we can't recover or get back close to that 235, at least close above it, that could be a big problem for the markets at that point. So the next level down would be like 1700. And so again, let's just let that marinate for a moment. For some of you technical, gurus out there, right now we are in what they call no man's land when it comes to the S&P 500. After now just breaking 235. 235 was a major line in the sand. We have the Dow Jones down now by 1,800 points and going lower. We got the S&P 500 down by 189 points right now. NASDAQ down by 486. I'm pretty sure y'all guys are seeing it on y'all side anyway too, so you don't need me to pretty much narrate that. But also we have a very, very important stock in Boeing. Boeing finally broke below 100. Boeing finally broke below 100, which is very vital because again, we know that they're pushing to try to get some of that bailout money too. And they just again tapped into a $13.8 billion loan and maxed it out. So they just, they're at the point now, just like it's like they're just being very reckless at this point. But they're trying to be saved like a lot of the other companies who are begging the Trump administration to beg, pretty much bail them out. Right. So we'll see how that pretty much works out in the end, because today they had a very important press briefing live around about 12 o'clock. Some of you guys might have caught it. It was a lot of good information dropped. When I say a lot of good information, meaning for what we need to know to protect ourselves and what may be beneficial to us. Not so much of these corporations. I'm not even concerned about that. I'm concerned about you. I'm concerned about me. I'm concerned about what they're going to do for us. Right. So that's what's most important. So we'll definitely discuss that as well as we go along in the conversation. Right. So it's up and running. I do have to run out again. I have a couple errands. The guys going to be kind of in and out, probably talking. Not to say they have to, but I do open the mic up for anybody that want to come on and talk a little bit. So if not, My screen will be shared of the trades I got going on. Well, at least one of them opened the SPY S&P 500. I shorted the SPY today at 245, right? 245, dollars. Obviously, at the point where it was up there 245, I shorted it up there. And right now, obviously, that trade is going beautiful, right? Obviously, I knew 245 was a major level of resistance. It pinged up against it a couple of times. It got rejected. I instantly went short around 245.23, somewhere around there, right? And so right now, that trade is going beautiful in terms of the S&P 500, right? So again, that's what we studied for. That's what we learned for. Now we're going lower. We're going lower as we talking. So let me just shut up and I'm gonna share my screen and let me get my behind out this door and go run these errands so I can get back and hang out with you guys. So peace, power, and profit. My family maniac, I see you in the house. What's going on, family? Chavez, I see you, family. Good to see you. Peace, power, and profit. We have Brandon in the house. Good to see you, Over. Peace, power, and profit. I have my family Sean John in the house. He's back. That's right. What I'm talking about, family. Good to see you, family. Peace, power, and profit. If you want, like, share. If you haven't subscribed to my little channel. Again, I rarely say that stuff because I'm not necessarily a person who's concerned with large gatherings, right? Especially with this coronavirus. But I don't mind you guys. If you find this to be very helpful and some good content, guys, by all means, share it. Because what we're trying to do is just again give a very mature narrative of what we see as far as the market and also what's happening around us from a current event perspective, right? And that matters because again, we are intellectuals in our own right? So that's important. So with that being said, guys, I'm gonna get out of here. I'm gonna turn the mic open to over Chris and over Chaos, just in case they may want to go in on some certain things as far as the market, maybe just again current events, and strike up that conversation, right? And so that's gonna be important. Hey, what's going on, Eva Monica? Right, the illustrious Miss Eva Lamb, Monica Lamb, I should say. Excuse me, is in the background there in the back chat. I'm pretty sure she's busy getting it in too right now. Yeah, you saw about that with that Defense Production Act. Yep. Yeah, I was gonna talk about that. I'm gonna talk about that when I get back too, because I know you was all over that when the VA director was talking. So he was talking too. Him and the Defense Secretary was talking as well. So they finna open up a can of whoop behind, so to speak, in terms of them trying to get ahead of this stuff by activating somewhat the National Guard and actually the Army itself. They actually went ahead and pulled about, I think, 5 million of those N95 masks away from the Department of Defense. That was one of their private reserves. So they're going to turn that over to the actual government to disperse them out to the actual citizens, not necessarily citizens, but like, first responders, people of that nature. Right. So that lets you know it's starting to really ramp up now, because now they're digging into the military reserves in terms of what they may need. And so this ain't just, again, your average, run-of-the-mill kind of scenario where people are now just, thinking this thing just going to blow over in a week's time from now. So again, be cautious, be careful, be serious about what you're trying to do. Even if you don't take this thing serious, guess what? There's more people are panicking around you than maybe you are. And by default, that makes you kind of, have to kind of fall into that level of default in terms of things that you may need. So if you are going out there shopping, be mindful of that. That you may run into some places where there ain't nothing on the shelf because you decide not to, get your stuff early. So again, let's just be mindful so you can protect yourself and your family and get what you need. All right, so that's it, guys. Let me shut up. Let me make my little moves real quick. I will be back. Again, the screen will be open. It will be shared. If you guys, again, want to come on the panel, I did post a link again that so you can jump on the live stream, which is StreamYard here, I guess. And maybe you want to share some of your knowledge. Let me see if I can set this thing up to where, because I think if you have somebody, the banks couldn't handle that. Investors were let me see here. So they weren't buying the MBS. I don't know how it works. If you can make somebody like a admin where they can, add people, because I think the host has to add people to the live if they try to come on.
No, man, you only can do it on Zoom. I don't know any. Streamers has not set up that yet.
Yeah, I'm still learning this thing too. So yeah, you're right. So again, I'll just
do all that stuff. But because the one thing beautiful about Zoom, you can add more people. StreamYard, you got limited. It might give you more options, but you're limited.
Remove. Yeah, I don't see any kind. Not only, I think you do it on Zoom. I think that's what you can only do it on Zoom. But yeah, that's fine. All right, so we're just, again, y'all two kings got it. Y'all run it then till, let somebody jump on before I get out of here.
Go, African reporting, go.
Oh yeah. All right, so that's it, guys. So, again, so that's it, guys. So just, again, y'all got it. I'll be back here shortly. And I hope you guys again, just really go at it and get some good information out. Let me go ahead and share my y'all still want me to share my screen, or y'all gonna share y'all?
Of course.
Go ahead and share.
This is Stock Market Channel.
All right, so I'm gonna share
Monica,
mine.
I know you're down there. Bring it right up here. As the stream starts to show, welcome to African Emporium's live stream, where we deal with trades, options, all the stock markets, news, and events. If you so kindly, if you're listening for the first time, please like the video. Also, share the video as well. Share it to a friend, share it to an educator, share it to a person that wants to know money. You know you do. And always comment at the end of every video. We like to hear feedback. Feedback's very important. We know it's not the ratchets that most of you are accustomed for here on YouTube, but here we deal with the information. It's a learning channel. It's an educational channel. It's a channel that you could share with your loved ones, your children.
I'm back.
Oh,
sorry about that, guys. Can you hear me?
Yeah, carry down.
Okay, my bad. Yeah, still behind. Again, everybody seems like they having issues with the even with internet connections now, and I pretty much got the gig scenario set up, and I'm just having problems. So I can only imagine everybody else going through. This jumbo accurate.
But earlier, I think the internet was acting up earlier when I woke up, and I topped my phone and restarted, and looked like it was working again.
Yeah, so it's one of those things. So again, sorry about that, guys. So yeah, let me get out of here, guys. Again, I'll be back here. Okay. Again, you guys got the floor. The link is in the back chat if you want to jump on real quick. If not, those guys got the floor. Let me share my screen, and I'm out of here until I come back here in about an hour. Share.
Which is a terribly important story. And Kelly, you showed how much.
All right, there you go, guys. So you guys got it, guys. So you guys.
Or request for aid from the Trump administration,
from
the congressional leaders. They would like to see $60 billion in aid.
Look at Boeing, they're begging. They go Boeing begging. I can't even get out the door and Boeing still begging.
70 cents of every dollar that Boeing is going to get, it would be then going on to the suppliers. Their point, you've got to help the suppliers out, or else you're going to see the aerospace system essentially collapse in this country. And what's killing Boeing, the airlines, not only here in the U.S., but around the world, they are getting crushed right now. So you have to wonder about future deliveries. How bad is it for the U.S. airlines? Let's start first off with Delta dropping an 8K within the last couple of hours, on pace to lose $2 billion in revenue this month. $2 billion hit in revenue this month, cutting capacity by 70%. Remember, a week ago, they said they're going to cut capacity by 40%. Shows you how quickly things are changing for Delta and other airlines. JetBlue, also out with an 8K today. On Friday, they took out a $1 billion term loan. They said today that they went through that $1 billion. They drew down the loan by Monday. 3 days is how long it took them to draw down that loan. Spirit, ticker symbol SAVE, it is cutting its April capacity by 20%, cutting the May capacity by 30%. And finally, take a look at United. It is increasing its April schedule cuts by 60%. Bottom line is this, Kelly. Nobody's flying. Nobody's booking. And the cancellations keep increasing. And as a result, you see the airlines ratcheting up their expectations in terms of schedule cuts And I know people are probably saying, well, how much more can they cut? You've already cut 70% of your schedule. Well, there's another 30% there. And you have to wonder, does the administration at some point say, yes, they talked about putting $50 billion aside, Kelly, for the airlines. When does that get passed? When is there the reassurance to the airlines that there is going to be some type of a backstop? And then what comes with that?
Phil, it's a lot. It really is. It's a lot to digest for all of these critical sectors of the U.S. economy. We'll just leave it there, Phil, and we'll get back to you, obviously, as we continue to get news both on the automakers and on the airlines. Confusion and concern reign not only in those industries, but in others, including restaurants, shopping malls, as there's been a lot of mixed messaging from governors and even the national government about what's to stay open at a time like this and what's closed. For more right now, I'm joined by Mitch Daniels. He's president of Purdue University and former governor of Indiana. He's also a former director of the Office of Management and Budget under President George W. Bush and a former senior advisor to President Reagan. So, Governor, it's great to see you. Now, we sorely need leadership, not this back and forth between governors and mayors and county executives over what's open and what's not. How do we better communicate to people about what to do at a time like this?
Oh, I'm not too inclined to second guess, having lived it the last week with new information every day and new guidance, scientific and medical guidance leaving the government. I think looking back, Kelly, later on, we'll fault ourselves more for the steps we didn't take in the last decade or two, the preparatory steps we could have taken to be more ready when this fully predictable event happened. The way we've been dealing with it recently, yes, I'm sure that some folks could have acted a day sooner than they did, or here and there more wisely, but I think in general, I'm impressed really with the swiftness of the national response. Not easy without totalitarian controls.
Governor, I'm going to try one more question with you. Hope we don't lose you here. But when you're the first person I've heard call this a predictable crisis that could have been fixed over the past couple of decades. Are you referring to, having a supply-based masks made in America? I mean, what do you mean by that?
Well, the people have forecast that a pandemic was a when not if phenomenon, and yes, there were things you could have done. We could have stockpiled antivirals. I mean, we're short of swabs right now. We hope that testing will be much more this year soon, but some could have been done in advance weren't. So I think in the inevitable after action reports, we'll look at ourselves more critically in that area, and we'll I hope take action so that when something like this comes around next time, we're much better ready to deal with it.
Yeah, Governor, I apologize because your sound's been dipping in and out, but we certainly get the gist of what you're saying. We'd love to check back in with you because wanted to discuss what's happening with your university and others here. But if you would be so kind, maybe rejoin me as we get these wires open again. And we thank you very much.
Thank you.
Governor Mitch Daniels, apologies about that. While activity has picked up in the stock market here, it has also picked up a little bit in corporate credit, and that's specifically high yield or junk part of the market with the rise in activity. So what's going on with the stresses there? Let's bring in Dom Chu from his home bureau. Dom, it's good to see you again, even at a distance here. This is a really important topic. So what are you seeing out there in the credit markets?
All right, so there are stresses happening, and what's a little bit more curious over the last couple of days about the price action, specifically in corporate credit in that world, is that we have seen kind of like that divergence or convergence that we've been looking for happen again. The first thing I want to key you in on is an interesting chart put together by the data and research folks over at White Charts. And what this chart shows is the corporate risk curve and what it looked like from AAA bonds all the way to CCC bonds, that is to say highly rated corporate bonds to less highly rated or more junk rated debt. One of the lines on the top shows you what it looked like in terms of the interest rate curve across that span back in the great financial crisis in 2008, 2009. And then the two lines below it are this year and its stress points in the last year as well. The thing that you want to key in on is not the absolute level of interest rates across that curve, because we know back in 2008, 2009, interest rates nominally were a lot higher than they are today. But what I want you to key in on is the right-hand side of that chart, where you get more towards the junk and levered side of things. Those particular steepnesses that are happening have not yet happened in this particular crisis in the corporate credit market, nor did it during times of stress in the last couple of years as well. So there is a precedent that we could see even more pain, specifically targeting the junk or high yield part of the corporate margin. That's going to be something to watch. Also, what to watch here is the difference in yields between AAA rated, very highly rated bonds and CCC rated or junk debt. So far, what we've seen is that AAA rated debt has been doing pretty well as people continue to buy it for that yield, and for that reason, it's been relatively safe. After that, though, look at the CCCs. We have seen a big amount of stress there, so it's certainly two flashpoints in the corporate debt market, Kelly, to keep a close eye on. We're certainly doing so here at CNBC.
Yes, sir. Dom, thanks very much. Dominic Chu for us. Let's turn to the casinos, which are also taking it on the chin today after the Nevada governor ordered a 30-day statewide shutdown. Contessa Brewer has those details for us. Contessa, got to be a worst-case scenario for the casinos, for the whole Vegas Strip. I mean, and it's not just Nevada. Right now, we're seeing these casinos shut down, Kelly, coast to coast. But Nevada casinos and tourism, that's the economic lifeblood of the state. According to the University of Nevada, Las Vegas, there are 100,000 people who work on the Las Vegas Strip alone. And as they shut down these casinos at the order of the governor, who says that all non-essential businesses have to close, you know that these guys are going out, going home and wondering what's going to happen. Well, at this point, if you've got 450,000 people working in travel and tourism in the state of Nevada, according to the Nevada Resort Association, this is an industry with $68 billion. It's very important to know what happens to all of these people. Well, Las Vegas Sands Station Casino says they will pay their workers. MGM Resorts has already announced some layoffs and some furloughed workers, but says it will pay those furloughed workers, even the ones who are part-time, it will pay them for 2 weeks. Wynn Resort says it will pay its workers for 30 days. And in a video message sent out to employees, CEO Matt Maddox explained why he's willing to pay workers to stay home.
If you take our families, we represent about 50,000 people in our houses. And the 50,000 of us, if we do what we're supposed to do, we're going to save lives.
There's a big question now about liquidity and solvency, and the analysts are coming through with estimates at the low end. We have Penn National Gaming that some analysts say maybe only has 4 months of liquidity. But on the other hand, you have Las Vegas Sands, which is at the upper range and says it's well-positioned, financially stable, can take care of its employees. Caesars included on its note that it's sitting on $2.8 billion cash on hand and is doing other cost-cutting measures. So we'll wait to hear about those. Barry Jonas of SunTrust sent out a note today and he said, look, if you think that gaming is a place you want to be, look at those REITs, because even though their share price is taking it on the chin, as you said, Kelly, in this case, they could go between 43 months to 81 months without getting any rent from their casino tenants and still be okay. Wow, that is a great stat. Contessa, so when you mentioned it, I'm curious how this is all going to play out.
All right, 43 months? God damn, it's who hold all the money, man.
In some cases, if it's going to be
so poor. They got all the money. You can hold for 43 months?
They'd rather be paid by
how long that is? Is that 2 years, 3 years, 4 years, 5 years?
It depends from company to company, because Caesars told me they're still trying to work out how can they minimize the impact on their employees, and they're not being clear about that right now. Wynn has said 30 days, and Las Vegas Sands just says blanket, we're going to pay our people. It probably depends a lot on the balance sheet, a lot on how long that they are kept out of this. But in Nevada, the close down is 30 days, so it leaves people going, okay, well, what happens after 2 weeks of being furloughed from my job? And then what happens if the closures have to go on longer than that? Kelly, in Macau, we know that the casinos were shelling out up to $2.5 million per day on paying. Most of that was going to salaries, operational costs, and things like that. So they're not getting any money in, and they're bleeding money out. It's a crisis point.
It is. And like everything, it depends on what happens with coronavirus here nationwide. Contessa, thank you very much.
3 years.
Just want to bring you a quick news alert. Prime Minister Johnson said now that England won't have schools due to coronavirus, as
they know they got the money.
2,600 cases confirmed, with 7
how much people going
and now the whole country taking
lockdown
local schools, which again, here in the U.S., many have already done on a state-by-state or municipality-by-municipality basis. Coming up, my next guest says this is a whatever it takes moment, and there's no limit to what the Fed or fiscal stimulus should do. What does he want to see happen next? How big a price tag? We're going to ask him with the Dow down 18, almost 1,900 points we're back into.
So we don't have no open silence. For those who are listening, please always like, share, and subscribe to the African Emporium channel. Also, we'd like to hear your feedback after every broadcast, long live streams. Just tell or feel how you feel about the stream, what you learned, what you did not learn. Questions always can be answered in the comment section after every broadcast. Also, besides liking the video, if you're, and I'm not sure how many people are watching the video now, I'm gonna have to go right now and look for myself. Give me a second. I gotta log in. Let's see if this will. Oh gosh. Let me refresh my screen. I can do that. I swear, I thought I was subscribed to this channel. Why didn't that pop up? 1 second, people. Oh yeah, I am subscribed and I see it now. I mute myself on my other end so you don't hear me. Come on, people. Okay, it looks like we have right now 8 or 9 people watching. So, as more come in, please like the video. Moderators, please, if you so kindly, let everybody know that comes to them to like the video. And like always, we would always emphasize people that watch and that want to educate and share the stream.
Caught up where we are in these markets right now. Deep in the red, long story short, the Dow's down 1,850 points. That's an 8.6% drop, and we are down 10,000 points since the record highs. We did trigger the circuit breakers with the S&P 500 when it fell 7% around an hour ago. So we halted trading for 15 minutes. That's where we stand now. Part of this drop today coming from energy stocks, which are sinking as oil falls to an 18-year low below $21 a barrel. And in the last hour, we heard from Bill Ackman, who said, quote, hell is coming. Bill Miller, meanwhile, telling us just now that this is the buying opportunity of a lifetime. So who's right? For more, I'm joined now by Jason Trennert. He's chairman at Tegas Research Partners, and Julia Coronado is founder of Macro Policy Perspectives. And it's good to have you guys both here. Julia, let me start with you on the economy. I've seen second quarter GDP figures now of -10, -13%. Is that outlandish or totally feasible?
It's not outlandish. When we're talking about the economy effectively grinding to a halt right now as we speak, and this is going to last at least several months, I don't think it's outlandish to think we're going to see some of the biggest one-quarter drops we've seen in the post-war period.
And, this sets up for a unique challenge because it's almost like the country was hit by a virtual meteor, right? So yeah, there's a lot of talk about what happens kind of in the rebuilding effort, right? And in a way, that could be as tricky a period of time if you're in the market, for example, but trying to figure out inflation and how to unwind some of these programs. I know I'm way ahead of myself here, but it's going to be a dicey few months.
Yeah, no, it's a liquidity crunch in the real economy. So businesses are looking at revenues just stopping on a dime and households, meanwhile, still have rent to pay and mortgage payments to make. So it really is something that can feed on itself, and it's the goal of policy right now should be to short circuit that feedback loop. And if you think about the scope of this and the scale and the speed with which this is happening, it's going to take a lot of money, even more than they're talking about on Capitol Hill right now, and more from the Fed. And it's rippling through financial markets in a very insidious way. We're hearing about deleveraging and forced selling. Right. We're seeing breakdowns between in the correlations between stocks and bonds. So we really are at a moment where this could feed upon itself in a very bad way, and policymakers need to just break it all out, be creative, go big, and arrest this feedback loop.
Jason, let me bring you in on that.
Beautiful one. Good
To
evening.
also say this is the time not to worry about the dollar figure per se, because the cost is going to be huge if we do nothing. I don't think people understand what a recession means for the budget, for the deficit, for the debt. I mean, it could be spend less now on that front, or spend a whole lot more later if we can't get this thing back on track pretty quickly, right?
I think that's right, and I think there's been a very big change in the administration itself just in the last 2 weeks, certainly in the last 4 or 5 days, where there was some talk of targeted stimulus, and a week and a half ago, and now it seems to me this is like Draghi said in 2012. This is very close to the whatever it takes moment. You've had an $8.5 billion spending bill. $105 billion spending bill is about to be passed, and you're talking about $1.2 trillion. It may be right. It may need to be more. It seems to me, though, that there's no upper bound in what policymakers are willing to do now, especially with 10-year Treasury yields as low as they are. There's not much cost. I would argue for doing whatever it takes.
People will push back. They're already pushing back. I think in part because we haven't seen the hit yet that's coming to the economy, and say, how can you say open-ended? How can you be throwing around multi-trillion-dollar figures out there? Explain why, and maybe this is dangerous, and that's why we have to worry about what this will look like on the other side, and maybe that's why the bond market's already going a little haywire.
Yeah, well, it clearly, this is a form of modern monetary theory. There's no two ways about it, and that can be somewhat worrisome as far as inflation is concerned later on. But by the same token, we have to get, I would suggest very much a one day at a time approach. And as Sinatra said, I'm for whatever gets you through the night. I'm very much for whatever will work in the next couple of months, so the liquidity crisis doesn't become a solvency crisis, which it seems to be morphing into if we're not careful. So you've never seen it's cliche to say it's unprecedented, but you've never seen largely a government not mandated because we have a free economy, but largely mandated demand shock.
Exactly, and they have to compensate people for that.
That's why you have to go for it.
Right. Exactly. And let me ask you too, Jason, because we're running out of time. This Bernanke yelling op-ed in the Financial Times, I want to make sure everybody knows about it and reads it. Along with the litany of things they recommend, they do say the Fed could, and in fact, you could say they're saying they should buy corporate debt. Would you agree with that?
I would. Again, it's hard to be. There's no atheists in foxholes here, as they say, and you can't be intellectually pure. It's not what the Fed was designed to do, but again, this is different, and I would suggest I wouldn't want to make it a permanent feature of our central banking, but if you're going to pull that, lever, this is the time to do it.
Okay, and Julia, I want to make sure everyone heard what you said, because I thought it was the best encapsulation of this I've heard yet. Quote, a liquidity crunch in the real economy. And that helps explain why we're trying to get liquidity to households directly, right? No matter, however that has to be worked out. Yeah,
absolutely. And in addition, let's throw in municipal bonds in there. State and local governments are on the front lines of addressing the health aspect of this, and they're going to need access to funding. Give the Fed the authority, at least temporarily, to help finance them. That will can help a lot of problems and help us get through this.
Holy moly, that's all I'm going to say for today. Julia Coronado, Jason Trenner, thank you both. We do very much appreciate it, tracing the outlines of this crisis for us. Coming up, we are going to speak with Massachusetts Senator Elizabeth Warren about the government's proposed $1 trillion+ stimulus package and the potential bailout of the airlines and Boeing. Don't go anywhere. CNBC's breaking news coverage continues on the other side of this break.
yes, as y'all know, you're hearing more bailouts. That's obvious. You know what I'm saying? Bailout certain corporations. And like I had the same discussion with Emporium yesterday about the thing with the boats, that I did not know that now they're not even tied with this United States. So, you know, when I think about bailouts, it makes me want to say, who really is funding this government? Because to sit there and get bailed out, especially the boat industries, they must have put an end to this economy or something, or put an end to certain special hands of people to get that bailout. But I know, you know. Anyway, what's this? I'm just looking at something, guys. So don't mind me. So like always, like, share, subscribe.
Good afternoon, everyone. I'm Tyler Matheson, and we start with breaking news on the major market sell-off that you see right there, down 1,958 points. We are at session lows a moment ago. Just as we were in break, the Dow dipped below that 2,000-point level of loss. Trading, by the way, halted for 15 minutes in the 1 p.m. hour as the S&P 500 fell 7% for the first time today. Now, coronavirus fears, of course, reaching a fever pitch as the government works to pass a massive stimulus package. The voting on that is coming up very soon. And look at oil in free fall yet again, down another 22%. Crude dropping hugely today as demand fears rise, that demand is going to fall, hitting its lowest level now since 2002. And speaking of free fall, look at shares of Boeing, that aerospace giant, asking now for a $60 billion bailout. It is down 25% today and on track for its worst month ever, doubling the losses it saw back in September of 2001. This stock was a $300 plus stock not that long ago, Kelly.
It's just unbelievable. Tyler, thanks. So
when after the report comes back, maybe we have a serious talk about these bailouts and these dudes that's getting tax exempt.
Here in the U.S. and Canada have now agreed to close the border to limit travel between these two countries. The move, they say, won't impact trade. That's been impacted by its own problems. New York is dealing with the largest outbreak of coronavirus, with its cases more than doubling to 2,000 overnight. We do have full team coverage for you. Bob Bassani is all over these big market moves today. Brian Sullivan is watching crude as it craters. Kayla Tausche is tracking the Senate as it works to pass phase 2 of the stimulus package soon here. And Rick Santelli on the bond market as the 10-year yield is now higher, 1.2%. Bob, we'll kick it off with you.
So we were comfortably down. I know that's a weird word to use, but comfortably down somewhere 6 or 7%, tooling along, and then very important interview with Bill Ackman came on, and here's essentially where it happened, right about here, and you can see the market drifted down. Bill Ackman, the new Dr. Doom, as somebody down here once said. What caused this drop here? Listen to what Mr. Ackman had to say. Quite an emotional interview. They're going to be passing this around for the next couple of days. America needs a 30-day spring break, saying that the gradual rollout is not working. We all need to shut down the whole country for 30 days, and very aggressively saying so. And here's where it got really emotional. I'm not going to kill my father. I went into lockdown almost a month ago to save my father's life. I urge you to watch the interview. Very rarely do you get emotional interviews in the business world. This was one of them. Now, here's the big surprise. He drops on everybody. You think this is a, well, sell the world kind of thing. No, I'm aggressively buying stocks. Everybody said, well, wait a minute. Now, unfortunately, this message got lost in the doom and gloom commentary that he had. He's aggressively buying Hilton, by the way. He's made a point of bringing that up here. Bill Miller, also one of the great value investors of all time, came out one of the greatest buying opportunities.
You're welcome. I was here to support and, this is the fifth one. Views on things.
That effect. So you get the point. Here's two big market gurus essentially telling you, and yet we're not particularly bouncing at all. Just take a look at the one chart I showed everybody all day about why the market is very unhappy and worried. Here's corporate bonds down. Here's the equity market, the S&P 500 down. Here's crude down, and here's oil down, and all down. And when all this happens, everybody says, huh? This means liquidation. This means people selling to raise cash. It raises all sorts of anxieties when all four of these sectors move to the downside. I have been asked about a couple things about the stock exchange. There is a comment from the New York City mayor that he may issue a shelter-in-place order, and what all of that means. I want to just bring up the circuit breakers first to point out the level one hold 7%, that no longer applies here. We'll go down 13% until 325, and then there's no hold 20% at the rest of the day. And the shelter-in-place, Kelly, I think even if it's implemented, probably would not apply to the New York Stock Exchange. I'm trying to get clarification on that, but that's my impression right now. Back to you.
Okay, Bob, thank you very much. Bob Pisani down at the NYSE.
Well, as we mentioned, oil is in free fall as well as equities, collapsing now toward $20 a barrel. If it's not just pierced that already, let's check in with Brian Sullivan for more. Hi, Brian.
Hey, Tyler, I don't know what you were doing in the year 2003, but it's kind of a time machine because what you were doing, well, oil is the same price now as it was then. That's how far we have come. Price of oil continues to fall, global demand falling off a cliff, global supply continues to go up. The Saudis have actually indicated they could go to 13 million barrels a day if they wanted to. Now, what does that mean? Well, they're about 9.5 to 9.8 and going up. So the world demand is going down. Saudi supply may go up. You don't need to be an economics wizard to understand that that is a terrible combination. Now, a few positive points, I guess, of where things may go. U.S. companies continue to slash their costs, their capital spending plans. The average, according to Goldman Sachs, about a 28% cut. It's bad news for jobs, it's bad news for industrial supply, it's bad news for a lot of people. But if it can stabilize oil, some of these companies might get stabilized as well. And again, you know, I know I'm sort of the oil guy, but really, I've said it forever, and I'm going to say it again for the billionth time. It's a debt story. You got to take a look at certain bond ETFs. I'm only picking out two because they're the biggest, not because they're any more risk. But the HYG, which is a high yield ETF, it's about 11% energy related, and the JNK, another one that has a significant energy exposure. There are others, by the way, out there, and I wrote about them last week. You want to watch those because the credit markets may be far more important than the oil market right now. But unfortunately, guys, they are inextricably linked. I'm going to say goodbye. I'm going to burn some oil, drive up to the NASDAQ market site from my hole here in New Jersey.
Before you get in your car, is anybody making money in oil at this price? Are the Saudis making oil at this price? And if they're not, why are they pumping more of it to sell at a loss?
You and your good questions, Tyler. That's what I've always liked about you. Okay, a lot of questions there. Nobody in America is making money at this price. I mean, there might be a couple wells that are producing that have been around forever that you know have a cash cost of $15 or something, but all in, you know, no. The Saudis, their actual drilling, their sort of production costs are like $3 to $4 a barrel, but they've got all those societal costs that we have talked about. I mean, Qatar and Kuwait, they need $100 oil effectively to fill their budget. Saudis need about 85 to 88. So they can actually make the oil get it out of the ground, not make it, it's natural. Get it out of the ground for about $3 to $4, but of course that oil funds a lot of other things. I will say this, bad time for two stocks. I mean, number one, Aramco, they went public a couple of months ago. The stock keeps falling on the Saudi exchange. And number two, and not picking on them again, but Occidental Petroleum, buying Anadarko last year, debt-heavy deal. Occidental stock is back to the price level it was in the year 2000. It's Y2K oil for OXY.
Thanks very much, Brian Sullivan. We appreciate it. Kelly?
All right, the Senate is getting set to vote on the final version of phase 2 of the stimulus package. Kayla Tausche has that for us. Kayla? Kelly, our eyes turn now to Capitol Hill, where we are going to watch a socially distanced Senate take up an elongated vote on the second coronavirus relief bill. This is the one that provides roughly $105 billion worth of paid sick leave to an estimated 40 million Americans. Senate Majority Leader Mitch McConnell has doubled the allotted time for this vote because he doesn't want lawmakers to be congregating in this chamber. Now, not all lawmakers have liked this bill. Senator Marco Rubio, the Republican from Florida, whose state is heavily exposed to tourism and the cruise industry, thinks that it unfairly incentivizes companies to lay workers off instead of providing this benefit. But he said that the Treasury Secretary urged lawmakers yesterday to go ahead and pass this and then make any changes that they need to in any follow-up legislation. Because the big deal is what comes next, and that is this $1.3 trillion stimulus bill that the Treasury is putting together and could send to the Hill as soon as the end of this week. I'm told that both the House and Senate bipartisan leaders are working with the Treasury to put together a clean bill that is easily passable in each chamber. And aides tell me that the soonest that could be taken up for a vote is Friday. That is the third phase of the stimulus. After that, it is likely that lawmakers would consider this new request for about $45 billion in agency funding after that. But aides I talked to this afternoon don't think that this is the last of the stimulus that they're going to see. Congress had expected to break and to go home to their districts after these stimulus packages passed. But one aide that I just got off the phone with said, this is probably not going to be all we need to do. Even so, it is clear that the Treasury and the White House want to be able to move on to do that big stimulus package. And I'm told that the soonest that could be taken up for a vote in the Senate is Friday. Tyler, Kelly? All right, so Friday then, again, Kayla, I don't know about you, don't you feel those flashbacks? 08, 09, I mean, the importance of these votes right now to the market, right? They are critical to the market, Kelly. I mean, it is evocative of that TARP vote back in 2008, where it was the steep sell-off at that time that was really what scared lawmakers into submission. And even those that didn't like the content of the bill knew at that moment that they had to vote on it. But looking back, Kelly, at some of those levels, the sell-off in the Dow on the day of the TARP vote was a decline of 7%. I mean, that is not even close to the percentage drops that we are seeing right now. Yeah. The declines are much steeper. The urgency is much more strongly felt. That is not lost on the lawmakers I've talked to. Yeah, you're right. More than 13% the other day. Okay, Kayla, thanks. We appreciate it. Kayla Tausche. Coming up, Senator Elizabeth Warren will join us from Capitol Hill to discuss this coronavirus outbreak and Washington's response, what she thinks the government should be doing about it.
And meanwhile, Kelly, the bond market holding up just a bit today. Santelli, that would be Rick, is at the CME. Hi, Rick. Hi, Tyler. Just looking at where the yield curve set up, so enlightening. 2-year right now are down 3 basis points. 10s are up 10 basis points. 30s are up a baker's dozen, 13. So you see the steepening. The long end, maybe there's a little religion with respect to debt. There's price to issue debt, especially debt that's being issued after we have boatloads of debt already issued globally. And as you look at a chart of 10-year since the Monday lows of 31, here we sit basically up 400% from an intraday perspective, of course, and we still haven't gotten to the 5:30 a.m. 122 level, but we're getting close. TY VIX, it's like the VIX for the stock market for 10 years. Look at it going back to 2007. We're hovering just under 14, which is the cycle high, pretty much equates to 2008. Now let's go all currencies here. Euro versus the dollar. 108 today is the low. If it was just a little lower, around 107.85, we'd be back to the lowest levels versus the dollar on the euro side since April of 2017. If you look at pound versus dollar, lowest level since 1985. And finally, the dollar yen, What a reversal. Just since the 5th of March, look at that bounce. It went from cycle lows that took it back to 2016 to almost freshly about where we closed the year. So big bounces. The dollar seems to be king, and not necessarily for good reasons. Dollar funding is a huge issue globally. Tyler, Kelly, back to you. All right, Rick, thank you very much. Stocks, of course, tanking with the Dow now on pace for its lowest close since December of 2016. Yes, 2016. As Bob mentioned a couple of moments ago, last hour, Bill Miller said this is the buying opportunity of a lifetime.
There have been 4 great buying opportunities in my adult lifetime. The first was in 1973 and 74. The second was in 1982. The third was in 1987, and the fourth was in 2008 and 2009. And this is the 5th one. So I think this is an exceptional buying opportunity. I don't mean to put all the money in it at once, but I do think layering it in right now is the way to go.
All right, let's bring in David Kelly, Chief Global Strategist at JP Morgan Asset Management. John Bellows is a Portfolio Manager for Western Asset Management. David, let me begin with you. Is Bill Miller right?
I think it is a buying opportunity. I don't think it's as good as the buying opportunity in 2008, 2009, because I think we do have a long way to go to wade our way out of the social distancing recession here. I think it's good. I think 2021 will really be the year of recovery. I don't expect to see a significant economic recovery this year, but I think he is generally right, though, because we have seen stock prices come down very far. We've seen valuations come down, and remember, we will see earnings going to be atrocious this year. But the idea is basically to keep the economy in sort of suspended animation, and that's really what fiscal stimulus is all about: keep workers basically getting by, keep businesses basically from going bankrupt until you get a vaccine. And once you get a vaccine, the economy, this is going to be very U-shaped. The economy will bounce back with a lot of energy in 2021 once we've got a vaccine in place.
Remind me, David,
will go up.
Remind me, David, we're now down about 30% or a little more off the highs of the Dow. What was the Dow's haircut during 2008-09? 50%?
Well, I know the S&P 500 was down 53% peak to trough by March 9th.
Do you expect that kind of haircut this time?
No, I don't think we'll see quite that much, because I think we've got scarier days ahead. But I think that the key thing is that this market is now cheap relative to long-term fair value. And people always ask me, was that the bottom? That's not the right question. We're not going to be able to time this. The right question for long-term investors is looking at bonds, looking at stocks, looking at cash right now. Does it make sense to be overweight equities relative to fixed income? It probably does. I know it's a scary time, but certainly, I think people need to recognize
I'll be back.
They are now underweight equities because their equities have taken a shellacking. And on a long-term perspective, the economy will bounce back. We will get past this eventually. And there's a lot of value in these companies in the long run that markets are kind of discounting today.
John Bellows, what do you think? Clearly, the market seems to be pricing in a steep recession at the very least. What are the odds that this economy goes into a prolonged depression?
Well, one thing I've been struck by is just the speed and forcefulness of the policy response. It's just been incredibly quick. Think about this. Lehman Brothers failed in September of 2008. It took the Fed 3 months after that before they finally cut rates to zero. This time, the Fed cut rates to zero in less than 2 weeks, and 2 intermeeting emergency cuts nonetheless. They're very, very forceful. On the bond purchases, they're purchasing over double the pace of previous QE programs, and there's essentially no limit to how many bonds the Fed can buy. So the Fed's response here has just been incredibly quick.
But the market isn't buying
forceful.
it. The market isn't buying it, literally.
So clearly the reason the Fed's doing that is the economic emergency that we're facing is acute, it's severe, and it is largely unknowable how deep it is. I thought Jerome Powell was quite astute when he said we're not even going to write down forecasts right now. It's just unknowable. So yes, there is an unknowable nature to this. But look, I think that the Fed's response does matter, and I think once we do get some economic normalcy, some type of moderation, then it's going to be a really big deal. You have the Fed that's involved. They're involved in a serious way. You're getting fiscal policy in a serious way. And once you start to see demand normalize, and I tend to agree with the other speakers that you've had that eventually you will see demand normalize, the combination of normalizing demand and incredibly forceful policy response is going to be a very different atmosphere than what people are used to. It's a very different atmosphere from where we are today, but it's also going to be a different atmosphere from where we are last year. Again, the combination of forceful policy and demand firming, is really going to create a different atmosphere.
The Dow is down now, John, 2,000 points. I just interrupt to point that out, which is close to 10%. David, I want to listen to. I want to have us all listen to a comment from Mark Cuban earlier today on buybacks. Listen up.
No buybacks. Not now, not a year from now, not 20 years from now, not ever, because effectively you're spending taxpayer money to buy back stock, and to me that's just the wrong way to do that.
This is not no buybacks for all companies, David, but for companies that take federal money to stabilize themselves in the wake of this coronavirus setback. What do you think of that?
I think it's a silly comment, to be honest. I think that it's buybacks are another way of distributing income. I don't think companies should really be buying back stock in this environment. But are we going to say that they shouldn't pay out dividends also? I mean, I think that what we need to do is be logical and sensible and quick about doing what we need to do to help companies, particularly small businesses, medium-sized businesses, help workers. But I think this idea that we're going to put all sorts of restrictions on, what's good and virtuous and non-virtuous corporate behavior at this point is just a bad idea. It reminds me a lot of the punitive approach to banks in the middle of the financial crisis, which frankly made it worse. There's nothing wrong with buybacks. If you can't think of anything good to do with the money, give it back to the shareholders. You give it back in dividends, you give it back in buybacks. It's really not a different thing. So, I think it's an easy target, an easy punching bag, but it's really not relevant to the problems we face.
Don't you think that a lot of the companies that engaged in buybacks wish they had some of that cash right now?
Yes, some of them do, but some of them don't. I mean, some companies have been doing buybacks as opposed to handing out dividends because it proved to be a more tax efficient way of doing things. And frankly, companies have been very profitable for many years in the United States, and buybacks are simply one method of returning cash to shareholders. Theoretically, they're no different from dividends except for this. Buyback you can start and you can stop. A dividend, when you change your dividend, it sends a message to the markets. So companies, buybacks are, they're kind of like bonuses. You can raise them in the good times, but you cut them in the bad times. So I think companies are going to cut back on buybacks. I just don't think the government should be writing that into legislation.
Kelly?
Tyler, jump in, and John quickly mentioned everybody. Again, the price action in Boeing today, the stock today is down 27%. It went below $90 a share, and it's currently right about those levels. Okay. John, obviously, this is important, not just for that company, for the whole economy. It's critical to know what's going to happen here in terms of a backstop and what that's going to look like. I don't know, John, if you want to add a thought on that.
Well, I think that's certainly part of what they're considering. I think the problem's a little bit bigger than that one company. You're seeing a lot of stress in corporate bond markets more broadly. And, I think the Fed, one of the really important things just yesterday is the Fed has already started being more involved in credit markets. Their commercial paper funding facility, the primary dealer funding facility, both allow them to be involved in corporate credit. And I think that's the direction we're going. I think we're going to see more of that, whether that's a TALF-like facility where Treasury is taking a first loss position or some other arrangement that involves a coordination between fiscal authorities and monetary authorities. I do think that's where we're going. Another thing here, Kelly, you mentioned this earlier, was changing the Federal Reserve Act to allow the Fed to buy corporates. I do think there's stress in corporate bond markets. Again, I think this is bigger than Boeing. It's a broader market phenomenon. And I do think that if there's a need, the Fed will find a way to support those markets as well. Again, I'm just very struck by how forceful the Fed's response is. And I think we're liable to see more if we need it, rather than less of that going forward.
And as you're talking, John, there's the Dow below 19,000. So a shocking plunge right near session lows. John Bellows, David Kelly, we appreciate, again, a 10.6% drop in the Dow now, which was briefly halted earlier today once the S&P hit limit down of 7%. But the selling pressure continues apace as we move throughout the session today.
A breathtaking slide in stocks. No more so than in hotels. They are getting crushed yet again today as the coronavirus puts the travel industry basically at a standstill. Seema Modi now with the drastic steps they are taking. I see.
Yeah, Tyler, incredible moves today. The hotel operators making the tough decision to shut down a number of properties as it doesn't make economic sense to keep them open when occupancy levels are plunging across the U.S. In some cases in the single digits. That's what Hilton CEO Chris Nassetta told President Trump he's seeing yesterday, and that's forced Hilton to temporarily close Hilton Midtown and the Capitol in Washington, D.C., among other hotels. Both of those are not accepting reservations for the foreseeable future. And it follows news from Marriott, furloughing tens of thousands of employees as it actively looks to suspend operations at certain locations. Today, Pebblebrook, a hotel real estate investment trust that manages 54 hotels, announcing that it's letting go of 4,000 employees. It expects to let go of an additional 2,000 if the situation gets worse. The hotel industry now requesting a $150 billion package to cover the 3.9 million workers supported by the hotel industry that will lose their job if occupancy remains where it's at right now. That's according to AHLA, the trade body that represents the hospitality industry. Guys, another data point being circulated today, $1.4 billion in revenue is lost every week due to the virus for these hotels. You can see they're sitting on double-digit losses over the last 3 months. Back to you.
And look at that. Look at Marriott down 67%, Hilton down 53%, and Hyatt down also more than that. What is maybe you said it, I was distracted there for a minute. What is the occupancy rate right now?
So occupancy rate dropped 24% in the week ending March 14th. So it comes out to around 54%. The average for the month of March is typically around 64%. But clearly, they're expecting more pain to come as all of these major hotel operators review the status of their hotels across the nation, view the occupancy levels, trying to make that decision about whether they should really keep them open.
All right. Thank you very much, Seema Modi. Kelly.
Well, as layoffs roll through pretty much every industry, the unemployment offices are being overwhelmed. Let's go to Rahel Solomon, who has the details, Rahel, on what we've rarely seen in terms of everyone kind of having this hit them at once.
Absolutely, Kelly. So when restaurants and bars across 20 states were forced to abruptly shut down, unemployment offices simply weren't ready. In New Jersey, Governor Phil Murphy says it is seeing a record number of unemployment applications. The state receiving 15,000 claims on the 16th alone, a wave that crashed its system. Labor officials in New York say that they're seeing unprecedented volume, and at times more than 10 times that of last week. The state is extending hours to try to manage this increase in applications. So I spoke to a New York City bar owner yesterday who told me not only did he have to lay off his 25 employees, he's now trying to figure out how does he pay his rent. It's one of many questions that small business owners and employees are facing indefinitely. According to data collected by outplacement firm Challenger Gray and Christmas, the closure of restaurants and bars could impact more than 9 million workers nationwide. The firm saying layoffs for some 3,600 workers have been announced so far, with the majority being in the entertainment and leisure industry. Andy Challenger, however, also cautioning me earlier that number, that 3,600 number, saying that's likely just the tip of the iceberg. I'll send it back to you guys.
I wonder about the capacity challenge, Rahel, and where all this, in 08, 09, as deep as it was much more drawn out than it is now. So I think it's important for people to know that these benefits are available, to go get them. I guess there's federal backs up to make sure they can keep accessing the funds. But, are they going to face just issues?
Can y'all guys smell money? Money.
From people who say that they're access these services, right? They're trying to get onto the New Jersey state labor.
Listen. African Pro, man. You come back on, brother.
Was shut down. So, of course, those services are available. The people that I'm talking to,
I'm about to recommend some people what they should probably think of doing with their money if they do get that $1,000 more check.
Just actually apply
first.
Okay, Rahel, we appreciate it. Rahel Solomon, she'll keep track of that for us. The big three automakers, and this is related, closing all U.S. auto plants as the coronavirus spreads to all 50 states. Let's go back to Phil LeBeau for more on the details here. Phil?
And Kelly, when we first reported this about an hour ago, there were a number of people who said, well, why didn't they announce this last night after the UAW and big three CEOs got together? Remember, initially it was a partial shutdown. Well, now it's a complete shutdown. And perhaps it's because they realize that as this virus continues to spread, it makes more sense just to shut down production altogether. So what you're looking at is the big three shutting down their plants effectively after the second shift tomorrow night, usually about 10:30, 11 o'clock. And then they're going to be down, for the most part, all the way through March 30th, March 31st, 25 final assembly plants here in the United States, and this impacts about 150,000 UAW workers. And oh, by the way, it's not just the big three that are stopping production. Earlier today, Honda came out and said that it will be shutting down the production in North America. That impacts its 4 plants. plants, its 4 facilities here in North America. And then there's the case of Tesla. Now, this is really interesting. Tesla's Fremont, California plant is in one of the counties where they basically have not put a sheltered in place, but they've basically made it so that if you're not an essential business, people shouldn't be going there. Well, people were showing up at work today. So it appears that the plant is still open. By the way, we've reached out for Tesla for an official comment here. As you take a look at shares of Tesla, like everybody, just getting hammered in this market. It'll be interesting to see if they make an official call here in terms of whether or not production has stopped at that plant. Kelly?
Okay, Phil.
And Phil, Delta announcing a $2 billion decline in March revenue, and they're going to cut capacity by 70% as airlines deal with this unprecedented crisis. Will airlines get a bailout? Bill, what do you say?
Well, the latest reporting from NBC is that there's 3 parts of the bailout that the White House has put forward, including $50 billion for the airline industry. So it appears that this is part of one of the packages that will ultimately be approved, though we have not gotten official exclamation point on that, yeah, okay, $50 billion has been set aside for commercial airlines. Remember, the industry was also asking for $8 billion for the cargo operators. The airports, I don't even know where they're at in this entire thing. They're asking for $10 billion. They might be part of another aid package. And when you look at the individual airlines, a couple others, I know you mentioned Delta. Take a look also at JetBlue, dropping an 8K today in which they say they have drawn down on their $1 billion term loan. They took out that loan last Friday. They had drawn it down by Monday, an indication of how quickly the airlines are moving through their cash and trying to shore up their liquidity. Also, United announcing last night that it's increasing its April schedule cuts, going all the way up to 60%. And remember, it was just, what, 50% just, a few days ago? So we're seeing this with all the carriers. As more people cancel flights, they're bringing down their schedules even further. All right, Phil, thank you very much. Phil LeBeau in Chicago.
Now let's get to Sue Herrera for the very latest on the coronavirus. Sue? Thank you very much, Kelly. Here's what's happening at this hour, everyone. Italy has posted its biggest daily death toll from the virus. 475 people have died since yesterday's report, bringing Italy's total to just under 3,000 dead. At this pace, tomorrow, Italy will overtake China for the highest death toll. Global deaths now number just over 8,700. Worldwide confirmed cases are above 212,000. The World Health Organization chief is renewing his calls to test and trace as many cases as possible. He says those efforts must be the backbone of the world's response to the coronavirus pandemic. Switzerland is rationing common painkillers and anti-fever drugs to prevent panic buying. Officials stress the move is not being made because there are shortages right now. The restrictions will last for 6 months. And here at home, homeowners with mortgages backed by Fannie Mae or Freddie Mac will not face foreclosure or eviction for about 60 days. Federal regulators have made the move to help those struggling with bills because of the coronavirus. Story that our Diana Olick has been following. You are up to date, guys. Kelly, I'll send it back to you. Okay, Sue, thanks very much. And since it's about half past the hour, oil has just closed up for the day. And I'd say investors are relieved, but we know it keeps trading in the after hours market. And there you can see the decline of 25%, one of the worst days ever for crude. In fact, the 3rd worst session we've ever seen for WTI. It's just over $20 a barrel right now. That's more than a $6 plunge to its lowest level since February 2002. WTI has been slammed this year by multiple factors. You've got the coronavirus taking its toll on global demand. Exporters and producers are ramping up production, as we've discussed with Brian about Saudi Arabia tied just nowhere to hide in a really rough session. That's one of the things going on in this market.
Yeah, and there's the Dow plunging 2,200 points or more than 10%, almost 11. As oil tanks, we are at session lows on equities. And let's go back to Bob Pisani at the New York Stock Exchange. A significant slide here in the last half hour, Bob.
Yeah, and what Kelly was talking about, oil, a part of the component of the generalized anxiety. So when traders see stocks down, bonds down, oil down, gold down all in a row, they think, that's not normal. That means people are raising cash. And that, of course, raises concerns overall here. So here's where we were about 12:30. Bill Ackman started talking and said, essentially, we need a 30-day spring break that you have to get very aggressive, close the whole country down, including the GM facilities, obviously. And the market started sliding on that. We did hit the circuit breakers a little earlier in the day. Let's just review those circuit breakers once again. 7%, that already happened, so that's gone. We now have to stop at 13%. We're down 10 to 11% right now. That would hold trading for another 15 minutes until 3:20. 4:25 p.m. Eastern time, then no trading halt unless you drop 20%, and then it would halt it for the rest of the day. Down movers, it really is very much about a few stocks. Boeing is the main one here. Hard to believe here, but Boeing is about 220 points in the Dow for the downside. Broke over under $100 earlier today. Chevron as well, Amex, Walmart, and Walgreens are the only two stocks that are moving on the upside. But Nike's down 12%, for example, and Home Depot is down about 12% or so. And the overall concern here is not just cyclicals anymore, but the consumer and whether these companies are going to be able to see a significant amount of buying, essentially when many of them are closed. So still a fairly broad decline, except for a few food companies and grocery stores today. Guys, back to you.
All right, Bob, good to see you. Thank you very much, Bob Pisani. And still ahead, Bill Ackman had some tough talk for President Trump. Our own Scott Wapner talked with the famed investor, and he'll join us with why Ackman is so very worried about the current environment and our response to it. And Domino's lower by about 4% today. Domino's CEO Rich Allison will tell us how his restaurants are handling the coronavirus and social distancing. That is coming up when we return.
All right. For those that's listening, thank you for listening to Afurakan's channel. And as always, please like, comment, subscribe. And as y'all watching the so-called news or the so-called media outlets, the Eurocentral media outlets here in the West and abroad, that it seems fishy. It seems all hope is lost. For the corporation, maybe, for a little bit. But for people, we don't know. All knows the people might get their little checks next week. So we cross our fingers that, it is a very heavy check while we go through this so-called pandemic. But like I tell y'all, when you get your check, please spend, invest wisely. You feel me? Got it? Good. Now, a lot of things were said early onto that little stream. All you've been noticing is a lot of bailouts. A lot of bailouts. Now, last time I checked, because the government has to bail out industries, they don't bail out too much small business, but they'll bail out anybody that has that gross a certain amount of capital yearly. That my thing with business is if you don't make a profit, you cannot get no bail. You just go under and you got business. But because we live in this capitalist system, if you rub the right noses, know the right people, and you give a little sense of here and there, you might stay in business for a good long time. I've not heard what the effects of Amazon with all this chaos in this plunging of the stock market and all these businesses. It makes me wonder that most of our people, maybe we should start be doing and having these online business as the way to go. I don't know. Maybe. Monica, if you want to come up here now. Don't worry about Russian African porn. He's a busy man. We have people up here. If I have to talk, I will talk. If you don't like it, go over there, girl. Right now we're here. We're trying to keep the flow going. You feel me? Don't worry about African porn. Keep doing your thing. Keep doing your thing, brother, because you work hard.
Stand right now, if you dare, you probably want to send the children to another room as we look at the industrials off more than 10% at 19,065. We were below 19,000 for a few moments, just a few moments ago. The S&P 500 down about 9%. As you recall, there was a 15-minute pause. If we go down 13%, I believe that's the number, there will be another pause unless we are in that last sort of 40 minutes of the trade. The NASDAQ at 67.49, down almost 8%, comparatively doing better. The Russell comparatively doing worse. It is down 11.5%, below 1,000. It is at 979 for the first time in years. Kelly?
Yeah, more than a 40% drop from the highs. Okay, and today's one of today's big interviews, our own Scott Wapner spoke with Pershing Square's Bill Ackman about his warning for President Trump and Wall Street if the president doesn't shut down the country for 30 days to deal with the coronavirus outbreak.
Until a vaccine is manufactured, distributed, and injected, we will go through a depression era period in the country. Take a look at Hilton stock. It's going to zero, okay, along with the other hotel company, because every hotel is going to be shut down. The only answer for the world is to shut the world for 30 days. The hotel industry and the restaurant industry will go bankrupt first. Boeing is, on the brink, okay? Boeing will not survive without a government bailout. We have to shut the borders, okay? And then 30 days later, the virus is gone in America, largely gone in America. And then we have to be careful, okay, for the next 12 to 18 months until we have a vaccine. The other way we save lives is by saving the economy. The U.S. Treasury does not have enough money to bail out every company. You can't borrow your way out of the problem. You can't lend your way out of the war. You got to kill the virus. The closest I had was where I'm saying, things are coming, bad stuff's coming. But this was a feeling like I've never had.
Got tax exempt, my dude. You don't have to worry about that.
America is in shutdown right now. Okay, it just doesn't know it yet.
I mean, it was scary enough the first time without the black and white and the music, Scott. I mean, people said that's why the stock market was halted, because people were terrified after they heard that interview. He said hell is coming, and he's buying stocks.
And that's why, I'm going to be honest with you, Kelly, at certain points during the interview, I felt like I wanted to go to the ledge. And then on other parts of it, I felt strangely uplifted in the same feeling. Maybe others had the same feeling too. I don't know. He's very worried, obviously. He talked about withdrawing large sums of money from the bank, saying he never walks around with more than $200 in his wallet, he said, but he was going to the bank and getting out a lot of money because of what he said had to be done. And the sense of urgency and fright in his voice was apparent, obviously, to everybody trying to get his message across. And then yet being able to somehow step back and say that he was buying Hilton, which he's already a huge shareholder in, even thinking that things were going to get so bad. He was buying Starbucks on the way down. He's got a high concentration in consumer-led brands, whether it's restaurant brands, Chipotle, and names that we all know that he's been invested in. And here we are saying that he thinks that, I guess, we're going to come out on the other side okay, and that he was willing to take that bet and buy stocks. But the warning was dire. It was sobering. It was tough. It was tough.
Let's talk for a second, Scott, about what he said in his investments, because, it's not going to be the part of this that everyone talks about, but it is important context. So he talked about, look, Hilton could go bankrupt, but he owns Hilton, right? I mean, he owns Chipotle, he owns Starbucks. There are names here that, and you tell me, what was his sort of thought process about the market in general and about these names and the price action there?
I think you have to put they're going to go bankrupt, and there's going to be these rolling bankruptcies, by industry to industry, as he sort of went through and named the ones he thought were going to happen first. If is the critical word we need to put here. If the government, if the Trump administration, if the president himself, who frankly Bill Ackman was appealing directly to, don't all listen to his warning that as much as we've done to this point, that it's just not enough, and that certain people in certain age groups are not listening to the warnings that Dr. Birx mentioned today, millennials, people who are younger than those who are deemed to be more
Generation Z's.
Initial warnings of this overwhelmingly affects the elderly worse. So people were assuming that they weren't going to be having a problem. Beaches were packed down in Florida over the last several days. We all saw those pictures, walks of some people walking hand in hand and close together in other parts of the country. And I think it's a call to arms, if you will. I mean, he described it as a wartime.
Yeah, and you're right. Yeah, the audience, I think it's not so much our viewers, it's the president, don't you think?
I do, but I think it's everybody.
Right.
To try and, the president is the one who needs to act as he wants. The investment community is to spread the word. This is real.
Whether you believe it is as bad or could get as bad as Bill Ackman says, that's your own point of view, and you're certainly entitled to it. But he leaves us with the thought that Bill Miller told you, that this is an incredible buying opportunity, one that we'll hopefully get to look back on someday, Kelly, and realize that and witness that, because the government, the administration, the president did what he thinks is necessary. And to use his words, it's to shut it down now.
All right, Scott, thanks. Appreciate it very much. Scott Wapner.
Amazing.
All right, we're going to move on now and hear from the CEO of Stifel, Mr. Krzyzewski, and the banks, of course, being very much among the worst performers, battered. Citi down about 19%, Capital One down 21%, Synchrony Financial down about 25%. And that's just today. For the latest moves on the bank market volatility, let's bring in Ron Krzyzewski. He's the chairman and CEO of Stifel Financial. Mr. Krzyzewski, thank you for joining us. How bad is it?
Well, I mean, look at your screen. In terms of the uncertainty, I find Mr. Ackman's interview on one hand, doomsday, and on the other hand, buying stocks. I found that, I guess, interesting. Here's what I want to say. You're showing pictures of people holding hands. I'm speaking here from the Midwest. The American people understand. The American people are doing fist bumps or elbow bumps, sanitizing, social distancing. Let's not lose sight of the fact that a lot of the things that need to be done to combat this are in fact being done, and being done significantly. And so there is, what is the objective of this? It is to flatten the curve, and I believe that is being done. Now, I'm not a doctor. Do we need to lock everyone up for 30 days? Maybe. That's.
You said maybe, but that's what you want.
But I don't think that the American people aren't reacting and doing what they always do, which is to band together and fix the problem. The American people will fix this.
I sense you're right. I mean, we of course live in the New York area where there is a real multiplication of the number of cases. New Yorkers are prone to, well, let's just say, not take things necessarily in the calmest way. Midwesterners may be a little more prone to be calm about this. Are you sensing a real fall off in commerce where you are, traffic where you are, changing of habits where you are?
Absolutely. I mean, they're closing restaurants at midnight on Thursday. They've done it in Illinois. There is a real effort to limit social interaction so that we can flatten the curve, which seems to be the objective. What I think about when I look at the market, there needs to be liquidity. I think the Fed and the Treasury are doing all they can to ensure that the market stays liquid. We need information, which is more testing, so that we understand what's going on.
Right.
But the most important thing from a market perspective, I will tell you, give the market bad news, it will deal with it. Give the market uncertainty, and you will get a VIX at 85. And this kind of uncertainty, the market does not like uncertainty.
No, this is the ultimate uncertainty. Wouldn't you agree? I mean, because we do not know. We do not know when it ends. We do not know how it comes back.
Well, I think what the people have to be thinking, at least, is that we need to take a period of time, and this probably needs to be articulated, but we need to take a period of time where we are going to shut down the economy to battle the spread of this disease. We also need to say that there's going to be a point in time when the curve flattens, that we're not going to shut down the economy, because everyone knows that you can't shut down the economy for a year.
Yeah.
The cure will be worse than the disease.
Let me just ask you one thing. I keep hearing, I think intended to be reassuring, that the banks have never been healthier than they are today. They're in great shape. They've got capital like they didn't have in 2008. That's all good. If they're so healthy, why are they performing so badly?
Well, I think that if you say that every company is going to go bankrupt, and all the hotels and airlines, and that well, the banks are not going to, capital can be dissipated pretty quickly in a doomsday scenario. It's not like the economy melts down and the banks are standing. So I think all sectors are facing this. again, what appears to be, and I think it's television, I think it's a lot of things here, I think people need to use common sense. Where I live, people are practicing what they're being told to do. They're not going out, they're not going to restaurants, they are limiting their social interactions. That will have an impact on the curve of this disease. And when we start, and I think it'll be relatively soon, we will begin to see that we flatten the curve. And you know, I don't believe the world's coming to an end. And if it does, no one will watch this interview anyway. So I just think
yes,
that
the world's coming to an end for y'all.
Common
sense sir.
And the government. Here's the one thing that I'm upset about as an investor. We need the fiscal stimulus. I don't care what the heck the plan is at some point. Okay, get one announced, whether it's $1,000, $2,000, bailouts, whatever. The market needs some certainty and some action. Otherwise, you're going to see the volatility continue to explode. Let's get something done, and that's a message. That's a message to Washington.
Yeah.
Why we don't have a fiscal deal done because there's some, political partisanship is ridiculous. This needs to be announced today.
And Ron,
that'd be my message.
To illustrate what you're discussing, JP Morgan's out with a new, I don't know if I should call it a forecast and estimate for GDP for the year. Bottom line is this, I think 4% contraction first quarter, which we're in right now, 14% contraction in the second quarter, maybe then a rebound back half of the year only from that very steep contraction. So do you think anything can be done right now to keep it from being that bad, including what you're saying, announce the number, get the checks to households, however that money can be distributed, go for it?
Well, look, I don't think there's anything that can be done to stop the contraction that's going to occur, primarily in the second quarter. There'll be some obviously in the first, but I don't think there's anything that can be done. The question is can this end so that the economy can begin to rebound? I mean, the market has, whatever the economic is for the next 3 months, the market has taken far more out of market values than what that would be left in a vacuum. Mm-hmm. So, I'm less concerned about whether there's going to be a recession. I'm assuming there will be one. I believe that we need certainty, and I think the message should be, and at least here from the Midwest, I'm telling you that people are doing what they're supposed to be doing and being told to do, and I believe that we will look back and say, yes, this was the right response to flatten the curve.
I think they're mostly doing that here in New York as well. Let me just close with one question, if I might. I want to go back to Bill Ackman, whose comments impassioned, as you heard. Do you think he's right? Do you think he's too alarmist? Do you think he's ridiculous? How would you characterize those? If you were sitting here talking to him right now, what would you say to him?
Well, I think that, he's making the comment we need drastic action, and I think he put it in a 30-day vacation for everyone. He did. Where I'm not sure that I agreed was that I don't believe that if everyone went home for 30 days, I think it would flatten the curve, but I don't think we eradicate the disease because in 30 days we can all open our doors, walk out, and go back to everything. I think this is going to be a continual development. So I don't believe that in 30 days the world would, the disease would be gone around the world if everyone did that. It's my own opinion. Right. Again, I'm not a doctor, so I don't want to argue too much with Mr. Ackman. But I do believe that we are doing actions which are going to cause this to be handled. I do believe that stocks will be higher, significantly higher a year from now, but we'll see.
We'll leave it there. You may not be Coach K, but you are CEO K. Mr. Krzyzewski, thank you very much. We appreciate it. And be sure to stay with CNBC, as we'll hear from the former Citigroup chairman and CEO, a legendary figure on Wall Street and in the American economy, Sandy Weil. He will join us today in the 3 p.m. hour to discuss the banks and the market volatility. He's seen a lot. You don't want to miss it. Kelly.
All right, Tyler. Restaurants are getting hammered again today as more shutter or turn to just takeout in order to help stop the spread of coronavirus. Kate Rogers has the latest on this state of play. Kate, a lot of deep red on that screen today.
Hi, Kelly. That's right. The restaurant industry has been rattled as now 20 states have limited service to takeout or delivery. Data from Black Box Intelligence showed that nearly 70% of restaurants have experienced.
Don't eat that McDonald's, people.
March 13th.
Don't eat that Wendy's, people.
The Association projects to lose some $225 million over the next 3 months which will prompt the loss of between 5 and 7 million jobs. But some companies are now able to lean heavily on their delivery systems as the virus continues to spread. Domino's, for example, has instituted a contactless option with custom drop-off points for customers. And the company's CEO, Rich Allison, joins us now by phone. Rich, thank you for being here.
Thank you, Kate.
So we understand that you, along with other restaurant CEOs, had the chance to speak to President Trump yesterday. I'm curious if you can tell us a bit more about that call and give us your reaction to the federal government's response to this crisis.
Sure, Kate. Well, we did have an opportunity yesterday to have a brief but productive discussion with the President and Secretary Mnuchin, and took the opportunity as an industry to stress the important role that restaurants play in serving our communities, not only in feeding people, but also in employing folks as well. And the President and the Secretary showed a good bit of support for the industry and an appreciation for the role that we play.
You've employed tactics, rather, that I mentioned, like contactless delivery, these custom drop-off points for customers. Are you seeing more people turn to you during the pandemic?
Kate, for us, we're historically, here in the U.S., 55% of our transactions are delivery already. And what we've done here, as we've gone through this, started this crisis here in the U.S., we've really leaned heavily on the learnings that we've had out of China and Japan and South Korea, countries that have been really on the forefront of this epidemic. And our partners over there have just done a terrific job developing procedures around contactless delivery so that we can continue to safely serve our customers while respecting that social distancing that is so important in helping our societies all over the world mitigate the expansion of this disease.
So, Rich, if closures are forced at stores, does the company have a plan to support both employees and franchisees?
So we've had no closures here in the U.S., one, two, maybe. We have had some closures across several of our international markets. And, our first priority is going to be, in the event of any closures, to look out first and foremost, for our team members. And we've implemented already here in the U.S. some emergency sick pay in place for our team members. Also pay for our team members were they to be on a 14-day quarantine. So we're going to put our team members first and foremost, alongside obviously the safety and well-being of our customers, Kate, when we make decisions about when a store would need to be closed and how we would treat those that work in that store.
And Rich, if I could jump in for 1 second, it's Kelly here. How much is business down, would you say? Because again, I would imagine Domino's is one of the companies that could get through this as long as people can continue to order from all your restaurants. But how much are we down now? What's your worst case projection, and do you have the cash to get through it?
So, Kelly, we're continuing to serve our customers, through both the delivery channel that I mentioned earlier, but also the other big piece of our business, which is carryout. Now, we've rolled up all the tables and chairs inside our stores, so nobody's sitting in the stores today. But we do have procedures in place to safely serve our customers carryout, either at the counter, at pickup windows in some of our stores, or at the curb. So because we don't have a significant sit-down table service business, we've been able to continue to serve our customers as they need us. And to the second part of your question, we enter into this period of time very healthy, very healthy balance sheet, and also most importantly, franchisees enter into this period, with very strong businesses and strong balance sheets as well. And I'd be remiss if I didn't say how proud I am of our franchisees. They have really jumped in and responded to this crisis and are just doing an incredible job in their community today, supporting their team members, supporting their customers, and also, as Domino's franchisees always do, taking pizzas to hospitals, first responders, food banks, doing everything they can to help.
Rich, unfortunately, we have to leave it right there, but we do thank you so much for joining us today during this important time.
Thanks so much.
Yeah, Kate, our thanks to you as well. Kate Rogers, quick break, stay right there. We have a ton of breaking news on the other side of this, on these historic losers today Energy is the worst. Oil down to about $21 a barrel. Industrials, financials, those among the worst, down more than 10%. They were
All right. All those that's listening, please comment, subscribe. I mean, like, comment, or share today's stream. Always give a comment at the end of every video. Also, as you come into the stream, like the video. And always, sharing is caring. As you know, you're getting what we call the latest Eurocentric news up here about this virus. People are dying. People are getting sick. People are scared. They want the government to create the problem. Well, not create the problem. Sorry. They want to solve this problem. Sorry. You know how they do the Gallic? I create the problem, then I give you the answer. It's rocket science at this point. It is what it is, people. They do got a cure. They'll roll it out eventually. I project within month of June, this is all gonna blow over. That's not predicting. That's a fact. It's already rolling over right now in Asia right now, especially China, because this epidemic really broke off in November. And right now, I hear much talk about it right now over there. So they look like they got their stuff calmed down. So I think what we're going to experience here in the West and any parts where the virus is spreading, it's going to take a period of over 3 months. So for those who think that their spring is going to be very nice this 2020, you're going to have to think again. You're going to have to be staying in your house for a good while. I advise most people now that's take an opportunity of this. You have not only your supplies, but have your books ready. Have your mind clear. This is a good time to start reading on certain things that we have not taken the time because we're so distracted from the world. Might cut back some of the media and technology for a little bit. I know most black people ain't gonna do this because we like to be entertained. So throughout this crisis, people are gonna be entertained more than anything else. That's a good question. I'm not hearing much about this in South America or much parts of Africa right now. I know that there's outbreaks in Africa, particularly in Egypt or the upper part of Africa. But in the lower parts, I don't hear much talk yet. My advice to people, if you want to know what's going on outside America, have a friend that you know that's from these parts of the globe and communicate with them if they speak English. I would say the best bet, use Twitter or Facebook or any other social media outlets. Connect with these people. You want to know what's going on. Get the insight. Other than that, you have to go through other news outlets to find what's really going on. But like I said, people that's on the ground is your best teacher. That's my best advice. You get Brendan Jaggers, because you're never going to know, to be honest with you. They're only going to tell you what is outside the surface, but you just don't know because you're here in America. You're not in the ground floor to see what's really going on. Exactly, Professor. Professional Jay. That's right. This is correct. So, yeah, man. But like I said, just keep your mind right, keep your body clean, and you have no worries. You get me? If you have health problems, I recommend you stay your ass inside. If you got diabetes, you got any, lung problems, don't go outside. Because that's the thing the virus attacks. People that have more health problems than anything else. But if you're just a young buck or you keep your body and your mind and your health at a optimal level, you should be fine. Besides, covering your face. And another thing, these masks that these people walking around with, useless. You're gonna still get it if you got these type of masks. You got really wear, how can I say this? A gas mask or any mask that has a protective filter where the air is connected to it like a filter inside of it, not on the outside. That's my best bet to prevent any bacteria flying into your face. Yeah, I agree. I agree. And you know, some of the kids love grandma, grandpa, and they don't want to have any time away from. But in this situation, they have no choice. I mean, if you have older people, you want to keep them distance. Because most old people anyway are going to be isolated anyway. They're not going to go nowhere because they're old on the average. So they're not going to risk getting this type of virus and then end their life very soon. That's interesting. Yeah, that's interesting. Let me check if anybody's up in the link. Yeah, I don't see nobody down here right now. I can't really tell because I don't control the board. So that's the problem with StreamYards. They don't give you the option where people could run the stream. So anybody wants to come up, they could bring their intake. But it is what it is. We got to deal with the technology we have in front of us. And I find we got a dislike in this video. I don't know why people are disliking this video. It makes me wonder, is that a melanated man or a non-melanated man or woman? And like always, y'all could also subscribe to Chaos Rain channel. If y'all not subscribed to my channel, you could be kindly to do so if you want. I cover certain things, particularly with this corona thing. I might take a step back a little bit. I might get some people with solutions. A matter of fact, check my channel. I'll put my channel now for those. No, I can't put my channel because I'm not the moderator. But I'll put a comment, and y'all can click onto my my comment to find my channel. It's optional. Matter of fact, since I'm here, let me see if I can get somebody on the phone. I'm gonna mute myself for a second, people. Let me see what I can do. All right, we're gonna rock it through. Oh, you know, I know one person. 1 second. Okay, David Eager said, "Hi, could you end the main what? Could be specific? Is the audio load on my end? I don't want you. Yeah. Guess not. Let me refresh my page. Yeah, I don't see my audio load. No, right now they're taking an intervention right now. Not sure why it's so low. Hey, African Pearl, when you come back, brother, you might have to get a quick shower, man. Wash down all the, I guess, contamination of the air and the environment where you came from. You don't want to catch this virus, bro. Man, you crazy, African Pearl. Yeah. I feel like doing an international call. Let me see if I could. Let's check this out for a second. I might do that. Yeah, man. I tell you, man, I did the stock thing. Bought some shares, let it hold for almost a year. Didn't mean much. So I had to sell it. And I tell African Prime, one thing is I learned that you have to be, you know, take this thing seriously. You can't just play around with the markets. The markets will punish you if you're not really diligent with your research and when to buy and when to sell. That's one thing I could take out of all my little attempts from investing in stocks. All right. Hold on a second, guys. You can say it again. Hey, hello, everybody. If y'all can hear, this is my good friend Charles Faulkner Jr. You go ahead.
What's up, everybody?
Yeah, man. Yeah, matter of fact, it is kind of a good time right now. I never told you this. I did bought some stocks. I started messing around with it last year, and I kind of hold. Oh, was it like late 2017 or end of 2018, going on 2019? And it beat my ass, bro. After a while, so eventually I did sold the remainder of it last year. Yeah.
I think it's like one of those things that it's a game of chance.
Mm-hmm.
Basically, it's like life. Like you're betting on this wife or this husband to be great to you. You don't really look at the human error that can go into it. Like this stuff here, you know, for some odd reason, you know, it's got everybody's ass in a pinch. But it's not like we haven't been through economic downpours in the last 30 years before.
Mm-hmm.
It's just nature running this course sometimes. You never know what can cause the stock market.
Yeah. But, you know, funny for the stock market, even in its existence, from what I could know, that people said that it's going to go down and tank and crash. And say it doesn't really go like that. You know, it goes down for a period and then it will gradually rise again. You know, it's a fluctuation system. You know what I'm saying?
It's funny because people have such a defeatist mindset. If this economy crashed, who do you think is going to think the biggest hit? You.
Exactly.
You don't want it to crash. Like people, like you do everything in your power not for it to crash. You know what I'm saying?
Mm-hmm. Yeah, I agree.
So I tell people, look, you know, make some stock up on stuff that matters, like cleaning supplies, water filters. You know, your family are just gonna have to, you know, buckle down, get shifted. Like, I mean, people are like, really, toilet paper. I mean, if you're doing that much going to the bathroom, you need some pills because you're about to die of dehydration from all that diarrhea, man.
Oh wow.
Like I'm just looking at this people like buying up all the toilet paper, like you get like you're buying about a kilo for God's sakes, man. Like you're Tony Montana or something. Like I'm like we're focusing on the wrong stuff.
Mm-hmm. But Charles, you know, I mentioned the funny thing with toilet paper because one woman told me this. I never really paid attention to this. That it's ironic that a lot of our people, or just people generally buying up all toilet paper. And I'm thinking, say, what the hell are you gonna do with all this toilet paper? Because usually, if you buy like a supply, it'll last you depending how often you use the bathroom, maybe a week, maybe a little longer, depending on your activity. But when I find that people bought up all of it, it makes me want to say, do these people wash their ass?
Yeah, exactly.
No, this is a concern. Yeah.
You're dealing with viruses and bacteria and chemicals. A lot of it, a good part of it, deals with your immune system. Like nobody ever said, hey, I need to get my vitamin E boosted up a little bit. Work on my immune system, work on my cleanliness, my overall health. Like, how many people said, you know what? I'm going to start working out at home.
Yeah.
You're buying toilet paper, but you're like 300 pounds overweight. Come on, man. You got diabetes, you got all kinds of ailments, high blood pressure. You worried about toilet paper. But notice, what's in stock? Bleach. Think about it. Nobody's buying the pine salt. Nobody's buying the bleach. Nobody's buying soap. At least get some Ajax and clean your nasty tubs out once in a while. Some people out there.
Hey, my dude, you see, you're talking my language right there. Usually, and I think so, do people use the proper things to clean their bathrooms? Because I know I use the Ajax and necessarily clean. Well, you know, it's kind of dangerous, but still, I only clean one. I clean my bathroom once. Yeah.
I have a level fan with Lysol. I have a threesome with 409. Shoot. Like, I don't play around when it comes to that stuff. Like really. Like, I've been in people's houses where they don't even, their cats and their dogs are like having run roughshod in their house. Like, really?
Oh my God. You serious?
Like, and I've done it for a profession. Like, I'm not scared of coronavirus. I'm scared of like dog and cat urine. It's like, I have a very sensitive nose, man, and that sense of smell is like Wolverine-like. Like, it's almost like there's times I gotta walk out people's houses for calls, and I told them I can't stand in your house. Why? It's nasty. And it's different between being cluttered sometimes, because men, we do be a little cluttery because we built like that. But for to be just nasty with a nasty bathroom, oh God, no. Oh God.
No. Yeah, man.
Plan hell. I could even condone that. And here's another part. You know, my girl went to pick up. I was going to pick up earlier, you know, my son's school packet. But my girl did it for me, you know, surprise, surprise. And it was funny because she works in education, but how many people are willing to teach their kids since they're out of school?
Well, if you think about the projection of a lot of Americans, not just us, but generally, most of our children's education come from, like I said, either public charter or things we invest in these institutions. If they gave, let's say, a set of homework and things that we should help our children with, the average American today cannot do it. Surprisingly. And it tells you the real depths of the educational system. They said it's the best educated, but how the hell we can't even do the work now? Because think about it, math, English, and all have not changed last time over centuries, but we can't even do the basics. So it tells you, are we really learning?
How many people are functionally illiterate?
That's a good question.
Think about that.
Yeah.
Hold on.
Yeah, man. Yeah, like I said, they talking about it's the best education. That's a lie. We actually more of a dumbed down society outside of America. You know, the ones that can't have a pot to piss in, that will love just to learn just the basics, and we get it for leisure, and we're very dumb. Sad. It's very sad. Very sad. But that's how I think. Even the Common Core thing, I question that type of way of educating youth. It's like it's still more. What's the word? It's a special way to call it. Algorithm type teaching. You know.
It's funny because my son has an issue learning when you speak to him, like when it's the audible. But once you get him, he's a kinetic learner. He has to do it to catch on. And a lot of times we just see the limits in our learning, and we don't understand that we need to actually know that our kids, each one of them, learn differently. We want to tailor. We want to put a one size fits all on education, but not do the same for our children. Make the education fit the child.
I agree.
And not just education.
Mm-hmm. I agree. But you know, good for you that you have a woman that is an educator. You know what I'm saying? It kind of takes a little less of the work off of you. You know what I'm saying? That if your son struggles with certain things and not to do too much, you know, as a man.
Yeah.
In regards to certain areas of education, because you know we're good, but we're not good in all areas. It's like people know right now. You know.
I mean, that's the benefits. Like people think that you and I are woman haters, but that's one of the strong points of women.
Mm-hmm.
Women are much more slower to. They have a temperament for teaching. Not saying that it's just women who do it, but they just have the perfect temperament for it because they're much more. They have the empathy for it,
mm-hmm.
more so than men.
Mm-hmm.
So, and that's part of the reasons why a lot of our sisters, you know, I encourage a lot of them to go into education because who's better to teach our kids than us?
Mm-hmm. I agree.
And it's funny because when you look at this whole virus thing, it just not even being affected, not even you know, I don't even know what's the numbers of people who are diagnosed with this shit.
I had to Google that again, man. I stopped keeping count, to be honest with you, brother, because
because you got to think about it. We're not even at what 500,000. We have what 320. I don't even think we're at 320 million in American population. Maybe
no, right now the population of America is roughly 350 or close to that.
Yeah, 350.
We're not even a billion. We're like over a quarter of that. I'm a quarter of a.
Yeah, so
Mm-hmm.
Quarter, little more than a quarter of a billion.
Yeah.
So think about that. You literally have shut down cities with just the threat of this shit.
Mm-hmm.
And it shows how little unprepared we are for situations like this.
Mm-hmm.
Like one day we're gonna have to sit down and do some survival stuff for people who live in the urban environment and things like that. What they should train, like,
you know,
if you're not certified, I mean, sorry for you.
I'm not sure how well knowledge you that should be our next stream. To keep it real, brother.
Yeah.
I'm write that down. Yeah, that we're gonna have to cover. That's a necessity. Yeah, that's gonna be a necessity. Let me write that down. Keep talking.
Because a lot of us in the Black community are still prepared.
Mm-hmm.
We're not prepared for things like this, and a majority of us live in urban environments.
Mm-hmm.
So, what happens? Like, do we even know what the executive orders that were signed by Bush Jr., Obama, and Trump has been signed? And these are just the last 3 presidents. That when you have a martial law or some type of state of emergency, hell, do you even know a lot of us don't even know what the executive orders our mayors have written or governors.
Mm-hmm.
God, excuse me, I just went on a cigar run.
Yeah, go do it. Yeah,
I'm
here. Yeah. So, and there was a lot of executive orders that was pushed and passed for the last 19, maybe 17 years from the last president to this one. Even now, they're now going to start a rush and give people actual money because people are not going to work it.
Keep talking to me, one. Keep talking.
Yeah. They're going to actually give money to the American citizens now. You know, because I'm not going to be working for a while, maybe for a month or longer, depending how long this extended shutdown will be. You get me? And hold on, somebody sent me something. Let me just check. Give me 1 second. Somebody sent me a message. Let's see what it is. Okay, nothing. Yeah. Matter of fact, since you sent me, I'm gonna send it to you now. Charles, I saw your message in the messages. Yeah. And trust me, Charles, you don't want to read the chat now because yeah, but let me send it. A lot of bills and executive orders have been passed. That does affect American citizens right now as we speak. Even in terms of crisis, this is all planned out decades in advance already. You're just now seeing the effects now and them executing on the orders that was put in place now over almost 20 years ago. So I said it's going to be very interesting how this lockdown is going to be. Who's Chalice? Chalice? Don't start Chalice? You said my name Chaos, but you said my name Chalice. Monica, as you know, the figure swim that African Porn has put up on the screen, stop playing. They already started stocking our stores. We have some food. Oh, really? Good. Yeah.
Looks like I'm back.
Yeah.
Dealing with the damn sprained ankle, man.
Yeah.
Like hopping on Cassidy, man. I used to be wide open. Now I'm like hopping on Cassidy.
Yeah. I hear you. Yeah, man. Yeah. So, like I was saying before, what we see now is everything that was put into paper, put into law, executive, is now being implemented, executed now as we speak. You know, and it was something like this: either created or manufactured, created, or something that just happened by the grace of so-called God.
You asking my opinion about it?
No. I'm just saying. You have to respond. That's my scenario. I mean, you could probably give a take, but that's something that I'm thinking. I'm saying, but as far as I'm gonna say for it now. Share financial for you. I got these free stocks today. Take this time to share financial information with your family. Yeah, that'd be good for those who want to listen. And you know, one thing it's gonna prove right now, because you're not only you deal with life lessons, but also you deal with fitness and health. For most of us that got the health problems out, this is probably a good opportunity now to really settle and really rethink how we're gonna condition ourselves in this 30 days. I'm not telling people to be like Christ and go on 30-day fast, because most of y'all can't do it. Most of y'all can't fast for a day or two. So I'm just Xing out. But let's first take a conversation when food and supplies are very limited. This is going to test how well you're able to manage your supplies. I would advise most people, if you have not practiced fasting, you need to start doing that. Because one thing we know that's going to be still open is the fast foods and all stuff. And trust me, Charles, you already know, and I already know, last thing you want to do as a person that has health problems or you're obese, you don't want to start filling your stomach up with processed food or, you know, these type of foods. Why not exercise if you're not exercising? Sit down. Get me?
Oh, yeah.
And the funny thing about all this, to be fair, I know some people were doing streams about how the women were mad that they can't send their kids to school because they won't get the free lunch and food. And it makes me think that, hold the hell up. Why are you waiting on a school system to feed your children? Charles, when I heard that, that's a problem. That's a serious problem. So you tell me you have them, but you can't even put food in some of your children's bellies? What?
A lot of that stems from is because, you know, one thing being a man, one thing about being a man is that men are always going to feel the blunt of responsibility, even if we don't want it, even if we walk away from it. We're going to be shamed and we're going to be, excuse my language, shitted upon. And unfortunately, nobody's going to feel sorry for our black asses. And it's sad even for black women, because a lot of times, you know, you get the great ones. You get the great ones who are trying the best they can, and I don't knock them. You know, the ones who actually work and we all know in this godforsaken time of day, sometimes you can only get the career you can get. But when you got some lazy motherfuckers, both men and women, I despise that shit. You're not even trying. You're not even doing the best you can.
Yeah.
You're not even doing the best you can. Because a lot of this shit is like disgusting to me. And the reason why is because we allow subpar treatment of our children, and it's not even funny. It's a joke, really.
Yeah.
It's a joke. We don't invest into the future, meaning our children very well.
Not well.
A lot of us will preach college for a child, and then guess what happens? Nobody ever talks about how you're going to pay for the damn thing.
Yeah, sad. That's sad. It is very sad. Yeah, I agree. And I'm saying the biggest debt right now, well, not just some of the boys, but also our girls, is the debt. How you gonna recover this? You know what I'm saying?
Exactly.
You can't keep covering debt with debt for every generation and think you're gonna come out of this poverty, or if you're gonna be, let's see, seriously permanent, which the portion of America is right now, you're not gonna come out of that under. If they keep piling up the debt where you owe and then instead of what you don't owe, it's not going to work like that, you know? And really to pass on wealth, it's going to take a process. It might take a couple generations. It might not be first generation, but it's going to take a couple generations. And to even start that, you got to get out of under, number one, you know? Just to start to have something. You get me? Yeah. Sad, man. But
yeah, it's insane because, you know, a lot of people don't have contingency plans. What if I don't have the money to pay for this? What if I don't have the money to actually get over there? I mean, we're not setting ourselves up in positions of power, especially when it's a time to take power.
And no other better time than now, if you think about it. You know, and Mr. Gray been talking about this for the last year. You know what I'm saying? You know, it's the best time now. While things are still available now. You know, even now with this climate now, where things are very low right now, and it's going to probably be very low once it starts to slowly recover, and it's going to recover. It might not recover the way how we want it, but it's going to slowly recover regardless. That this is the best opportunity, you know. You know, and even with the banks that say they have all the money, they forgot to say, yeah, they have money, but they're still in trouble because they don't charge interest. It's zero interest right now. You know, that's a serious indication. But there's no interest. That's a question. You know, like I said, you gotta take advantage.
What's going on?
You gotta take advantage. Hold on. Let me check who this is. Somebody sent a message. And you guys listening, please always like, share, and subscribe to African Emporium's channel. He does a lot of things dealing with the stock market, what it call dealing with options, regular stocks, latest news, and how stocks affect, what to look for, what to focus on. You know, he does not give advice because he's not like that, but he'll guide you in a way how you can find the answer properly. You get me? Okay, you know what? Financial advice, you know, it's a lot of trouble in that. So, you know. Let me check what's on here. I'm just going around here. Man, people were funny with the mains right now, man. I tell you, a cat start running when they see his her master sneeze. I was like, oh, cat's smarter than us. It's funny. Hey, but you know, Charles, I know you got animals, and you know how to deal with animals in a way, because if people have animals in the house all day, every day, that's a problem. I don't know how certain human beings could keep animals in the house all day. Oh, damn. Hold on. call dropped. Let me re-answer it. All right, you're back. Sorry. Yeah. Yeah, you know, I never understand. I know you have animals. You have a dog, and I'm sure you have a cat. You eat those all day, every day. Like, don't they got like something for outside for the animals? Like, especially the dog.
Yeah. Oh, for a dog, my nephew has a dog back. I have a cat now. Cool. You gotta maintain that litter box religiously. You gotta literally mop. And a lot of people just get freaking lazy, and I know we all know that lazy person whose house we won't even walk on the same block because it's that damn nasty. You gotta maintain and disinfect your house on a regular basis. I'm not saying you gotta go total OCD, but you gotta do it on a regular basis.
Okay.
You gotta invest in the bleach and the Lysol and everything else.
Mm-hmm.
You got to.
You got to, man. Yeah, I agree. Yeah, and now a lot of people, even with these kits that they say they have present to test people, either they're functioning or they're accurate or not. You know, my thing is this: that nowadays they have not really given a proper description. This is the coronavirus. This is the symptoms. You know, it's like almost like the common cold or flu. You get me? So anybody that could be coughing and sneezing, Charles, could get it. You get me? Because now say, oh, so now just a whiff of a sneeze, now you're gonna be concerned. And people just get scared and say, oh, why are you coughing? And they put their hands and they start walk away quick. I mean, I'm understanding. It's crazy. But like I said, this will blow over eventually, you know. And I like I said, I project 3 months. You know, to be honest. I mean, I would say less than 3, but the whole spring is pretty much done with. Depending people have to stay in the house more than 30 days. And I think I'm not sure if you celebrate your birthday already, but this could probably hurt your birthday a little bit, because you are Aries. Yeah. Unfortunately. Yeah. But hold on, let me just check what's going on here. I tell you, man, African Emporium is making sure he's all set back up again, man. I tell you, African, you owe me, bro, for this one.
I'm on a cleaning, food, and liquor run right now. I already picked up cigars.
Mm-hmm. You stock up enough on your supplies? Just in case we had to stay in for 30 days?
Liquor, cigars, and everything else.
Yeah. I'm not saying you're going to go through the whole box. Not like you're going to go through the whole box, but you got enough for the whole month.
Well, I'm not enough for a whole box, man. Shit. Tell you, man, you got the taste for something, man. People might say you got bougie taste. Well, hey, it's good to be tasteful.
Mm-hmm. Yeah. I tell you one thing, a lot of people go ahead. You better say something.
I'm just hoping that everybody will keep their God-given sense and actually take this time where they're at work, learn how to improve your health, learn how to improve your financial situation, learn how to improve your communication skills.
I mean, improve your mind.
It's nice weather out here. It may be 56, but still, when you come outside, wear a hat. Dress appropriately. I think me and my girl was driving like about an hour ago. We saw one chick. She had damn near Daisy Dukes and a halter top. I'm like, yeah, it's 56, not 96.
Mm-hmm. Yeah.
Like, you don't have to be somewhere. Don't be. Make sure you have sufficient hand sanitizer and disinfectant wipes.
Mm-hmm.
If you feel like you got a cough, just make sure you use your sleeve and not your hand. You know, basic shit your grandparents and parents told you. I'm just looking at it from a status quo that as long as we got some common sense about our asses, you know, we'll be okay. Jesus Christ, you built like a black man's dream. I'm sorry, but anyway.
Yeah. It's funny. Yeah.
But I look at it as, and you just got to be a little bit more careful and take certain precautions, man. Just don't go out there willy-nilly thinking this. It may not be as serious as they making, but don't take it as a joke.
Yeah.
And check on your elderly family members, man. Make sure they're doing okay. You know, if you got an elderly family member who's sick or something, at least get some kind of mask or something. Or just, you know, because, you know, a lot of germs we give off to the elderly, you know, they could get it a lot easier. Make sure you stock up on your vitamin E, your vitamin D.
Yeah.
Because a lot of us are just, a lot of us are in trouble. And one more thing, look out for your less fortunate people, you know, because, you know, this is a hard time for a lot of people. This is a hard time for a lot of people, so you never know. You never should. Never know who's going. Okay. Oh, that store's closed. Jesus Christ. But, you know, you just gotta look out for each other because you can't go into this rugged individualism bullshit. No man has ever had any incident being a rugged individual. I refuse.
Sorry about that, guys. I'm just sending a text. Give me 1 second, guys. Sorry about that.
Hopefully everybody's paying attention to what I'm saying. You know, and let's treat each other with some kindness and respect. Well, everybody's going through this shit together.
I think this is going to test America and how well organized some are. Well, it's going to test a lot of people, especially our people. It's going to show the vulnerability that what happened 15 years ago with Katrina or any other situation. That say if you're going to keep playing around, not being prepared, or if you're a woman, if you're doing it all by yourself, or you're a man, or whatever case maybe, it's time to really take it a little bit more serious. So that, you know, it's better to have two and be organized with people you know than doing it by yourself. If you have, you get me? It's not going to fly, especially when it comes to that people.
It's going to be a little bit of a hard time. I mean, it's not the zombie apocalypse yet. So, you know, let's not lose our minds.
Yeah.
Let's not lose our minds yet. So let's see how it plays out. Take care of your health. Take care of your everybody. You know, make sure your children are being fed properly and take some vitamins and nutrition.
Dr. Chaos, you there?
Who that, African porn?
Yeah, what's going on? Good. Thank you guys for being patient and waiting on you, brother.
All right, you're back, brother. You're back. Hey, this is African Emporium. This is his channel here.
Good to be back, man. Thank you for holding down the fort, man. I thank you, man, so much. I'm indebted. I'm indebted to you. Oh man, what a day! Again, you know, just kind of going off the backdrop, the drop values that you guys were talking about there. You know, and this is how important it is that we pay attention to some of the most basic, you know, I would say humanistic, innately things that come with you through birth, and meaning learning how to protect yourself, right? We always talk about self-preservation, right? It's the first law that we all should honor, preserve thyself, right? And you do your part, everybody else should obviously be able to, you know, should do theirs and make this thing a little bit more easier of a transition to get through in terms of this coronavirus. And you know, just kind of putting it in even to more under the microscope. Now, again, you know, it's forcing people who had, you know, somewhat sketchy, you know, hygiene issues and things of that nature. If the virus will get them in being a little bit more cleanliness, clean in terms of how they look at cleanliness, then they're going to be in trouble. All right, they're going to be in trouble. Because again, what I just witnessed in that post office was enough to make me really, really take this thing a little bit more serious. And excuse me, too, I'm finished up eating a little bit. I was trying to eat on the run, so forgive me. But yeah, so again, like y'all probably saw, I typed in the back chat that a guy, literally while I was in the post office, fell out, an older gentleman. They had to call the ambulance. I mean, I'm like, seriously, like, if I could have just waited maybe 10 minutes more, I wouldn't have had to deal with that. And that was before even he fell out. It was a Mexican lady at the counter, and she had that kind of real, kind of like opaque look in her face, like kind of pale, and she was just coughing, and everybody that was at the counter for us, the receptionist, well, the attendants, excuse me, at the post office, they were looking like, oh man, you know, and then everybody else was looking around like, and then when, you know, she turned around and looked at everybody that was in the post office, and everybody looked at her like, seriously, you know, like seriously. I couldn't make stuff up, you know, like, man, this all happened as soon as she walked away from the counter. As soon as I got, you know, up close to the counter, the old man fell out. You know, he just dropped. The same way you probably saw some of those videos of people that was falling out in China. He literally fell out like that, and everybody they had to stop. The director came from the back. They made, you know, shut all the tellers down. And then when they had to go help the dude, pick him up, then they had to take him over to a little isolated area, call the ambulance. And then they start spraying down the entire post office, all the boxes, the envelopes. They sprayed the patrons down, meaning us.
Hell yeah, man! They said, "Oh, this no. We got everybody get out of the post office right now. Leave. We got sprayed."
Bro, I was like, this can't be real. I was like, this is surreal now, because like I was actually in a scenario like that, and again, I'm like, you know, much as we've been talking about it here lately, you know, now it's like, okay. You know, you trying to hope that nothing like this happening, you know, while you out and about. And the one day I chose to run the little errands I did, because I kept putting them off, this happened, right? So couldn't make this stuff up, man. It's crazy. So, you know, I didn't drown my arms, my clothes with all kind of hand sanitizer, pushing the sodium spray they had. Good thing they had that at least. They on top of it over at the post office at least. But yeah, that was kind of crazy there. That was crazy.
Okay. Well, at least you're all right, bro. At least you're okay. You're all right. That's all that matters. You know what I'm saying? You came out of that. You came out of that unscathed, man. Unscathed. You get me?
I hope so. I'm gonna speak positive, bro. Because you know they tell you it takes about 5-6 days.
Well, listen. If you feel that you might get a serious cough, it's oh God. Hope it's not. Some people now afraid say, "Is this the coronavirus?" Just a little cough. Now I say, "Oh my goodness."
Right. You know what I'm saying?
It got people shook, bro. Like,
bro, I'm just like that now. And I'm a person, you know, because I'm into the health and wealth, you know, advocacy, you know, opportunity in terms of what it really does for us. You know, trying to really give us, you know, something to deal with in case something like this happens. And so I'm like, you know, I rarely get sick, you know. And so if I even get like,
I rarely get sick too. I don't get sick off either. It's like maybe season, I might get the cold for a while. Then, you know, take my little precautionary little medicines here and recover. Same way. You know? Right.
You know, you'll rarely even hear me even have the sniffles, right? Because again, I'm cayenne pepper down. Again, I got my little herbs, whatever. You know, everybody got their little remedies. I got mine, but I don't play that. You know, all that. You know, I'm just that's just not me. And so yeah, man, that was some serious test of my patience. But I had to, you know, get my stuff out. I couldn't, you know, risk just leaving and not being there and couldn't handle the business I needed to handle. So it was just, again, it was a very surreal moment. And I was like, man, this can't be happening. That's all I kept saying. I said, this can't be real, bro. Really? Really?
Yeah.
I hope the guy all right, man. Older white guy too, you know. I hope he all right. That's all I can say. If it ain't, I hear about it in the news, you know. Unfortunately, if it happens, you know, if that's the case, because he really looked at, you know, pretty shook up, you know. So hopefully, you know, hopefully it's no more than just something simple. I hope it ain't the Rona. But these days and times, you can't be too liberal with just trying to be willy-nilly. Because it's funny, see, because as soon as I came to the counter, the attendant looked at me like, it's like, yeah, you preparing, you ain't playing no games. I was like, nope. I had hand sanitizer. Every time I touched my hand sanitizer. Every time I got close to somebody, I just start using hand sanitizer. I even put some on my little mustache, bro. That's how crazy. I took some out and rubbed it on my mustache.
Yeah, you're right.
He's like, bro, you ain't playing no game. I'm like, nope.
You took like rub your locks with it. You rub your locks with the hand sanitizer.
I had my like a little scully on, it's called a slap. So
you got what do you call the little hat, the big hat for the locks, like the turkey, like no.
Yeah, it's got they call it like a slap or something like that. But it covers the entire hair and all that in your head.
Yeah.
Yeah, man. So I was like, bro, this not today. Not today.
Hey, Mike, you stay your ass home. You get yourself.
Oh, by all means, and you know that's why we were just talking about that the other day. You know, having ability to have, you know, again, for some of us who are entrepreneurs, obviously, you know, have our own little businesses, you know, where we kind of work from home and, you know, do everything we need to do kind of on the fly, but we're not out more than an extensive amount of time unless we have some kind of meetings or something. But outside of that, I'm sedentary, and I love it. You know, that's what's crazy, but I love it. You know, I love being home. I love being sedentary. I love doing what I do. Having the ability to have such a skill set like this again is monumental for moments just like this, right? So this is kind of like, you know, a moment for me to really help and just share what I know too, because other people who may be in a position now where they can try to, you know, pick up a little time to learn something new, whether it be this or just anything, just pick up a new hobby for what it's worth. It's really good, right? You know, to have a moment like this where you can still kind of go out there and find capital. And that's with us waiting on them to cut that check, right? Because as of now, I'm pretty sure you guys know they are going to cut that check. It's pretty much all but certain at this point, I think. So I believe Trump will try to use it as a piece of leverage, right? To kind of garner new votes, who knows? But y'all know how this stuff go. It's your money anyway. So it's not like he's doing you a favor. It's your money anyway. It's taxation. All right. So my sister Playhouse says she's I'm on work. You said she's at work. I guess she's so I may not respond to time. Yeah, that's fine. It's fine. Yeah. So no worries. Over Sunline in the house. Good to see you, family. Peace, power, and profit to you, man. Thank you for stopping by as always. All you guys has been tuning in. Again, brother Chaos Rain held down the fort. Can't thank that brother enough, man. I'm humbled by that. You know, help you guys.
Monica was getting a little restless. She said,
yeah,
hurry, come back.
Right, yeah, man. We gotta look out for each other, man. I'm a battle mate. You know how we always call each other battle mates. All of us battle mates, you know.
You get me, African. I could have jumped off if I was really taking the shot seriously, but I said, nah, man. I'm gonna hold down a little bit for the brother because he's here, bring out information, and he don't want no dead air. So I run my mouth a little bit best I can.
Oh, no worries. You did phenomenal, bro. I appreciate it again. I thank you. I can't thank you enough, man. And
I could have gone somewhere right now, but I chose to stay till you came back. Keep it fair.
I appreciate it. I can't even tell you how much I appreciate it. You know, because like you know, when we obviously trade the market intraday, you know, we're obviously in the mix, and you know, most of the guys. Let me cut this down. Sorry, most of the guys already kind of know what's going on. Obviously, they do this for profession value, and some of them do it in sideways, and a lot of people do come here to learn as well. But ultimately having an ability where we can discuss, pretty much just current events. That's basically what this is. This is current events at this point, because all of it is synonymous now. You got markets being under attack, people's health being under attack, again, people's job being under attack, you name it, so it's, all of us are under that same umbrella now where we're trying to make sense of this, but more so trying to think about what tomorrow's going to look like, right? Because that's what's becoming more relevant now, where the way it's going, New York is, I think, at this point, I think they're going to be the second major metropolis city to go into self-quarantine, the entire city. I think what's his name? Mike de Blasio, whatever, the mayor of New York. they've been pretty much briefing people around the clock. I think they're going to be the next ones to go on the self-quarantine for like 14 days. San Francisco already has done it. There's other cities are starting to kind of ramp up that mentality where they're going to do it. And so if you are in those areas of interest, you may want to, be very studious and go handle all your errands that you need to get done, the necessity things, and get it out the way. And don't sit there and play that, I got time, it's going to be okay. Because if they take it to the level that, it possibly can go with this new Defense Act being, enacted, and them giving a little bit more power to the National Guard and the military, then they ain't going to play no games, right? The police might a little bit, but the military, when they have a strict operative, set of orders, they're going to follow. They're not going to play that, okay, we'll let you slip by. They don't know. They're going to turn you around. I'm telling you, they're going to turn you around. And so you won't have that kind of leeway to kind of finagle your way out of it, right? Unless it's some kind of crazy emergency. And at that point, I think they'll probably show for you. But just be aware of that, guys. Be cautious. Again, don't try to put chance to win if you don't have to.
It's coming. It's coming. You know what I'm saying? They know they were going to do this because they know young people are the ones that are not going to really stay in the house per se. But they're going to, because mostly that's afraid of potential they might get sick and die. Some will take it seriously, but people that is under the age of, let's say, 40, besides if we're in their 30s, where age we are right now, someone under that, they might not take it too like it is, going to say, well, I'm going to live life and all stuff. That's why you see a lot of them when they watch what's going on in Florida with them going to the beach for spring break, having fun, holding hands, kissing it. It's like people that's older, they say, are you serious? Do you know there's an outbreak and you sitting there loving and dubbing and having a good time? Where you could.
Well, case in point, look at Florida. Look at Florida right now. Dang on. There's the bell, guys. There's the bell. I'll close out.
Oh, the stock market's done for today.
Yeah, that's retail trading is done for the day. You still have extended hours, but yeah, the official bell has rung. All is fair in love and war, as we say in the market. If you ain't got what you need, I hope you can get it tomorrow. If not, you can trade the rest of the after hours. I just closed out my S&P trade. I should have set I noticed that I just looked at it earlier. I didn't set my doggone trailing stop on it, but I looked at one point. I think I was up around about 1,700 on that joker, and but I ended up cashing out a little bit over $1,000 plus in that spy trade. And that was a day trade, strictly a day. Excuse me, it was strictly a day trade in the S&P 500. Again, watching it kind of ramp up in the morning. Again, y'all know me. I'll share my little screen here in a second, but watching it ramp up this AM, with the ideal again with more of this kind of stimulus talk, right? That's what's been feeding the confidence in the market, right? This stimulus talk, right? Are y'all going to bail this company out? You're going to bail this corporation out? You're going to bail this particular sector out, right? What are you going to do for the housing market? What are you going to do for healthcare? What are you going to do for insurance? What are you going to do? All these different things. Everybody got their hand out now, right? And in most cases, you can say somewhat rightfully so, but some people don't need to be at the front of the line, right? And if from my opinion, based upon what I've been able to research, and again from the different laws, some of the regulations, things of that nature, the first person should receive something out of this. Number one should be those who are in detrimental diet, health, health despair at this moment, and then right after that, you guys, right, the public, right, the American people, right. So all these people like the airline industries and Boeing and the casinos of all people, casinos lining up trying to get them a little piece of money. Like, no, y'all need to move to the back. I'm sorry, y'all are not necessity, right? And so again,
here. I'll jump back later. I've been here.
Okay, yes, fine, family. I know you have some business suits. Thank you as well too, Over. Again, thank you. Over.
You're welcome. You're very welcome.
Yeah, and so again, just in moments like this, it just it kind of breeds the type of the mindset where people are not necessarily finna just play their whole everything is okay. Okay, I can take a moment to just let them bail out the corporations first, as opposed to them taking care of me. So that's not what we're just we're not finna even let that dog hunt, as they say in the South. We're not even let that dog hunt. Right now, so y'all need to cut that check first to people who need it most, right? And I think from there they'll worry about bailing out these billionaire corporations and later. All right, billionaire status, I should say, corporation that's got these high market caps and CEOs making well over $20-something million a year and bonus incentive package. They're going to be fine. I guarantee they're going to be fine. It's so funny too, because I read an article there where they're saying typically if they go ahead and cut that $1,000 check, most people who are well-to-do and really got money, like millionaires and billionaires, they should instantly donate their portion of their $1,000 to a charity or people that really need it, right? Because of course they already know that these people, again, they don't, they're not necessarily in really need of that kind of stimulus to a degree, right? So again, it's just crazy when you think about it. But anyway, who knows, right? So we're here to talk about, like we always do. Again, it's just been a crazy wild day for myself personally after what I experienced, but I'm pretty sure you guys as well, right? Wherever you are around this planet, in your own respective domain, dealing with this thing like everybody else, because every day is becoming a little bit more and more heightened sense of awareness, right? You're getting a little bit more knowledge. You hear more, more cases or more things that's happening in terms of governmental agencies, dropping certain mandates, this, that, and the third. So you're just trying to make sense of all of it, right? So you got to ask yourself again, are you doing everything you can in your power to protect yourself and your families, right? Because that's what's most important, right? Cleaning up that house, right? I know y'all hate to do it. Some of y'all brothers out there, you guys, right? You got your little man cave, you ain't cleaned it up in a while, right? And your wife or somebody, girlfriend, may be like, hey, it's time you get down there and clean it up down there, right? Put some of them disinfectants all through your little areas down there. So again, we have to be a little bit more conscious now and do what's right, again, to protect everybody, right? You can't play that commando role and not take care of everybody else as well. So just want to kind of reiterate that again. So outside of that, I'm pretty sure some of you guys who was in the market, you probably did pretty well. Being able, you was able to trade the trend because the market, in this moment, the market is very, definitive in terms of, which way it's headed, right? Once the S&P folds, pretty much all stocks after that will fold with it on average. If you're just looking at the broader market, all the major sectors out there pretty much just been getting hammered. Again, speaking about gold today, same way, gold had a major breakout, coming out of Monday, right? And then again, today it rolled over, right? What the junior miners did, like J-Nug got hammered today, right? J-Nug got hammered today. And again, it popped back up a little bit here after hours, but as far as intraday session, it got hammered. Y'all know I swung like 100 shares of it, so I was able to cash out, up around, it's around about when I sold that position, I had to go back and look at it. I think it was roughly around, I think right before I got ready to leave out, right, and run my little errands, I cashed out somewhere around the $11 level, right? Somewhere around a little bit over $11 and some change. And it's funny too, because I was looking in on my screen when I was out, making my little moves. I was like, man, J-Nug just getting pummeled right now. So it's all the way back to like $4 and change now. It is all the way back to $4 and some change. Let me see if I can pull this up real quick here. We'll go over it, very briefly here. Yeah, you say you got to go to the grocery store, Sister Play Hot. Man, yeah, be safe out there, sis. Again, handle what you can. Again, be conscious of what you need more or less than obviously, so you can make sure you stretch your funds in a way where it's most needed. I mean, I know you got lots of money, but right, you got it like that. Miss Money Bags right there. But still, make sure you guys are very resourceful with your funds and especially when I'm saying that for liquid cash and things of that nature, right? And you may want to also take a little bit of cash out too, right? We all know everything's typically done online and credit this, that, third. And moments like this, they always tell you to have a little cash on standby as well, right? And so that's important to know, right? Stash party going on right now. Again, so stash party. So some of you guys got your stash account, run over the stash right now. Log on to stash so you can get those free shares right now. Thank you, brother, for mentioning that and bringing it up. See, that's why that's what the team is all about. See, that's what the team is all about, right? That's what it's all about. Boom, got mine. Y'all hear the music? I got mine. You got 2 minutes. They say you still have 2 minutes to boost the pot. So I guess after 2 minutes, they're gonna shut down the ability to get those funds. So let me go over to the stash real quick. Thank you, brother Mathis. Thank you for reminding us. All right, so there you go right there. They gave out shares of Adobe today. And I just barely made it in time. I got mine, as you can see there, so you all stocked up. All right, so some of you guys got your stash account. Take advantage of this free money. That's basically what it is. It's all of a service to keep you guys invested into their app, their app, so to speak. Great opportunity. Again, it adds up. It adds up, and especially right now, if you're getting these stocks right now, again at the point where they're all sold off and very like dirt cheap. Now, again, about 3 months or 4 months from now, when they really get a handle on all this coronavirus stuff and the markets begin to really rebound it or get its footing underneath it, not saying it's going to take that long or whatever, but just hypothetically, imagine where your position is going to be 3 months from now in some of these stocks who are really worth it, like an Adobe, right? We know Adobe is going to be here, right? Adobe is not going anywhere, right? So I guarantee you, at some point when the market bottoms, Adobe is going to be the one, one of the first ones out there among many others who are going to rebound. Right. So again, I got mine a little bit out of there. So happy about that. Thank you again, Brother Matthews, for reminding us to go take advantage of the stash party. Right. Right. Kudos to that, brother. Right? I wish I had some sound effects. Drop your little sound effect. Right. Free money, guys. That's all I'm saying. That's free money. I can't. It's free money. No strings attached. No strings attached whatsoever. They just giving out, giving out free money, free shares of Adobe in fractional value. Off is what I'm saying, fractional value. Right. So that's very important. All right. So let me stop sharing the stream over there. Old stash party. I appreciate the fun stash. All right. All right. There we go. Way to go. Way to go. All right. So yeah. Again, yeah. So the brother say I beat up on the SP 500 to go down to 225. It's basically took it off. It had a nice drop today. I mean, I don't know where you got in at, but if you got in anywhere, near the top where we were trading. Well, actually, when I took a short at 245, like early in the day. I watched it kind of spike up like always. Y'all know my little strategy: 9:50, 10 o'clock. I watched it kind of kept pushing, and then I waited, methodically again. Literally, right. Matter of fact, y'all, let me just not talk. Let me demonstrate. Let me show. Right. Let me show you what I'm talking about. Right. Let me show you exactly what I'm talking about here, because again, this is about learning. Right. And so right here, right, y'all, again, I have a little simple little theory. If you want to call it strategy, call it that. But literally between 9:50, right, 9:50, right, to 10 o'clock, what did it do? See, right up here around about 9:55, what was the stock trading at? 10 o'clock, 9:55 at 245.88, right? It had a small pullback here, ran back up, tested that point of resistance, got rejected again, literally around about 246.20. I actually went and made a new high, which is technically at a point where the stock makes a new high, then chances are it's going to kind of push higher. Only if the volume and the buyer stay pretty much committed to the trade. But we know just from watching the market, over the past couple of weeks, anytime the S&P 500 gaps up on a down day when it's already gapped down, any little top tick values of it where it hits a high during the intraday will get sold into. And you have it here at the first peak. It got sold into. It rebounded slightly. They ran it back up, and they shorted more of it up there. And after that point, it was just a free fall straight down. Right? Textbook too. I mean, textbook double top. That's basically what that is, a textbook double top right there. And I got short lifted around about 245.30 something. And I added, I think, 25 more shares to it. Made my average ended up being, God, what was my average? 245.01 now, because I added 10 more shares to it after, when it broke below VWAP, right? Which is obviously, that's a sign that anytime the asset breaks below the VWAP and the 20-day moving average, which it crossed underneath it, that's more of a bearish signal. So I got short 10 more shares on the S&P 500 at that point. I had a total of 135 shares short on the S&P 500, right, at a 245.10 average, right? Excuse me, 245 1 cent average, right? So again, that trade, you guys were watching it in the real time, obviously, while I was away. It ended up, again, hitting the peak at some point, and almost near a couple grand, right? Obviously, if I was here, I would have locked it in. And I forgot to set a trailing stop, right? But I know how the S&P 500 moves. It moves, it snaps back, in 5 or 6 point swings sometime. In moments where it's like, if you don't set your trailing stop just right, it'll come back and kick you out the trade. So again, knowing the way that I trade, I know how to, kind of, trust my instincts. And rightfully so. I mean, it went all the way down below 230, right? It went all the way below. Hey, what's going on, E? But Drummett, Sister Drummett in the house, ladies and gentlemen.
What's happening? What's happening?
You got it, sis. Long day out here in this market, been fighting and trying to stay safe in the same breath.
Absolutely. I had a good trading morning.
You did great. You know, you're welcome to share it too. So you know how we doing here, man. This is I like to look at this as an educational channel, right? You get a little bit of everything, right? Brother Chaos went and held the fort down earlier while I was away. Again, can't thank that brother enough. Him and Over Chris was on while I was running my little errands, or so to speak, and he did a really good job kind of keeping people informed of some really, you know, useful information. And again, just watching the SP 500 here on the back end of the day, you see it's kind of, you know, pulling back up after hours, which is not, it's natural. You got a down day today, and you know you got people just trying to fight. You know, I mean, these people are hungry. They're looking for money anywhere they can, right? And what you have here after hours, this little spike up you have here in the SP 500. Let me pull this back up so I can show you what I'm talking about. This right here, all this volume right here, those big green candles here. Let me zoom in.
Oh yeah.
Right? That's dark pool money. All that's dark pool money. That's all it is. That's dark pool money. Federal Reserve money. They might be buying in there under the dark pools as well, because again, they can. It's legal, you know. So this is not volume that the average, you know, person might be seeing just outright. But if you look at the volume bar here, literally right here, right before the close, look at that volume bar. Wow. You know, that just up there 14 million shares bought of the SP 500 going into the close. So again, you see right here from this candle, those big 5 minute, you know, bullish engulfing candles, that's institutional money. Don't kid yourself. That's institutional money all day long. You have candles that kind of length like that, and this is a 5 minute chart. That's a lot of big money going inside those 5 minute bars. But that's basically probably how they trading anyway, off the 5 minute. Right there, you know, they're not in a big rush like we are as day trading, trying to scout 1 minute and then tick charts. And so they just, you know, juicing big money in there. And they, I mean, again, you can definitely see that they were doing that right into that trade. So, but yeah, so again, just kind of going over a little bit of the day, recap a little bit, a little reconnaissance. So yeah, so what do you take today, Sister Drummett? You want to share your screen, go over anything that you might have did today, and maybe explain to the family as well.
Oh, I'm in the basement. Wait, let me see if I have my chart.
In the drama studio.
This pull up dip bar.
Oh, you're in the workout. You're in the workout zone. I got you.
But I wanted to listen, and
well, I got you. No worries. But yeah, so again, just kind of going over in that, and again, for some of you guys don't know, Sister Drummett, she's avid forex trader. She trades all different assets, obviously, but she's definitely a big forex trader. And you know, again, moments like this where currency pairs in themselves are also, you know, getting a lot of volatility as well, right?
Oh yeah,
they're getting a lot of volatility, more than usual, I would say, just me peeking in on it because of all this uncertainty, you know.
Yeah, it's very, very volatile. I mean, I took a loss last night, but I was able to recover it.
There you go.
The U.S. dollar, though, I mean, it's just like going crazy. The DXY is just parabolic. It's starting to pull back now, but I mean, it has blown through like all of my order blocks. You know, all supply and demand. It just blew past all of that stuff. So like trying to figure out how to trade it. Like I had a setup where normally it would have pulled back. Man, it just blew right through that. So that's where my, you know, loss came in. So it had been going since like that from like 3:30 a.m. And that's usually a time, the London session, you know, when everything just starts to, you know, once it hits that order block, you know, it usually reverses, but that wasn't the case. And it's just been going and going and going, you know. So and it's even harder to take it long because you don't know how, you know, long it's gonna be going parabolic like that. You get in there and flip around on you, and you be up $700-800, and before you know it, you be down $800. So I usually wait till it's, you know, I see my setup, and I don't take a trade if it's not my setup. So I don't care how, you know, parabolic is running. I'm not trying to jump in there.
Right.
But it was USD. It was what was it? Yeah, USD EUR.
Okay, so you traded the dollar against the euro today.
Yeah, and
okay.
Also I got a bag off USD JPY. It kind of tricked me at one point because it took my stop out and then it dropped, but then it went back into the order block. I was able to get in and regain, some of my money. And then I think this morning at 9 a.m. It's on my iPad. So if I go through my charts, it's gonna take me off the out of the chat. So I'm trying to remember what I took.
The USD euro or something else?
What did I take this morning? I think I took I didn't mess with that anymore because after that, after it got
right. Okay. Tracking.
I took I want to say Euro JPY.
Okay, you hit euro on the JPY.
Yeah, I think I caught that going long into the order block.
That was a strong sale today. Strong sales today. Strong buys. Strong buys today definitely was the in terms of the forex pairs. So we got to do that does trade the forex market. Yeah, strong buy in the euro USD, the British pound USD, pretty much the GBP. Excuse me. Right, tongue tied a little bit there. The AUD and the USD, the Aussie, obviously Australian money. Right. You also had a strong buy in the euro and the JPY, and also the euro and the CHF, which is the Swiss franc. Right. So all those were strong buys today, actually. In the euro.
Anything with USD in it, if it was the second pair, then it was going short. If you were using a European major against the USD, then it was going short because the Doxy was long. So anytime, like I was saying, anytime the USD is up, all the European pairs with a US as the secondary are going to be going short.
Right.
So sometimes I trade both because I know I'll take a USD main against a euro and a euro against a USD and take one long and take one short.
Right. I like all the European stock, currency pairs were popping today. Again, the British pound, even though again we got the whole Brexit thing rocking, but that whole sector over there was rocking today and strong buy value today. Again, so yeah.
I like to take those at like the London session, 2 a.m. Those really be popping at that time because that's their market is open at that time. Like that's like 8 a.m. or something like that, 9 a.m. there.
Yeah.
So like, the market is open and it's vibrant at that time. And then I like so I like the London session and I like the New York session, which starts at like 8 a.m. Right at 8, 9 a.m. and even 11 with all this volatility lately, because usually I'm finished by 11, but there have been some nice moves at like noon and 1 p.m. I'm like, wow, okay. Because I have been waiting all day for that USD to turn around. And the minute I went and did some stuff and was, doing some things, I came back and that thing was like reversing. I was like, there it is.
Yeah, I'm seeing them now. I'm just looking at the charts. Even though they was labeled as strong buys, they were kind of chopping out throughout the day. Obviously putting up some nice little pips with some strong candles, in and out. And then a little bit on the somewhat, I guess the intraday session when they kicked in, some of them pulled back, kind of rounded the bottom out, and then kind of picked up on the back end of the day, just looking at some of their charts. But they were up, I guess, coming out of the futures market, where that's what they may have caused that or triggered them to be strong buys. Who knows? But yeah, all of them seem to be carrying the same little charts, so to speak, to a degree here. Just me looking at it on the back end of the day. So
yeah,
I can imagine what it was like.
That Euro JPY, I have been waiting for that. I was kind of pissed, but it went down so far.
It did, yeah. I can see here.
I'm waiting for it to get to the next. On the hourly, I have an order block. So if it goes into that order block, hope to take it for London session, or I usually don't trade the Asia sessions. Sometimes lately they've been some good trades in there. 10 o'clock, 10 p.m., because Asia session is over at 11, but it's just not as much volume. But I guess now because of the virus, is everything is just running crazy.
Right. Right. And I'm standing here too because I see that again they had a block line sitting up here at the one it's right about the 1.8 excuse me the what was that, like the 118.30 pip, somewhere around there. They have a long trend line coming up there, so that might be a block area that again, if we can make it back up there in terms of the Euro JPY, that can push above that and push back higher up than that 119 region.
That's what I'm looking at.
Yeah,
exactly. I prefer when the chart has like long candles as opposed to choppy ones. I want to get above the choppy ones because that takes a long time for price to get through.
Right, especially in the forex market, because again, that little kind of tap like tic tacs as opposed to them long baby rings. Give me a Snicker bar king size. I want a king size Snicker bar candles. That's that bag. Ooh, boy, because that's kind of like in and out. That's an in and out trade just in that one bar alone. If you capture it right, you don't have to sit around, and just play the tic tac game all day. You little small little little blotchy little candle. So I definitely know what you mean. I definitely know what you mean.
It's easier. It's once the order block hits those long candles, like the engulfing ones, it's just game over. They just react to it instantly, and and like there seem to be a lot of orders because it's like the price action is just flipping back and forth too. That's why it's easier to scout, because you don't know when it's going to flip back. It'll give you, it'll give you some price, it'll give you some play, but then all of a sudden it'll reverse on you, and then drop. It'll just keep doing that flip and flop pancake thing, which I hate that, because it's like, okay, you might have profit of 250, 260, and you're like, the way the way it's set up, you could get $400 or $500 or even more, but just that the chart, that price action is so erratic. It'll go from $200 to $30, then back up to so it's like popping around like real crazy. So I just take my profit.
Right. Well, I rule, and you're doing exactly what you understand now falls an instinct now. Because before, you used to have that paralysis of analysis, right? We all been there. It's like a deer in the headlights. Like, man, this thing gonna keep rolling. If you can pull back a little bit, you say, okay, that's just new buyers coming in, and before you know it, again, institution will drop that thing, boy, like market maker that pull the throat underneath your feet. It's like, man, and all your little gains just went down to peanut money, ice cream money. And before you were sitting at that, that Lamborghini type money. So I already knew what it's like.
What I do as well too. Once price reaches like my first, because I have like levels kind of marked off where like price levels as far as taking profit. So once it gets to my first level, then that's when I move my stop loss to break even or break within some profit. Might not be as much as what's there. So if it pulls back, I don't take a complete loss. If it pulls all the way back to my my entry. So once it hits my first profit target, I move my stop loss up.
Yeah, exactly. That's exactly how you're supposed to do it. Again, all you're doing is trailing your money when you do that, guys. For some of you guys out there that fit in stocks, in a moment where you can, again, protect your profit. If you don't have a trailing stop set to it, like I should have done today, obviously, with the S&P 500, but I did have a feeling that it was going to kind of pretty much trend down like it did, right? So I was pretty much confident in the trade I took it, at the way I took it. But notably, I would have definitely had set a trailing stop on that money. It gave it a little time to kind of breathe a little bit, pop back a little bit, but continuously, head itself to the downside, which it did before, rebounding on the back end of the day. But she's 100% right. When you kind of hit some, certain key targets, in terms of gains or goals that you have in mind, it don't cost you nothing. Just go and throw your little filter on that thing. You know, put your little stop loss on it, trail your money. You know, again, worst case scenario, you'll get stopped out, obviously in profit, definitely. But you know, you're just trying to capture more as it, you know, as it particular marches, you know, in your direction, whichever way you trade it, up or down. All right, so that's very important to know that. So, but yeah, that's all it is. It's just it's discipline, man. That's the name of the game. Discipline equals dollars, right? I mean, I've said that times. I can't stress that enough. You know.
Oh
Yeah.
man, just thinking back when I didn't have the discipline to do that kind of thing.
Yeah, well, it was a learning process. You know, again, we get there in stages, and you know, knowing that again, these moments are very vital, especially now because again, you're dealing with a very volatile market. You're dealing with a very volatile market. Now, where we do have the level of volatility that pretty much has defined expansion, that's fine and dandy in all things. But again, you still have to make sure that you are prepared in a way where you're gonna, when you take that trade, for whatever direction they're showing you for as a trend, that you realize exactly, you know, what you're up against, right? What you're going to be dealing with, right? And you know, give yourself enough opportunity to kind of let the trade unfold. Again, as long as you with the trend. So, real quick, I just ran to my little BMRA trade. You know, y'all know me a little bit. So this BMRA trade, I posted this in our little Facebook group this morning, right? I posted it, you know, a couple other little areas I'll be hanging out in a little bit.
Those are penny stocks. I'm sorry.
Yeah, well, yeah, it opened up around like $4 and change.
Okay, yeah.
Well, actually, it was lower than that. It opened up lower. Right now, you see it's still squeezing up here after hours. It's up already another, $3 and change after hours. Right. I don't know if you saw it in the back chat this morning in the group. The BMRA, I posted the link on the news on it. And yeah, so you see where it came from. Let me go all the way back here. See where it came. It came from roughly about $2.37.
Woo!
Yeah, it came from $2.37, and right now it's up to $13.50 here after hours, and still squeezing higher. Yeah, it's squeezing them shorts like nothing else, bro. You know them jokers right now, boy. Look at him, they sweating. Y'all know what it's like when you get caught in the squeeze. Been there many times. That's like, God. Oh, so I got in right at the break of the at the consolidation point around that first chop in the pre-market around $5.50. Trying to get filled around about $5. I couldn't. I was trying to do too many things at once. But nonetheless, I got filled right at around. Let me blow up my screen a little bit. I got filled a little bit right here. This little chop zone here. Right. I got filled in the little chop zone here. Well, the first my first buy was I think like I want to say like 520, something like that. Somewhere around about 520. It was either 520, 530. I have to go back and look at my order book. I can tell you exactly what it was, but I got filled pre-market. I traded at pre-market. I got in early because again, I felt like, you know, the way that the volume was coming in, you know, because I rarely buy pre-market. I will if I feel real confident about it. I mean, if it meets my criteria. This one did. It had all the you know, pretty much the signs of a runner on the day. And again, I added into the position a little bit over like 580. I think around about 580. I added into the position. 580 between 580 and 590 basically. And right now, I think my average is, gosh, I want to say maybe like 588, somewhere around there, 588. But yeah, it took off again. So you guys may not be familiar with why this stock is running right here. It's still running here after hours. As you can see, it's up to $14 now. They are a company that produces the test kits for the coronavirus, right? But theirs on is very unique because it's a 10-minute test kit. A 10-minute test kit. Most of the other kits take like over 24 hours or this, that, and the third. This one does it in 10 minutes. So, you know, that's a big race now. Who can produce the best testing kit, right? And the fastest turnaround time, so you can know exactly what's going on. Because I know me, like right now, I want that 10-minute test kit. I wish I could buy it right now because after what I went through today in the post office, I need to know if I got that Rona, right? I don't want to be waiting around, you know, some days later, whatever. But I know it takes some days. But regardless, but you know, that was a scare today, just to be honest. But making fun of it. But yeah, I want to be able to have, you know, my results right away, right? And so right now, I think I don't know who they're gonna try to, you know, push it to. If the government potentially gonna buy it, or they're going to try to push it to the private sector. Who knows in terms of hospitals? But again, a 10-minute test kit, that's revolutionary in a moment like this, right? And again, the stock came from $2. That's what's great about it. Y'all see it here. I'm not just sitting there talking. It came from $2 yesterday, $2.37, and right now it's up to $14 today. Well, as of right now, after hours, it's still squeezing higher, right? So again, I gave alert on it again, roughly right about $4. When I gave the actual alert on it, at that point, it was still trading at about $4 and change. I think I posted it somewhere between 8 o'clock, somewhere around 8 to 9, somewhere around there. And so it was already around about $4 and change at that point. And I kind of, I spent my wheels a little bit there at that moment when I probably could have thought of taking a position there, but I pretty much hadn't done enough research on it yet. Y'all know, I'm gonna wait till I figure out, till I feel confident, right? I could have easily got in a lot lower. But when I went through all the fundamentals, I went through the company real quick. I went and checked the float. I went and checked exactly what was the strength of the idea of this this test kit, and it all checked out. It was legit. I said, okay, and then these coronavirus stocks been popping lately too. So I was like, yeah, I'm definitely see what's up with this, because I saw that float. The float was on like 7 million, right? The float was on like 7 million.
Yeah,
right?
that's what I was gonna ask. Like those medical companies now, because of everybody trying to find a cure. Like there's like a lot of new pharmaceutical companies out that might start running.
Yeah, they are. Again, everybody's in the race now to come up with some kind of preventive maintenance, some kind of again, whether it be a treatment or a preventive maintenance in terms of a mask. Again, a testing kits and far as the kits. These are very vital right now. So if you are a company who produces stuff, right? Because I was looking at the other day, they got a beer company. Now, what beer company that was? I don't know if it was not Budweiser. It was some beer company that stopped brewing beer, and they started brewing hand sanitizer. People utilize their factories to get that bag. You know what I'm saying?
Wow.
That's smart. It's crazy, but like, man, we're not brewing beer today. We got that hand sanitizer, the IPA hand sanitizer.
Right. Those barleys.
Yeah, that's exactly what they're using, because they got pretty much some of the basic ingredients, to brew alcohol, right? That's basically what it is. It's a different type of alcohol, obviously, between isopropyl ethyl to what's the other y'all know what I'm saying. But yeah, so they're making hand sanitizers now, because y'all know Pharrell just getting it, right? Pharrell done sent their great grandkids to college off this little coronavirus scenario, and everybody buying Pharrell hand sanitizer like it's going out of style. That's the article there, guys, in the back chat. So anybody that's interested in this company, you see it's still going up here after hours. It's up to 1460 right now. It's still squeezing in here after hours.
They over that. They got that company on Webull.
Yeah, it's tradable on Webull. It's on Webull, Robinhood. Again, I think it's on pretty much all the basic platforms. Some of the ones that are on the lower side. So as you guys can see, if y'all let me see, sure, I can pull the article up. I know we like to do a little more fundamental if we can here, but I pulled the article up real quick. But I did post in the back chat that where if you want to look it up yourself, you can. But again, we're just looking for opportunity out there. This is one of those moments, right? This is what we trade for. This is what we study for. This is how we analyze markets. And so the company's called BioAmerica, right? What a name, right? That already probably got cut by it. Right? BioAmerica begins shipping samples of its 10-minute test for the COVID-19 virus exposure. 10-minute test. Let that marinate, right?
Wow.
The test that they're using now, they say it takes about 24 hours, somewhere around there
to get the results.
Yeah, right. And that was one of the most speedier ones. And so this one does it in particular in 10 minutes. So
this is just going to the medical industry. This is not going out to the public yet, right?
That's what I'm waiting to hear back next. Because if they come out and say, well, we also go, because I'm pretty sure the way the government is kind of bogarting everything now, as far as the mask and all that.
Right.
I'm pretty sure they're gonna try to make sure they send it to like private industries first, right? Probably hospitals, probably airports, things of that nature, right? First responders that want it, obviously, but they sent out samples, so which is good, because guess what? If I made a kit like this, I'm gonna send samples out. I'm gonna send them samples out so fast because of people like, oh, we need this, it works. Oh, they finna order tons of it, because guess what? It's gonna be it's government money that's coming in to fund this stuff. they're not going to think twice. They're going to buy them up. They're going to buy these things up. And so again,
I think that's a moneymaker.
Exactly. And so that's why actually I was looking at this AM when I posted it. I said, you know what? Because I was looking at this one and about 3 more other ones, right? Because right now this is the time when these little penny plays get to popping. Y'all know what this is like. Ain't no secret. You know, every now and then I go back to my first love and I catch these little penny stocks. Right. These are the companies that are trying to get what? They're trying to get exposure, right? They're trying to be able to compete with the big dogs and your Johnson and the Mercs and the Pfizer and the Roche, you know, they're trying to compete with them. So basically, they turn out to be, you know, what they are, and they legit. These bigger companies turn around and buy them up, right? They buy them out. So this is a part of our wheelhouse in terms of how we study to be prepared. So, you know, I did a little fundamental analysis on it real quick when I started popping in the AM. I said, okay, this might be the one today, right? So I ended up going with this one. There was a couple other ones that I had, you know, on my radar too, but this one here just had the most complete, revealing, and telling. And again, the fact that its filing was an SEC filing, right? It wasn't just, I mean, we just put out a press release just to kind of, you know, play off the coronavirus, you know, name like they're doing. Right. Bitcoin. You know, I'm coming back then we used to trade, but it wasn't an L. It wasn't one of them L fins. This one here was legit.
Right. Because once you got the SEC filing, like a real filing, not a complete one. Right. And so that was you know, in the discussion. I posted it, and you know, I'm pretty sure somebody else probably took it too. And as you can see here, just again, 10-minute test for coronavirus exposure utilizing blood from a finger prick, kind of like a diabetes test, right? So again, it's 10 minutes. I'll take it, right? Because I want this. I want it myself now. To be honest, I would like to have it just for my, you know, my house. But again, it can be a finger prick can be performed anywhere by trained professionals. Again, airport, schools, work, doctor's office, you know, things of that nature, right? Which is paramount for places like that because they definitely going to need it, you know, especially when they're dealing with people's, you know, livelihoods or they're in the care of people, right? So BioAmerica has begun shipping samples of the COVID-19 test to multiple ministries of health. So guess what? That means they send them things overseas. Wow. Y'all know Europe need them, right? If anybody, especially Italy. So that's going to be big. Yeah, so ministries of health. Something like 1,500, 1,600 deaths.
Yeah, and it's I mean, it seems like it ain't stopping it either, man. They're getting it bad right now. They're getting hammered right now. I mean, damn. All right, so again, this little test kit might be popping. So again, it says government agencies that have requested the product through the company's distributions in the Middle East, Europe, and other countries. Price point. Now here's the kicker though, Eva, Camille. The price point for the single-use disposable product as low as $10 per patient.
Woo!
You remember we did the other day, some of the basic test kits that they was using, that the CDC was using, around like $1,300 a kit. Yeah. And I don't know if you can test multiple people with that one that they had for CDC, but this one here is only $10 per patient. So this way you need to put a number on, you know, per patient. I'll pay $10 to have that kit. You know what I'm saying? With the quickness.
Exactly.
Right. So again, they filed a patent. So they filed a provisional patent on rapid test technology to identify multiple coronavirus strains. So it's not even just the COVID. So this is, you know, because y'all know the coronavirus is a multiple, you know, a plethora of different little viruses within that coronavirus family, right? Again, you got flu, pneumonia. Again, you got SARS, MERS, and a few others. But this one here tests for multiple strains, right? So including the strain responsible for the COVID-19. Right, so again, that dropped early this morning around about 5 a.m. in the morning, I think, somewhere around there. And again, y'all can go read all the more in-depth stuff, but I just want to read that little excerpt there to kind of, you know, really put it in the context. Again, I'm practicing good habits here. I'm laying a framework of due diligence, right? I had to do my due diligence. Not that all press releases are money, but this one here in a time like this, and it was an official SEC filing and not just somebody throwing up a little article. It was a no-brainer for me, you know. So again, you know, your brother, you know, jumped on that there. All right, so yeah. So that was one of my little penny runner for the day, right? Got, you know, banged up against, made a little piece of change for a little something strange, right?
Yeah, that's a nice one.
Yeah. Yeah. Anytime, brother Raul. Thank you, brother, for tuning in, man. Appreciate you. I mean, all you guys. I appreciate all you guys stopping by. sharing a little bit of your time with me. Again, you guys could be anywhere in the world, doing whatever. But, again, I'm always humbled that you guys are able to come through and hang out with your brother, right? And especially, again, everybody, tunes in on the average as well. You guys are always welcome here. Right, so so that's that little stop there. Again, you can kind of follow from here, whatever. But there were so many, again, so much happening today in the market. Again, just overall, especially dealing with the news, how we're going to position ourselves going forward, as far as these governmental mandates that started to come in. I'm pretty sure y'all saw earlier. Sister Monica posted a link about they enacted the Department the Defense Act today, which is important. All right, so that means, again, they're going to mobilize pretty much the military in some capacity to try to get ahead of this virus. But basically, that's going to really help put some of these, the public in a more, strict environment where you got people out there now that's going to try to really help enforce people to get up out these streets and stop congregating all together.
Man, people are just out there. I'm like, what are you doing?
Yeah, y'all saw that picture the other day on Facebook with the kids was out there in Clearwater, Florida. They gave my state a bad name. They laughing at Florida right now because all them idiot behind young people went to that beach and did almost like a spring break. It was thousands of people out there too, thousands. They just defied what the government was saying, defied what the local state officials were saying, and them jokers still went out there to try to prove that they can't get that virus. And
man,
I guarantee
I was so glad to get out of Miami. I was like,
right.
I was right on the strip. Right.
I can only imagine,
I was like,
yeah, go ahead. I'm sorry.
Yeah, I was just like, when they finally got the plane tickets, I was like, let me out of here, because it's just masses of people half naked. I'm like, don't y'all know what's going on? Just congregating out here, just doing all kind of stuff on top of each other. And, I mean, you know how the spring breaks be.
Yeah, liquor has them, feeling invincible, so to speak, right? The little spirits they drinking or whatever. But again, they say it ain't real till you end up with that Rona. When you end up with that Rona, then it's like,
right.
You know what I'm saying? Then, again, that's the bad part about that is if you become infected and you go around your loved ones, like elderly people that necessarily don't have the stamina to deal with this. I mean, come on, that's irresponsible. I mean, just
particularly elderly.
Yeah. And so that's what I saw today in that post office when that guy fell out, old man fell out. I was like, bro.
Oh, I didn't see that. I gotta go. It's in the chat.
That's when I was running my errands, and Brother Chaos and Over Chris was on the counter holding it down for me while I was away. I had to run some errands, so I had to go to the post office and mail some packages out to some clients and stuff. And again, it's just funny too, because like that happened while I was in there. Like literally, if I would waited maybe 10 minutes more, I probably would have missed it. But as soon as I get in there, a Mexican lady at the counter, she looking pale in the face, she coughing, everybody looking at her, she turning around looking at everybody looking at her like, seriously, you in here coughing right now with this virus? And as soon as she left the counter, and myself personally get ready to move forward, the old man that was maybe like 5-6 feet behind me, he just fell out. He fell out.
Oh man!
Remember how people fall out in China? He fell out, and so the director of the entire post office had to come, and shut all the cash registers down. They came out, they had to spray the entire place down. They were spraying each individual patron in there with that sodium hydroxide solution. They tell you to spray like they're doing in China. They sprayed everybody down. They called the ambulance, and it was dramatic. It was dramatic.
Oh man!
Yeah, I was like, really? It happened to me? I was thinking like, really? Come on, man! Bro! I thought it was crazy because as soon as he fell down, everybody stopped, right? Because it started everybody, right? Guess what? I hate to even say what I did. I might be wrong, but I went all the way to the back where the post office box is at, where people come in and check their box. It was like way around the corner. Bro, I ain't paying around. I'm sorry. I said, hey,
man, that's crazy.
I couldn't do it. I know I probably met you, man. Look, I know that the humanitarian in me was with him. Yeah, the humanitarian in me was with him, man. But because I know I would have rushed to try to help him up and all that. But I ain't have no gloves on. I ain't got no mask on. I got a family. I got to go home too. I'm sorry, So at that point, he was the responsibility of the post office anyway. Because again, even though I know we're in some, different times right now, circumstances, whatever. But from a liability perspective, that's the post office. Again, you still be a humanitarian. I'm not saying don't be a humanitarian, but for me at that moment, again, it wasn't like he was just convulsing or kicking like that. Then that's a different response. He fell out. You could tell he was, fatigued. If he do got that Rona, you could tell, it wearing him, it wore him down, right? And so the post office director, they ran around the front, came out the little door, went and picked him up, and again, they sent everybody back to get the little cleaner. So they sprayed down everything in the post office. All the little packaging, they sprayed the envelopes down, they sprayed the counters down, they just went to France, everything down. And I was like, man, this is crazy, bro.
Yeah. I mean, probably just, that's just the tip of the iceberg.
Yeah. So man, it's getting real out here. People say, man, it's getting real out here in this field. Yeah.
Yeah, ain't nothing to play with.
Yeah, so I'll be the first one to say, I'm definitely taking this thing serious. I'm not gonna be hyperbolic about it. I'm gonna be smart and use my head, but I take it seriously to the degree where, I'm just going to be very precautionary in the aspect of how I move, right? So just in case, I don't mess around and do something to put my family in jeopardy. Right?
Yeah, I'll definitely take it seriously. I'm like, I be wiping down doorknobs. I got gloves. I was trying to get some of them on the masks that the medical people use are called N95 or something like that.
Yeah, they swooped up all them. So like I said, they've been on top of them. They hoarded. Well, the FBI hoarded some in the very beginning. It turned out they didn't have all they needed, and then it turned around. They said they had enough supplies that they needed. Turned out that was a lie. Then today, during the briefing today, the Department of Defense secretary, he spoke. He said, pretty much what they did for the military, because the military have their own supplies separate from Homeland Security or CDC, FDA. Everybody have their own allotment, that they have for their personal stash. The entire military had to give up their N95 masks today to help the government. They had like 5 million something masks in stock, right? For in holding, so to speak. They pretty much gave all of it to the government to try to help, for first responders and people that was in the line of defense, so they can have the masks to be able to deal with this stuff. So that lets you know it's really that bad when the Department of Defense have to give up their private stash to help the government.
Right.
When the government got all this money, they got all this, all this so-called this, that, the third, when they telling you that they prepared, it's the best healthcare system on the planet, this, that, the third, yada this, yada that, whatever. Well, it turns out you got tested and you got kicked in the mouth, right? Turns out you are not who you said you were.
Oh yeah.
Right? And that's a slap in the face. Other countries are looking now like, y'all talking all that trash. Yeah, now y'all over there looking like a third world country. Y'all ain't got nothing together.
Exactly.
Some of the smaller countries actually did better than we did. Again, South Korea, they jumped on top of that thing, man. Man, look here, I'm just saying, bro. Yeah, but
because they're not profit driven. Everything in this country is profit driven.
Right. They always want to turn the buck on somebody.
Yeah. If they can't make no money off of it. It's not citizen based. Those countries over there are about the citizens.
Right. I agree.
So they be like, well, we gotta wait till about 1 million people get sick, and then we'll get this thing.
Well, that's basically what they did. Just to be honest, I ain't making light of it, but
yeah, that's what they did. They're like, let's wait and see.
Right. You know what I'm saying? So they really was gambling with people's lives. Again, I don't care if you for the administration or you're not. Again, when it comes to my life and my health, I don't play them games. I don't care who you are. I don't care what your little political affiliation is. You can miss me with that. And that's no disrespect to you guys that really get all excited about these little politicians. I don't. Me personally, I can tell the truth with a straight face and be happy about it, right? But again, I'm not, trying to persuade nobody to think different of whoever they like. But when it comes to your health and your well-being, you always should practice self-preservation first. That's the first rule of law, right? Under that reality of understanding what humanity and nature is all about. Preserve thyself, self-preservation. Take care of yourself first, right? Because those people obviously, they in position where they can really, obviously be more effective at being taken care of than you. Because they use, taxpayer dollars to make their moves with. Us, we gotta use our own money.
Right.
And so it's just a no-brainer in that moment that you should, make sure you protect yourself. Right? So look at that. Oh man. Oh, they didn't close the entire Florida. Okay, so right now, news is out right now on the NYC. They're gonna close the floor. They're gonna close the trading floor on the NYSE on March 23rd. I don't know what that's about. Why not tomorrow then? But they're gonna close. The NYSE temporarily, beginning on March 3rd. Now they do have algorithms. Yeah, they do have algorithms that they can deploy to still allow the markets to be open. But the actual trading floor itself, down in the pits, all those guys got to get up out of there. So what they're doing now, they're doing that social distancing thing even more. They're finna ramp it up even more. So they're finna shut the pit down, guys. This just came out. I see on my TV screen here. This just in NYC to move temporarily to fully electronic trading. So, man, now you got to hope that the machines don't glitch throughout the day, because they gonna be but maybe two or three people down there, to help this, to try to to make sure this thing don't cause people to get locked in trades, and it is getting a little ugly now. When they shut down, I always told people when they shut down the actual stock market, that's when you know it's real. Because now you're dealing with people money. Simple as that.
Yeah, that's the world economy.
Yeah. Biggest exchanges on the planet in terms of NYSE and the NASDAQ. Obviously, the Amex in that too. So, and everybody else that's overseas depend on our market, because that's how they make their money. Because their markets ain't liquid like ours. So, that's serious business there. So again, this just in, the NYSE is looking to move to temporarily to fully electronic trading come March the 23rd. Right, so it's going to be strictly machine. It's going to be machine.
Is that next week, right? Yeah, next
week. Next. Excuse me. That's next Monday, if I'm not mistaken. The 20th is on Friday. Obviously, I got some options expiring. So yeah, so Monday or Tuesday, whatever, 3 days after. But yeah, so that's going to be very interesting. Watching.
It sure is.
Right.
Algos. People be trying to stay away from the algos.
Exactly. They're gonna be running the party now. They're just gonna be smoking cigars and drinking and doing what they want to do.
They're gonna be bringing this gonna be like the where automation gets started. Rise of the robots.
Rise of the robots. Say it. You ain't gonna sit there and act like you ain't what it is. You know what it is.
They'll be like,
and a lot of
we
them
don't actually need this workforce.
Yeah. They've been waiting to test this stuff out too. That's what's crazy about it. Y'all know they've been waiting to test this stuff out.
Oh yeah, every time they have cataclysmic events, these things alter the way business is done.
Correct.
I mean, the airlines, the whole, you can't bring water. You got to buy your water. The whole TSA, that just changed everything, and this is another one of those things where they can, be like, well, we don't really need a workforce because they gonna roll out them robots on you.
Right.
Because we're not making no money, so these robots gonna be stocking the shelves, and I mean, I don't know if they got, stuff that in mass that could do that yet, but they'll be moved. They were slowly moving towards that anyway.
Well, again, in these moments like this, they're going to utilize every value of technology they probably can have at their disposal. That lessens, the interaction between, again, humans, being in a crowded area together. So Again, if you can have something like that can lead, because even what we're seeing with some of the grocery stores, how they've been restocking, they restocking it in a way like not like before when you just come in there, everything you laid out pretty. They got the actual boxes that they come in, they just tearing them open like you at a wholesale place, and you just got to go in there and take them straight out the boxes. They ain't even have, they're not individually putting them on the shelves from what I've been seeing. And
that's how I got my kale. My kale was in a big shopping cart.
I call that,
here goes some kale.
Yeah, ain't no more of that putting it up there, making it look pretty, spraying a little mist on it. And now you're like, dude, right? Get your dusty little kale and get up out of here.
Oh my goodness.
It's crazy out there. So, just make sure you guys again prepared. Make those necessary sacrifices. Whether you take it serious or you don't, just do what you need to do to make sure you protect it. And you got what you need at least to kind of hold you down, because again, if they hit you with that mandatory curfew, like some of these cities are going into now with the mandatory curfew value,
right?
Make sure that you're protected. Again, make sure you're protected.
Oh yeah, definitely. I mean, hey, you see they done bought out all the guns.
They've been buying them guns and bullets up like it's going out of style. That shows you how, again, that's the modality of how people are. And when they put into this kind of reality, right, the couple things you go out, you should be buying, but you can't convince people that the government ain't going to come for their guns right now. Like in a moment like your gun, man, you're trying to keep their Rona from spread. But jokers buying guns and bullets right now because they've been watching too much of the Purge movies. Them Purge movies got them jokers scared, right? And they can take no chances. I mean, whatever, do what you got to do. Again, I ain't telling you not to, but definitely some jokers out there thinking just like that. Man, them jokers might get desperate, come knocking on my door. 2 a.m. in the morning, we got no toilet paper or something. I don't know. I don't want to take no chances. So I'm pretty sure that's what jokers out there thinking too. So.
Oh yeah, well, a lot of people. I mean, you can't hustle no more. You can't be on the street, or you can't. What I'm saying, your capers or whatever you was doing.
Yeah, all that. Yeah.
And people not, not working or whatever. You don't know what desperate people might do.
I mean, I agree. Again, these are these moments here where, again, you subject it to whatever it's pretty much the norm of the day. So depending on how people become desperate, if they become desperate, that'll pretty much give you the understanding how you need to be shaking and moving.
Like they got food and guns.
Dry beans, peanut butter sandwich, and PD4 silencers and six Sawyers and Smith and Wessons, and again, jokers do what they got to do. I mean, again, I'm under the impression I understand it the same way because I ain't crazy. I got what I feel like I need, whatever. But but at the end of the day, a lot of
us ex-military peoples.
It comes default at least enough to where you know how to handle your business, if necessary.
Mm-hmm.
And so it's important to have some little dry skills with yourself, about yourself. Some of these same things that people used to take for granted, like your little bug out skills. In the case this happens, you need to know how to, shake and move, start a fire, whatever.
Yeah, exactly. Make some Claymore mines.
All right, they drop them Claymores on Joker. Have a front in the front yard and the backyard. Don't trigger that mine, right? You trip that fire, boy. It's gonna be lights out. And the neighbor's backyard.
Yeah, that's when that training come in handy. Definitely, like being able to, think off your feet, on your feet, like, be able to make things.
Oh, no doubt. No doubt. Again, I'm the first one to definitely agree because these are these moments again where you have to be a little bit more resourceful.
Yes.
So a lot of people's lives been disrupted, in more ways than they could probably have ever imagined, right? It's that kind of stuff you feel like in the back of your head it could happen at some point, but until it actually happens, you don't really know the depth of it, until you start seeing the full level of kind of changes or panic that we're starting to kind of see. And when I say panic, people can't do some of the basic stuff they just normally would do just on average. Outside of just work alone, just even going to the grocery store for things, and you go in the grocery store and the shelves are completely empty. Right?
Exactly.
No, it's that bad.
I'm trying to figure out when is the truck coming so I can,
Right, and you have to actually go on their mailing lists now or go on their website. That's the only way you stay updated. That's what we had to do. We had to, and the people, the managers of like, especially little Wegmans and the Whole Food and Trader Joe's in our little area, they're like, hey, you can get on our little, go to our website or check our mailing list, whatever. We'll kind of update people, when we restock it, this, that, the third. That's the only way you're gonna know, unless you just drive out every single day. Yeah, so. You kind of at the mercy of waiting for them to get them goods, them goods back in the store, and hope none of them packages got no viruses sitting on them.
Yeah, I'd be spraying them down too with Lysol.
Yep, the hand sanitizer, spray some on them too before you open them. Again, it's just what it is. It is what it is. Safety first.
Yeah.
So again, we can definitely take a book out of the page of caution in moments like this. When before, sorry about that, over Chris. I was over there sharing my screen. I get sidetracking and forget to go back and test. See if anybody waiting to get on. Hey, what's going on, over Chris? You there?
You all right? Yeah, I'm here. Can you hear me?
Yeah, I can hear you.
Yeah, we can hear you.
Sound nice and strong, man. The internet got you right over there, boy.
Actually, the Wi-Fi is off. I have to use my regular phone internet. So it's
okay. Okay, yeah, okay. Gotcha.
Yeah, my Wi-Fi is still acting up, man. So it's all good though.
Yeah, it is. Yeah, man. So what's going on in your neck?
All right.
Yeah, everything okay for for now, for me definitely. But I went through that.
Oh yeah, I know the thing that happened at the post office. That's crazy.
Man, I tell you, I was a pin and needle in there. I'm still a little shaky right there. I'm like, man, man, all that, bro. They've been out there looking out. I don't even want to say it, because how we think. Like, you don't even want to say it. You don't want to put that into that. Y'all gotta call me pseudo on that one. I don't want to put that one in the app. They're around, Joker. They're gonna be like, right, when everybody's still trying to protect your little stronghold, and the one person that got bit and they want to tell everybody got bit by the zombie, this thing I turning yellow, like, bro.
I already know how it is. Yeah, I didn't really do nothing today. I did do a Euro USD trade in the forex market. I didn't trade any equity today. Yeah, thank you, Santi.
Yeah,
I missed that one. That was the one I was waiting on.
Traded too. She was talking about it earlier. Yeah.
Yeah. But man, I think I just read an article that the Senate passed the bill and they wait for Trump now. So
yeah, which one? Because they dropped a few today too.
Oh yeah.
Is that the funding for families?
Yeah, with the coronavirus package with paid sick leave.
Oh yeah,
all of that.
Yeah. They already named this the cash payout when everybody waiting on that. That's what everybody waiting on. They call it Freedom Fund. Freedom Fund.
Yeah, they go out
run that shit. I don't care what y'all call it. Run that shit. That's a Freedom Fund.
They need to just go ahead and attach the reparations to that.
Yeah.
Get a little of that Freedom Fund right there.
Right? Trying to make you feel all patriotic about the little dirty dollars. They ain't number, already. They should give us more, because, again, just realistically, you're talking about trillions of dollars that just already went into the treasury market, the repo market, some of these the mortgage-backed lending market, turn to the banks to help small business. So you're talking lots of money, and you still haven't went to your first line of defense in terms of being able to even kind of keep people from out there trying to change the government's, their mandates in terms of keeping people from out in the streets, because you see what happened right there in Clearwater, Florida. Them kids went right on out there. And it was like, they ain't 1,000 of them out there. They still went to the beach. They like, man, screw this. Y'all have to lock us down, right? And so that shows you right there, like this, like they probably thinking the same way, man. See, the government don't care about it. Y'all know how when y'all was like 20, 21. You know, everybody had to have a rebellion, man. The government don't care about me, man. I'm gonna go do that for me. You know, and that's basically how they rebelling. In my opinion, them jokers went right onto that little beach. And I was like, man, look at them jokers out there. But I know at least about 1 in 7, 1 in 8 probably got that wrong now. And you know they're gonna be drinking. They're gonna be again other stuff. Y'all already know what it is. Just gonna be good out there with hepatitis and everything else. They're gonna that's like a cauldron of different diseases. Good luck, right?
Yeah, they crazy.
Yeah. So I'm like, man, look at here. Y'all gonna learn today, right? Y'all gonna learn today.
Yeah,
So
that's
again,
real crazy. It's
news.
just reckless.
Yeah. Matter of fact, let me see if I pull that up. Let me pull that article up, man. I was like, man. Jokers out there just like forget about it, right?
Yeah, what about their family? They're not even thinking about their family.
Yeah, I'm like, man. Yeah, let me share this real fast just while we on the topic. Just real quick. Yeah, y'all bear with me. Thank y'all again tuning in, hanging out with your brother, man. But this is like crazy. I mean, yeah, you can't tell, you know how this stuff goes. Until they make it mandatory, people still gonna do what they want to do, right? You can't, I don't even know how to read it. But again, this is just literally Tuesday. This is Tuesday. They defied the and this is state of Florida. State of Florida already got deaths over there now in the state of Florida, and the case are ramping up there too. These people that literally, because some of these places was on spring breaking too, so they just literally defied any kind of government, CDC, whatever, and just went on out there. Thousands of people, right? Look at this. They just went right on out there. Clearwater Beach, right? You know Clearwater at Sister Camille.
Yeah, I played a concert there.
Over there near Gainesville, that whole area, the Williston, all up near that area, Ocala, whatever. But, crazy. Clearwater Beach, Florida is packed today despite social distancing recommendations. We Americans can be dumb a lot, right? It's crazy.
Miami Beach too, that strip.
Yeah.
Oh, wow. A lot of people. So if you think that the beaches are being impacted here by coronavirus, by COVID-19, and by the new cases that are emerging here in Florida, this is Clearwater Beach here, everybody. That looks like Clearwater. And one of the questions that we were asked here earlier was whether or not the beaches were going to be impacted by what's going on here with coronavirus in the state of Florida. By the looks of it, this looks to be a pretty busy day here at the beaches. A lot of people here in the water. We know that Miami Beach and Fort Lauderdale Beach and some others in South Florida have closed.
Like, we not closing over here, bro. We gonna go hard. We going hard. Same way. Look at Fort Lauderdale. This is Fort Lauderdale.
Dang.
Be right back.
Okay. Over.
Hey, when they come down with that thing.
Yeah, when they get that bug, you're right. When they get that package. When they capture that package, bro, it's gonna be right. Let me post that in the back chat just in case anybody want to look at that on their own. But that shows you right there, family. That shows y'all exactly how these jokers be thinking, man. Again, that's a lot of y'all little cousins and nieces and nephews out there. They out there going willy-nilly, family. People out there in Florida making my little state get a little bad name, man. Man. We just doing my little state this way, man. I don't know what's going on down there in Florida. I don't know what it is, boy. The need to be out there that bad. And again, people gonna be drinking and doing the, whatever, and again, passing on that Rona. I'm straight. So they
trying to get out today.
Taking over, Chris.
I said they tried to get our brother African Emporium today. They tried to get
Boom, two people, two jokers. Like, man, this could not be. Man, this could. Man, I could not believe it. You know, like much as I've been, obviously trying to, share my little bit of insight about what to do. Again, pretty sure you guys won't do anyway, but still, we're using it as a moment to kind of make sure we help each other. And rest assured that, that we kind of making sure we follow some simple stuff. As soon as I get out there, and mind you, again, I was already telling people that if I go out and if I'm out there, longer than any extended amount of time, I'm definitely going to try to, see about obviously, wearing the mask and all that, right? So I thought I was going to be safe, right? Because I'm like, I'm in and out. I already know where I'm going. Some of the places, they ain't that bad. We don't have any, to my knowledge, any direct, cases in my neck right now, even though it's in Washington, D.C. And so far suburban D.C. area where I'm at, obviously, nothing major here. So I'm like, maybe. And man, seems like getting there again, lady coughing crazy, looking pale in the face, and then the dude fell out. I was like, man, this can't be happening right now. Are you kidding me? I was like, y'all gotta be kidding. Man, so it just show you, man, no matter where you at, you could be susceptible. And also today, it's official. Every state in the entire nation has the coronavirus, even West Virginia now. It hit West Virginia finally.
Wow.
Of all places, even West Virginia. And back little man, West Virginia. So pretty much wild country in the sense. You would think like, what's it doing there, and it's even there now. So it is what it is. So gotta do what we can and go. Yeah, state of Florida, man. I was like, man, these people have lost their mind.
Woo. Yeah, I played a show there on this last tour, Clearwater.
I saw some. Y'all hit Clearwater. Y'all were well, what you ain't hit? What, 2 places in Florida? Y'all was already about 2 cities deep in Florida at that point.
What did we do? We did
y'all the first Florida city y'all hit.
We did Huntsville. We did Huntsville, Clearwater.
That's Alabama. Yeah, that's Alabama.
Huntswater. Yeah, okay. What did we do? We did Clearwater. We did we were supposed to do Miami. We had 2 nights there, and Orlando. And the Miami and Orlando shows.
Orlando one got cut. Okay, that's what it was. Okay.
Because we had 2 shows at the Fillmore in Miami, and that they canceled those. And in the Disneyland or whatever, Orlando.
Right. Man, yeah.
Well, I mean, it didn't affect me really because I still got paid.
Of course.
I had a vacation in Miami because they had the hotels down there for 4 days. So
right.
We had 2 days off, and we supposed to have 2 days off, and then 2 days for the shows, and then go to Orlando. So I ended up having, I came back a day early when I got my flight because we supposed to stay there till Saturday. So I just hung out in Miami. But I went on the part of the beach where it wasn't nobody because it hadn't really kicked in then. It wasn't really like it is now where they were shutting stuff down. And but Miss Ross was like, she wanted to go home because she's like, it's affecting old people and I'm old.
Right, I can imagine how she was thinking. Some of you guys may not know. Again, Sister Dramette, hence the name Dramette. Again, I would call her what she is. Maybe she may not accept it or not, but she's a world-renowned drummer. So she was on tour with, one of our esteemed elders, artists, Miss Diana Ross. And again, like everybody, y'all was seeing, like everybody, they were shutting down sporting events, all kind of concerts. They shut down Coachella. So, I mean, I can only imagine, what she was probably thinking again, because it's being something, something that's really affecting the elders, right? So, I can only imagine.
I mean, hey, she held a production meeting. I was like, uh-oh.
Yeah.
She held the meeting. We get ready to get up out of here.
Yeah. So, right? It's like, hey, pack it up, right? Hang up. Hey, we're gonna miss you. Can't get right. You know, one of them can't get right moments.
Well, hey, I'm glad it happened because the next week, I mean, if I had to have came home on Monday like I was planning, supposedly come home on Monday, that's when the airports was all crazy.
Right.
That's when it started getting crazy. So
right.
I got out of there. The airport wasn't crowded. It was easy to get a flight, and kind of got ahead of it before the U.S. panic actually.
I'm just happy
talking about it in all the European countries and in Asia, but it hadn't, that hysteria hadn't hit
Yeah,
yet.
and it's weird too.
Especially when you were on tour in Miami and places like that. Everybody's out in the street partying. I mean, we was like, our hotels were right on the strip, so it's like
right. I can imagine if y'all playing at the Fillmore down there. Yeah, I know she would probably, she probably want to get somewhere close to that area, because again, she, this ain't on no small budget, no operation.
Oh, no.
She was like, we already had.
No. Everything is first class. It's
always,
always, all day, all night. It's like I have to stop eating on that tour. It's crazy.
Yeah, again, so I already know y'all were protected, at least in that perspective, not necessarily have to go through any kind of unnecessary hoops.
No. She don't. No.
Yeah.
Never. First class all the way.
Being close to everything and everything.
That's like a really nice organization to be a part of because everything is first class. It ain't none of that chitlin circuit nonsense. No.
Out the gate.
I mean, she probably was at the Four Seasons or something. I mean, we still get really nice hotels, but that's if she even decided to come off the tour bus. Sometimes she don't, she be chilling on her bus.
Oh, right there. Big money.
Yeah.
Right there.
Yeah.
The longevity in the game. That's what longevity does you, man. When you kind of, solidify yourself again.
Longevity, and you took care of your money.
Yeah, that's
you got all those hits.
Yeah, and her health, because you rarely heard Miss Ross ever being in a moment where she was kind of sickly, and if she was, you didn't hear about it. So she held well for her age. And again, we know about some of the other elders that have moved on now, obviously, especially in Miss Aretha. But again, same with Miss Patti LaBelle, they holding it down a little bit still, but definitely Diana Ross being older even than Aretha. She is older than Aretha. I ain't mistaken. Diana Ross definitely was older than Aretha, wasn't it? Wasn't she older than Aretha? Or they about
Diana is 76. She'll be
76. Okay, yeah. So Miss how old was Aretha when she passed? Anybody remember? Nobody chance, just hypothetically. But yeah, either way,
in the 60s.
She was in the 80s. Okay, she older. I know they were kind of neck to neck or somewhere. I thought maybe Diana Ross was a little older. It just seemed like she would be older for some reason. When you just look back at her, even her career, so they're probably around there the same age. Who knows? But she's been holding it down, basically, my point. And again, you rarely heard about her having it. She's 76.
Yes. She was turning 76 that year. Or already
when
turned
she passed.
76. Yeah.
Oh, so Miss. Okay, yep. So 76. So they around the same age then. Okay.
Yeah, they all from that generation. Atlantic Records, Motown.
Yeah.
But yeah, I mean, she looks great. She takes care of herself. I mean, we can't even tell,
Yeah. Thank you, Sister Beautiful One. Yeah, she was 76. Yeah. But yeah, it's crazy, man. And again, she still got the strength and the stamina to keep going forward, and still go out there and turn out a crowd, always a mass crowd.
She loves touring. She loves performing.
But they say that's where your energy at. That's where you find your youth at. When you go out there, and just kind of do it from that perspective, as opposed to just being, that's where you keep yourself, where you find a lot of that kind of inspired energy, as they call it, so to speak. So I can only imagine, what it's like for her at this age.
Yeah, I mean, she does it for the love because she don't need the money.
Obviously, right? Like, run that money.
It's pure love for music.
Yeah.
So she got long dollars.
No doubt, right?
For real, hey, you rolling with 3 tour buses and a tractor trailer. Let me tell you.
Roll up and roll right on out.
Yup, she will go from the stage to the tour bus.
Just roll up in town, or get ready to set up shop. Oh, that Rona coming up and roll right on up out of here.
Yeah, she.
Ain't we waiting around? We about nobody waiting up.
She came around.
No, just roll right on up out of here.
She was like, "We got a production meeting."
Right? It roll right on up out of there. Like, y'all got it. Y'all can have it. I'm out of here. Go back to my little neck of the woods and chill.
Yeah. She wasn't playing. She took a freaking private jet home. She was like, I am out of here.
So again, good thing everybody was safe again, again, just really putting some context to it. That's what it's all about, Being able to
for real. She taking care of you. That's why she had the meeting. She was like, well, I'm responsible for everyone here.
Yeah.
So I don't want anything to happen to anyone. So, and the musicians, they don't ever want to go home. And she was like, well, I'm going to make the decision. I was like, I know that's right.
Yeah.
I said, we go home.
Yeah. They give it jobless too. Job loss. Here we go. We're starting to hit those job loss numbers. So they're saying right now about hotel group fee, 3.9 million job losses due to the viruses. Yep. So they go to the hospitality industry. There goes. I mean, I knew it was going to be on amount of time before they start dropping those numbers of jobless claims. But there's already saying that they believe that at least 20% of the workforce is going to fall off after this virus, which is obvious, right, to a degree. But they already putting the number on the hospitality industry where they're saying about 3.9 million jobless claims are going to be filed here based upon the coronavirus. Because those are pretty much gig type jobs, obviously, house cleaning, stuff like that. If you ain't got no patrons, you ain't got no need for house cleaning. Unless you kind of have somebody around and knock the dust off the place. But you don't need everybody at that point. That Toyota plant now closing for 2 days due to the virus. They're going to shut down entire auto plant and the Toyota plant. So yeah, you're starting to see that mass scale. Again, where we're starting to shut down some of our major factories, whatever. Highway signs post coronavirus information. Same when you're beginning, like your Amber Alert, and now you can get that coronavirus alert up there. You're gonna supersede the Amber Alert now. Just telling people probably get off the roads and stuff like that. I'm pretty sure that's what they're gonna say. If you ever run into one, you'll definitely know exactly what it says. But yeah, slowly but surely, man, this thing is starting to unwind to the point where we're starting to, feel that kind of squeeze on that freedom and that liberty to kind of move about, on your own and, do whatever you want to do, whatever. They finna clamp down on it, So just get prepared, guys. Again,
I got everything I need at home. I just got me this dip bar, pull-up bar.
Yeah, again,
I got my treadmill. I can do all my calisthenics.
That's what I'm talking about. Yeah, I got same way. Got a garage, full of stuff, and then necessary stuff. But I know what it don't take much to get it in once you know what to do. Especially, again, you already have a regimen or been through that regimen, like especially for us, again, for private military. You already know we don't need nothing. We can get down, get some burpees going, get some crunches in, get some running. We can get it in the old school way. That's where you go stuff,
I worked out so hard this morning after I traded. I had to take a nap. I was like, dang.
Right?
Myself out.
Getting it in. That's what I'm talking about. Longevity. Health is wealth. Health is definitely wealth. So, again, we're just at a point now where, we again, we just have to take some little extraordinary steps to make sure we're good to go. So they're going to keep ramping up these little newsreels to really kind of set. And I think this is when they're probably going to really up the campaign on the fear campaign, because they're starting to see people defy their orders. So they can really put the media to the next level. They're going to have all kinds of stuff in the car try to scare people now, because they ain't listening to them. You know, so whether you think it's serious or you don't, do what you got to do. I always tell people do what they got to do.
Hey, Oba, you got some of that purple sea moss?
Yeah, I mailed out a lot. That's why I was at the post. I mailed out so much today. I mailed out a lot of it. People like, man, send me some stuff. So I
was trying to catch you when I saw the thing in the chat. I was like, oh, he's already gone.
Yeah, I asked it's weird too, because again, ancestrally so whatever, the universal so I stocked up a pretty good amount. Again, not before I knew about the coronavirus. I mean, before I knew the coronavirus came in, but again, right around that time, when that the next 3 batches came up, I kind of got on top of it a little bit. So I was sitting pretty decent. I still am a little bit here, but again, people been hitting me up, and so I've been dropping. I dropped a good amount out today, and tomorrow I was so busy sending clients stuff. I got to send around and send my family members come out tomorrow. Yeah, I'll be dropping it here in the next, I'll be going out. But the south leads, the tonics, the detox tonics, so people gonna be sitting still. So again, these are all organic stuff, obviously, but I got a few of those done up there. Maybe got 1 or 2 more bottles of that, but I do got the sea moss, purple and the gold. I got both types. So just in case some of you guys are on the urban side of the house, your brother.
Send me an invoice.
Okay, I got you. Yeah,
I get 2.
You want a couple of them? Okay, no worries. I got you. Get them out to you guys before they keep us from even going to the post office. I don't know when they're gonna shut that down. But
right?
After the day, I'm like, man, them juggling boy, them some warriors up in there, because them ladies came behind that counter, boy. Them juggling looking like, man, look at him. Like, bro, you picked right now to do this. And then women went to grab all kind of Lysol bottles and that sodium hydroxide spray that they got. They went to spraying everything. I'm talking about everything got sprayed down. Even the boxes and stuff that was on the shelves, they sprayed all that too. They sprayed everything. I said, they ain't playing in here. I was happy at least to see that much, at least. So I don't know how this thing works, for it just being an airborne virus, I don't know, man. I'm just saying, I hope it ain't nothing crazy. I'll wake up tomorrow looking crazy, boy. Look here. I'm gonna go lock myself in the garage. Hey, move all my little trading stuff in the garage, my Mac stuff. I'll be in the garage for 14 days. Just throw a little ham sandwich. I was a vegan sandwich that year. Throw me a little mushroom sandwich. I'll be in there holding it down.
My husband was teasing me the other day when we went to the store. There was nothing in there but pork chops. My husband was like, "You gonna get a pork chop?" I was like,
you resolve.
I said, I don't think so.
I joke the knock all these people that's out here that's vegan. They're gonna like, hey man, we get bad because you can't get fresh produce, right? Because if
it's crazy.
So it's gonna get crazy. So you gonna have to get the frozen stuff, or if not, you have to get the stuff in the bag and freeze it. Because that's basically what we obviously putting in practice. And just go ahead and get some of the frozen ones. You go ahead, make sure that you got that. Even if you get like frozen, get some kale, cut it up, and try to wrap it in a way where it doesn't become too much waterlogged. In different ways you can do it. It's different ways, but you definitely gonna have to be very resourceful and crafty, and still keeping some of those things in place. So right now, again, just my my little intellectual value that I can share for people that are vegans or whatever. You want to definitely go towards things that are what they call like gourds. Obviously I know what a gourd is, like butternut squash, acorn squash. They hold up a long time. They hold up a long time in your pantry, right?
Okay.
Yeah, so gourds are really good, and they're really good. Again, butternut squash, you can make French fries from it. You can make mock sweet potatoes out of it, because they have a sweetness to it. You can make a mock mashed potatoes with it. You can do so many things with butternut squash. You can make a mock sweet potato pie with it. and again, it holds up really long time in the pantry. Right, so you buy a lot of those in the acorn type squashes, and then again you got your baked little smaller squashes like your zucchini and and the regular yellow squash. Obviously, they perish a lot faster. But still, gourds do really well during a time like today. For at least having a really good solid vegetable high, and a lot of different vitamins, vitamin K, vitamin A, vitamin C, and the gourds, a lot of other different vitamins. And then from there again, you have to go ahead and succumb to getting any kind of bean. Because that's what a lot of people doing now, buying canned goods. So for us, the best bean out there is the chickpea, which is and get
Oh yeah.
So we got cans and cans of chickpeas. So you can make a lot of different things from chickpeas, from savory items to sweet, sweet items. Same way people do like a pork and bean. It's good. You can make the chickpea in the same thing. Obviously you use it, better ingredients like obviously something like a date sugar as opposed to regular cane sugar. Again, you can add a little thinner if you want to do that, or nutmeg. But yeah, I mean, you know how this stuff goes. You got to be resourceful. You can have that same kind of reality, and it's very healthy. I mean, chickpeas are like the most healthiest thing on the planet on the east side of the house, right?
Yep.
And it's natural. It's made by nature, 100%. So it ain't no man-made GMO rice or whatever. But there's other things. I'm pretty sure y'all already got an idea, for people out there, who's mixing and matching. I know Sister Mo said she got crackers and a little tuna fish, so she's solid in her peanut butter. She's solid.
Oh, yeah.
Yeah,
I
so you
stocked
gotta
up on some tuna. That's all that was left really. Tuna fish, salmon.
Yeah. So making it moving, you find ways to make it happen, one way or the other. So, we stacked up a lot of dry goods. We got our little, lentils. Lentils are even good. They are.
Yeah, there wasn't none at the store. I
Yeah.
love lentils. I couldn't find none. I was like, dang, I went to 3 stores.
Yeah, the heirloom lentils, like obviously the original ones, they got some hybrids out there too, but they still better than a lot of other trash. Because I mean, really, really good for all the nutritional values in their own right. And again, it tastes good regardless too. But yeah, same way here. We load up on some lentils as well. Again, then we got all our dry grains. We use spelt, kamut, teff, tiger nut flour. We got the what else we got? Garbanzo, chickpea flour, coconut flour. All the basics of life, so we can make our own bread from scratch. So we ain't got to worry about having to deal with bread running out. We make our own bread from scratch, our own biscuits from scratch, obviously. So that way we solid there, and we got that's just pretty much the grain. Some fonio, some again wild long grain, wild rice, obviously things like that. Everybody got little whatever they use, but
Yeah, I was quinoa. A lot of quinoa was there, so I.
Yep, we loaded there. Oh man, we got more quinoa. We could probably sell some of the quinoa. We got some. That's number one. Number one grain in the house is the quinoa. We got a lot of that, and it stretches too. That's what I love about quinoa. It stretches because because how small it is, it swells up like grits. If you
right.
Grit quinoa the same way, it swells up really fast, and it's way more nutritional, obviously, than any grain out there, hands down. You ain't gonna really whoop that quinoa to a degree. So yeah, so we solid. A lot of people, I'm pretty sure they got some of the same things here and there. In the case that you do have to go on lockdown, you're gonna definitely need some of those goods to keep you afloat.
Yeah, absolutely.
Yes. What about yourself, over Chris? You got your couple items put away, over Chris? He probably busy. Yeah, he probably. I'm pretty sure he went and got him a couple items. I think I might have heard him mention something. He went to the store too. Appreciate everybody.
Can you hear me?
Yeah, I can hear
you.
Oh, okay. Yeah. I went to the grocery store yesterday, and I mainly just got me a bunch of vegetables, some beans, and what else I get? Peanut butter. Yeah.
Oh yeah.
We got some essentials to hold you down. Yeah.
Yeah.
Peanut butter.
Because that's all the food. Those are like or that that'll keep you full for a period of time. Except for like vegetables.
Definitely. No doubt, no doubt. So you plan for those extraordinary moments. Again, you gotta have those those kind of foods that really hold you down. Stuff that fill you up fast, fill you up quick. You got what I'm saying, don't take a whole lot of it too. That's definitely want to run to those items. So that's it.
Oh yeah, I need some of that sea moss too, Oba. I meant to ask you that.
No doubt. You already know, man. Whenever y'all in need, y'all know I am. Just hit me up, man. I got you. They're gonna take me down and get it out to you guys. Like I say, as long as they keep that post office running, I'm definitely get that stuff out because again, it does help in a moment like this. Kind of keeps the body, purged, and a lot of people that's definitely gonna be sedentary. You already know sea moss is really good for that, especially for joints, cartilage. Collagen, loaded in collagen. So again, good in vitamin E, loaded in vitamin E. Histidine and histidine, things like that, amino acids. And again, it's loaded. I mean, y'all know pretty much the elemental breakdown of sea moss, but it's really good for stuff like that. It's good for holding, keeping your hydration levels up because it holds water. Allows you, makes your body hold water better.
Yeah.
So it's good. It's good fortification to have. Again, just straight nature. There ain't no cut on it. That's the great thing about it. It's just nature.
Yeah.
The body up a little bit. So that's gonna be interesting to see how different come off. Come out this little quarantine. They're gonna be running back to the little dirty little chicken wings at the little Chinese restaurant.
Yeah.
Get that Rona rice.
They're gonna go right back and get that Rona. Go right on back and get a little case of that Rona. Like, we just came out of quarantine. Now you gotta go right back on there because you couldn't do it.
Rona fried rice.
Yeah, boy, that little me some hungry fried rice and them little dirty little chicken wings, boy. If you ain't for tell Juggle, they ain't gonna get it.
Hey, they need to get up out the neighborhood anyway.
They're just running the racket. There's all kind of food.
For real. They need to get up out of here.
Them restaurants gonna be going crazy when they really just lift that national kind of, all clear out of the way, man. Those little stores gonna be, their little restaurants gonna be popping, boy. I'm talking about all the little stuff like Olive Garden. I can imagine. Again, I'm putting together my little mental list of certain stocks that I know that's probably gonna pop right out the gate when they really kind of start lifting that all clear mentality. Because those gonna be the ones that everybody gonna be running to, and stuff like that. Just hospitality, just restaurants, whatever it is. Just start putting together a mental list, guys, and that way you be ahead of the game. When the market starts to really kind of somewhat rebound itself a little bit, you'll be prepared at least to kind of get ahead of the game. Being there a little bit ahead of everybody else.
Right.
I can only imagine what it's gonna be like. Especially looking at Boeing again. Boeing got lambasted today, man. They lambasted. They beat the brakes off Boeing today.
Wow.
And again, rightfully so. I'm still short. I easily could have covered down in the $90 handle, even though I was out and about. But again, I was telling people it's gonna break 100. It's gonna break 100. It's no other way around it. And lo and behold, it obviously not only did it break 100, it shot down as low as $89 here, right? And then obviously the people came in trying to say it because everybody just can't believe that Boeing is getting beat up the way it is, right? Because it's one of those household names that you can't do without. And some of these people that really love that kind of play, defense play or pension fund plays, and everybody's ETL as far as what it a duopoly. We went over the ideal of what Boeing really is. We know what it is as far as company, but bad practices led them to be in this position. So that it's not a mistake. It's dropping like this. It's not a mistake. They caused this on themselves, with those plane crashes, and turned out they had very shoddy engineering. They were just in the corner. They cut too many corners and they cut themselves. They cut their stock under half just by doing, thinking you could save $1 and now you hemorrhaging millions. trying to save $1. So again, they I'm the first one to say, man, in this case, they deserve this one. They deserve this one. They never really owned up to, number one, killing those people the way that they know that people should have. They really had a very, stale, remorse value when they were even talking about it. Like it just, it ain't our fault to a degree. It ain't our fault. Like, man, really?
Right.
Buzzards, man, you nasty buzzards.
Terrible.
Yeah. So again, I'm happy to see the stock this low. It need to go lower. I mean, I was telling people again when it was broke below 200, I said it could easily go underneath 100. Hypothetically, I was saying around about 80, 70-ish. Again, it hit 89 today or 88. It hit like 88, 80, somewhere around there today at the low. And then obviously it bounced. The market bounced a little bit, came down and did a dead cat bounce again at the $90 handle. As you can see here, then it just in come the agros, obviously. Right? They're like, no, man, y'all got to get this Boeing stock up off that out of that area there because anything under 100, that means the stock is in trouble. So just like we are trained to say that anytime you breach below or go above $1, well, it's the same way at the $100 mark. Anytime you go above the $100 mark, that means you solid, right? You solidified yourself as a major, stock. If you break below that $100 point, that means you're in trouble, right? You have a major psychological key point of support at that point. And so it's no different. So if you can see here, what it's going to do, it trended that $100 point like a like a tightrope walker. They do not want to stay in the close beneath 100 because that's a psychological, damaging idea.
I think I might get me some Boeing because I could trade. There's certain, equities I could trade through the on MT4.
Yeah, okay. Yeah, y'all can trade certain stocks over there too. Yep, along with it. Yeah.
Yeah, I could trade.
Did you sign up to the link, Eoba?
Yeah, you didn't get it?
Not yet.
Yeah, because I was wondering why I didn't get my because when I signed out, I was wondering why I didn't get $25. I'll go look after I finish doing this.
Okay.
But I definitely I use your link.
It probably come tomorrow. I know they normally do that or later on. Did you signed up today or yesterday?
Yesterday, like right after we finished talking.
Oh, these bastards better give me my money. Got to get our money.
Cut that chicken, stop playing. I'm with you.
Yeah, I'm gonna have to go get me some BA.
Yeah, because again, it's at that point now where it's starting to look attractive. I'll be the first one to say again, I was a big critic on it ever since it fell, after the Ethiopian crash. Y'all remember you seeing my little post? I was going in on Boeing. And I stayed diligent in it too because I stuck to my thesis. I stuck to the fundamentals. I stuck to the idea that, again, and I was saying like any other catastrophic value or thing that happened in the market that shakes the market up, the first stock that will get beat up more than anybody is Boeing because we know they're propping it up. We know they're propping it up. And again, just trending around at 350, 360, 330. It stayed, and this is after killing 350 some people. These people refuse to let that stock, get cut in half like it's supposed to. So you knew they was trying to, again, the pension funds and all the people like that were trying to prop it up. And again, as soon as the levy broke, again, for lack of better terminology, but when it broke, Boeing was the first one that crashed the hardest. And it has shown it even till today, it's still losing more than everybody else on a natural basis. Case in point, look where it closed yesterday, 124. Right? Today, it went down as far as like $88 or $89. I mean, it's losing big chunks throughout the day. Intraday says it's losing big chunks. You know what I'm saying? So that's saying a lot. You're talking about well over $30 something a day, basically. That is a lot of money. Them the kind of moves almost like Tesla making. And this is Boeing. That has a more founded company. So, I mean, people getting out of the way of this stock. Again, it's going to look attractive. People kept trying to buy it at the 200. They got ran over. They kept buying it at 180. They got ran over. They got bought it at 150. They got ran over. So a lot of people just been catching falling knives. So again, coming down here again at the $100 level, me personally, I think it can close. If I see it close beneath 100, and then let's say give it a couple of days at that point, and you don't have that kind of pushback above 100 in a way where you see that real big strength. with people like fund managers coming in, because you can tell again based on if they drop any kind of 13D filings or the idea that you just see abnormal volume coming back into the trade where you don't have heavier ads than you do bids. You got some bids coming back. Then I would say, okay, I'll nibble in for long term, right? Because at some point, and it's still, again, it's still subjective to who? That plane coming back. They have to certify that plane, right? Because they kept saying they're gonna certify it. It turns out it's more problems, right? You got wiring problems. You got cracks in the fueling areas. Turned out a lot of planes now they have to get checked. So it's like one thing after the next, and they used up their entire loan that they had in terms of that dip loan, which is like $13.88 billion, which obviously lowered them to have caused them to have a lower credit rating, right? They cash flow pretty much went to the negative, which they had to eat a negative cash flow in terms of their credit rating. So that means they are in somewhat what we call a preliminary bankruptcy status to a degree. Meaning they got to walk a very fine line at this point. They have to walk a very fine line. They got to dot every I, cross every T. They can't even buy extra big pens right now in the office to a degree where before they had large sums of cash that's sitting around on the books, right? And so again, it's just moments like this where you just say, you know what, this is why everybody ain't worth bailing out, because they had a chance to right that ship and they choose to take the greedy route, right? They just kept buying back stocks all the time, doing a lot of massive buybacks, not necessarily righting the wrongs that they had in play. And so greed lost. At the end of the day, greed lost on this one here. And that's why the stock is so low. Again, if you look at this one here in comparison to, let's say, Apple, or Apple, obviously, Apple pretty much the only one that ain't really failed, truthfully, not like everybody else. And they don't want Apple to fall because that's the last line of defense for what? A real true American darling stock. And let them tell it, right? They'll let everything else fall before they let Apple fall at this point. And that's how bad it is. So you look at Apple here, and that's to where it came from. Apple all time, well, the high was what, 330, around about 330. So way, all the way back around this area here, guys, around this area here. And that was what, every bit about around about the middle of February. It was still hanging up around that prices, even at the point where the coronavirus was coming out and some stocks were still getting hit. They were still propping Apple up. And then it actually started falling. Right? Got close to the end of February. Then it began to fall a little bit. And it still ain't fall like a lot of other stocks did. Look at Win. Right? Obviously, definitely Win because it's luxury, obviously, gambling. But there's other stocks you can compare it to. And you ask yourself, well, why Apple ain't really falling? Right? And then anytime it fell really bad, you had a nasty kind of retrace where it almost gained back all of its gains to a degree. And then it kind of pulled back. So basically from 305 to 340, it's just been at 304 to 350 area for the past, way back here, but the 10th, the 11th, somewhere around the 11th or the 12th. And here it is, the 18th, so about 7 days later, it's still in the same little nasty little chop zone here, right? A top little area, little supply zone here. You got demand level down here, around about this 240 level. That's the demand zone, supply zone up here around roughly about 260. Usually say 260, give or take. They refuse to let Apple drop because if Apple goes, so does the market. I guarantee you. You know what I'm saying?
Right.
And so that's how you strategize going forward, because y'all know as well as I know, when the market does begin to rebound again, y'all know they're gonna buy Apple hand over fist. It's gonna be one of the first ones people gonna run to, and they're gonna be looking at Boeing too at that point, especially if Boeing end up getting that governmental bailout, because that's what they want. That's what they fishing for. That's why they even dropping the price even lower on Boeing. They're trying to make it so attractive to the point where either somebody come in and buy it out, right? Everybody been talking about this old Warren Buffett mess. Warren Buffett buying Boeing, right? If not, a private sector financier come in, definitely the government obviously gives them what they want in terms of a $60 billion bailout, or something close to it. So they're banking on again taxpayer money to bail them out, welfare money basically. A welfare, basically at this point, Boeing is a welfare recipient, 100% welfare recipient, right? So they definitely in the dirt right now. So again, when people talk about it, man, that's Boeing, man, too big to fail, man. Boeing can again ride through a man. Look at him, a flaming pile of proof. All I care. and they deserve what they're getting because of the fact that their arrogance, their incompetence, that really shine the light on exactly how these government agents look out for each other. Again, that good old boy club. FAA just kept turning their heads, and then here it is, you putting people's life at risk. Again, I mean, anybody could have been on any of the plane. And y'all know if it would have happened in America, man, Boeing would have been got cut in half. Yep. That's what would have been down. Let Americans, man, a large amount of Americans would have been on one of them planes. But man, people know what's up. Again, they play this game. They look you know what I'm saying? Just keep it real over. They are. And they would have been cut that stock in half. Same way they did with Chipotle when they, that first major case that Chipotle had, with I think was rats in one of them stores. Man, that stock got cut in half from like $800. Actually went under half. It went from like $800 and some odd dollars down to like $300 some odd dollars off that incident. That's crazy. I mean, think about all the shareholders that would end up around 700, 800. Just because a rat got exposed, something like that. The stock went all the way down to like 300 and something. So that's the game that, that we play a little bit. Just to be honest, in this game of investing, if you trying to find those companies out there that are solid, and you trying to find the ones who are not subjected to kind of things like that could be very problematic. Because again, your money matters, especially if you kind of getting in late, and whatever you think is just constantly going to keep melting up and going up. Well, that ain't always the case. So a lot of people were buying in again on Boeing around 360, 350, and they were doubling down. They were arguing with me actually. That's how come I know it. I'm like, man, I'm looking at them jokers now. They did church mouse quiet. They don't say nothing now. They're like, man, I should have been listening to the dude, man. I have a few people in the inbox me actually told me that. It's like, man, you was right, man. You won. I said, no, it ain't about me winning. It's about us kind of looking out for each other when we can, where we don't become too myopic in our love or emotion for a stock over the idea that your money being invested here. Don't invest your emotions, invest your money properly. Right? Put some thinking power behind it and realize that every company out there that's publicly traded is a pump and dump. I don't care what it is. It's a pump and dump. All of them. Forex market, pump and dump. Binary options, pump and dump. Futures market, pump and dump. Crypto, pump and dump. Equity markets, pump and dump. Your mutual funds, pump and dumps. All of them. And then again, as soon as the market get beat up, behind something like a natural disaster like we're dealing with now, they the first ones running to the government with their hands out. And again, they got billions and billions of dollars that they just blow on stupid stuff. Now you don't have that luxury, right? They tell you to put away income for about 3 to 6 months for a rainy day, be prepared. Well, these companies are exempt from doing that. When they're giving out executive bonuses and all that kind of stuff, throwing away shareholders' money, things like that. Well, how are they more inept to get a bailout before I do? Again, that's how come I know. Again, for people just don't see it that way. Some people don't. I know y'all probably do, but a lot of people just think that way. They very myopic in their thinking, and they think it's like some old some out of a storybook. Man, this is real. Man, look, these companies are garbage. All of them. Even if they got some good practicing and some good business, they still garbage me. I don't care. I just understand that they can care less at the end of the day, because there's always going to be somebody lining up to invest in a company at some point to take your place, even if you liquidate your position. And they know that because, again, you got so many different underlying factors that are tied into the market, in terms of, investor sentiment. Again, this constant bombardment with, news and press releases and things like that to kind of draw people in. And then, again, we see that happen a lot when stocks get nice little newsreel piece and the stock jumps up a run. Like after hours of pre-market, as soon as people, oh man, this stock is up like 200%, man. It's running after hours, man. I didn't get a chance to get out the way to pre-market, give me a regular session. Or even they get in pre-market when the stock is already extended. And as soon as they get in when the bell open, what does the stock do? They left hole in the bag. They dumped the whole kitchen sink on them joker and cash out. Right? And so again, that's why you have to be cautious and careful. And I'm saying that from that's strictly a day trader's, again, rule book basic from our perspective. But again, even if you're a long-term investor, you have to realize where your best bang for your buck is going to be in some of these stocks at a point where you have a special event like today, or not today, but just in general with the coronavirus, where stocks are just plummeting, well over 20%. 30%, some are 40%. We got some stocks down 80%. Again, look at Boeing. Boeing is one of Boeing was at what, 330, 360, 350, and now it's down to 100. You can already do the math on that in terms of what that is for our percentage value. Right? You talking about roughly down around about 70-something% there now at this point, 70 to 80-something% from its high, from that point, not necessarily its all-time highs in terms of 448, 442, but just where it was when it was just trending before all this stuff really happened. So it's been cut down almost 80%. And so a lot of fund managers and pension funds and people like that, they're salivating now. They want to get in that because they know, like, man, if they certify that plane, that stock gonna skyrocket. It's gonna fly. It's gonna fly. It's gonna fly like Tesla did. I can honestly tell y'all that if they recertify that plane, of course it's gonna fly. Because people think, you know, everything gonna be taken care of at that point. Because that's their cash cow. You know, so again, at that moment, you set aside your emotions. If you feel like it's something that you want to park your money in, then of course it's gonna fly. You're gonna benefit off of it, right? It's gonna snap back. And I'm just saying, hypothetically, even if it stay down to where it's at now, let's say within the 130 to maybe $89, $90, you know, channel zone while we go through this coronavirus, you know, barring that they don't go any lower. But as of now, just looking at how they tried to save it today off that $89 handle, which is, you know, again, it's impressive. But again, we've been seeing that, you know, for the past 2-3 weeks in some of these stocks, you know, where they're, you know, some of them trying, you know, they go down so much that it's not, you know, unlikely that when shorts are covering, they're going to snap back even faster, right? Come on, like a dead cat bounce. So, you know, a resurgence in the rubber band coming back to where it was before it got stretched, and these stocks got expanded to the downside, right? So again, I'm still cautious, right? Because I had people telling me again, should I buy here at 150 and go long? I'm like, nope. I had people asking me what 130. I'm like, nope. I mean, all the way down, literally from 250. I had from 250 area, I had people asking me, is it a good time to go long in Boeing? And mind you, I was still shorting in Boeing at that point. I've been short Boeing since $330 a share. I've been riding Boeing down like again, biscuit wheels, gravy valley, right? I've been riding Boeing. Right? Because I know it's in more trouble now, so more so now than it was even when you didn't have the coronavirus and the stock was still showing a lot of weakness. Because now people are running from stocks that are, again, that are in the worst shape, you know, or had the worst technicals or the worst fundamentals, and Boeing definitely was one of them. And same thing with the marijuana stocks. You would think people were running the marijuana stocks. As until the last couple of days, marijuana stocks really didn't even have a real true bounce. They just now are starting to bounce a little bit, because they were highly oversold, and people feeling like, y'all know what it is. If they're going to be home for 15, 20 days, 30 days, they finna buy their little weed, right? From these legal dispensaries that are in the recreational state, they finna stock up. You got jokers around here hoarding marijuana now, because they finna be sitting still and chilling, literally. And so a lot of those stocks are just now starting to bounce. Real quick, let me run over here to one of them marijuana plays. Let me pull up one of the marijuana charts. We got to know tear rate garbage. Again, tear rate is the ultimate garbage can. So we ain't playing the radio with tear rate. It's so garbage. But still, you know, it's that one down to about what? It's back up to like $3 or $4 somewhere around there, maybe $2. It's still in the twos. But that one just got. Matter of fact, let's take a look at old regular tear rate. Might as well. I don't have a run away from the moment of just throwing a dagger in the back of tear rate, because that stock turned out to be just pure garbage. You know, just the reality from where it came from to where it went to where it's at today. You look at tear rate here. Look at that downtrend. Look at that. Ooh wee. And that's just from the $20 zone. That thing looked like almost like a straight line. That looked like almost a straight line down. When you see a stock kind of like that, that's abnormal. They don't supposed to do that. They're supposed to have at least some, like, you know, a lot of those, like pop back up and try to run back up, like, you know, somewhere here and come down, kind of, you know, like the sine wave or a zigzag. You don't even see that in this thing. Almost did like a beeline, bro. That's like a beeline. That joker been running up out of there. That's tragic there, and that's just, again, going back by, you know, to the 21st of February. If you go back on the daily chart, all right, extend it out a little further, right? Let's go back to, again, pretty much July of last year. right? July of last year, you're sitting at roughly about $50 a share. $50 in Tilray. And now it's $2.60-something odd cents a share. The beloved, man, some of these marijuana stocks are worthy. Of course, I get it. Some of them actually do produce actual flower. Tilray don't even grow their product. They're just a third-party vendor, so to speak. And the best acquisition that Tilray made is when they bought that company, Manitoba Harvest, right? For some of you guys may be familiar with Manitoba Harvest, that's into the health and wealth. They're the company that make like the hemp, right? They make the hemp milk, right? And they also make hemp powder, right? The company called Manitoba Harvest out of Canada. I forgot what Saskatchewan, one of the little places up there in Canada. They bought them out. That was the best acquisition that Tilray got on their books. And if they don't do right, they're gonna lose that. And so, again, they just a little third-party little company that was just benefiting everybody else, and then just kind of drawing in investors, and again left them out high and dry. At this point, they got nothing to show for it. I mean, if you think about it, if you look at their chart, if you go back, let me see if I can. Let me see. Oh, that's that way. Let me see if I can. How do I do this thing on? I know I have to set it up where I can expand it all the way out. Because I want to go back when it was up there. Matter of fact, let me just excuse me, run over here to my my trading view. Because again, you just got to see the lunacy when you hear people that kept saying no, Tilray is gonna bounce, right? It's gonna bounce here. It's gonna do this. It's gonna do that. I'm like, dude, this stock is done, bro. This is dog food, right? It's dog food time for Tilray. Especially when it broke some very key levels, in terms of its support value at the point when even it was climbing crazily, and then start coming down. And it really had nothing to show for it to really get it back up to those anywhere above a key point where it can kind of launch itself again, because they didn't have anything, and they kept missing on earnings, or coming in at a way where the people was sensationalizing their earnings, and they had a market cap, well above the production growth of stuff, of profit that it was putting out. It just didn't add up. Then basically over time, Wall Street got hit to their game, kind of like how the crypto buzz was happening at the point where stock was just running on nothing, right? They were just company that was, selling lawnmowers, and all of a sudden they became a crypto lawnmower company. Like, man, people like, stop, bro. We know what you're doing. But that's basically what Tilray was doing in respect to its peers, like a CGC or Cron, APHA or something like that, or Hexo or OGI. People like real companies, at least to ACB. Some of them actually doing some real stuff. Tilray, 100% shell. I think that the company that behind them that was pushing it was Privateer Holdings. And it's funny too, because the CEO, Brendan Kennedy, was actually the CEO of the private shell company that was funding Tilray. He was sitting on both boards and the CEO of both companies, which is the biggest backer to hold some of the shares, the Class A shares, the voting rights shares. He was holding them in the private shell company and also on the actual stock itself. So he was running the racket. That alone seemed to be sketchy, and people just overlooked that. Like, seriously? Like, come on, man! Now, don't get caught slipping. Again, this is why we do our homework. This is exactly why we do our homework. So when people come in like, man, no, Tilray the bomb, bro. Look at all up in here. People like Tilray that bomb, bro. You don't know what you're talking about, man. Tilray gonna be $1,000 stock one day. Man, look at it. And guess what? I'm an opportunist. Of course, I'm an opportunist, right? I did like everybody else too. I wrote it. You traded it to Camille?
Yeah, Tilray.
Yeah, you got in on some of that Tilray money. So it was a good run. I get it. Again, IPO, roughly around about about $20 a share somewhere when the IPO. And again, literally from July the 20th of 2018 all the way to September of 2018. Literally, how many months? 2 months. 2 months, this thing went from $20 a share all the way up to $300. $302 in 2 months. You got in a little bit, got in on a little bit, then probably then. I think at that point you were still coming into the game. You might have traded it some. For anybody that even got into it, y'all know exactly what I'm talking about. It was a wild one, right? It was like my daddy would say back in the day. It It one of the women that be slinging it out the boat pan. That thing was a wild one.
Yeah.
I mean, every day it seemed like it was just gapping up. You know, especially at the kind of pullback, you know, bottom out around July 31st, and after that, you know, the buyers start coming in, you start seeing volume picking up. Here it is, the volume right here. And then, you know, again, they had a little fugazi earnings report where they kind of had the numbers all, you know, messed up where people couldn't really read it. So the Wall Street registered it as a beat when it really was. I mean, I was on top of that stuff, but I you know, I wasn't, you know, at that point I wasn't more short buys at that point. I was more, you know, again, you know, opportunities to go long more, and I rolled it up, you know, but I still shorted it again. You know, I shorted that top, you know, that was one of my, you know. That's when I actually had, no, what was the first one? I had, it was the CHFS. That's what the one. CHFS was my biggest day trade at that point as far as gain value. My biggest, you know, winnings at, you know, in the intraday session was like 17 grand. And I don't know if I remember that trade, Sister Camille. That time I hit that CHFS and trading it. That's why I first started to really get with trading it. That was like 17 racks in like 2-3 hours. And so I was like, man, okay. I've been trying to find another one of you ones like that. You know, it's gonna be like soon.
Mm-hmm.
So a lot of people riding tier rate up at that point. You know, they were tearing it up. I think at that time, you remember Connor, Camille? I'm sure you do, but Connor in the Discord, yeah, that's when he was. Remember, he was the biggest advocate of trading at that time. So he would ride a lot of these stocks like this here, making a good little killing. You know, then slowly but surely, Stock God got with him. The Stock God got trading that account, and then some of us started following suit. But either way, jokers were killing stocks like this with their leverage. Yeah, it was like fire. So when it went up and hit that 302, I got short. I think I got filled around 298, something like that. I still got the receipts. I went that just all the way down from like 298, somewhere around there, all the way down back down here where it was like $100. I rode it. You know what I'm saying?
Remember.
Yeah. Matter of fact, let me see if I still got that little thing up over there. I think our brother Jacob, he posted on the Wheat Trade HQ site. You know, that two-way trade. I mean, I still got the read, but I mean that's just, you know, moments like that. Y'all know we study for this stuff. You know, I mean, it ain't like I'm just whatever, but we study for this stuff, right? We live for it basically to get better. You know what I'm saying? We live to get better because we know at the end of the day, you know, this is going to be something that's going to really take us to the next level. You know, given the fact that we just put in the work, understand what's happening, you know what I'm saying, and then, you know, take it to the next level. All right, so let me see if it's over there. I don't think it's over there. I will have to go to, hold up. Let me see if it's over there. Okay. Yeah, so yeah, man, it's just I can't find it. Anyway, yeah, but that was a good little trade. That was, you know, it was a good little trade. It was a great little trade here. And so again, I'm just using it as a point of reference. So again, all the way from 302, and then again, what you can have this here, almost like a straight line down, almost like I say almost. But this last dump right here, when it dropped for 20, look at that there. That's what you call when the bottom fall out. That's a parabolic move to the downside. That's a bull squeeze. They're squeezing the bull. Woo! Look at that there. Imagine that was the pips on the forex market. Look at the pips to the downside, non-stop.
Yeah, that's lights out right there.
Yeah, that stock died dang there.
Yeah, Joker live for a moment like that there, especially, you know, you be shorter, you're a big short seller, and you can mash you mash the gas if you want, and after that you see no more green camp. Look at it. This is the daily chart, right? This is the daily chart. And you see, guess what? Reversal there and a little doji there. And guess what? After that, it lights out. You got 2 little green candles outside of that, and that was wrapped. That was just what RSI probably retracement a little bit. After that, it's just red, and the candles getting bigger and bigger. Look at them, got some meat on them things there. That means you're really panic and get up out of there. Capitulation kicking in on Tilray at that point. Stock down now $2.46. RSI so low it can't even go any lower. Probably it's going down to You know, RSI meters, bro. That's like when you break one of the little equalizer gauges. It don't even work no more. You don't even, but you know it's working.
Yeah.
Yeah. Do that joker up.
Damn. $300 to $2.
The $2. Boy, look at you about the $2. She just worth $2. $2.
Oh.
Yep, that was that whole weed pump.
Yeah.
Yeah.
That's like a joker telling you. Some of y'all know what talk. Back in the day, jokers tell you, man, this that good stuff, man. Look at this stuff here. This stuff is $300 $300 a bag, right? Now you get that same, you got that what they call that garbage for you. You get $2. You get $2. They're trying to give it away. They can't get rid of it.
That's called a twig bag.
Yeah, they can't even get rid of it. Like, man, you can have it, man. You know what? I'm tired of you trying something here. Just take it home. You can take it. Get what you need. Yeah, take what you need. You know, so yeah, this kind of stuff we talk about. You know, so but again, just kind of going on something real quick. I know we kind of shooting the breeze and talking about, but again, CGC. You know, CGC I was a little bit more pure play. At least they had the merger with with Constellation Brand. You know, again, that was like a $4 billion bag. You know, Constellation Brand, put into them, right? And they actually, doing a little growing there. As you can see, my little trend line bar up here. You know, up around that point there, that was my litmus test to go short on tier. Anytime I seen it getting up near there, that was my cue to go short because it kept pulling up against it and getting rejected, right? It'll pop up a little bit above it, then it get rejected. Come down, broke low 200, moving out, dipped out around about 24. I remember that move. It climbed back up. I actually bought a little bit of it, going back up, just scalping some calls. It got right back up to my trend line bar, and it cleaned up against again. It broke down. I pretty much put this bar here way back here. And that just shows me how true it stayed true as the stock progressed and went through its natural progression. It couldn't breach above it. So that to me it was like, okay, bam, natural point of resistance instantly. And after that, once you kind of establishes those points, those supply zones, from an overall perspective in terms of all-time highs, it's a wrap. Because that's a hard point for the stock to ever penetrate going forward. You have to really drop some real good news or put out some good growth to get back above that. And after that, it lights out. So here, around $50 a share. From there, it's a wrap. Now you all the way back down here like $9 a share. And stuff. If any of them got a chance to rebound, maybe CGC, but they just lost a major contract lately too. I was watching some on their company the other day, some news about they lost a major it was either license or some kind of deal with something. Paraphrasing, but that's not good for them. They still got barely that little contract with Constellation Brand before they actually get rid of them. If they get rid of them, it's gonna be lights out for the CGC. So they gotta hope they keep that contract or keep them at least trying to innovate something to kind of get them back, right? And so again, you got stocks like Cron, all the other the usual players, APHA. You got some of the cigarette plays like PXY. That's kind of going through the cigarette companies, Altria and Philip Morris, them types. You got the growers, obviously OGI, Organigram. I actually like that stock. Of out of all of them, I like that one better. And it's dirt cheap, but they are a pure play grower. They are a pure play grower, meaning they're actually a real grower. And they got good land there in South Africa too, of all places. They're out in they're growing it out of South Africa. But they got lots and lots of hectare acres out there where they're able to grow. So they're a solid play for us that. But again, they're still dealing with the whole, fog of the marijuana sector being beat up right now. And so, but if there's any kind of another big resurgence in the marijuana company, because it's been happening in spurts, it'll be on 1 year, then they kind of trill off about another year and a half. Then it'll be back on again, then they trill off. So that's basically what it's in now. It's in this dead zone, so to speak. It's on this downturn. But again, it's going to pick back up at some point. And all the trash companies, this is what it's all about. And that's about weeding out, for point intended, weeding out all the bad ones now. Run them junkers out of the industry, and the ones that's really solid, they're gonna live, right? They're gonna sustain. And so that's gonna be, again, possibly in my mind, companies like up again, maybe ACB, maybe OGI, some of these real growers that actually got land and and got a good operation that they can really put forth, a good rebound from when these companies really start, getting, some good little bailouts when it comes to these states going online, becoming more recreational besides just medicinal carriers, because that's what it's going. Eventually, we moving towards a lot more of these states becoming recreational smoking type little places, and it's going to be a need for growers, obviously. And so it's all the time, in the federal regulation, if they ever let up and remove marijuana as a Schedule 1 drug nationwide from a federal perspective, that's what everybody really waiting on. To be honest, I mean, if any of y'all didn't already know about the marijuana space, again, if you waiting on anything for marijuana space to rebound, that's the one thing that you can write down on your pad right now. The moment you hear the federal, the Bureau of Federal, whatever, and the people that on that level, the federal side, remove marijuana from a Schedule 1 drug, Schedule 1 narcotic, basically. Marijuana stocks are going to fly. They're gonna fly. Talk about, look, you can throw $10 on it, and maybe a month later, the thing that 10 might be worth about $300 or $400 because they are. I'm talking about the real ones too. They're gonna fly. So put that in your calendar, keep an eye on it, and so some of y'all probably already seeing some of these little, state mandates that they're fighting to kind of make it, New York definitely and many others, because that's gonna push the issue. The more you got states coming online and start to decriminalize it, because that's what you're getting now. You're getting the decriminalization of it, right? They're moving it off the books, right? Georgia finally is starting to trying to move, a little bit, because Georgia was last to do it. They criminalized so many people in the state of Georgia on marijuana. It's ridiculous, right? It's ratchet down there. I mean, and Georgia's, I'm saying that because I went to school down there. I got caught up one time, a couple times to be exact. Let me say one time, but I know, just knowing how Georgia dirty like that, old school South mentality, man, them jokers down there. But you got places like that when they actually do come online, it's gonna be really, really solid. It's gonna push more of the issue where the federals, the government basically gonna have to turn around and make it, at least take that off, right? Take it off as a Schedule 1 drug, right? But I mean, whenever it happens, if it happens, I'm just saying, if it happens, marijuana stocks gonna fly like none other. And I'm gonna be right there in OGI. I'm gonna just because right now OGI ain't really gave back a lot of his gains. It gave back some of his last earning gains. I actually, made a good little lick on that. I don't know if you remember that play over. I posted that OGI trade that while back just recently about the last earnings report. They beat on earnings. This one here, actually, right here, you guys see right here, the calls were like dirt cheap. I bought the calls in the earnings. Right? I think I bought like the either the $1.50 or the $2 call. And you see what it did. Not only did it got above $2 here on that earnings report, it gapped up and went as high as like $3.62. Right, and them calls, I think them calls were like $6 or $5, something like that, $7, $8, if that. So they were dirt cheap. And so instantly, as you see on that gap up here, I mean, that was just a beautiful, beautiful play. Again, that fundamental analysis, technicals, I put all of it in play. I read that they're going to have a good good report. Everything seemed to be lining up, and it was obviously coming into an oversold position a little bit here, where it was beating up, and that earnings report was just like like a springboard. It just gapped up, and I bought like a lot of them little cheap calls too. They were so cheap. I think I paid like about I want to say between $3 or $8. It was somewhere in that gap, that gauntlet. I have to go look it up, but either way. But yeah, so I got my eyes back on Organigram. So it was pretty much right back where it was at a point where, again, when it was trying to launch itself a little bit, coming off this nasty V here, it got above the 200-day moving average, which obviously at this point is below it, but still, some key levels of support is starting to show here around this 138, 140 level. It seems like it's bouncing off the 150 level, or the 140 level, I should say again, excuse me. If it's going to hold somewhere, anywhere around here, matter of fact, let me just draw a ball on that right now. Since we working, I'm taking advantage of this moment to work. Wow, we working right now, right? And so that's a good little point there from this little peak here, a little bit. It's kind of hitting some little nice little pinging points on the way back down, and that's because the entire market's selling off too. So it's not like it's just that stock. Everybody getting beat up because of the the virus, right? But if it's gonna bounce anywhere to the point where it can hold, right now it'd be a good place. And then after that, again, you got down here maybe like $1. $4, $5, somewhere around there. Call it $1, I guess. Anywhere down there, then you're really in trouble, right? But if it holds anywhere around here, again, you know, things start to balance itself out. We can get some good launching in this thing, right? Because again, at some point, y'all know it was trading up here in that $7 a share, right? So I was trying to trade to get back some of that when I bought an earnings plays around here, right? I was trying to see if we can kind of ping back, you know, get back up near this, you know, this 3, 5, and 6 and 7, maybe even test the high, you know, if we stock was going to act right. But you know, again, you know, we'll see how it turns out, you know. But I do got my eye on Organic Ground. That's one of the stocks that I like personally. Again, personally me, I think it's a pure play as a grower, and they got the land, a lot of it too. We talking about South Africa, there's a lot of it, and they got that good strain too. For some of y'all that might be, you know, to play around a little bit, they got that good stuff. I think from what I'm hearing.
Which one is that over?
OGI, Organogram. Like I said, I'll tell you, probably remember I was posting a lot about it. I bought the last earnings and made out really good on the earnings, but I posted about it, you know, several times throughout, you know, last year, even 2018. But it's a pure play grower, and they got a good product, pretty decent, good management too. You know, and it's got good potential. You know, again, hit a high around about $8, excuse me. Back around about May of 2019, you know, so right now it's back down to about, you know, it IPO, you know, again, came out the market around about 2014, you know, kind of was nobody at the point, kind of bottomed out around 2015, and then after that, you know, it just been marching up. It just marched up.
I got it in my marijuana ETF.
Yep, I just say it's probably gonna be in the ETF because it's a, you know, it's a solid little play. You know what I'm saying? They definitely probably gonna have Organigram in there, just because of who they are. So again, I'm just giving my little opinion. Y'all know how it is. They telling you go out there and bet the house, but I do like it around this little point here a little bit. Again, that's depending on how Rona act, right? If Rona ain't hearing it, Rona ain't letting up. They can definitely end up going lower, and they got earnings coming up too on the 22nd of April, you know, so we'll see, you know, we'll see what happens. They had pretty decent little guidance coming out of the last earnings report that I took, you know, back here on the date 14th of January. So we'll see, but yeah, that, you know, they're better than Tilray. I'll say that they're a lot better than Tilray, and a few other ones out there that's probably, you know, brand name, you know. Let me tell it based upon what I've been able to research. I think they're better marijuana pick, because most people tell you they come in the stocks. Y'all know the first stocks people run to when they first get into this is marijuana stocks, right? Because all the hype around it. But even these stocks, you got to know how to cipher through all the cat, you know, the cat litter, right? You got to filter through all that trash, right? Because some of them, all stocks ain't good stocks, even if they're in a certain sector, right? So you got to learn how to fish, really learn how to fish. You know, pull out the right bait, pull out the right lures. You know, put some brain power behind what you're doing. Find these companies who are somewhat best in breed, not just because they got a price that's bigger than everybody else, but they got a product that's better than everybody else, and they will outlast their, you know, these people who are fool's gold, right? Tilray is fool's gold. And no stock goes to 300 and then goes back down to $2 if they was a solid company. I'm sorry, that's not even plausible, right? So again, we have to be cautious of that, right? So we're looking for pure plays, that stocks that will obviously, you know, outlast a recession, because we are in a recession now. Again, let me remind everybody, if you had not thought about it quite yet, or it hadn't sunk in yet, we are in a recession right now. It just seems like you don't hear it a lot because everybody worried about the coronavirus, but the coronavirus helped spark this recession. The Feds, you know, made the bubble where it was to put us in this predicament. The coronavirus popped the bubble and exposed the Feds. And all this debt, you know, this latent debt that was set out there in the equity markets, that they just kept inflating all these old fake stocks up to prices that were just unbelievable, and they had no organic growth behind them. They all got exposed. And that's why stocks that are garbage are tanking harder than those who even have a little bit of moat, at least, in terms like an Apple or Microsoft. They at least got a little moat. Amazon got a little moat. I mean, they got a little, you know, defense to put up. But the other ones, they trash. They gone. They garbage. You know, it showed that, you know, they wasn't the company. They're not who they say they was, right? And they put it in that context. And so that goes across all sectors. Find the weakness in the certain sector. That's the one that, you know, that's probably going to get X'd out or phased out during the downturn in a recession. and also on top of this coronavirus uncertainty that may drag out about another 2-3 months. So it's going to really test the resolve of some of these, these companies. If they don't get a bailout package, they're not one of the lucky ones that don't get bailed out, and they don't deserve the bailout, because some of them don't deserve it, but just by default, they're in certain sectors, they're going to get a little money too, right? But if they, really don't get one, they lights out for a lot of them. This is what you call a stock purge. We live for moments like this because this is what we want. We want this because if you miss getting into a stock that was really high, coming into this, this pandemic, now they become a lot cheaper. They go on sale, literally. They're on sale now. And so again, some of the first ones I'm looking at, just throw out 1 or 2 names, is definitely Apple, because it still don't want to sell off. If they still trying to prop Apple up, man, if they get any sign that they're not all clear, man, they're just gonna buy Apple with 2 feet, 2 fists, an elbow, a backpack, a fanny pack, a dog pack around his neck. They're gonna buy, man. They're gonna try to buy the whole, the company outright, basically, in stock value. It's gonna be crazy because they looking at it as a still flight to quality in terms of a stock that has a revolutionary type model set in place in terms of product and services that they offer. So again, it's not a no-brainer. I'm pretty sure a lot of people have already kind of set in place that thought in their head or thesis in their mind that these are some of the stocks that's going to be, still banging once they come out, on the other end of all this, right? And so again, just a lot of things you can think about, guys. When you're out there trying to prepare, when you're trying to find, what's good to buy in the market like this one, because you're still hearing some analysts saying that this still is a good time to buy. But keep in mind, they got bigger money than you, so they can nibble in with $100 grand, $100 grand or $1 million, right? And then they could add another, $1 million if it goes down another way, 5 or 10 points, right? Which obviously brings the average down to about a median point where, the stock was kind of trending up, banging up against that point anyway. So basically at that point, it just kind of broke even. And then it began to kind of rebound. They started making money. So that's how this game is played. It's about levels, right? It's levels to this. Essentially, it's levels to this. You just need to learn how to spot those. I'm talking about from a long-term investor perspective. And also that if you're day trading, obviously you already know what to look for in terms of what you've been trained to look for. Supply demand zones, again, price action, abnormalities like that, volume less than or more than the average. And then any kind of particular strong catalyst that even sometimes come behind that stock that day, which obviously that becomes the icing on the cake. You take that position if you see worthy to or find value in it, and the rest is history. Right? Trust your trust your instincts, trust your studies that you put forth. And then again, on top of that, you don't have to be willy-nilly. Set your little stop losses too. Worst case scenario, you lose like 2 or 3 cents, 5 cents, 10 cents. You already kind of defined your risk anyway. And again, we're just in a unique situation. If we just put everything into practice like we're supposed to, in moments where it matters, we'll be fine. We'll definitely be fine, and we'll do very good. Again, in terms of really, really taking this thing, to the next level. I mean, it's, in terms of that, when I say this thing, this skill set, right? And again, so even a little dirty little stock, little what's the name? I see it's banging up here. It's trying to make another little high right here. Matter of fact, a little stock I was in earlier talking about the little BMRA, the COVID-19 test kit stock. It's still banging here. Hold on, where is this? Oh, that's not it. That's well, that is it, but it's not showing up. Let me go to the. Yeah, so again, back above, up here near the trend line, broke below it a little bit, but still up here in this $14 level. So again, that stock came from $2 yesterday. See this price right here? This is yesterday's closing price. $2.37. And this baby way up here near 15 now. Again, if it breaks 15, oh, go ahead, Chris. I'm sorry.
Oh no, I just said, dang, that was a nice little run.
Yeah, again, I was telling Camille before you came on, even Jamet that, that's the one I posted this morning in our little group, and I posted on my too. Now, again, put a little backstory on it, and turned out, investors and they bought it up. Again, it was a solid news piece. It was an SEC filing, so that means it was, at least they were legit, unlike a lot of these other little, COVID-19 pumps. So they actually got a 10-minute test kit. I'm all on top of that. In terms of actually the kit itself, the stock, I was definitely informed, but if that kit can really get in the hands of big money, all this new money that's going to be coming from the government, then that's going to be huge. They already, eating it up in the overseas area, like they're saying, as far as the article, that the Middle Eastern areas and Europe is actually trying to, looking to probably getting it. They sent samples out over there, which they're heavily hit harder than we are. So if they buy this kit and they say, well, okay, well, yeah, we want it, we'll buy it in bulk, obviously we need it. That'll really spark from behind this little company.
Right.
So it's just an integral part of the whole preventive maintenance and care aspect of this COVID-19 scenario. So if you got the kits, that's just most important. That's almost most important in the vaccine, because now you can diagnose people, kind of like, on the fly. It's only 10 minutes too, a 10-minute kit, to get your results. Shucks, man. Yeah.
Good.
Yeah. So we'll see what it do. Again, it was, it gapped up and shucks, it gapped up and rolled out basically.
Mm-hmm.
I mean, I didn't think it was gonna do this today, but hey, we don't cry about a bag, not holding a bag, but securing the bag. We ain't gonna never cry about that.
Right.
We're gonna take our little game where we can and keep it pushing. But so we'll see tomorrow. It might be running tomorrow a little bit. We'll see.
Yeah.
Just buy, hold up, because the news of it probably still moving around a little bit. People just now start getting wind of the news itself.
Mm-hmm.
So we just keep on. Again, a few others real quick here. I run over to Black Box real quick here. Again, see what's running here in the after hour session, because y'all know this is the time of day when future runners for tomorrow start acting up. they'll be running here after hours for whatever reason. And the next day you wake up, the jump up another 70%, and it might have ran about 100% during the after hour session. Look, we already got up 72% after hour. Look at it already. Look at this. I think I trade burger for. That's a burger place. BRG. That's a little burger place. Yep. Chanticleer Holdings. That's a company. Yeah, burger. Yeah. Y'all. Who is that? The one with the? Is that the one with the? Who? I think this is the one. If I ain't mistaken. Yep. I could be wrong, but I think this is the one. Anyway, the stock gapped up from 6 to 8 cents at the close 9 and went up as high as 138. So it got over 100%. Actually, you can see right here, it's up 130% on the actual day. After hours, it's up again, additional 71%. So basically, it put up about roughly about 30%. Dang it. It put up about get your math right, Willis. It put up 37, 60%, somewhere around about 60% on the day, and then additional 70% after hours, basically, in a nutshell. And so whatever that's causing this thing to run after hours, I mean, again, it's a penny stock. So these speculative play. This is garbage, obviously, until it really got some. But again, it's just go ahead, over Chris. I'm sorry.
No, go ahead.
Okay, yeah. Now I'm just saying these are the ones that just jump up and start running after hours for whatever reason. Then they open up tomorrow again. They up another 70% or 100, and then they'll run another about 100 something. Then they kind of pull back. And so these are the ones I'll be watching after hours, and I watch them until the next day, like we did that ENT trade, and they got up and ran a little bit too, around about 200-300%. And these are the stocks that's running right now. All these little penny plays are the ones that people run into now, and a lot of people gambling in them. Again, granted, they're taking them for what they were, but they just gap and run. Again, TAST, another one up 35%, 35% after hours. But this BURG is definitely, the banger of the after hour session here. Some of them up 30%, 25%. That's good money there. That's good money if you in at a good price. You know what I'm saying? So you even got Guess right here. Guess jeans. the company called Guess, they even up 25% after that. They must have earnings tonight. I guarantee. I think they had earnings. They might have had earnings tonight. I would have to go look and see, but I'm pretty sure they probably had earnings. That's why they up. Guess. I would have no reason to think they'll be up here, especially with the coronavirus and a manufacturer, a store, any kind of retail. So they must have had earnings and the numbers were solid. Outside of that, this market extra risky. As they say in French tongue, risque, right? They risque a little bit. All right, so you got to know what's real or not, So yeah, man, these little stocks here pumping after hour. Let me see some of the bigger sellers out there. You got Nugget down real big after hour. That's the inverse to gold. So of course, J Dust were banging today to the upside. The J Nut was selling off, and so J Nug and Nugget and J Nug up the inverse to the J Dust. So these are the bullish ones. They selling off a little bit after hours, as you can see. So J Nug down after putting up good gains yesterday. Nugget down as well. DWT, FPR, or stock still. T-Mobile down a little bit after hours. Hey, they ain't 10% on T-Mobile. So Sprint might be a little weak today. If T-Mobile down, Sprint now probably trading somewhat near correlation to it because they merged. We'll see. You got a few others here. We can probably see them. See what's going on there. But Mattel down here about 11% after hours. So Mattel must have had earnings tonight. Right, but for it to be down another 11% after being down earlier today too, for some of these stocks, that must mean they had earnings. And I think that lets you know I was so busy today. I didn't get to trade no earnings, and I typically trade earnings. So I missed today's earnings play. Matter of fact, let's go see real quick. You got a little something strange for a little people thing. Right. Sister Beautiful One, you say what do you think would be a good investment for tomorrow? Again, when you say investment, if you're trading for the next day, it's definitely going to be a trade, right? Unless you think about holding it long term, right? So that's just obviously basic investor terminology, right? Trade, swing, investment. Investment obviously means longer term, more than at least a week, at least a week. But again, it depends on the person, but typically, so if you're looking to trade something more or less, or sometimes trade can turn to a long term investment. That happens too. Either way. Again, it's all depend on what you're looking for, what you're looking to get out of the market, based upon what are some of the market conditions that's presented to you for the particular sector, for the particular stock, that's being heralded for either something good or something bad. If it's a useful, use case value of a stock that's necessary to a degree in an environment like now what we're dealing with the coronavirus. Because that's still in all the headlines, right? You could be a company that actually put out some good news today, just based upon some natural growth and perspective what your company been doing, but it'll get overshadowed by the coronavirus, right? It ain't enough to catapult the stock, right? So all good news right now ain't good market news because no one's really focusing on that, right? They're focusing on more so stocks that are either tied to the coronavirus vaccine, preventive maintenance care, things that make logistics go a little bit more easier for these first responders and all that kind of stuff now coming into play. And so you have to think it all the way through. You think it all the way through in a way where you try to leave no stone unturned. Like what would be things that would be a modifier or amplifier to them making this coronavirus thing go away? And then in the flip side of that, you say, well, okay, well, what will be what stocks will be the ones that will be, subtraction value or detractor value from this whole coronavirus, meaning stocks that are, really, really left for dead because it's affecting their company due to the coronavirus, right? So that's your plus minus ratio value of, the stocks that you may be looking to short as opposed to stocks that you think that might be worthy of going long in, right? Because even though some of these stocks may do good in their earnings, some of them will probably still perform a little bit, and then again, if it's a down day in the market, they'll still turn around and sell off after they had like a little pop, right? Their earnings growth or whatever they did may not have been enough to carry the stock, right? But in other cases, some of them may hold whatever. But so it's a day by day cases now, even more so now with the way that the market's trading, that everything is subject to the next day. It's like a TBD kind of reality, right? To be determined, right? Right. That's basically the kind of market we're trading now in this environment. And investors who are looking for investments actually long term, they're trying to, really put forth some technical fundamentals and some natural, natural observation where they may see the bottoms at in terms of the overall equity markets. They're trying to find that proverbial bottom, right? Everybody's always trying to look for the bottom, right? That's one of the biggest things. You can be a great dip buyer. I used to be a really good, good at priding myself on being a really good dip buyer, right? That was like, man, I just love to be a good dip buyer, right? Bottom fisher. I used to come to the bottom fishing, and it's just like anything, just trying to, again, get the best bang for your buck. All right, so here after hours, these are the earnings that came after hours. Some of these stocks may be in play tomorrow, either up or down, but just on the general fact that they had earnings tonight. So Five Below is a retail store. All right, that's definitely retail there. It seems like they came in a little light on earnings. Not bad though, it wasn't a whole lot. They missed by, again, about 0.07 value of $1 million, by $700,000 basically on the earnings. So that's basically close to in line to a beat. They barely beat on EPS by 2 cents, which ain't bad. So that's 24.1%. No, excuse me, 24.1% increased value in terms of their growth in the earnings per share. Again, up about 1% on an annual basis on surprise value that it beat by. And so we'll see what that's going to do tomorrow for all the retail, because retail stocks are under fire right now. People can't go shop. And this store here is a store that definitely does face-to-face business. I don't think they even have an online presence at Five Below. You have to go in there because it's so cheap. These $5 little items and cheaper, you got to go in that store, man. They ain't finna be shipping that stuff. It's too cheap. Ain't really no big margin on that. All right, so let's see what Five Below doing. We'll go check it out. There's something strange for a piece of change. All right, we just listening and learning and putting this stuff into context. So again, right here. So after hours. Yeah, so again, as we saw, the numbers just registered there. Obviously, they somewhat came in line, barely beat on EPS, but was it enough? Right? Is it enough to kind of, make investors or shareholders feel like, okay, yeah, I'll start a new position at Five Below now? Well, look what it did. It sold off throughout the day. Obviously, it came from $60 a share. I remember Five Below used to be like $100 and some odd stock. Case in point, let's go back 3-month chart. Right here, look at it. Five Below was trading at roughly about $130 a share back in December. Even around about the beginning of the year, right? They were trading about $130 a share. Again, then of course, here come Rona. Here come Rona. Rona wrecked a lot of parties. Boy, Rona threw a curveball, a monkey wrench, a Jack Daniels bottle, a Molotov cocktail. Rona messed up a lot of parties. Rona came in like Debbie Downer, right? She threw water on the barnyard fire. She cut your little weed joint in half. Rona was that. Rona came in just as a disruptor, a real disruptor. And guess what? Here we come falling from grace. 118.97. Capitulated sideways, dump lower. Here we go, all the way down to $50-something a share. After amazing run that they had, obviously coming back. Let's go back to the yearly chart. All right, matter of fact, let's go to the 3-year chart, because let's find out when it was back near this price here again. It was way back in 2017, September the 18th, the last time this stock was trading at this price here, around about $52 a share. Imagine that. Imagine that. Literally 3 years ago, close to 3 years, whatever the case. And so you ask yourself, is this a bargain buy here? Is this a bargain buy at this point, being this much off its highs, right? The all-time high was roughly around about $150, somewhere close to that, right? And now it's all the way down to 53. What will make a person come in and say, you know what, I'm going to start a position right here in Five Below? What would you have to, see, hear, feel to a degree to make you, get really excited and bullish about buying Five Below here? Again, fell from grace, pretty much not like it was its own fault, but to a degree at a point where maybe it had been, it might have been overbought. It was just kind of up a little bit more than what it probably needed to be up from where it was really, putting out for the production growth back. And it might have became overbought and inflated to a degree. right? Because again, it hit its all-time high in what, 2019. That's when all stocks have been what, highly manipulated and inflated. Fed, quantitative repo market, stuff like that. Again, Trump pumping every other day on Twitter. I mean, like the market could do no wrong in 2019 at a point when everything just kept melting up. Bad news became good news. Good news became great news. It was no negative that could be registered in the market when stocks just kept melting up to the upside, and the earnings were coming in kind of just light and barely. And it wasn't no organic growth. They just started buying back shares. That was the problem. Companies were doing too many buybacks. They were just buying shares back, buying shares back, buying shares back. Well, guess what? They ran up all their dry pot of money, buying stocks back and pumping dividend. They had no money for rainy days. Like today, like moments like now, they don't have any money enough on the books for good free cash flow to really bail their company out and their employees out. And that's why they got their hand out, on the welfare line, trying to get some of this bailout money from the feds. But they caused a lot of their own pain because they were being greedy and reckless, and they thought that the market could do no wrong because everybody had this complacency that Trump had their back. And as long as he can, as long as he got a Twitter account and his fingers working, they feel like the market was going to go higher. Right? And so again, it took something like coronavirus to bust the bubble that the Fed had produced. They blew a real big bubble. Again, keep in mind, guys, we were on an 11-year bull run. 11-year bull run. The market been tended up to the upside for literally 11 solid years. So roughly about 2009 to where we're at right now, the market was just on a steady incline after that major market crash we had back in 2007, 2008. And now it's just finally starting to really cool down, what we say really cool down. And so stocks going to become cheaper, and some of them going to be looking attractive, and others are not. Some of them are going to go to the wayside and stay exactly where they belong because they were exposed and pretty much as the pump and dump that they are. Make no mistake about it. You need not be confused. Just because you may like that company, don't get it twisted. Right? Because if you can't see them returning back to grace, then get it out your face. Right? So again, ask yourself that same question at 5 below here. Is it worth it? Right? They got a good, operation was pretty solid. Again, everything that's still about $5 and below. They just started adding some items that were a little bit more to kind of capture some of those people that really spend a little extra. I remember reading that on one of their earnings report, maybe about the last one or two of them, that they're looking to kind of increase, a couple extra little high dollar items in their store, again, to try to, challenge the value of a little extra little margin boost. But outside of that, again, you know what you're getting when you're dealing with a 5 below store. Again, it's a kid's dream store, obviously, because kids can go in there and just load up a lot of toys for under $5. It's a good, a good business model from that perspective, and that's how they were doing so good, apparently, from that perspective. But again, share price wise, man, it just tore off. It took off. For 2017, it went from $37, $38 a share, all the way up to 147. By literally March of April of 2019. That's a lot. That they put up a yard, and close about 2 years. And some companies don't put that up in the entire 4 or 5 years. They did that in 2. That level of growth. What I'm saying, from pretty much just ramping up straight up. Look at this. Look at that big candle there. Look at this. What was that all about? Goodness gracious.
Damn.
You see that candle, Sister Camille, Drummond? Like, what was that? Had been earnings or something.
Wait, put the other chart up.
Which
That's
one?
the earning whisper showing.
Let me see here. Can you see it? Is it still up? Oh, you don't see it. Oh, you seen the earnings whisper chart. I'm sorry. I thought I was showing the black box one. No, when I'm sitting there going over the black box stock, the chart is talking. My bad. Forgive me, y'all. God, dog. My bad. I'm just over there. I'm just showing the chart, like I'm always doing, diagramming it. And y'all can't even see it. Golly. Wake up, Willis. Wake up. Forgive me, y'all. This is here. My bad. This is 5 below
It
chart.
is.
God, dog, man, y'all. Sometimes y'all interrupt. Y'all forgive me, man. I might, see, I'm a little disorientated right now because that Rona got me scared. That Rona got me scared from earlier today. I'm all disorientated a little bit, right? I'm pretty much not like my sharp usual self. And whatever, it happens. But yeah, see right here, this 5 below chart again. We're talking about. See right here, this candle here. Like what happened here? What was that about?
Woo.
Right? Look at that meat on that joker there, boy. That's what you call meat on the bone there, bro. That's meat on the bone. Shoot,
Yeah, they decided they took some interest in it that day, and they was like,
Yeah, that must have been an earnings play, something, a merge or something. So basically, $73, 73 all the way up to 101. That's a $30 pop, bro. That's a bag there.
Yeah.
That's a bag there.
Tough right
Man, you do something with that there. You put that in, you're gonna do something with that. So again, that's just 5 below. Just talking about earnings play. Look where it's at right now. Again, coming from where it was, when it was up here at again 146, 148, 140, close to 149, 150. Again, you see basically a classic head and shoulders pattern though. Again, it was an obvious head and shoulders up here. When you look at from the longevity of how stocks move, that's why it's always good to look at past performance, right, as a predictor of future potentiality or future profitability. This stuff matters. So we've been trained to look at and see what these things. So that's a classic head and shoulders. You got a peak of a shoulder there, you got a head here, and you got another shoulder here, and then obviously you got the neckline, right? The neckline is pretty much the equilibrium point that you chart in terms of the potential drop that a stock will fall in the event that they ever broke their head and shoulder point. You say, okay, well, what's the neckline at? The neckline is probably somewhere around here, 121, 120. To the top of the peak of the head, you got by another roughly about another 27, $28. So guess what? Here's your neckline somewhere around here again. So the typical when the head and the shoulders, when it actually drops, when the stock actually drops from that perspective, it should be about equal to a greater distance of the neckline to the head, right? That's a textbook way how to do a head and shoulders to the downside, right? So let's test that theory. So 120, right? 120, 121, 120, somewhere around there.
Right.
See how it dropped to where it came down to what? About 96, right? 96, 95, right? So that's how much? That's roughly about what? 27, 28, $30, right?
Yep.
There you go.
That's a lot.
That's how you do a textbook neck head and shoulder neckline to head potential drop when the head and shoulder actually formulate and it drops. You can calculate how much it will be to the downside if it actually fulfills that drop mandate. This is not rocket science. All you have to do is be comfortable and buy you some puts in that point when you know it will start to break down. Because now you start saying, okay, when it breaks certain moving averages, it's getting weaker. It's getting weaker. It's getting weaker. And then guess what? Anything that triggered, be it a catalyst or whatever, or just in general or something that caused it to kind of roll on over after that weakness began to be showing itself, you just buy your puts. You just extend them out about a good week or two if necessary, especially if you can get them at a cheap price. Because at the end of the day, you're still looking for what? That neckline, which you see here, the neckline to the top of the head to be the level of the dump. When it actually does dump, that you should at least get that much out of it, off that drop. And just like clockwork, guess what it did? It fulfilled that mandate. It dropped about 27, $28 somewhere around there, give or take, plus minus. That's textbook. That's not rocket science. That's just understanding how this game works. And then after that, again, you come over here, then you got the Rona. Then you got Rona. Rona showed up. And after that, it really was lights out.
Yeah, Rona in the house.
Yeah, Rona in the house. Think about it made me think about Martin and old Jerome. Jerome in the house. I said Jerome in the house. Player for the Himalaya.
Right?
Y'all know about Rome. Y'all don't know about Rome, but y'all don't know about Rome. Rome, you walk around in little cowboy boots on, boy, that little tight little denim jacket. Man. But yeah, so again, 5 below. Earnings tonight. You see where it's at. Again, go back to the daily. You can see, again, the numbers kind of came in somewhat in line. It got a small little pump up from $53 up here. about 58. They'll pick up like $5, and then it just kind of came right back down to 55. So guess what? Earnings end up being what? A nothing burger, because there's something more important than what their earnings right now. And her name is Rona. Rona. You know, so that's what I was saying. So moments right now, if you in a stock that you like long term because it's a favorite, you know, of yours, and they got earnings coming up, and if it ain't nothing to really blow the, you know, the socks off the analysts, then chances are, and it's on a down day, it's really gonna get overshadowed. Make no mistake about it, it's gonna get overshadowed because you need a lot to pump, you know, to move this kind of sentiment, you know. So again, this ain't nothing that y'all don't already know. I'm not saying that for a lot, not you guys on the panel, but a lot of people that's even in the back chat that's learning and listening and trying to make sense of this stuff, because guess what? There's more. It's more than just, again, technicals and fundamentals. It's also psychological and conditioning, right? Yes. Using your intuition, your wit, to make a natural observation that makes sense. Stop trying to convince yourself that something is what it is when it's not, based upon what the market is showing you. Use your intuition. Use your wit. Use your circular reasoning, your deductive reasoning. That's the best one. Deductive reasoning. Eliminate all the variables, right? That's what they do in science, right? To prove something to fact, they falsify what? All the evidence, right? You falsify it to the point where you can't falsify it any longer, right? Make all this stuff make sense in a way where you can take away all the variables. You leave no stone unturned. So in the event you're going to take a position on that stock, up, down, wherever, you'll at least be convicted about that trade. And if it go against you, at least you know you've done enough to take it as far as you can go, and the rest of it just was on Wall Street at that point. And we know Wall Street can be very nutty at days, and it don't necessarily line up. Even though you was in the right, it might go the opposite way. That's just how, again, Wall Street nutty like that for days. But if you keep doing right by the level of your level of study and research, you'll be more right than wrong on average if you just stay, disciplined. So it's it's a game of consistency at that point.
Yes, absolutely.
So, you guys get it. Nothing to do. So I just enjoy the idea that we can, again, come together and put this stuff in perspective. And again, a lot of guys that's listening right now, people, sisters too. I'm not gonna say just guys here, but guys, but they're new to this, and they're trying to make sense of it early, right? This is the best stuff you can get. This is the hardcore truth, right? This ain't. I'm not gonna sugarcoat again. I don't own the stock market, so I can't say you that. Number one, and so it's just in my best interest to tell you, share with you at least, I should say, what I've learned through my experiences. And again, I've been through a lot of them. I'm pretty sure Sister Camille can too, even though she's still, kind of in her growth stage of trading. But once you go through enough of them, you kind of build up a timeline of thick skin and know exactly what you're dealing with when you see it. You ain't got to sit there and sugarcoat it in your head. You know it's garbage, it's garbage. If it's sugar, you know it's sugar. You know what I'm saying? You know exactly what you're dealing with.
Absolutely. Your eye gets trained.
Exactly, right? So the goal is to build up that kind of stamina mentally, so that way you don't be out there trading under this old false sense of reality, right? All that fool's gold, so to speak.
Right.
That's what we're not going to sit here and tell you. I'm never going to sit there and just, say it just because it make you feel good about your little stock. Again, y'all know my mentality. All of them pump and dump. So I hate to break it to you. Every stock out there is a pump and dump. All of it garbage. I'm just here for the moment, and I'm trying to ride out. I don't care if even I got a long-term holding. If I held the stock more than 5, 10 years, 7, 8, to me, it's still a pump and dump. And at the moment, it's doing good. At the moment, it's doing good. You know what I'm saying?
Right.
And as long as it keep doing good, I'll reward it, right? I stay invested, or I add a little extra. But as soon as it starts acting retarded and cutting up, oh, it's wrap. I'm out of there, if necessary, or I'm definitely going to reduce my holdings. So again, Boeing is a clear case cut of that. People thought Boeing could do no wrong. Look what Boeing's at today. Boy, did they get a wake-up call over there at Boeing. So that's why it's important. So again, looking at the little penny stuff again, it's pumping high here, as you can see. BURG, again, up 146% on the day. So it's still squeezing higher. So I don't know what's causing it. Probably earnings. Who knows? I don't know. But again, it's running. It's a little penny stock. Oh, sorry, over Chris. I'm sorry. You see you out again. Yeah, that's it. There are brother Smarter Trading. What's going on, family? You know, that's it, man. Wrong. Yeah, so yeah, so you cancel back and start learning how to do a lot. But that's it. Yeah, you take your natural skills, man. They useful when they're useful, and then other times again, if you can take it to the next level, then you take it to the next level. You know, save that money and put that practice to work. Put those skills to work. Right? Just put those skills to work. You know what I'm saying? So that's what Mark, learning this stuff is all about. Learning how to do this stuff pretty much from a caveman perspective. And then when you get the nice tools like scanners and different little indicators and this, that, and the third, some of the stuff that you got to even pay for. Come on, that stuff, that's just easy. That's the easy part. But learn how to do it the right way.
Yeah, definitely.
Yeah. So you want to add on
all free stuff now.
Yeah, y'all want to add on that? Yeah, go in on that. I mean, y'all still at that point too, where y'all learning how to, again, we went through the, that caveman stage. You buy a little extra little scanner here and there or whatever, but it's important,
Yeah, I really like TradingView because like trading the forex, you want 24-hour. You want to be able to see what the indexes are, DXY, BXY, etc. 24 hours. So I base my trades on. So TradingView is good for that because not only for me that charting is incredible, but it's just good for the it's one of the platforms that has a 24-hour indexes. I was using TOS for free, but I know TOS been acting up. It's kind of crazy. It won't open. You're making your computer shut down. So I don't know what's going on. And that's Thinkorswim.
Okay.
I don't know what happened as far as that.
Oh, okay.
I mean, as far as TOS, it's just kind of like, I mean, I love the charting on TOS too, but I don't know. It's been, it hasn't been working on my phone, and it hasn't, and it makes my computer shut down. So I just kind of like, but TradingView, the charting, like if you like to do like, a whole analysis of your trades, you can write on the charts, which I really love. I write on my MT4 charts, but I do have to do it like take a picture and then use the drawing tools. But with TradingView, you can do all of that live. So plus the alerts are priceless. But if you're just learning, just do the bare bones things. Keep costs down and just learn the craft. That's pretty much it. You got FinViz, you can watch charts on that, and you got investing.com. So you got, I use those too. So go ahead, Bob, Chris.
Great resource. So the resources, they come in handy.
Yeah, because it gives you confirmation on your trade.
Right.
Like, it's kind of like not having the not being able to see SPY. So if you're not using SPY when you're trading, equities, you don't have a good indicator what the market is doing.
Right.
But
that's right.
Yeah, you want to get all the indexes. I look at all the indexes before I take a trade, especially the Doxy. Or it depends on what pair I'm in, but the major, whatever the major is, I look for that. I look for that index, and I also try to make, and when it's really golden is when the index matches the pairs as far as how the candlesticks look. That's when it's a wrap. You know, that's it. Yeah, and what I do sometimes I look at the majors, and I look at the indexes first. You know, I chart them up, and then I look at the pairs to find pairs that match the index. Yeah, so you don't waste your time going through the pairs, and then you can't find indexes that match. I think the indexes first, and then find the pairs.
That's a good point.
Yeah, I'm here putting my dinner on. Well, the dinner is on.
That's definitely time to eat.
For real. Get ready to trade all over again.
Yeah.
I gotta put my charts up online.
Yeah, I got it.
Yesterday's and today's trades.
Yeah. I gotta do some scanning myself, see what I can find. See what's out there. Might not trade tomorrow or tonight, that is.
Thursday's Wednesday, Thursday, and Friday. That's the day. Those are the days when the market is setting up. But we got this. Yeah, Wednesday, Thursday, and Friday. That's when the market makers have made their moves. That's when they.
Yeah, well, I got some extra time anyway. I mean, I'm normally off Monday, Tuesday, and Wednesday, and to go to work. But we just cutting our hours down, and it's not open, for people to come in. 'Cause I work at a brewery doing security, so they just letting people come through to get drive-through orders and get them the hell out. And
right. No contact.
Right. So I'm just be sitting there chilling anyway, so I can be scanning and getting in and out the market,
right.
Seeing what plays to play. So
yeah, it's nothing like it. Well, that's what I like about Forex. You got the 24-hour thing.
Literally got all day, and I be telling people that. I be telling them like, you telling me, oh, I gotta work 9 to 5 and all of this. I'm like, well, you could be, setting up your trades and stuff during that time. So when the correct session come through, you'll be ready. Right. You know what I'm saying? When you get off work, you have time to play some trades.
Exactly, and then you got the stuff is on your phone too, man. I mean,
Right.
There's no excuse. You can trade directly from your phone.
Right.
Or your iPad.
Yeah, sure. I downloaded the MT4 on my tablet too. So shoot, my phone died. Shoot, I got my tablet over here. You know what I'm saying?
Yeah, that's what I be trading on is my iPad. I'll be like, man.
So shoot.
And if I'm like,
try to get it in anyway.
And if I'm running an errand, I can monitor my trade from the phone. Yeah.
That's tough.
So it's so much simpler than what people actually think. You could demo trade. I mean, you could just demo for a freaking year just to get your skills up, and always, write all your trades down. Journal. You got to journal. You got to do. Also, you got to collect data. what time of day. You know, different traders trade better at different, you know, times of day. Things like that. So like journaling, those kind of things. You know, what was your mindset when you were in a trade? It helps when you're a beginner. You know, did you take a risky trade, and did you chase the trade? Did you revenge trade? You know, all those kind of things help get your mind together. Because at the end of the day, it's your emotions, you know, that dictate whether or not you take a proper trade or how you get in and out of that trade. You know, if it's not going right, you know, and having the right mindset. You still there?
Yeah, he just came out. He coming back in. He probably got kicked out. He's trying to come in. I'm waiting for it to come out. I can pull it back in. You know, I went and ran upstairs, put some stuff away real quick, and I came back. So I just put my mic on mute real fast while y'all was going in. So yeah, over Chris back now. I also trying to post this little spy chart. The dude came, Brothers Trade Doc came in and said that SP 500 was gapping up. And I see it running up here after hour. So
yeah, I was about to ask, like, what's gapping up?
Yeah, SPY running a little bit after hour. So yeah, somebody got some optimism over there. Yeah, we'll see if it holds though. It definitely gonna have to hold because right now, boy, to my everything can get it to the downside. That is so.
Right.
Yeah, and guys, if you want to come on the panel, I'm always extending that invitation to you guys. You know, let me post that link, man. Come on on the live stream if you got time. You know, if you just want to kind of kick it a little bit, you know, go over what you're looking at, problems in the market. You know, you're welcome to come on and share that knowledge. You know, share your data, share your, some ideas, post questions, whatever. Doesn't matter. Again, y'all know my live stream is built for you guys. This is a workshop. It's a trader's environment, right? We don't do dictatorships over here. We do roundtable discussions, right? That's what it's all about. That's how you learn. You get a chance to extrapolate on your ideas, your questions, and that's how you learn better, right? When you can touch things, talk it through, analyze it, So that's the link there, guys. Come on to the live stream, guys, and keep in mind, if y'all are on to Sister Camille, I think y'all can let people on too. Just for instance, somebody come on and I'm away. I think if they come into the room, you can click on their box, and I think that'll allow them to come in. I think you can do it that way. We'll test it one day, but
okay.
Ever just run upstairs for something, whatever, or leave my office, or whatever. You can get them, get them into the room. But that's the link, guys. Definitely, if you want to come on, you know what I'm saying, and share what you're looking at. Share your screen, whatever. Hey, you welcome here. Everybody's welcome here.
Yep.
So again, while the S100 is up and pumping there, you guys can keep talking. Let me run up here and I got to put something in the garbage can real quick. I'll be right back.
All right. That's a one down futures. Sure, I'm gonna have to go on mute. I got to eat something.
Yeah, I know. I'll put my dinner on. Well, it's about ready. I'm trying to give everybody a chance to come back.
Yeah, he got to he got to come take over because I got to eat. We gotta eat our food, man.
Yeah.
I got some local. All right, I'm gonna be on mute in the background.
All right, guys. Yeah, I'm back. Sorry about that. Hey, what's going on, brother Eddie? What's going on, family? What's going on again, brother? Everything's monetizable. What's going on, family? Peace, power, profit to you. Again, I know we have some people kind of came in through on the back end of the day. Got, again, the family trade doc in the house. Thank you. Thank you for that alert, brother trade doc. Again, we kind of been talking about it and looking at the market a little bit here and there, but definitely I see the SPY had definitely gapped up there. Again, trended back below that 240 handle, which was a very detrimental point for the SP 500. Again, even though it came off the lows, they was around about it hit like 229, 228 today on the low, and then it bounced. Obviously, of course, in come the the save this the life preserver from the feds and everybody else. But that's pretty much what we're gonna be seeing here in the next, I would say probably within the next week. They're gonna do everything they can to save the equity market. They trying everything they got. They're using everything in their arsenal to keep these markets from really imploding. Right now, they're defending what? They're defending the 230 handle, right? Because we broke a key pivot point in terms of 235 today. Now, just when I was saying that earlier, that was a point where, if the market closed below that, then that was going to be detrimental, right? Keep in mind, some of these support levels now become psychological barriers for investors and traders, right? So instantly, they got the market back up above the 235 handle, right, into the close, right? That was their goal. And if you don't believe it, right here, what do you see right here? This is the close, right? 1600, right? 4 o'clock, right? Look where the market was here. Look where it came from. 227.79, somewhere around there. And that was literally around about 245. Oh, it's fine, sis. Yeah, and that was literally around about 225. All right, income. Look at the volume. At that point, you had a lot of spotted red in here, a little bit of green. Right. Then all of a sudden you had a sea of different green start coming in the volume. Right. Then right here, I mean, literally on the back end of the day. Now this wasn't just all shorts covering too, because I'm pretty sure shorts were covering down in this point here. I'm pretty sure shorts probably start covering here, hence that's why you see that red there, because it was getting ready to get back to where it's moving that on 5 minutes. Since they probably say, it's time to get up out of here, and we can't push it back down. And I'm pretty sure those who stayed in it, I was at that point to see if they can even push it to the VWAP to take their short, they cover their short. They probably say, okay, if it don't break above the VWAP, I'm gonna stay in my short, and they did. They rolled it all the way back down to the same point here almost, and then they start covering, right, roughly around about 20 minutes to the bell. And then all of a sudden you got all this abnormal volume coming in, and probably shorts covering too. But this is not normal, right? No, you don't have them kind of candles or volume bars in a sane market on average. That's over 14 million shares in this volume candle here of a ticket that's $240 some odd at that point, 230 some at that point. So that's dark pool, or not dark pool more so, but possibly again, the Fed and the bank liquidity repo injections coming into the market at that point. You see what I'm saying? So again, this stuff ain't rocket science once you begin to make sense of it and how to put some perspective on what Wall Street is trying to do, right? They're trying everything, right? So it's important at that point, right? 1 second, guys. Let me put the mic on. Family coming in. All right, testing. Can you guys hear me? All right.
Yes.
Okay. Yeah. So again, in that moment, Okay, thank you guys. Y'all, you got in this moment again. This is where like I was saying, for the S&P 500, you literally can tell that they was trying to again establish a major level, psychological and also a technical support level, and getting the market back above that 235 handle. Right? They could not risk having the S&P 500 close below that 235. Again, that's what you're talking about. That 50 level value of the Fibonacci band, falls to retracement off the highs, right? Because below that, then you got the 61.8, 61.38, 61.8, whatever it's called, which is roughly down near that $1,700 level, right? Which they really start mapping it out for the market. They probably pull back that far. So again, income, all that abnormal volume, all this manufactured volume, all this fiat currency printed, ghost money volume out of nowhere. Again, 14 million shares on the back end of nothing. So again, I mean, we know we're in some abnormal time. You're gonna see stuff like that. You're gonna see stuff like that. You know what I'm saying? So right here, you're right back up here near the intraday highs at this point around 244. It might have been some news came out too. Again, every news reel come out at this point that comes out at this point is detrimental to the overall market sentiment. And people are just watching, listening with their fingers on the trigger. Literally, they waiting to see if it's okay. It's good to kind of add a little bit here, take a little bit off here. So they're playing Russian roulette every single day based upon the news reel that may drop. And so rightfully so for a lot of people that's in a lot of these stocks that are really really bag holding right now, because they were buying in up there near the all-time highs when you had people like Trump and others and Kudlow and Mnuchin and everybody else and CNBC analysts and everybody just exorbitantly bullish every single day, like the market could do no wrong. Well, again, a lot of those people backpedaling now, and so they got to tell you to keep buying stocks because they know you got to average down. Some of the people got to average a lot down to bring their averages down some. So of course they're gonna say average. Right now is a good time to probably buy in here and there. Yeah, I get it. You know what I'm saying? So this is the stuff we deal with. Y'all know what it's like. I mean, y'all know exactly what it's like. So again, that's just part of the game. It's part of the game. So you got my brother here. Everything's monetizable. These are some of his trades. He said potential intraday trades tomorrow based on volume. He got Miller, right? I know that coming out, Miller or something, Miller Home, something like that. I think that's like a replay, if I'm not mistaken. KNL, NSCS, got BLM in there. All right, BLMN, excuse me, DRI. I think is that Durden? I think that's Durden. And EAT, excuse me, EAT. Right, some of the stocks he's looking at tomorrow that's going to be on his watch list. So definitely, you guys want to go through some of those, those trades and see what's going on with those. They're going to be worth watching based upon, what he got here is between 11 a.m. to 4 p.m. Right, so he's looking to make a move on any of those, anywhere around that 11 a.m. Time frame into the back end of the day. And again, as you can see here, you got the SP 500 just gapping up here after hours, doing like it normally do when it was doing all those wicked market melt ups that it was doing. And all this is right here. I mean, y'all seen this before, right? In terms of the SP 500. I mean, all that is just what? Trying to get back some of his gains that it lost today. Right, that's all it's doing. That's algo. Yep. That's Fed money. That's institution money. That's fake money. Right? That's not a confident retailer right now. If only thing he's doing is just trading the trend like he's been trained to. But ultimately, that's institution money because that ain't institutional candles right there. Those are not institutional candles in terms of volume bars. Excuse me, retail. That's not retail. Excuse me, that's not retail money there in terms of those big volume bars. Right. That's strictly institutional money right there. Right. So again, that's just more of the same old. Just be protective of knowing when you see that stuff like happening like that, you know what it is, right? You won't be fooled. And how well they pump it up here in the futures market. Obviously, the futures market is open. It opens at 6 p.m. every day, intraday. The futures market is open, so the futures are up right now. Obviously, because they pumping it here. That Fed money, that's treasury, all that bank liquidity, adding to try to get the market off the lows. Right? They are scared to have this market anywhere near 235. They have to get it off 235. It breaks 235 and closes below it. Yeah, it's lights out. You see how it trended down here? And just to let you know it was real, go back to the chart right here. When it broke 235, right? And keep in mind, that was the first time it was, at that point where it actually kind of sliced through it a little bit through the intraday session. You had it tapped it here during the pre-market. Pre-market, it tapped it around about 655. It tapped the 235 handle and got up off of it real quick. Like, Joker, get up off me, Joker. It got up off that 235 real quick right here. Came back, stayed above it, again, printed higher lows, and then kind of went on by his way. Pre-market went up there, gapped up around 245. I took a short up there, obviously. Right. And then I wrote it down throughout the day. And I was at close out the hour, could have been up a lot more, but I was away doing other stuff, but whatever. But again, coming back to that 235 handle, right here, when it came close to testing it again, intraday, rougher a little bit after 1 o'clock, let me zoom in on that. If I can here, 235. Look how it broke. It broke with a nice size little bearish engulfing candle. That was definitive because a lot of people are trying to protect it. So that little candle here on the 5-minute, that's a nice size little saying, okay, y'all got it, bears, y'all got it. And then again right here, even bigger one here. It gave up the ghost, so to speak. Again, all the way from 232 down to 230, right? That's a nice little move on the spot. 229, somewhere around there, be exact. Had a dead cat bounce to a degree. Arched over again. Shorts cover springboard. Y'all know how this stuff works when you see that there. Again, the market moves in sine waves. Anytime you have that kind of value retracement, it's either going to be half the value of it, or a third or a half. And then after that point, if the bulls don't show up, it's going to roll back over and go right back to that point where it kind of pivot from or spring from, which is this point, is 230. After this time coming back to it, what it did is slice through it. Came all the way down, looked like almost like close to like a tweezer bottom here, but came all the way down, tested this 228, 227, somewhere around there, and then it come out this it come out this manufactured volume. Manufactured obviously meaning banks, algos, treasury, whatever, whomever was dumping, feds, they went to dumping it, get it up off the lows, right? Because again, now they need to try to make sure the market closes above 235. And so they did. They did what they did. So you got up about 10 points off the close, and this is your little melt up after hour. Look, when you see anything like this, anytime you see that right there, that's fake. No market goes up just like this here with retail trailers alone. That's precision. Exactly. Look, you see how they traded this? Look at that precision. That lets you know it's fake. Look at that line. That's textbook. Come on, man, stop. Right? They fake. That's precision buying. That's precision lots of shares coming in, liquidity obviously. That's programmed and planned to capture every point, pivot point to the degree, add more, add more. That way you keep the RSI moving up kind of steadily and not necessarily go all up at once and put you strictly into overbought territory. So they do that methodically. They add on those fake little, pivot points and squeeze into it till they get get it up at a certain point higher than where it was off the last major pullback. And then they let it kind of consolidate back down to that same trend, let the RSI kind of balance itself right back out again. And then they try to march it up again higher, and keep doing that until they can until they can't, get away with it any longer. Meaning the money kind of run dry or short start really kind of, selling into it, or people start taking profit. Because they're just trading the trend. Retailers are in here just to trade this trend after hours. I mean, I would too if I was trading the futures here. But that's fake. That's a fake move right here. Right. And now this is where it just shows out. This is just showing out. Right. I mean, like you're a kid, your mama tell you just showing out now. That's what that means. That's strictly showing out. Right. Because ain't nobody that excited about this market. You see what I'm saying? To be showing out like this here on a 5-minute after the down day like we did today, dropped over 2,200 points in the Dow, S&P dropped what it did. This is not retail. That's all manipulation. Again, I mean, just obvious, just in your face with it. You know, again, when they was getting away with it, when the market was melting up every day before the coronavirus hit, this is the kind of garbage that they was doing on you know, to try to spike short sellers. Even though, you know, short seller thesis might have been correct, you know, again, the market always gonna be right because you can't fight against it. But still, this is the kind of manipulation they were doing to getting away with, inflating the bubble of the S&P 500 religiously. You know, so now when you see it now, after what we're going through now in the Rona, I just look at it and laugh. I say, aha, y'all just desperate. I look at them, they desperate. You know, Joker be like, them old poor jokers. They just poor jokers. They so pathetic now, right? Again, I ain't trying to say, you know, make a lot of people that may have major losses, but again, you know how this market is. You reap what you sow. You know your risk, what you're dealing with, you get invested into the markets. And if you don't trade with discipline and you know, some conscience to a degree where you know how to at least protect yourself, you know, hey, that's the cost of doing business. You know, in a very greedy market, because this was a greedy market. It was up 11 years straight. That's never happened in pretty much from my understanding in the market history, where you had that kind of level of growth and, you know, in the stint of time of 11 years, because obviously y'all know economies go up and down, right? Stuff happen. You have ebb and flows. You have micro recessions or mini recessions and you have major recessions. That's just part of doing business, right? In that pretty much economic downturn, all you doing pretty much is going through a point of what they call replenishing, right? The market has to replenish. Companies and factories have to replenish, right? Things have to kind of turn back over again and reset. A lot of the new industries to come in, the new innovators, the new disruptors, and then draw more, more business back into certain markets. But overall, again, you had 11-year bull run, 11-year bull run.
Wow.
You know, and Joker would just got greedy. It wouldn't let the market really correct the way it should have. I mean, the last 3 years just been retarded. Or 2019 especially. It was just like, again, party every day. Party every day. So again, here you go. Artificial, just artificialness. Just back-to-back green candles, no red at all. Seriously? 1, 2, 3, 4, 5, 6. 6 green candles back-to-back. And this one here just, again, straight linear parabolic move straight up. Up here in the oversold condition. And they just letting this little repo money just inject into the market. Right? That's all Trump. That's the White House. That's the White House trying to save the market. That's literally, you can just say it's the White House. Just put a name on it. Put some respect on it, right? You know what it is.
That's the N95 mask.
Right. You know what I'm saying? That's exactly who that's that crew. Right? That's all White House there. That's all manipulation. Feds and save this thing. Get this thing off 235. Get it off the 235. That's all they're saying. Get it off the 235. Get the market off 235. Somebody's head's gonna roll. 100% right, over Caesar. You're right, over Caesar. That's fake. That's faker than all outdoor. Faker than $3 bill. Right, with a mustard stain on it. No, it's fake. So again, that's just part of the understanding of how you need to be protecting yourself. Even in moments like that. Look at that, showing out. There we go, showing out. Just showing out after hour. Just constantly melting up. That's what they did all of 2019. Just melted up every single day on nothing. No news. Just melt up. So you almost back near yesterday's closing price on the after hours move, but it couldn't do none of that during the intraday session. Seriously, you know what I'm saying? Just ratchet, ratchet with it. Again, I took my bag off already, so I ain't worried. But again, I'm smart because I know how they've been trading lately. They've been up one day, down the next, up one day, down the next. So you dropped 2,200 points. They got it back down to about 17, 16 into the close. And then now you just try to do your work your illegality and melt the market up after hours to get it farther as you can off that 235 level. That's all institution money. That is not retail. A straight line like this, and this one here even broke ranks. It's so far up there now. It broke ranks and went high. We're gonna do our own thing at this point. Right? So again, that's just part of this market. Yeah, what's you say, brother Metu Judah? So what's the difference between the red and green candle? Again, just from a layman term, red obviously red means stock, green means go. When I say it from that perspective, basically that means green is buying and red is selling. Just from a practical aspect of a market going straight up, You know, people, when you see red candles, you know, that means people are selling into positions, right? Either short sell or just selling it outright. And green is obviously them buying into those positions to push the market, obviously, like you see here, higher, right? Higher after hours, which we are now in the after hour session going into 8 o'clock. So anytime you see a green candle, that's money going into it. And the length of that candle is determined by, again, how many shares are going into that candle. Because that's what it is, money going in, which is equated to that of what they consider to be shares, called shares or equity stakes in the company. You buy like a share of the company, you know, for every one share it is, and you know others are tacked into it. It just equates to that amount of money, notional value that went into that one particular trade at that particular time frame, because it's a time frame too. So at this point here, you see here, this is a 5-minute chart, meaning this one candle is worth about 5 minutes worth of trading in totality. So wherever it opened up, this candle opened up, and wherever they close, you know, that's pretty much you know, the top, the very bottom up to the very top. That's how you do the overall, you know, amount of money that went in. So basically 239.86 into 242.60 from the top to bottom, basically peak to trough or trough to peak. That's the value of money that went into that particular trade in terms of when you do the number value. $242, you know, excuse me, you know, basically 200, you just do it from the bottom, 239 to 242 in terms of how many, you know, much profit that is per the top to bottom. And then again, how many shares went into that, you know, for that candle. So again, we got, you know, a lot of material on, you know, candles, you know, how to read candles, how to do all that, you know, understand what this stuff means, stuff like that. Again, it's a part of the learning process. But definitely anytime you see green, that's money buying. Anytime you see red, just natural observation, that means people are selling. Just to put it in layman terms, even though it's other stuff too, but that's just the normal way to see it and think about it. And the same way down here, this down here, this is what they call the volume bar. This is where the money is at, right? In terms of how much shares went into that trade. Right. Well, that's pretty much that's registered, because some of this stuff is, you know, traded under the dark pools, and you can't necessarily see how much that trade, you know, also went into the trade on the back door side of the house through the dark pools. And so yeah, that's what you got here. S&P 500 here in a straight line up, a straight line up here after hours on some kind of micro pump. And there might be some news. I mean, I don't even know what the news is now. Typically, I'd be all over the news at this point. But since I'm live and I'm just kind of, you know, we're just kind of natural, you know, freestyling here. It might have been something that kind of pumped the market here after hours. It might have been they cut that check. Who knows? You know, I know in a minute when I kind of, you know, we get ready to get off at that point. You know what I'm saying? They might have cut that. They might have cut that rack. You know, they only giving out a rack now. They need to give out more, but it's only going to be a rack. You know, you get that little $1,000, and they're going to tax it too, because they already saying they're going to tax it. They're going to make sure they get some of it. Exactly. You can't even get the whole. You can't even get the tax free.
Can't even get the whole 1,000. That's crazy.
Can't even get the whole 1,000, man. That show you how greedy they are. These jokers don't want to put that money in the hand of American people, boy. That's gonna be the last resort. But everybody else, they're gonna bail everybody else out again. They're gonna bail out rich people, and look at you like, man, look, man, okay, man, all right, fine, we'll give you something, but then I'm gonna tax it still. That's exactly how they're looking at it. You know what I'm saying? So, man, again, y'all know what we're dealing with. You know, y'all know what we're dealing with. You say, what is the coloration between gold futures and SPY? What do you actually, as far as, you know, from what perspective, brother Namex? You mean just how to see what the gold futures are in relation, as opposed to SPY futures? SPY futures, excuse me. Is that what you're asking? Let me know, so I can answer it properly if I can, whatever. All right, but yeah, this is garbage. This is all garbage after hours, straight garbage. Again, unless there's some real good news behind that. You know, it's a fake artificial pump to get the market off the lows, because it was beat up today. You know, and the market was just, you know, manhandled today. You know, so you already up here in the futures market. If I go to the futures market, you know, the futures market up is already 50 points. So you already up 465 points here after hours. Same thing we saw yesterday. Ain't nothing new. Futures market was up last night. Right? It was up last night. Again, well, at a certain point, then it turned again, went red. And then after that, but you know, you can't trust these futures markets to be a real true indication what the next day going to be, because there's so many pending issues that people are waiting to hear from certain aspects of government and this, that, and the third that could turn the markets on a dime. But this is, again, just a natural little, what they call a retrace, a small little retrace off such an extended long loss of the market today. Again, with at the peak of the downturn in the Dow Jones that dropped over 2,200 points today, this is just a small retrace of that.
Right.
If you put it in context, if it's down, if it's up 500 points now, well, again, you're talking about roughly, again, you can do the math on that in terms of how much is up on a percentage basis, and they got some of that back. A little bit here over, again, over, in terms of a quarter percent value, so to speak. Well, obviously, roughly a little more than that, but just put in the context to a whole dollar mark. In terms of two, obviously. 2,000, obviously, what I'm saying, excuse me. But yeah, so the market is just trying to do what it normally does. It's trying to draw in some buyers. It's trying to get some people excited about the market. Again, rightfully so. They got to protect their little baby. We got to protect the baby. Let me go over here, to the futures chart. All right, so that's the Dow futures right now, or obviously, market futures. Again, 500 points after hours, 55 on the SPY, 208 on the NASDAQ. Small cap up 23.5. That's one of them being beat up more than everybody. It's the small cap 2000 Russell. It's been getting, beat down. So the German DAX is up right now, a little bit after hours here. So Europe pumping, pumping still a little bit. They had pretty much a wild day today in Europe. So it's barely up. Well, it's pretty up pretty deep, 200 point. Now the FTSE 100 is down. Now that's interesting. Again, no, that market ain't open yet, I don't think. That's probably why. I'm just looking at it again. The Nikkei is up though. Again, that's the Japanese market. So they're definitely opening right now for business. So they're up 250 points. So that's probably got something to do with why SP 500 is up a little bit too, because they typically trade in correlation. Both from pump and dumps. Also the topics as well. That's the pump and dump. Central banks just kind of rally behind each other. Central banks rallying behind each other. All right. So commodity wise, gold is up. Again, market is nutty right now. Gold and futures up. Does that mean that's a problem? The market just out of whack. Coronavirus and threw a monkey wrench in the cog and messed everything up. When gold is up, SPY is down. SPY is up, gold is down. Right. Now both of them running. It's like, bruh.
Yeah, it's out of whack.
It's all out of whack. That joke come out the house like Cat Williams said. You come out with a flip flop on, a golf shoe, one long pants on one leg, some short biker shorts on the other, a blazer on one arm and a raincoat on the next, an umbrella, and a sun hat on top. You all out of whack. That's basically what your market looking like right now. The market overall, what I'm saying. So as of now, again, Dow futures are trying to put up a little comeback against a portion of what it dropped today. It's something, but we'll see if it holds here. Again, in relation to, from now. Yeah, go ahead. I'm sorry.
Oh no, that was I'm getting ready to turn my computer on.
Oh, okay. I'm sorry.
Yeah, so I can get off this iPad.
Oh, track. Yeah, so again, that's just again your Dow futures here, or your SP futures, or your NASDAQ futures, or your Russell small cap 2000 futures here. Trying to open up here after the 6 o'clock hour. Since futures have to open up, you've been open now about an hour and 47 minutes, and again the market is in a small, calculated, organized, strategic, retracement, artificial pump with Fed money coming in under the repo markets. I'm guaranteeing to a degree they drop some repo market money into this after hours operation, because this typically when they do it during the afternoon, after hours operation, they'll drop a little bit during this time, then they'll drop some little bit more around about 12 o'clock, 12 a.m., 1 a.m. They'll drop some more money into the market. And when people sleeping, right, they think they're asleep, they'll drop some more billions into the market, and then they'll hit it again, if it's necessary around, 4, 5 a.m., 6 a.m. in the morning, if they can kind of catapult the market higher. Again, y'all can go pull all this stuff up too. I think I posted before how you go check the repo market when they're doing their operations? All you have to do is go. Let me post the link again. Some people don't have it. Let me go post it. This is how you keep up with all this Federal Reserve money coming into the market, right? This is them printing money. This is the printer, right? They got the printer running all night long, the printing press, right? When they telling you they ain't got no money for the, the average American citizen, right? The fix schools and the build roads, they lying. They giving it to the stock market. Again, Wall Street always comes first ahead of Main Street. I didn't, that ain't me saying that. That's them doing that.
That's the truth.
That's your tax dollars that goes to feed fat cats above them coming to take care and feed you.
Yep.
That's because that's who's gonna be stuck holding the bag and paying for all this when it's all said and done. Right? That's why they always bragging on the consumer. Right? They always bragging on the consumer. Well, it's the consumer. It's the consumer. They just do that to kind of make it sound good, to make it like y'all really doing something to save the economy. Well, technically you are, but you ain't really benefiting from it. The privilege to go into debt ain't that's not a privilege. You see what I'm saying? The privilege to go into debt is not, it's not some incentive so you can go out there just keep buying stuff just to prove that you can buy something, right? Again, so we smarter than that at this point, enough to know that, we're dealing with, again, a debt-laden society where they want to encourage you to spend money because it makes corporations rich, right? And it makes them, again, the government to get excited about people who are often turn around and be lobbyists for their agenda, to vote them back in the office because they can take care of their needs. Again, that's why all these corporations got big tax incentive breaks on the tax, Trump's tax plan. And companies like Amazon, again, we said enough, where they skated on about a $2 billion, it was like a $2 billion tax bill that they skated on, didn't have to pay under the tax law. But I guarantee RS was all over you. They were all over you and making sure you pay yours.
For real.
So again, that's the world we live in, man. Used to making, acting like we don't know what's up. We know what's up. Like that song with Donnell Jones. Ooh, you know what's up, whatever that song called. What's up? What's up? What's up?
Say what's up.
Yeah, that's
Yeah.
Y'all know that's exactly what it is. Y'all know what's up. Don't be out there playing around like you don't know. Don't be getting caught out there. Y'all know what they're doing. You know what I'm saying? So that's what we had in crypto market trying to make a tiny little more. Again, crypto market is stuck in that nasty little purgatory zone. And following that later too. So you got Bitcoin up by $63 here, Ethereum about $1.57, Bitcoin Cash down 70 cents. Ripple's obviously getting beat up. It's down about near that's about 10,000, 54,000, whatever they say, how they say it, of a penny. And then again, some of the other little players here still trying to find this footing, obviously, after this market sell-off too, because it lost, a lot too. But as you can see here, it's kind of just trying to get back above this 5,400, 54, all the way around 55 possibly. I don't know if that's going to be a springboard, but either way, it's a lot better than being down here when it was down in these little valleys near 4,000, whatever. Yeah, that's the market, man. That's what we're dealing with. So a very lethargic futures here after hours, very lethargic. And when I say lethargic, I can tell you the market is trading very lethargic and calculated because it's barely really ticking. It's not really having any wild swings like it was doing before. They're trying to keep it propped up. This is what they call ramp and count. Y'all ever heard that terminology, ramp and count? Ramp it up and then just let it go sideways all day, killing the options, especially if you're trading options, just kill the option theta. Eat into your money because they're trying to keep it propped up in a way where it's not even going any higher, too lower. It's in their particular what they call a sweet spot. So market makers are making a killing in that moment, right? Because they just collecting and buying people who are frustrated and giving up and selling, all that kind of stuff. They just collecting new shares, collecting. So the market's in a rampant camp. They're just trying to keep the market off the lows again, around that 235. Right. So they ain't doing nothing that I don't know about. I'm on to you, Joker. I'm on to you, Jokers.
Right.
Right, like one of them old folk. I see you out there. I see you. So yeah, those two sites there you want to keep, pay key attention to. And the federal, the Feds, obviously St. Louis Federal Reserve, and also that of the New York Federal Reserve, which obviously those are the stimulus monetary branches of the of the Federal Reserve branch that obviously do a lot of the repo and mortgage-based and bond-backed reserve-based purchases and things of that nature into the that obviously affects the equity markets. But those are two ones you want to look at. All right. Philadelphia has another branch of the federal government too, but these are the two main ones: the St. Louis Fed and the New York Federal Reserve. Right. So definitely keep your eye on those. Go see, when they dropping that money into the market, you can go see how much it is and all that. It's all pretty much set on there where you know what it is. So today, they dropped a good little grip today. They had 3 operations today on the repo side. And it was, again, a lot too. They dropped 85 billion into the Treasury and the collateral mortgage-backed notes, and they dropped another 470 million in another Treasury operation, and then they dropped another 13 billion earlier. So altogether today they dropped what 85, so around 98 billion. So roughly about 100 billion. About 100 billion. Excuse me, about 100 billion today. They dropped about 100 billion in terms of their daily operations today. 100 billion. Let that marinate. Right. Some of you got. Let me share my screen. I forget, it's always better to share your screen and display. Hold up. Ah, dang it. Share. Repo operations here. Yeah. So this is the how you see all the repo market operations happening to the market every day, right? So basically, day to 18, you see the operation goes into what? See the maturity date? It goes into Thursday, right? So this is the money they have allocated to dump between opening business in terms of Wednesday, the time slot we allotted to to how they start the operation until it closes, right? And so again, you see right here, it's obviously in the amounts of the billion. So you got the Treasury agency mortgage back at this tier. That was 13 billion, right? 13 submitted, 13 got accepted. Of course, they're gonna get accepted. They're gonna flood the market with it. Same way here, submitted 0.477 of a billion. So that means obviously that's 477 million into this level of injection that came at this time frame. What's the time frame here? It shows you the actual time frame it came into the market too. 1:15 p.m. today. Right, you go back, look at the SP 500 at that point. Go back and look at the TLT, the bond market, the TNN. You see exactly how, because they went to the Treasury collateral, right? Which obviously some of that liquidity flows back to equities too. You see exactly what was happening in the market at that point, whether or not that affected the market. Come down here again, same reality. You see the time there. You see the amount that came into the market at that point. And they do it in stages. They just said that's the closing time. Excuse me, the closing time is for tomorrow at 8:30, but for this one, again, what I'm saying, but this 85 billion, every bit of that probably went into the market, and whatever they had left over from the day is going into the market obviously right now, until they emancipate or clear out that total repo market operation allotted cash that they had to go into the market today for the repo operations. If that makes sense, obviously repo and reverse operations basically. So that's how much money they had allocated today. Again, roughly about 100 billion. They had about 100 billion today allocated to go into the stock market. The stock market.
Wow.
And obviously, the bond market, that's part of the stock market. So the Treasury notes, the TLT, TNNs, the Treasury note, that's part of the bond market too. So again, now imagine you trying to compete against that kind of money at a time when they, operating under those operations and flooding it in the market through the banks for liquidity. Can you compete with that with your little, 100,000, 50,000, 20,000, $100,000? Can you compete if you're trying to trade against the market? And good luck. Good luck. Again, so this is what we mean when they say they unloading everything, even the kitchen sink, to try to save the market. This is what they're doing, and this is how you come over here and see exactly what they're doing. So you need not be confused about how all this market, you see them big long green candles like that. That's institution money. Well, obviously, here you go. Here it is. Here's the culprit. And all this is printed money. Now, keep in mind, this is printed fiat currency. Printed. I mean, they got the printing press running, ink flying all over the place, getting all on people's shirts and everything. They trying to print it so fast to inject the money. These are the same people who caused this bubble to be burst right now. This is why you in a recession right now. Because the coronavirus exposed them and popped the bubble of the market, equity markets that were going up on, again, no earnings growth, no real sustainable value to be setting up these high, given these market valuations that was happening. And all companies kept doing at that point, we were just buying back shares, add more fuel to the fire too, even on their side. It was like a collective joint inside thing that they knew what to do. Like they got a memo passed around to them saying, go buy your shares, go do whatever. Don't plan for a rainy day. Because we're gonna keep printing money. Y'all good to go. And that's how a lot of people talking too. CNBC, hedge fund managers, they were just eating it up. And now they got to deal with this thing at a catastrophic level, and they crying, they running. That's why I wouldn't feel sorry for them anyway. I feel sorry for a lot of people, small people on the main street that got hurt from this. But this is just, again, greed, trying to take care of greed. Exactly why this branch of government, or this fake branch of government in terms of the Federal Reserve, is it's come on, man, it's what it is. It's a parasite to a lot of our reality, because they really don't do the bidding for you, which they're supposed to. They take care of corporations and institutions first, and then they take care of you, and it's supposed to be actually the other way around. Right? So again, I'm not saying nothing that's out of the the realm of what you guys probably already thought about at some point, but whether you know it to be, whether you've done your research and your due diligence, you know what you're dealing with. I mean, the game is about what? Financial literacy, right? That's what we're here for, right? Right? We learning how to get to the bag, and also learn how to read the tea leaves. When moments matter the most, when you know that people out there trying to do things to the market, for to take care of those who are already in power and got riches. When I say that,
Right.
Again, that's them looking after they somewhat, quote unquote, their own kind. Wall Street, fat cats. The main, us, obviously the retail trader, we're just, we just a small, we just small fry, so to speak. You know what I'm saying? We the small fry. All right. So again, that's why this stuff is important. So let me see. Matter of fact, where is this? See if I pull up the St. Louis market here. This is the St. Louis one here. All right. So again, this is the repo operation that come underneath the Fed. It's called the Fred, obviously. This is economic tracking data site under the St. Louis Fed. Economic Research Federal Reserve Bank of what? St. Louis. There you go. There go to Lou. Right? There go to Lou. This is their Federal Reserve branch that obviously deals with the monetary stimulus packages in tandem to that of the New York Federal Reserve, and how they dump money into T-bills and stuff like that. And as you can see here, let me show you exactly how how much of a gang these people really are. Right? Let me back it out just a little bit so you can see this here. Y'all gonna get this to work today in a good way. Y'all gonna be some economic advisors. Like they're gonna like, man, look at man, how you know all this stuff here, bro? It's all about sparking the fire. Because once you have a spark, understanding about stuff, you know how to, again, know when stuff happening. Sometimes when the people saying they ain't got money, meaning the government, they lying. In some cases, then when they actually ain't got none. Then when they, whatever. Y'all know how this stuff go. So you go back. This when the operation started. It started back in when? Remember, I kept telling y'all for the longest. It started back in September. That's when all, heck broke loose. Look back at that date. It started back on what? September the 17th. It's on the exact date. September the 17th on a Tuesday. How much money did it dump into the market? $40 billion at that point. Right? It's actually give you the notional value and everything. The next day, they dumped $51 billion. The next day, they dumped $59 billion. Where all that money came from? Straight Canon press. That one little Canon printers at Walmart. That little joker was humming, but they print that money so fast. But they ain't got money for, schools, hospitals, roads, infrastructure. They ain't got money for that. They got money for what? T-bills and the stock market. And the market was doing pretty well, regardless of the fact that Trump had everybody in a tariff trade war. That was it. He did that. That's self-inflicted. But they used your money to pump the markets. Then they kind of pull back on some of the operation. Didn't matter because the market had started peaking at that point. Now, this is how you go back and track what the market was doing during that time frame on the specific dates in terms of how it was performing. And you say, well, man, why the market going up and they were supposed to be going up today? This is why. Because they were pumping it with money. These operations. Again, all this weird, look at it, all this money. $72 billion. $72 billion. I mean, come on, man. We getting used to hearing them numbers like that now. It just seems like they talking about like a couple dollars now. We talking about billions. And that's what it does. It desensitizes you to the ideal of how much money that really is. You know what I'm saying? Right. On any given day, when you look at the market, see how much volume it put up, and then you do the calculation of how much money that really is from a notional value, right? And also the bond market, add all that together, left alone from the Federal Reserve, the parasites of the Federal Reserve, the bubble pumpers, then you ain't putting up them kind of numbers on average unless something really happening in the markets that people are excited about. So this is just welfare money. This is socialism. This is Wall Street socialism. Don't get it mistaken, guys. This is Wall Street socialism. Not Main Street, but what? Wall Street socialism. And they look at you, again, either whether you Bernie Sanders fan or you not, but they look at him like, how dare you? How dare you, socialists? How dare you, Marxists? See what I'm saying? Only people really saying that are people that got money. Then they convince the poor person that what? To start following that same talking point, that narrative. Again, now you start voting against your own interests. Not that you have to vote for a person like that, but I'm saying they giving Wall Street all your tax dollars. Or you got to turn around and pay this debt. Because the Federal Reserve balance sheet is based upon the economy's debt note laden value, that is borrowing money from other countries or itself, and that has to be paid back. Well, who has to pay it back? The taxpayer or future generations, because they're gonna pass that bag on to who? Your children. That's why the national debt where it's at now. They ain't paying down the national debt. They stop paying that national debt down, man. Stop. It's crickets up there at the national debt. Stop. It's crickets and Caldwell. You know what I'm saying? Caldwell's up there. Yeah. Caldwell. I'm keeping it real. Y'all been looking at that national debt ticker symbol, that little box, that little, for years now. Like, man, this thing will never go down. And it's really ballooning now under Trump. He was all about, less government, balancing this, and now he came in just blowing up. He got keys to a Ferrari. And now that thing look like a 1972 Ford Pinto. By the time he stretched the engine out, that thing look like a Ford Pinto right now, bro. And all this money right here going to who? People that got what? Big money. This is social capitalism, socialism for rich people. Tax incentive, tax break, they ain't paying no taxes. These companies ain't paying no taxes. They buying back shares and not necessarily doing no capex spending or R&D spending. They buying back shares and passing the taxation off to the shareholder to liquidate their position. That's the only way you're gonna win. But they passing that buck right on to you guys. And you think they're giving you something. No. So again, you can see all this stuff happening here. Look at it. And then look at it. The repo, our market shut down a little bit. You see in this time here, around 2020, they start reducing some of those injections because at that point the market was sitting up in what? All-time highs. Go figure. Of course they can lessen the repo injections at that point. They achieve what they wanted. What? To inflate the bubble. Go back and look at the S&P 500 round what? January the 27th. January the what? 29th. Go back and look at the S&P 500 then. I guarantee it was up there near all-time highs. I guarantee it. That's why the repo operations what? Got lesser. They achieved their goal of inflating equity markets. But they tell you that they were doing it to do what? Stimulate the economy. Add liquidity to the bank so they don't have any liquidity problems to loan out money. Stop. You know what I'm saying? They'll get the average person. Oh yeah, they'll pull the wool over the average person. That's what media is for. The media is there to kind of what? To propagandize the ideal of what you don't see behind closed doors. You don't see what the wizard doing, right? Because the wizard got these nice curtains up and all this bling bling, all these little distracting little trinkets out there that you just paying attention to besides the person behind the little curtain over there. You know what I'm saying?
Yep. Yeah, they got them going.
Facts.
Right. And the person behind the curtain is who? These people right here.
Yep.
These parasites, right? Yeah, exactly. Them jokers ain't the 1%, so them the 0.5%. Them jokers the 0.25%. That's the real. That's them jokers that's on the real. They over the 1%ers. You know what I'm saying? Those greedy jokers that are looking out for those jokers who really got like them. These people that look at these people who work for the Koch brothers. Right, the Koch brothers and all them other people, them big Republican donors and all everybody, even the Democrat donors, all they're in the same game.
They all
two-headed snake. That's all they're two-headed snake, Republican, Democrat. On whether you again, I ain't talking about your little political party. Y'all know I'm making political. I just keep it 100. Again, you can't take the 100. I'm sorry, but that's just the world you live in. You live in a society where people who claim to have your best interest, and clearly they don't, because just like I do. When you don't need something, you really need it. It's hard to even really get it. But they tell you it's there. They tell you it's there for you, but you can't really even access it without going through hula hoops, fire rings, a flaming pool sack, gauntlet on a 50-yard dash. You got to turn all kind of tricks to get what you're supposed to be easily gotten for you.
And then they want to tax you.
And then they're gonna turn around and hit you with that tax too. So you ain't gonna get away. So again, guess what? Right here, remember February 28th when the market started falling out, the bottom fell out the market. February 28th, remember we did that date on some of these stocks that started really falling, like Boeing and everybody else. What happened? Look at the repo operation. Look at them coming in. Right? At that point, they was already down to like 8 billion. Little measly 8 billion. Income 28 billion. Then guess what? From 28 all the way up to what? 69. 69 was a good year. 69 billion. Right? 80 billion. Right? Pull back a little bit. They trade money like a stock chart. Look how they doing higher lows on the repo injection, bro. You can't make this stuff up. Pull back, they're ramping up higher. Send it higher. You can see a joker right now sitting up there. The way I want more greedy by nasty joker. Send it higher, bro. Crank them print presses up, man. What y'all doing over there? Crank them print presses up. Joker sitting on the break, jumping up, running to them doggone print presses. Crank that money up over there. 95 billion.
Please.
Bro.
Me with that. Well, where are you going to get the money for? What do you mean where they going to get the money for?
Right.
Money.
They're going to print it. But they don't want to owe it. They don't want to give it out that way. So they print it. Then guess what they had? They had a drawdown. This is what they call a drawdown because they had to reset the print press. Right? This is what they call a drawdown liquidation break. Reallocate that money, basically pull it back from the all the people they was lending to that necessarily don't need it at this point and give it to people that could really benefit by pushing the market where they needed to. And then they did what? They did that, reconsolidated, and then shot it right back into the market. This is what they see. This is one pivot point. You see the little points here? That's a pivot. The next one then come to what? Way up here. So you mean to tell me all the way from a 22 billion repo operation here on the 13th and a higher high on the repo injection, literally almost like the next day, which was at that. 2 days later, which is the 16th when the market opened up. Obviously this week. How much that repo operation is right there? Can y'all see that there? Y'all see that there? That's the 100.88000. This number here that's showing there. That means that's 100.
Yeah, I can't see it.
Yeah, that's 100 billion. Oh, I'm sorry, guys. Y'all know me. Y'all tell me go ahead and blow my screen up. Y'all get to talking and keep forgetting. For me, it obviously look big on my screen, but for everybody that's watching, they got to squint, especially if they're on the cell phone.
Yeah, there we go.
Man, blow that thing on up, bro. Yeah, put some meat on that thing, right? So right there. That was Monday.
Ooh.
108 billion. 108 billion. 100 billion.
Need all them in reparations.
Man, everybody, all kinds of money out there. Printing press.
Matter of fact, just hand the country over. Just hand everything over to us.
But look at again, I'm just showing you seriously. Look at that pivot. 22 billion to straight 100 billion. At least you got what? Points here. Take a little bit on, add here, pop here, pop there, Here, but here 22 straight to 100 billion.
I wonder how much percentage that
I ain't
is.
making this. Yeah, you could in relation to what the markets or just you know, or just the value of the money from that value. Yeah, you could do well, you could do it because all you're doing is doing the divide. You know, that's how you get the percentage value. You know what I'm saying? Or you know, obviously, excuse me, you do the guys, the multiplication. I could be wrong. It's been a long day to get the percentage. Same way you do a percentage gain when you're trying to establish a percentage gain on stock value when it from its lows to its highs. You know what I'm saying? And that's how you do that percentage value. So based from 22 billion to 100 billion. So roughly you will say again, if you just hypothetically from that perspective, it's based on 20% of 100 billion. You know, off that value, that's about 80%, somewhere around there. If I'm not mistaken, somewhere around there, 75-80%, hypothetically, give or take, right? Because that's basically off 100 billion. If you do, you know, from a 20-point pivot, again, implied that you had another 25 some odd percent down, give or take. That's a lot. That is a lot of money.
Yeah, that's a lot.
That's a lot. Again, so this how they dropping that beautiful beam footage all across y'all back when y'all ain't paying attention to what's going on, and you hearing people in your certain district, your government area, or whatever the case, telling you they ain't got no money, all that kind of food, and you like, man, stop, bro. Stop. I went and looked at the repo market. Don't tell me they ain't there. Right? Again, they banking on people, again, not, you know, again, ever being conscious to the ideal of what this is all about. Right? And then guess what? They closed, they did another drawdown. You see what they're doing with the drawdowns? The drawdowns coming at a what? Another what? Higher low. Right? See how they building that trend? From the base point here when they're all kind of all hate broke loose in the world, especially well in terms of America. 28, that's when the market fell out, the bottom started falling out. So here again, another point here, and then this one a lot higher than almost from here to here. So guess what? Now you can establish another what? Launching pad. But guess what? What's happening at the point now, even with these big injections? What the market is still doing at this point, though? What is the market still doing right now, even though they're dumping this amount of money in the market? It's still doing what? What the market doing? The market doing what? Here?
Oh, no.
Here? It's selling off. No, the market's selling off. The market's still dumping.
Yeah, still going down despite all the money. Yeah,
the market's still going down.
Yeah.
So that means, so essentially that means it ain't what? It ain't working.
They wasting all that money and still ain't working. That's a damn shame.
There you go. And they still sitting there playing with y'all, waiting to cut y'all the check that's owed to y'all that the American people really need. People that working 2 jobs, got kids, barely can make it ends due, and not finna be sitting home and ain't finna get paid, and they still sitting there poshing and pontificating and BSing about they ain't got no money. They want to do it, but they sitting there dragging their feet to do it. But they wasn't saying that when they were giving this money to the Wall Street, and Wall Street got billions and millions of dollars. These jokers already fat. They already fat. You still trying to play this game, but real people, real Americans need this money right now. Man, don't tell me these people, man, bruh. Don't play with me. So I'm saying that's basically what they're doing. They playing with you. And they again, like Buddy said, they peeing on you and they telling you this rain.
Yeah.
And then they forcing you to be patriotic as if that's the kind of badge under the seat and wait for what's owed to you. Yeah, basically, you know what I'm saying?
Right.
They want you to wait it out. They want you to wait it out.
Yep.
Wait it out.
They the worst of the worst, man. Yeah, wait it out.
Again, y'all know y'all know me. I'm just again. We trying to bring light. We need to bring
just
light.
Tell the truth. Right.
Exactly.
And we back it up by the data. We back it up by the numbers because the numbers don't lie.
That's right.
Right. The numbers don't lie. This ain't no hyperbole. This ain't no speculation. Right. This ain't no blind rhetoric. This is what the numbers say. So when I come do my research here, this is stuff I'm looking at.
That's
right. Then I go look at the treasure.org. Right. These are the governmental arms. Right. That every American apparently that's supposed to be what calling themselves American is endowed to do to check the overall economy in terms of how it's doing. It's working and how well or not people in your district is working on your behalf based upon monetary stimulus, fiscal policies, budgets, allocations, all this stuff that we obviously, we learned a little bit coming up through school. The rest of you got to learn on your own because they're never going to give it to you always, right? They didn't give you the whole game, right? But this is how this is it. So make no mistake about it. You teach your children this because they're going to be the ones to inherit this debt.
Yep.
You go back and go look at the national debt rate. What's the national debt right now? Somebody go pull up that national debt for me real fast.
I already got it right here.
What's that national debt number right
now? 23 trillion. You heard me?
23 trillion.
Right.
Yeah, that's right.
Ain't going up.
Y'all can see my screen. Hey, y'all can see my screen in the back chat, right? Y'all guys can see my screen in the back chat. Everybody in the back chat that's watching and following along on the YouTube, can y'all see my screen? My St. Louis Fed chat. I know y'all can see it. Open Chris and Eve. Camille, I want to make sure it's showing on YouTube.
Okay.
Right. If y'all can see it in the YouTube world, press 1. That way I know it's coming through. Because you know how, man, YouTube be on that foolishness sometimes. They don't want you to drop that beautiful bean footed boy. That joker be like, man, get up off here. I'm just keeping it real 100. Let me take all the comment out. Y'all can see it. Y'all can see it in the YouTube world. I'm sorry. I'm going on a little tangent. Then y'all got to forgive me. Just in case
the national debt is 23 trillion, and the total debt is 76 trillion.
Right. That's the overall. That's all owed. Right. And again, that's the combination of T-bills, treasury notes, all that stuff. Allocated asset values that's weighted against our GDP or our economic value against the entire world. Obviously, we owe a lot of money to China. We owe money to Europe. We owe money to a lot of people. And that's why we're a service-based economy, right? So if you're a service-based economy, you just finance in debt. You just go through your entire lifespan at that point as you just finance in debt, refinancing debt. America is one big refi. That's all it is. It's one big refi. Cool. Okay, so here's how I know. Right, here's how I know it to be true. What goods that you have as collateral to back that level of debt? Yep. They better say we got enough. They say we ain't really got no more gold at Fort Knox. They may be lying a little bit, but how much gold reserves do we have? I'll wait. Okay, now I go look at your tangible assets besides the real estate. That ain't, and a lot of people even own a lot of our real estate from other countries. China owns basically all the Midwest. I'm not making that up. China owns about the entire Midwest in terms of debt. They bought all that land up and through the debt notes, and America sold it out. Again, these people riding this thing till the wheels fall off, and then everybody gonna jump ship and ride out. I'm not saying it's gonna happen anytime soon, but I'm just saying from a historical context, all empires fall at some point. Again, it may not happen in our lifetime, but all empires fall. Don't get spooked out. Don't say that I'm not the end of the world, but just historically, all empires fall at some point. It's just about how long they can reign, and that's dependent upon how well they treat their citizenship. If you run it from like a sweatshop, then eventually it's going to implode on itself, or to the people who raise up and push back against you, overthrow you, and then guess what? You have a new reign, or you just burn it all down and start over from scratch. You burn it all down, you go back to what they call proverbial Stone Age. Then you got to think another 100, 500,000 years to get it back to where a point where it's better than it was before. Same way when a company goes out of business, how hard is it to start it back up at some point when you establish livelihoods and people? Y'all get how this stuff work. Again, come on, man. Let's get it. Right? Let's get it. Right? Let's not be confused going forward. Let's think in the way we're supposed to be thinking. You don't have to spend all your life worrying about this stuff, your entire day worrying about it. But once you know it, it's already there. You know how to whip it out when it matters, right? Just get talking that foolishness like they're talking over your head. You looking at them like stupid, like you looking at them like and they're looking back at you like they think they got a booger in their nose and they're showing, because you looking at them with that kind of face like, bruh, you think I'm ignorant, don't you? You think I don't know those numbers, huh? Right. Like the hot boy, you think you bad, huh? You think you got a mayonnaise sandwich, huh? Whatever they were saying on the hot boy, so you think you whatever, huh? You think you got a little, you know what I'm saying? Got some rim, 20-inch rims, huh? Them ain't number 10s, huh?
Yeah.
Hey, brother RT, I see you trying to come on. Something. Try to go out and come back in. Somehow it won't let me on. Let you come into the back panel. Try to go out and come back on, because I should be able to click on your name and add you to the live, or to the back panel here. Because I know StreamYard be acting crazy here. This is the free version. Yeah, y'all know I'm cheap. I don't want to pay I don't even want to pay StreamYard. That lets you know how bad it is. But I don't trust you. Yeah, Joker. As long as they do the job, right? Yeah, I know I should be like that, but man, again, man, whatever. I'm into trying to, build us up. Yeah, if it's working, it's working. I'll upgrade when I really need it, But until then, we'll rock out. But ultimately, again, this is how we keep up with what's going on. This is how we keep up what's going on. And so again, somebody got keys to that got handed keys to somewhat quote unquote a Ferrari in terms of Trump, and all the talking points he had going before he came a president was talking mad crap about big government, the president blowing money and quantitative easing, how that was reckless and all that. And guess what? As soon as he got the keys to the car, what he started doing? Quantitative easing, asking for lower interest rates, and
right.
Like come on, Again, the people hypocrites. They're charlatans. That's what they are. They really are. They are charlatans, right? In the words of what that brother what the brother name? God dang it! What's our brother name over there? NBK over Chris. Always calling somebody a charlatan. No, he always calls everybody a charlatan.
Are you talking about truth? You talking about Rob Bourne?
No. Chief Vic. Yeah, Chief Vic. I'm sorry. Oh, charlatan. You're a charlatan. You screaming too. Charlatan. Like, okay. I get it, bro. But yeah, so government, man, again, they are. But they snake oil salesmen. That's what they are. These politicians, officials, they snake oil salesmen. Right? And they're good at it. Right? They know how to get you to go along with anything, right? You know how it is, fool me once, shame on on you. Fool me twice, shame on me. Right? That's they keep fooling a lot of people, right? Because they got you pumped saying because we the best thing since sliced bread. We the best healthcare system. We the best this, best that, whatever, But this how you come call their BS out. This is how you come call their BS out. Go to them. Go to them sheets. Right. Go to that data. Go pull that money up. Right. Run them checks. You know what I'm saying? This is all that kind of foodness. So again, those the websites there, guys. Again, I ain't pulling up nothing that you already can't pull up on your own. So this ain't no top secret information. It's on top secret to people that don't know about it, that know where to go look for it. But it's supposed to be public information, which it is, obviously, but they'll never tell you this stuff. They're never going to point you to this direction. Because they know the average American got too much on their plate to even be worried about most of this stuff. Right? And that's how they play you. So again, going back to the repo operation, look at this. What this is right here. Remember, I spoke about how the market moving sine waves. What's this right here? Look at that sine wave. Look at that arch. Right? Look at that arch right there. See that thing rounded out? See, I came back down here. So you had almost like a little fry pan bottom here. Then you had what? Cup and handle. They got cup and handle on the repo injection, bro. They got a cup and handle on the repo operations. And they get ready to probably launch the thing higher. Especially now with, again, this coronavirus stuff really kicking in, and now all this federal money stimulus when they come out of nowhere. 1.5 trillion here, another 850 billion here, another 85 billion over here. I mean, that's large swaths of cash, guys. That's large chunks of money. Wow. And if you go back and look at Trump's budget for 2020, before obviously the repo, because it came out before the coronavirus came out, you would have seen how much his fiscal budget was allocated, how much money he was looking that he needed obviously to get through 2020 on this his administration. Go back and pull that up on y'all own. That's y'all homework. Go back and look at what his fiscal budget was that he was putting forth in his new budget plan for 2020. Now, second that or rate that up against all this new money that he asking for out of the blue based upon this coronavirus and the Federal Reserve pulling out they trick bag as well. And then ask yourself, when people say, well, man, you know, when they your politician or these people in the Black Congressional Caucus and the Tea Party, any of these snake oil salesmen tell you that they ain't got no money. Tell you that we ain't got no money and they ain't got no money. When these people just pulled out money out of thin air all of a sudden for the coronavirus, and not so much even to really take care of the American person, because we know that's a whole smoke screen. It's to take care of what? Financial markets. Take care of they little ratchet little, you know, corporations, which obviously ties back to their 401ks and their pensions.
Right. Yep.
You know what I'm saying? So again, man, just again, guys, be about your business, guys. Again, I'm not perfect. I'm nowhere where I want to be, but I'm darn sure on my way to figure out to get there in a way where, you know, at least from what we learn, we take it and, you know, share it with others and get them well equipped to learn how to deal with this life, you know, in a way that, you know, it's coming down the pipeline where your kids are going to inherit this. They're going to inherit this bubble that the baby boomers left. And again, I ain't throwing salt on no baby boomer, but again, it is what it is. Historical precedent is always that. Yeah, I'm just saying historical precedent. We just looking at history. History has a point of making people out to be a liar. Because you go back and look at that past performance. What did you do with when you had the opportunity to do something good with it, right? That's what they always tell us, right?
Yep.
When you kid, well, you better get right now, because when you're gonna be an adult one day, you're gonna have to do blah 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 blah. Well, it's the same for them. And guess what? If they ran into the engine block, blew out, and then, you know, leave you nothing, you know, what you dealing with a car that ain't got no engine. You can't go nowhere in that. You just can look good in it. You know what I'm saying? And play it like you got some steering wheels, and that's about it. You ain't going nowhere though. Yeah, Fred Flintstone all over again. Right? So again, man, people, man, look, they can't come with that foolishness. Once you learn how to, you know, read the tea leaves, that's what they say, read the tea leaves, see where that money at, right? Where that money at, then you know what's going on. Right?
Yep.
So again, this is stuff that's, you know, for you guys. It's mandated for y'all, right? See, we already got the public health. We pulled that up the other day. Here's the CDC regulation code. Let me drop that new information again. You need this in your life. When the CDC dropping that foolishness, you know how to fight back against them or make up or pretty much hold them to their standard. That's you know, one block of the CDC public health regulation that's mandated by law that they got to honor. Right, we dropped some of that yesterday. This is the public health side of it on the Title 42 Code of Federal Regulation, not state but federal. And this is just based upon the foreign quarantines. There's others, but you can go back and pull up all that stuff under the CDC site, false regulations, or you know, they are in what else it can be? It's under I forgot the other site. It'll come to me anyway. But that's just that. That's that. And then you got the treasury.org. Right, how you check the interest rates, and guess what? They running the bond market back up. Don't be fooled. All these repo operations they're doing after hours now, while the S&P 500, guess what's been going back up? The bond market been going back up. Know why? Because they don't want y'all to have interest rates to purchase homes down about 125 or 1 point. Right. So they buy the bonds up to run the bond market back up, so they can still make some money back on you on the back of long-term fixed income housing notes. These people are slick.
Yeah,
they dropped the 1 month down, the 2 month down, the 3 month, even the 1 2 year months down to about 0.54, 0.21. But they ran the 30-year back up real fast. When the 30-year last week and a half ago was at about 0.38, guys. They are slick. Then the can of oil on Sunday, bro. They ran that thing down to about 0.38. And y'all probably remember seeing it. They ran it right. Yeah, they ran it right back up.
God damn.
Oh man.
They ran it right back up purposely. They made sure they got the bond market off the lows, meaning that 30-year fixed note. They got that junk up off the lows, boy. I mean, when they say they got up off the lows, but they slingshot that junk off the lows.
Crazy.
So this again, you know, when they playing games, what was that song? Why you wanna play a hate on? It was who's Chucky Booker. Old school. Show me Chucky Booker. Why you wanna play games on me? Why you want you sing it for you know how to sing it. You better sing it. You better sing that song. Why you wanna play games on me?
Yeah. Yeah, they the worst.
Old banging song back in the days though. But yeah, old Chucky Booger. But yeah, so look at it. That's your treasure.org right there. Right? Treasure.org right there. Right? And matter of fact, yeah. Look at there. Remember yesterday when we did it? I think we showed it yesterday, right? I did. I showed it yesterday. I showed it Monday when me and Eva Monica was talking about it a little bit. We did it Sunday. Look, it was back then. It was like, I think it was like 1.5. It was about 1.5 there on the 30th. Now it's all the way back up to what 1.77. But the Fed cut the regular interest rates all the way down to what 25 day near zero. But they're running the 30-year up. They're running that 30-year up, and they're trying to get that 20 and that 30-year up off the ground because when it was at this low at 0.38, you literally could have went and got a weighted interest rate score even at that point before the Feds even cut that 1 point, because back then it was just purely because the bond market was so low, and even that we were sitting at about 125 at national interest rate value at that point. At that point, if you was to go to get a house and you had a credit score above, let's say 750, you would have got an interest rate at that point at 0.38. When it was at 0.38, around about 2.3, 2.1, 2.4 on a 30-year fixed note.
Woo.
That means you talking about you get $1 million house, your interest rate at 2.1. That means you only paying how much? About 200,000, right? About 200,000 in terms of that value, right? Excuse me. God dang, not 200,000. But 20,000. Excuse me, 20,000 in interest. Imagine 20,000 interest on $1 million.
Wow.
That's dirt cheap. I mean, you licked. They don't want that to happen. They don't want that to happen.
That's tough.
You see what I'm saying? So they ran that joke right back up. They ran it up purposely to get people being able to kind of make licks on these little so-called raggedy little property. Because guess what? They have an effect the what property value. Because if people can come in and buy houses of that level and have to worry about level of interest like that low, that kind of spreads that kind of what so to speak, wealth around a little bit, right?
Right.
A person like one of us come in with a little bag, especially come out the market, they don't want you in the neighborhood, for whatever. Y'all know the deal. We ain't gotta play no games. So we know how this world works, right?
Yep.
They worry about property value and all that stuff. If you got the money so low, you can afford it. If you clear all the finance, you clear it at 2.1, 2.3. You come in, your interest ain't number 20 racks on $1 million. And your rate already gonna be low on your mortgage because of everything low. Man, you pay that 20 racks off in interest on one day trade. on the right day.
Right.
On the right day, you go ahead and pay that little interest rate off and go straight to paying your what? Your prime off. Right? You're gonna start paying on your prime and supposed to the interest at that point on that $1 million note. Now that's how they got the mortgage set up now. Where they got it now, you have to pay that what? The interest off first, a little bit paying to that interest. Before the housing market crash, you had to pay. You could pay what? On the prime first,
right?
And pay on the interest off in tandem to it on your way to paying off the what? The actual prime. Now they reverse that to try to protect who? Lenders. But lenders were the ones who did what? Do up the housing market. You see what I'm saying?
They were the ones that robbed people.
They're the ones that robbed people, and they went in and did that as if they were protecting who? Actual what? Home buyer. Man, shut the front door, man. Get out of here with that foolishness, man. Anybody knows? They think everybody's slower than surf on Sunday, dog. Ain't nobody slow over here.
Exactly.
Not today.
But so many people are, man. They don't even get it.
Yeah. Hey, brother RT, I still can't add you. I've been trying to add you for the longest. I've been trying to wait it out. But for some reason, it won't let me add you. I don't know if it's your device. Maybe it's something that you gotta, man, just go through your settings and see if there's something that you might have to hit. Because it won't let me add you on for some reason. I don't know why, but it keep not letting me add you on. Some reason, but yeah. So yeah, guys, that's hey man.
Did they? Sometimes you gotta,
I'm sorry. Go ahead, sis.
Sometimes you gotta make an account. Maybe he has to make an account.
Oh, that's probably what it is then. Yeah, because Streamlab, it is an app. You're right. It's an app. Even though I put the link back there, because I don't know how it works. Y'all know. So there it is. There you go. Yep. Let me add you now. There you go. There you go, fam.
Thanks for adding me.
Yeah, no worries, man. Good to see you, man. Peace, power, and prophecy. Thank you for coming on to the bill, man. Appreciate
Of
you.
course, no, it's a pleasure.
Yeah, man. So how was your day, man? What you do anything in the market? What's going on with your day so far?
So, I mean, I'm actually pretty young. I'm only like 22, so I'm still in college, but I come in here and try to get some knowledge about stuff that I can't really find out myself at the moment because currently I'm a bio major. I'm not even in any type of like finance or economics. So like you out here giving us this knowledge is really helpful. So I appreciate that. But currently, like all I'm doing, I just have a position on SQQQ.
Okay, you trade inverse. Okay.
Yeah, so I was just waiting to see what the market does as far as like the Nasdaq and SPY, and then you're giving all this advice right now about how to look at all these different things that I've never heard of. So I really appreciate that for the most part.
Oh, no worries, man. That's what we do. You know how this stuff go. Again, it's a village, and I'm always saying that because I understand that in the trading world, right, in the investment world, right. Again, there's two types of traders, right? Those who are, again, fund managers, this, that, and the third, banks, hedges, things of that nature, and then there's the retail market, right?
Yes,
The
sir.
retail market are the ones who get everything at what you buying on the ass, right? As opposed to the bid, right? I mean, you come in already down in the trade, right? There ain't no secret. Everybody knows that when you come in on a market order in the markets, you come in on the ass, right? And whatever that spread is, that means that's how much you down when you come into the trade.
Yes, sir.
Right? So it's already stacked against you, basically. Right? Banks, hedge funds, when they come in exactly where they want to come in. They come in already up because they know how to come in either through the dark pools. They know how to make sure that the market makers obviously fluctuate the markets where when they come in, they trade or the amount of money and notional value comes in, it comes in sticking off the rip. So I'm saying, so I mean, it's something in the other thing, obviously, but again, that's how it's already set up. So I'm not saying that disencourage people that may want to get and invest in trading by all means. That's why we learn spreads and we understand how to read level 2, understand how to read the tape and knowing, trend. That stuff matters, right?
Yes, sir.
Because again, in the right moment, our trade goes in the level of where the trend that we have set in motion. Then guess what? It's game on, right? We could benefit more again strategically than we could ever sitting on a job watching paint dry for 7-8 hours a day, 10 hours a day. In essence, till if we really utilizing the best of what we got in our brain power to make money through the financial markets, based upon understanding patterns and trend, because that's all the markets is, just one big sine wave, up and down, peak and trough. What money coming in with, money going out, right? And these companies are just pretty much the vehicles to get us where we need to go. A Apple, a SQQ, a Boeing, or a BMRA, whatever, right? But again, we're talking about to the tunes of what? Trillions of dollars on a daily basis, right? If you sit on the job, pumping, again, a salary, compensation, incentives, all that stuff, that's fine and dandy too. There's at some point, there's a certain cap value you can make. So you just look at it from an hourly worker perspective. If you're making, let's say, just throw it out there, like a lawyer or a doctor, right? They're making between about $50 to $100 an hour, right? Some of them guys making about $50, $100 an hour. Took them about 8-9 years of school to get where they need to go, right?
That's
all
true.
that time they put into that, right? And they making about $50 to $100 an hour. That's a ton of money if you think about it from a place where you never seen that kind of money or had a weird, a position where you can make that kind of money in a day based upon that level of education, right? I'm just putting it in the context, right? You come in, average person, guy sitting in college, took ability to learn this craft under the ideal of just paying attention how markets are really working from a financial standpoint, right? The overall big picture from a consumer, Nike, Apple, whatever, Nintendo, whatever you have a liking for. As a consumer, you buy that product, it's publicly traded. Well, when you buy that product, obviously at a higher margin for what it was cost to make it, well, all that extra go to the company, right? So they can R&D with it, fatten up the dividend for shareholders, fatten up the board, executives, like that, right? When they have a surplus, then technically, right, you came out better probably investing in the company, right? Riding it for a little bit, make a little money off of it, then go buy your same item out of that company with what? With the money you made off the company, right? Because everybody else is buying into it. You see what I'm saying? That's what it is. That's just supply and demand hustle, right? So now you come in and understand how to do that. You say, okay, well, if a lawyer or a doctor making $50 to $100 an hour, and they had to go through all the thing they got to go through to make that kind of money, all the headache, the work that comes with that. I mean, that mean that they don't have a passion for it, by all intents and purposes. But you know what I mean? It's a lot of work involved to a degree.
Yeah, it's
you coming in the market comfortable. Again, you sitting in your little favorite little chair, eating your little Cheeto, texting your little, your girlfriend, right? drinking your little brew, and you catch a runner like a BMRA, right? Or a Boeing, in your case, SQQ, right? If I put, let me pull the SQQ up, right? I don't know how you traded that. You might have bought the puts there, I guess. I would think, if you trade, let's pull it up real quick. Let me show. I'm going somewhere, guys. Y'all walk with me for 2 seconds here. Walk with me for 2 seconds here, right? And this is how you put this stuff into context, right? So you don't necessarily have to feel like you got to work hard. Again, never a day like this again in your life, right? So again, you even take the SQQ. Like if you shorten this again, obviously SQQ, got kind of strung out here on the back end of the day here, right? Right. At some point, it probably was rocking out through the day a little bit, right? Let me back it all the way out, right?
Yeah.
Let me back it out, right? It was rocking out during the day, obviously, because your SQQ pretty much is the inverse to what the QQQs, right? The QQQs is pretty much what the pro shares long, right? You know what I'm saying? It's the pro shares long to the NASDAQ, right? To the technology, all those little stocks like that, right? So off that point when the SP 500 was rocking up to the upside, well, guess what was probably rocking? You know what I'm saying? Qs were rocking too, right? And then again, you got the SQQs here. You see this little rock out here, basically from. Hold up, man. Let me pull this thing up. Sorry. All right. Yeah. Come on. Okay. Yeah. Here, roughly about 10 o'clock. Guess what? It grew legs, right? It started ramping. So I guess you probably took a long on that point. I guess if you traded along today.
Yeah.
You got a nice little bounce from $26 handle here, up here to about $30, right? That's roughly about what 4 points and change there. On a clean little move from around the 10 o'clock point up to about 2 o'clock, 2:20 somewhere around it. Obviously, if you wrote it all the way up here. But again, good little bag there, right?
Yeah.
So again, I don't know if you played it in the options market or again, I mean, you bought the shares outright, whatever.
Yeah, the shares outright. I don't have the money to be doing some crazy trades yet.
Yeah, just so in this case point again, even if you had a leverage account, right? Because again, margin and leverage matters in moments like this. If you know how to trade the market with discipline, though. So it's a hypothetical. If you had a leverage account, right? You come in here, obviously at the floor, or if you timed it well, obviously seeing the little pullback. Because again, I have a little strategy I use called the 9:50, 10 o'clock pullback, right? Even though at that point, if you look at it here, at that time frame, that's when it began to reverse because it was like right on clockwork. You know my little strategy, Camille. There we go. See how it always keep working. That little strategy always work. Right up between 9:50 10 o'clock. What? It's stolen. So you better steal it. Right? You better steal it. Y'all better steal it. Because it seems to be proving itself day over day. It keeps working. 9:50, 10 o'clock. What happened to this asset here? What did it start doing?
Pull back.
It reversed. See that reverse? It dumped out the gate. 9:50, 10 o'clock, just like clockwork. What happened? In come the buyers. Right? In come the rounded out bottom. Although I don't have to magnify a lot because trading that crate. I'm trying to pull it back where you can see it. Let me pull it back a little bit here. Maybe I can give a little bit more.
I used to trade that all the time. SQQQ and QQQ.
And yeah, QQQs. Yep. And I look. Yep. Another one I just go. We used to go in on the Qs. Right. So again, right at that time, 9:50, 10 o'clock, it started the selling started slowing down, and the buying started coming in. Again, case in point, the volume bars. Right. Let me let's see if I can blow this thing up here a little bit here. The volume started coming in around this point a little bit. It was still red a little bit, but you had more. You had liquidated most of the sellers at that point. You got back above the 28 moving average here, which is a faint little blue line. You can barely see it here. That instantly became a buy signal, right? Y'all know we use our moving averages for a reason. That's what they're there for, to indicate bullish signals when it's ready. When averages and weighted value volume coming in to support it, it starts to ramp. You built a little consolidation channel right here in a bull flag, because that's basically what that was. Off the lows, it was a bull flag, even though it was a bearish out the gate. But the bulls regained themselves, right? Because you're dealing with a pro shares ticket or excuse me, basically a ticket or a ticker at this point, that a lot of volume comes in, because it's an inverse to another value, and it started ramping. You got above the VWAP, which was a game on moment when the 20 moving average crossed over the VWAP. That was really game on, right? And so you start ramping, right? So again, anywhere from here, or if you just play discipline, you bought the 20 moving average here around this point here, 26.98, 27. After that, it was game on, right? Because at that point, you had the VWAP as your launching point. After 20, you had around the bottom when they kind of slightly dipped beyond it, because that was right there was just testing you, right? That's what they call a liquidity flush, to shake you out your long position. That's basically what they try to do right here, shake you out. If you was already in around here, right? To scare you, like, man, it's gonna dump, right? That's when it's like, it's gonna dump on you, man. Get out, take your profit.
and then they're buying it up right there.
Right, that's how they get you. Y'all know how they do you. And guess what happened? What it did? It rounded out. It rounded out. It held. It shook out the weak hands. It got back above the 20-day moving average. It got back above the VWAP, and then it did what? And then it launched. And then it went in a straight line. Look how I respected that 20-day moving average all the way up. That's textbook. That's almost like, you know, unreal. That's algos. It just respected that 20 moving average all the way up, and then you cash out up here, right? Because obviously at that point you see it starting to crest. You see the volume, you know, at that point begin to thin out, because guess what? The volume also is set up in the same way that you trade stocks in terms of what U-shaped bottoms, fry pan bottoms, cup and handles. The same thing happens in volume tranches, right? From here you see no extended here, peak here, but separated from the 20-day moving average. Anytime you have that kind of level of separation on a stock that goes parabolic away from its moving averages, chances are it's going to peak and roll over, because it's too extended. It's too linear at that moment, which is unreal and not necessarily how stocks move, because if not, you risk the chance of a stock peeling all the way backwards and falling back on its head, right? Obviously, you'll never see that in the market, but that's how it's already implied, right? And so at that moment, you either take profit, or again, at that moment, if you add into your position, you're not adding in at the tip of top, because it's too separated from what? The moving average. You wait for the next pullback, right? See if it can respect your trend line. If it does respect your trend line, which it did, that's when you add to that position. As long as the volume holds, which it did. Because look at here. Look at all that volume here, right? Joker be like, look at all that cheddar. Look at all that cheddar right there coming in. That's money. And it rebounded. You see the hook right here? Look at that hook pattern on the volume. Everybody was talking. See that there? That means that's almost kind of like what? Cup and handle, J hook pattern, fry pan bottom. That means what? The strength is still there. And guess what it did? It launched higher, methodically, all the way up to it crested at this point here. At that point, you see the volume here. That's when the volume began to really thin out, and the selling start coming in, because guess what? RSI, if you had the RSI up at that point, I guarantee you at that point it was looking kind of, you know, pretty much at that point like it was exhausted. And then after that, you had a barrage of what? Red. Look at all that red right there. Look at all that red peppered in there. And that's when the selling came. But at that point, the money was already made, you know, come 2 o'clock at that point. It was fatigued on the day from the move. It's time to move on. Now, I said all that to say this, though, after that long diatribe, right? That barrage of words and technical analysis in a speedy way. You in college with a leveraged account, with some discipline and some due diligence to understand what you're doing in a way that a lot of people, your peers, may have no clue about what this is all about. Again, right now, they probably tricking off at the local arbors on campus, doing something stupid, blowing money, begging for money from their parents, whatever the case. Obviously, home because of coronavirus, forgot though, but either way.
Yeah.
And you had a leveraged account. You came in at $26, let's say 27, right? And you pump, let's say you pump 20 grand into it, right? Or you pump, you know, again, 30,000 into it on a leveraged account. How many shares you get in that? Or let's do it for the place to hold them, so we ain't got to do all this complicated math. Let's say you even, man, let's say you put even, man, just for a second, let's say you put 10 grand into it, right? So 10,000 into a $27 ticker. How many shares you get?
Like, let me do some math.
Yeah, so since we doing with the whole dollar mark, so 10,000, and you got add a $27 ticker symbol. How many shares is that?
You're getting like 370.
Is that what it is?
Yeah, I just did the math.
Oh, so you got a 4 points off that movie, right? 370 on the share count, and you wrote this thing obviously because you traded methodically, like we're trained to do. And let's say you sold up here around the peak. Again, we always do high peak, but you can make this kind of money if you do it right? So it ain't like I'm making it up. Let's say you sold up here anywhere around 30. So let's say you just sold at 30, right? So that means you picked up how many points? 4 points in a matter of how many hours?
It's like so about 2.5.
10, yeah, so about 10 to 2, right? 10 to 2, right? So 10 to 2. And so that's 370 shares times 4. How much is that in profit?
It's like 12K, 13K.
No, 370 shares, not that. So 370 times 4. $4, only $4. So you got $4.
Oh, sorry, 1481.
Almost $1,500.
Yeah.
In how many hours?
Like 4.
How much does the doctor work? About what? 10 to 12-hour shifts?
Too long, yeah.
Yeah.
And he make about $100, an hour.
Yeah, it's definitely not where the most amount of money is for sure.
So he make about $1,200 on a 12-hour shift. Hypothetically, if he make $100 an hour, and you made it in how many hours?
That's not including taxes.
Right, that's for the tax hit him, right? We know we got to pay capital gain too, but this is house money. So if you think about it from our perspective, by 2 o'clock, you done, right? You roll over, eat Cheetos, you farting and think about what you're going to do for the rest of the day. Excuse my language, but y'all know it, like you get a little bad, you kind of do one of them old Al Bundy burps, put your hand in your pants, lean back in your chair like, oh, yep, got that bag.
Simply put, though. Yep.
Got that bag. You see what I'm saying? And you did that because you used your brain power and not your muscle power. Your knees, your backs, your legs, again, we know it sounds easy in theory, but this is very well practiced and well rehearsed. People do it all the time. I ain't making this stuff up. Again, go on your little favorite little website with their trade stocks all the time. These little small little places where people don't even know about on social media, and see the kind of gains these people putting up. So we ain't making this up. When we saying that stuff, we know it because we traders. But a lot of people don't understand this terminology or this lingo, right? This lexicon here is like foreign to them. Like, man, what you talking about? You see what I'm saying? So this should inspire you to want to learn better because you ain't really hurting yourself. You're just reading. You're looking at patterns. You're looking at past performance. You're looking at, again, the same way a person prepares for a football game when they're going over the playbook, right? Cheat code and all this stuff when they kind of spying on their opponent, right? Seeing them switch up from the 3-4 to the nickel. And then you say, okay, well, I got something for that. Audible up, right? They income Peyton Manning. Tennessee, Omaha. Quarterback, the linebacker, like, man, what, bro? Shift, juggle, move, linebacker, move, juggle, boy. You all off balance, and get what? You fall down like somebody had to put tie together. You go to the ground, and then you break for about 30, 40 yards, right? Bruh, I ain't making this stuff up. So that means you got to be sharp on your toes. You get what I'm saying? Y'all get what I'm saying?
Yeah, I do. I just got to clarify that I love the analogies. They're great.
Yeah, man. Again, that's how you got to make this stuff make sense, right? Because everybody has a different perspective how they look at the world and how they look at money, how they look at patterns, charts, trends. It's the same thing from a technical aspect, but if you know how to learn how to, matter of fact, Eva Camille, you heard it too from me over Chris, but I always just say I always tell you guys when you learn how to dumb the market down to your world, to your lane, that's what makes it fun. So when I'm always saying, tell people, steal from everybody, right? Find your own niche. Y'all know that's one of my favorite sayings, right? Find your own niche, your own niche, but steal from what? Everybody.
Everybody.
Yeah. Why wouldn't you, right? It's free data. It's free data, right? If they ain't putting a price tag on it, even if they got a price tag on it, and you still can steal it and utilize it in the market, then steal it. Right? Because everybody say they got a strategy, right? Everybody, I got a strategy. I got the $1 million strategy. They may do if they know how to do it properly. But again, for you to learn it, you still have to put your own Your own armor all on that tire. Because you may learn so different. You see what I'm saying?
Yeah.
So you have to find ways to make the market seems very pliable to the way you look at life and how you learn, and then you make it seem fun to you in a way where it becomes like a ease. You know what I'm saying? Not necessarily a dis-ease, right? It's a dis-ease when you have to feel like you got to work hard for it. That's why you don't put all your interest and heart into it, because it's like, I got to deal with this. It's like a gauntlet. So I'm saying it's a roadblock. It's no, I don't want to deal with this. But when you're making that kind of money and all you're doing is reading charts and you push a button and then you sit back and then you have a couple of emotional fluxes here and there when the money really looking good, and when it pull back, you're like, oh man, I was just up 13, now I'm back down to 7. Okay, but I'm still up. You still up $700. Boy, you're gonna make that an entire week. You know what I'm saying? Right. Some people don't even make it in 2 weeks, and you done did it in a couple hours or an hour. You see what I'm saying? So that's the gratefulness of it, where you got to keep yourself humble. Because if you get too arrogant, then you become complacent, and then you start losing grip of your discipline. And that's when you start making sloppy decisions. You start chasing, you start trying to force the market to do what you want to do. And the same way I just brought up that chart on the Federal Reserve, the repo market, and the injection that they're doing. When they start an operation in on the stock that's obviously allocated or correlated to the trend that you're in, or it's the inverse to that, and you still trying to ride that trend, and they can inject the market with money, and you don't see it coming, guess what you're gonna do? All your gains can get wiped out. Because you kind of overstayed your wealth, you got greedy. So at some point, cut that band, get that bag, wait for the next opportunity to set itself up.
Okay.
You see what I'm saying? So
yeah,
once y'all get it again, I know it's kind of, I always say it's a method to my madness when I get on one of these kind of speed talking tangents. But that's how my mind just be running. It just be running. I'm like, man, I've seen this before. Experience.
No, I feel that. No, I appreciate the treasury, like the stuff that you're pulling up with the treasury and stuff like that. Like I had no idea about any of that stuff like that, and like how you're explaining how they're increasing the 30-year yields faster than the other ones. Like I don't realize that, but when you explain it, it makes so much sense, and it starts to like come together.
Yeah, because when they do that too, again, just to put it in even more context, y'all know what they're doing, right? They're trying to save the baby boomers and their property value, because now their property value goes down. In essence, because y'all know how this stuff goes. This is supply and demand. If your interest rate is 2.1, and I got in at literally 2.1, 3.1 30 years ago, what does that say for inflation or property value gain? You see what I'm saying? How you coming at the rate I came in at 30 years ago, and that make my appreciation value of my property seem like it ain't nothing? So that's where all the old money at in the 30 year. That's why people rarely hold bond notes in the 30 year, because they have to wait to pass that bag off to the next person that want to buy bond notes that's sitting up at high prices sometimes. Especially if the Feds ain't rebalancing the book, right? That means you just throwing money away. You making my property value seem like it ain't worth nothing. So why did I even get caught up buying a house in a hustle thinking I'm getting some real equity out of it? It comes with a lot, again. So you just got to put it in the context. Again, you say you still in college. I don't know if you own a house or not, but at some point you're going to own a home. You're going to deal with what everybody else dealt with, when they bought their first home. Hopefully you make, the right decisions out the gate, because again, you want to catch traction out the gate and make a good decision, right? You don't want to get caught out there trying to say, well, I'm just going to buy a house and it's just a good experience, so I just want to buy one. But they didn't took you through the ringer, and through the lender and the finance years and all of them, they didn't robbed you a little bit. Ran your rate up when you shouldn't have been paying that, because the national average is showing you this price, right? And they didn't ran it up a couple extra points on you when you didn't have to, and you had a pretty decent FICO score in terms of your credit, and so that posted protected you, right? Gave you at a more favorable rate, right? So again, it's funny too when we were speaking about it. Again, when I was telling y'all about the interest rate when they hit that lot, when it was about, y'all remember if y'all was following the market that day, I forgot the exact date, but the market, that's when the bonds had just imploded on itself. It went all the way down to like 0.38. I remember that listening to CNBC, they were crying, but them jokers were crying on CNBC. Like bro, my house, my dream home, garbage now. I'm worrying about somebody move my neighborhood on for the bill. They can come in and get it cheaper. I'm gonna go back to let me see if I can go back to the date. I will have to go back to the other date. God dog, you ain't gonna let me do it on here, because this only gonna give you matter of fact, let me go back to 20. I do 2020. Let me see if it'll let me do it and take it back to, yep, here we go. We finna go there. Right? Let me go there. Y'all finna get this work today. Y'all finna get this work. Y'all finna, is that what I'm talking about? Right? Because I want y'all to think I'm making this stuff up. Right? Because we don't finna do that. We're gonna pull out that cheat code. What we got? What day that was? What day? March 9th? Y'all can y'all see my screen?
Yeah.
Yes.
Let me blow this thing up like cheddar. I'm gonna blow it up like Chuck E. Cheddar, right? Y'all remember Living Color? Go to Chuck E. Cheddar, get that Chuck E. Cheddar. Roasted the rats, no extra charge included. Chuck E. Cheddar, not Chuck E. Cheese, but Chuck E. Cheddar, right? Look at that. What does that 30-year note say right there?
0.99.
That was what? How many days ago? 9 days ago. That was 9 days ago. What it is today? What that number is right there, what it is today? 1.77. That's almost a whole.
It's almost 100%.
Basically, a point exactly. And monetary value, you know how much money that is? That's in the tunes of trillions of dollars on a 30-year fixed value. in terms of a person coming in with a 750 FICO, whatever, in terms of how the interest rate goes back to your particular lender when they add their little bit on top because they have to stay on the federal rate value that they can't gouge you, overshoot you. You still come in roughly at that point on the lending side again about 2.3, 2.1, 2.5, somewhere around there. So that means a person that been in their house, again, 20, 30 years before you, that came in under the inflation rate, whatever the rate was at that point, even at the point they might have been doing quantitative tightening, which obviously caused interest rates to really go up because at that point, that's when bonds are really sitting fat, right? They probably paid, 3.1, 4 something, and with good credit. You came in at 2.1 out of the gate.
Okay. That's crazy.
Sometimes when you start thinking about the housing market, whether you should buy, you shouldn't, that's why everybody wants interest rates to go to zero. They don't care, but they don't know what the back end of that is that you take interest rate to zero or negative. What does that do to people that's looking to buy a house in maybe 5, 10 years from now when that debt bill comes due?
It's going to kill them.
It's going to kill them. So it's about the greedy people now that want to get the goods now, and then they say screw again. Well, as they say now, the millennials, right? Everybody trying to, that's why they blaming the millennials right now for the coronavirus, right? They want to go out there and party at the beach and get everybody infected with that Rona, right? and then crazy, go back around their grandparents and give it to the grandparents. The grandparents get off because of the Rona because you were, hard headed and retarded. And so guess what? Again, y'all know how this stuff works. So. That's now it's funny too because you look at that 0.99 on the 30-year note, right? Go back literally a month before then, right? Here we go around February the 10th, 9th. Where it was sitting at? Look at that number right there. What's that number right there?
It's 2.03. It's almost 100% higher. Well, it's more than that.
Crazy. That is crazy. So anybody that ever bought a house from now, this how you come check what your rate should be. When your lender can't lie to you, anytime you go to buy a house from going forward, make sure you have this right here in your cell phone or
my homepage.
So when you go up in there, they can't get you. Like, no, bro, excuse me. This is the national average rate right here.
Okay, that's crazy.
Did not Sister Monica did it the other day? Did she not?
Yep.
When she went up in that bank, she pulled a card. And the tellers act like they didn't know what was going on, whether they knew or they didn't know. She knew more about their job than she did at that moment because she was coming from the what? This is the government. This is the U.S. Department of what? Treasury. This ain't no little offbeat little third party ones that be blowing your phone up trying to get your money, right? How they do the most. This is the standard, right? This is the standard, not the exception. This is the standard. So they can't get you. So all before they had 2.33. 2.26. And if I go back in 2019, it probably was what? It's going to be probably higher. And it hit its low of 2.99. Go back in history and see when the last time the 30-year note was at 0.99% value on the 30-year. The 1 month was 0.57. Right? You had some yield inversion. That's a yield inversion. That's when you had all that yield inversion that was happening. That's when you knew it was going into a recession. Because you know why? Anytime a lesser note is more than a later note, that means if you have short-term debt, obviously in that aspect with defaulting faster than that long-term debt, because you should have time to pay off a note, right? And if your short-term debt defaulting faster than your long-term debt, that means you have that's what they call a yield inversion. That means you're going into a recession. That means you ain't got money even to pay short-term debt off. You know you ain't finna pay no long-term. You know them credit cards finna go up and smoke, bro. You might have to cut them things with a razor blade. They done. You done max them things out before you got it. That means they done. And no money coming in terms of GDP, economic growth, jobs. That's how they weight this stuff with. That's why they was talking about job numbers and jobless claim, that people making money. Then again, you back that up against inflation, right? Whatever the inflation value rate is, obviously the USD dollar is weak or is strong, then again, that kind of gives you understanding where we at. Because again, if the USD dollar is strong, right? And interest rates are high, then guess what? You cost of milk, a gallon of milk at that time gonna cost you about what, $3-4, right? And when they low and they super low, all that, and they taxed out, and people got extra little money, then guess what? You know what I'm saying? It ain't hurting you as much because you got more money in your pocket, and that causes sometimes for people to drop the price on their goods and services because guess what? Everybody ain't no struggle, struggle happening at that moment. So they're trying to compete to get your business, right? Because they know you can go to Walmart, supposed to Target. I mean, y'all know that much at least, I guess, but y'all know what I'm saying, right? So again, just that quick, we went from again, look at the jump from 1.63 yesterday to 1.77. Look at them big chunk jumps. The day before that, the 16th, it was at what, 1.34. That's the day we did that show talking about how the rates were going low because the Fed had just cut rates over the weekend. Remember on Saturday, right? They cut what? A full what? Oh, it was Sunday, excuse me. They cut Sunday night, they cut the rates to a full basis point. Brought us down near to zero, basically about 0.25, somewhere around there. And interest rates coming into Monday was what? 1.34. That's after again rebounding off that, that devastating blow where bonds fell to about 0.38. And at that moment, the refi market, if you was refining your home at that time, if you was able to get that refi, and your credit score was again basically probably even 700, 760, 780 up there, you was paying maybe about 2.9, 2.8, 3.1, stuff like that for a refi. I mean, just bagging money up, bagging money in that refi. Again, depending on your property value, all that. Y'all get it, but that's the treasury market, guys. That's how you come and read the tea leaves, right? That's how you come read the tea leaves. So always keep the treasury market up close near you. The same way we watch the the S&P 500 on daily sentiment value and trade in the markets. The same way you should watch the bonds as well going forward in the future in certain, in some aspects of how it kind of relates back to the S&P 500 or overall equity markets as a whole, because that's the overall highest level of debt that the U.S. market citizen, right? He actually can hold, right? That's the biggest debt note we have in our economy. It's the 30-year note, right? And so when people buy long-term bonds, kind of hide their money in that as a hedge against equity markets, of course they're gonna buy those bonds if they get them at a good rate, because again, that's a long-term for maturity. And if they only yield them about 2-3%, on an annual basis, then people fine with that, right? You got big money in that 2-3% on $1 million, and that's just one side of an allocation that's better than the money market account. In some cases, they'll ride that out all day. They'll ride that all day, right? So again, that's like what 2% on million is what 20 what is that 20,000? Yeah, 20,000. Right, that's a 20,000 increase on a yearly basis if it keeps putting up that number or more. Right, you take your wife out on the weekend with that 20 racks. Let's go. Right, so again, y'all get it. I hope it's that stuff is useful for you guys. Again, I'm not saying I'm some CPA, none of that. I just learn how to put this stuff together over time, and going through experience of what I've gone through for owning homes, whatever. So yeah, so that's the game, man. Let's get it. So again, you don't feel like what you're doing, obviously in terms of profession, is in vain, or you're doing something to kind of change the game up in a way where you can really get benefit from it. But I can tell you this: if you learn this craft, it'll always follow you, whether you do it full-time, short-term, part-time, in-between time, whatever. As long as you have it, that means you're winning, right? So right now, a lot of people are going to be home, shut in, can't work, can't go nowhere, can't party, unless you party in your house, obviously, But still a lot of videos. I already seen them. I'm already seeing them on YouTube right now. People already coming up with stuff to kind of game follow. They build up, they follow. They even have kids dancing, and dogs dancing, and booger thumping. This is everything on YouTube now because they're gonna be home, bored, locked, shut in, right? So in comes the YouTube explosion, right? And so again, guess what though? A lot of but for them that's sitting around waiting for their money to come through, or pay sick leave, or whatever they're gonna do, the government gonna do to bail them out, or the American people out, that have no raw skills about how to invest in the markets on their own, besides their own broker that's fleecing them, right? Us, right? Us, the real warrior traders, right? Not Ross Cameron, us, right? We're gonna be the ones to still making money. Everybody waiting on their their checks to clear, their benefits to go through, their boss to cut the check, and all this foolishness. We're still gonna be we're gonna be in our element, right? Because we're gonna still know how to go into the markets and squeeze what out of it? Alpha, profits, gains. right? And so it could be a $1,200 day. It could be a $200 day. It could be a $50 day. Well, that's more than you had before you woke up. And you got it there by pushing a couple buttons, then again, going back, about your day, from that point, so it's a great opportunity to have such a skill set. It's just, hey, however you look at the market, whether you feel like you can do this or you can't, it's your money anyway. I'm saying that straight up. It's your money. You consume these products, right? You consume majority of these products. Somebody went to Starbucks today, right? Somebody probably go to Starbucks every week. And if they spending anything, again, all the coffees in Starbucks about $5 anyway. They're getting you over there. So you're gonna pay at least a minimum of $5. So 5 times, if you do 7 days out of the week, even if you do 5, hypothetically on a work day, that's $25. Right? Now you do that time how many days out the a year? From a value of the a work week, right? So it's 5. Go into what is it? 52 weeks out the week. I'm just out the year. Excuse me. You do the math on that. You see how much money they spent almost an entire year on coffee on Starbucks, right? On a coffee. Then you say from an annual budget allocation value in terms of how much money they spent on that. I imagine if they put that money in the stock market, and it's supposed to buy the $5 coffee, maybe they went cheap and went to Dunkin' and got a $2 coffee. At least you got a $3 differential, or they just stopped drinking coffee, or make their own coffee, or they should just buy their own coffee and make their own coffee at home. Stop trying to buy it, pay for the experience of just being in Starbucks. Like that's the dumbest thing ever. People be paying for social, social bravado or something like that. Man, I went to Starbucks today. Sit down, man. Nobody care about that. Sit down, man. Ain't that serious? Am I lying though? Y'all not people Albany like I'm on the Starbucks. They try to make it like the best thing ever. Hey, y'all know what it's like. Like joking, like keep it real. Like man, y'all like man, okay. How was that experience, bro? You burnt some gas and got a little coffee. All right, right, all right. But they will make it seem like it's the best thing ever because they sell you on the experience, right? As opposed to give you more of the product. It's a hustle. It's marketing 101, right? Because now you finna, burn gas and buy expensive coffee. And if you just really was serious about your business, you go into Starbucks and buy you a bag of the same coffee, buy your little milk cream or whatever, your sugar, all in one, and you get more cups of coffee out of the what? Out of that than having to go pay $5 a whop off the just going through just to be seen in Starbucks. And then you take that other money and you put that money into the what? Starbucks stock. Right. Right? Because Starbucks are everywhere. That means people must love it. So the stock price at some point going to do what? Reflect the value of its patronage, right? Or people that's always pumping it up like Jim Cramer and the rest of them guys. They wanted to succeed because again, they want to be the ones that's always talk about and being seen at Starbucks. I don't want to be seen at Starbucks. I want to be seen, cashing that check or doing that, that bank transfer when I send that money out that brokerage account to my account after I done made a nice little bag off Starbucks, right? Then I do what? Wash, rinse, repeat, right? So that's just equity markets. That's utilizing this aspect of what we have to procure capital in a way where we're lessening the hard work, right? The least path of resistance, right? Because if you real estate market, same way, you know what you got to deal with in the real estate market as an agent, right? There's so many hands in the pipe, right? It's so many hands in one pot when you buy a house. So many people feeding off that one sale, right? You kind of feel like again, excuse my language, you feel like a little prostitute when everybody get done with you. Right? You're like, man, I didn't even know you get money too.
Like a record deal.
I did get some money. Yeah. They the people that put the paper clip on the paper, man. So we got to pay them too. Like the paper clip, man, I put it on myself, man. Get them off this man, this lawyer, man. Come on, man, don't play me. Right? So again, I'm just saying, there's a lot of hands in the fire there. Here, who's the middleman in this process here? I'll wait.
Nobody.
It's your money, your skills, and the broker just sent it through. And now it's commission free, so he ain't even getting nothing out of it. He mad now. So if the worst he could do is just kind of slow your trade up or give you some slippage. That's what you're getting nasty on. You're gonna call me after slippage, huh? You gonna be that kind of person. Okay, I got you, Robin Hood, right?
Yeah, give you a 25-cent bill.
Right on the spread, right? Even when the spread was probably tight, the magically the spread jumped from 2 cents to like the 7 or 8 cents. Right? You're like, okay, I got you. I see what you're doing, Joe. Right. So, but I mean, outside of that, again, seriously, you're really in the in the driver's seat. Right? You are in a way where you get to drive this ship in a way where people have done this for again centuries. Well, excuse me, not centuries, but again, at least decades in a way where we've seen the benefit once we got into this here. Again, everybody has the same notion, right? Imagine if I was doing this 5-10 years ago. I know everybody didn't say that. That really took an interest in the way they really understood it. Everybody says that. And so if you ask a person like again a Paul Tudor Jones, again obviously definitely a Warren Buffett or Charlie Munger, again whoever your favorite trader is out there's lots of them, but some of the old legends in the game, right? If Jesse Livermore obviously was still around, people like that, and they'll tell you probably the same thing. Again, when the point where they started, again had they learned even a little earlier, again because that's what it's all about. It's longevity again because we got long-term outlook. Then we have a short term, right? Short term is what day trade, right? Capitalizing volatility in a day perspective, right? Again, making that kind of income that it takes a person to make an entire week, sometime an entire month, sometime an entire year. It's a person they made enough money. Again, today in the markets, that takes a person an entire year to make. Let that marinate for a moment. You know what I'm saying? That's when it get like mad scary. You're like, God, dog. That's when you take rich. You're like, rich Joker, right? You rich Joker, right? And he came in, got his bag, and he was on the golf course by 12, 11. See what I'm saying? Or doing what he want, hanging at the bar. Y'all know what I'm saying? I ain't making this stuff up because we in here now. We see what happens, right? And we hear the stories, and you hear like Joker, like, man, I'm finna go hit the golf course, I'm finna go, whatever, do whatever, right? Or I'm gonna catch a plane, over the West Coast, be back by 6, 7 before the kids get off. But whatever. That's a value of the freedom. What I'm hitting at is the financial freedom, right? And so, that's what you should aspire to do. You need to enjoy life while you're young and not be pressed with having to worry about going to clock in, right? Where you actually get a chance to set your own rules in life, and then you go out there and operate underneath those. So again, the market affords you that if you do it right. If you do it right, set your goals very low. That's the facts. Set your goals very low. Set the bar very low. Why do I say that? Why would you want to set your bar and your goals, especially if you're day trading, very low? Because it helps you minimize risk, it helps you mitigate risk better, and it keeps you more in tune to your discipline in terms of your risk versus reward. If you set your goals so low that it seems like it's just so easy to break, once you exceed that goal, that means everything above that is what? Gravy. It's gravy. And lessen the stress that you have to deal with. So if you say, I want to capture 3% of the market a day, and stocks running over what? 100% in a day? That means everything above that 3% is what? Gravy, right? Y'all know what I'm saying. You ride through what? Gravy Valley and biscuit wheels. Watch out. you got poly tracks. Right. You poly tracks in the Gravy Valley, boy. With them biscuit wheels. You don't even care if you just spin out.
We just don't want the butter biscuits.
Right, yo. Butter biscuits, right? None of the butter biscuits. They real good one there, right? And that's you're 100% right. But that's exactly what it is, though. You know what I'm saying? So you minimize, you mitigate, and you become very thorough in terms of how to be disciplined. And what's the biggest human emotion to overcome?
Greed.
Anybody, right? That's the biggest one, right? Would everybody agree with that? Greed is the one that kind of takes you into a unknown place, right? Your eyes turn colors and all kind of stuff. Boy, your stomach start bubbling, right? You get nervous. Yeah, because you're watching dollar signs, right? Because in that moment, you hadn't learned how to be indifferent about money. Let me repeat that. In that moment, you haven't learned how to be indifferent about money. What do I mean when I say be indifferent about money? What's the definition of indifference? Anybody, just paraphrase it. What's the definition of indifference? When you're indifferent about something, that means you what? You really don't what? I'm indifferent about it. I really don't care.
Right.
I care, but I don't care to the degree where I feel like I'm afraid to what? Lose it. And then in the stock market, we say what? Never invest more than you have willing to what?
Lose.
You see how those two work in tandem there? So that means instantly you already come in knowing how much you're willing to what? Have willing to what? Lose.
Yep.
So that means you're gonna try to make the best of what you what? Have. To take it to a point of what? Potentiality, obviously, if you can, and stretching it. So if you set your goals low, it ain't hard to get 3% in the market. But guess what? Sometimes it's hard to get what? 3% in the market.
Yeah.
And everything else around you seems to be running. But the stuff that you chose that day seems to do what? Stay flat.
Yep.
It's like a racehorse when they open the gate to Kentucky Derby. Your horse do what? Run 3 seconds out and 3 feet out and just fall to the ground and start looking like, man, look, bro, not today. And you just kicking and flapping, man. Go, man, go, man. Go. Go, bro. Only got a little bit of time, bro. Y'all know what I'm saying? Y'all been in the market.
Oh, definitely.
You know what I'm saying? So, again, that comes with what? Now you got to be thorough in your research. Due diligence. Find those stocks that give you the best bang for your buck, the best potentiality. So, again, you set your bar, even if you set your bar that low, if your stock does disappoint, it ain't at the rate where it's going to really what? Hurt you a lot. Because your goal was already set pretty low. You know what I'm saying? That keeps your greed factor in check. That keep your emotions in check. Now you got to practice what you preach, obviously. But if you just keep trying to hammer that into your psyche, eventually it's going to stick, right? And then you're going to say, you know what? You're going to trade very tight. I'm a case in point. Our brother Stock God. Do we not think that way a lot of ways, Sister Drumhead?
Oh yeah.
That joker so stingy.
He got the best discipline in the world.
That joker got Floyd Mayweather defense. He ain't finna give nothing to the market if he can. Until he don't want to give a penny back.
Nope.
I ain't making this up, right? That took what? A lot of self-discipline in his psychological disposition to convince himself, I don't even care if I can make 1,000, 2,000. I'm cool with this 100, this 200, this 300, this 600. I'm out of there.
Yep.
Right? And everybody be like, man, you should have stayed in there, man. Why you ain't stayed longer, man? You could have made twice that. And the stock might go on and do that too. It shows it. Hey, bird in the hand beat one in the bush, family.
For sure.
Stick to your goals. It adds up. You don't have to get it all in one walk. It adds up.
Yep.
If that makes you feel comfortable, that means you stick it to your game plan. You trade better that way. Or even, again, I'm not speaking strictly for traders only. You invest even better that way because you want to get it always at the lowest price. At a point when you do get ready to sell it, you didn't kill it. You crashed it. You know, so discipline rules the rules. That's the secret sauce. Psychological disposition and discipline, which obviously is synonymous. That's how you get to the bag. And so when you hear people say, I made 50 grand today, 75 racks today, 10,000 today, couple thousand today, $600 a day, and you like, you know, you worked all day, right? And you made whatever you made, and you like, bruh, right? Every one of them type, bruh. You know what I'm saying? It's like, man, okay. And then they keep seeing you doing it on a consistent basis. At some point, they're gonna be like, man, okay, man, tell me about this stock stuff, man. Man, what's this stuff all about? Man, teach me Forex. Right? Or show me the path a little bit, right? Because all of us need other ways basically to find money, right? Outside of what we're having to work for it. Right? That would be the ultimate goal in my mind because I guarantee you, just like anybody else, when people say again, you know, had you learned this 10 years ago, 15 years, 20 years ago, where would you be today? And at a point when you actually start taking it serious. Right? You have 2 or 3 houses somewhere in the Caribbean or whatever, you know, if that's your thing. But again, you'll have the level of the freedom. You know, that's that's what we're advocating, right? That's in terms of financial freedom. I mean, it's a given right, that everybody should endeavor to live life on their terms. Well, in a capitalist society, especially in America of all places, all right, where it's dog eat dog, all right, yeah, your resource pie or pool is going to be your ticket up out of this this killer taxation and these overbearing aspects of some of it to a degree, overbearing aspects of governance that seem to kind of just really try to put you in a certain place where it keeps you from really taking off, right, as an individual. But the corporations are benefiting like big time.
Yeah,
they're getting bailed out before you do. Again, we're seeing it right now in real time. So I'm not making it up. Right. So yeah, man. So again, I know I've been talking a lot, but again, y'all know how it is, man.
Info, as always.
Sometimes you got to have them kind of conversations because you got to put this stuff into context. You really do, because a lot of people come in and see you doing it, and they're like, man, and they see you at a point where you've gotten pretty good at it. You're getting consistent, you're getting better, and then they were like, oh man, God, dog, man, teach me the game, right? Or
right.
But they want it at that point. They not necessarily understand it, so they always thinking that it comes like so easy and fast.
Right.
But it can, but still, hey, it's some levels. What it was saying, it's some levels to this thing when people like, it's some levels to this stuff.
Levels to this game.
Levels to this, right? Y'all know what I'm saying? It's levels to this, but it ain't the levels that they dealing with on the job or at the school trying to get an education. Right, just to go into debt to get a job that's gonna pay them peanuts until they really get to a point where they got to prove themselves, and by then your debt looking like it's like, man, you don't never get consumed unless you hit the lottery, and it's like, man, why did I go through all that just for this? So you say to yourself, okay, well, it must be another way. Got to be a better way, right? So what am I doing wrong, or what's out there that they not telling me about, right? So again, moments like this, when you learn how to again, basically hustle.
Right.
I just be honest, that's what a hustle is. That's what an entrepreneur does, right? He's an opportunist, right? He's constantly looking for opportunity. He's searching and scouring the world. Yeah, go ahead, sis. I'm sorry.
No, I was just saying, make something out of nothing.
Right. That's his mandate or her mandate. Every day they wake up, they're looking to get it. All right, go to Instagram right now. Right? Them Instagram models. What they doing?
Finding a way to get it.
Right. Every day we hustle.
Ain't no more strip clubs. They're gonna be stripping on
all of them right now.
Cash and Venmo.
Right.
Yeah.
You know what I'm saying? They've been hitting jokers on the webcam now. Did y'all see that article today when they said the cam girls finna get a big boost of income now from people sitting home? Everybody do your camera girls when they make a killing.
Now they got private websites that you can go to, and you got to pay to get in to get their photos and stuff.
Boy, they finna make a killing off some jokers right now. They're sitting home, they got nothing to do.
What you know about that, Chris?
I'll be on Instagram. I'll be on IG. You know what I'm saying? You follow these pages, then all of a sudden you see, for exclusive content, go to my website.
Oh my!
I click on the website. They try to charge you $250 to get in.
Bro, all the dudes gonna be just like this dude right here. Y'all can see my screen. Bro, finna pull the skin back onto my bro. Bro, they gonna have to put some.
Man, look at his arm,
bro.
Boy, got that strong arm, huh?
All kind of. Boy, you gonna need all kind of help, boy. You gonna need gauze pads, and boy, they're gonna put your right arm, your left arm in quarantine. They're gonna put your arm in quarantine. What? Right? Right? You finna wear them cam girls, them voyeurs out. Them same little people. I saw that article. I was like, man, this junk crazy. But I was like, they right. Because jokers are always trying to find a way to entertain themselves. It's again different stroke for different folk. Whatever the world is, and how people see things. But it's crazy. It's a economy even for that. Because it's all about what? Supply and demand. That's hustling 101.
Absolutely.
Right? So You know, it's crazy though. But again, when we look at it from a place of just, again, when we say, well, you know, what's the least path of resistance to get to where we need to go? Well, again, the greatest thing you have is your what? Your brain power, right? Well, if your brain power gave you ability to make these kind of bags, and you just, you know, again, y'all get what we go through obviously at this point, but you ain't finna fight against that. I'm not finna fight against that. Me, I'm not. I mean, I do my little, I got a little business too, or whatever. It's fine and dandy. The little things I'm doing, I'm trying. Again, again, the goal is to always be your own, you know, the chief of your own, you know, tribe or whatever, right? You know, king of your own castle, or your own existence, the emperor of your own existence, right? And so, again, void of a government because you know how to handle business, right? And so that's what these moments give you, right? So, I mean, again, y'all, you know, y'all get it, but that's what we study for. That's what we practice for. That's why we obviously have moments like this when we go live, and we have the you know ability to think tank roundtable discussion, because that's what it is. It's a roundtable discussion, and we just share ideas, whatever, you know. So you need that kind of level of think tank because see, big money, they have this kind of stuff. They have, you know, unlimited think tanks, things that they can go into, you know, or that kind of stuff is taking taking shape. So for us, we need our own little way too, as the retail side of it, right? We retailers. Right. So, hey, what's going on, brother, Mr. Takeaway? I think that's my takeaways. I'm sorry. Peace, power, and profit to you, family.
Absolutely.
So you came in the building. Good to see you guys. Thank you for coming to you know, the build today. It's been a long day, obviously, for all of us. But again, you know, yeah. So again, you might have been trading today. Again, how was your day? Again, how was your day today?
Stress-free.
Awesome. That's what I'm talking about. You doing anything in the equity markets?
Really, I've been looking more at Forex today. Options volatility is just too all over the map right now to really be able to time anything right. So just waiting on that to settle down a little bit.
Agreed. Yeah, premiums are through the roof, right? These premiums are so high, man. I'm thinking about like, man, seriously? I think about the premium in the option market now because all the volatility. That's why they got that way for a reason. The CBO and the CME, they obviously purposely pricing the premiums that high to keep people from making, again, very liquid money, obviously in tandem to the market makers. Because, I mean, again, we are in some abnormal times. I get it. But still, man, some of these premiums are just ridiculous, right? That they want you to pay, you know, for these little weekly contracts. So it's not even really in people's best interest even to buy weeklies no more. You got to buy, you know, 2 weeks out, 2-3 weeks out, you know, really, because it's so crazy. Then it's hard to
capitalize off of it.
Right. Then it's hard. Go ahead. I'm sorry. Go ahead, bro.
It's like trying to buy a life insurance policy when you're on your deathbed.
Right. You know what I'm saying? Like you already at the top, they finna charge your arm and leg, you know. They feel like, you know, it could be any day now. So the markets are kind of in that same Russian roulette. It's hard. So yeah, again, being able to just buy a premium outright, it is tough. You know, you got to really go out there and find those outliers, right? And there's a few of them out there, but you got to search for them. I mean, you got to really search for them. And I was doing that a couple of days ago. I was like, man, where the money at? And I'm digging, I'm searching. Like, okay, all right, you know, so it's a lot out there. And before, when you just kind of just throw something at the dartboard, okay, you know, get it. You know, now it's not the same. So again, yeah, definitely Forex market is a really good shelter from option equity liquidity values until things kind of normalize itself a little bit, and then we can kind of get back to, you know, business as usual. But until then, again, take precedence to understand that all these very extended stocks to the downside, those who are really smart and got the, you know, the free cash flow and the good balance sheets that can weather this storm. Of course, those are going to be the first ones people are going to flight to when the market really begins to gain itself. And all the ones that were weak, that was fake, that was fugazi, that was pumped, that was just, you know, propped up artificially, this, that, the third, those are going to be the ones going to be what? Exposed, right? And but guess what? Those are the ones out, you know, pretty much right now with their hands out trying to get the government bailout. Shots fired. Right?
How about Boeing?
Shots fired, right? Blow holes all through Boeing back door, right? And put some flaming poo out when they get to run out, right? So they can really slip and slide because they was the really, you know, they was the, man, dumb jokers, right? So again, this is what we studied for. So, you know, make no mistake about it. It's gonna be great. Take your notes now. Really start analyzing the market. Go through all the sectors. find the best in breed. If they really the best in breed, they balance sheets and they, again, their longevity should be able to, sustain them through this moment. And if they down again roughly over 20-30%, and some of them are probably more, when the market begins to bounce, those are the ones you want to start looking at to take position in, whether you, again, long-term or short-term play, just off the rebound alone. Because again, they're gonna try to pump this market. It's to the point now they're just salivating. They want to pump it so bad, but they can't. Right? There's nothing they can do to save it. Even the Fed can't save it. So it's just gonna build up that anxiety, right? They're gonna build up that anxiety, and when the market actually gets to the point to rebound, it's gonna be crazy. Again, but keep in mind, like I keep reiterating, because some of us still gonna forget, we are now officially in a what? Besides the coronavirus kicking out,
bear market.
But beyond the bear market, what else are we in though? What's the number one thing we're in? That the Feds call. What are we really in?
A recession. Recession.
Say it with your chest. Say it with your chest, like Kevin Hart said. We're in a recession.
We're in a recession, man.
Recession.
I don't look at that as negative, though. I said recession is just a recess, only longer.
To a degree, but guess what? When you have this kind of economic headwind on top of a recession, pretty much recession come on the back again when your markets begin to be too inflated, and a point where the market has to cool off naturally, I say. But when you have a situation like this one, assets were artificially inflated, and on top of that, you had the Federal Reserve run up in its balance sheet, causing all this unknown, hidden debt. Obviously, that has to come back one day to be paid. And then you have a scenario where you actually have to turn around and ramp that debt back up even more, because now you got to borrow money to kind of take care of national disaster, and you go into a recession on top of that. Good luck for a minute trying to get some normalcy to the overall economic aspect of life, and also in terms of how equity markets should be able to respond going forward, because there's an implied level of debt out there that's hovering over the markets, and they're already saying that we're going to lose about 20% in terms of unemployment behind this coronavirus. That's the minimum. What does that do to the overall GDP? If you take 20% of people out of the workforce, 20% people out of the workforce in about 2 or 3 months, obviously, what's the matter of fact? Looking at it from this point, what does it take to be in a recession? You have to have what in terms of a fiscal quarter? You have to have what? Negative growth, right? And if you have negative growth in a quarter perspective, that's what they call technically you move into a recession. Or you have a lot of what? Short-term debt defaulting over that of what? Long-term debt, right? Yield inversions, right? That's what we had, right? February we had yield inversion. Remember they kept talking about them yield inversions? 2019 we had, I think, several yield inversions. But guess how they kept trying to pour ice water on top of that that hot flaming red light beacon? The Federal Reserve came in with the repo market operation. Required their what? Yield inversion. That means you were just inflating a bubble to try to smooth out what? Liquidity issues obviously causing people, that were just over leveraging themselves in credit, because there was no organic growth in terms of company value. So at some point, it was the crap was going to hit the fan. You just brewing a debt bubble. That's basically what it was. You was brewing the debt bubble. So typically when you have a moment like that and an 11-year bull run, when the market actually does cool down, and if it doesn't cool down probably like it should do from a natural ebb and flow and sine wave, and everything just V-shape, the bubble, when it bursts, even more. What's a good adjective? It pretty much explode. It exploded.
It's the Hindenburg.
Right. It's the explosion. So now you got to put all that stuff in the context to try to smooth all that stuff out. Right. And so guess what? The financials are hurting. The oil market is hurting. Right. Everybody's hurting. So it's not just one sector. Right. You see what I'm saying? Like what the housing crisis was, subprime lending, all that stuff. You knew what the culprit was. Here, coronavirus, caused the bubble to burst. But guess what? Everybody got caught with it. Excuse my language. Everybody got caught with their pants down. Everybody was overly leveraged. Everybody was thinned out because they chose the greed route. They were doing what? Buybacks and exorbitant dividends and exorbitant executive bonuses at a point when they needed that money the most to be kind of planning for a rainy day. And that was on the back that they knew that there was no organic growth in all of 2019. It was just Federal Reserve pumping the markets, which caused asset prices to run higher. So those are artificial margin values. market valuations. Literally, they were artificial. Okay, case in point. All right, you go out there and find those stocks that had PEs about. We had some stocks out there had a PE over 100. A PE, a forward-looking value of their earning per share growth over 100 price to earnings. TTD was one of them. I'm gonna list so many of them. It was just stupid, extreme valuations. They was bringing their revenue about 40 million, 500 million, 100 million, but they had a market cap about what, 20 billion, 35 billion, 55 billion, and you bringing in only $1 million in revenue growth. Them numbers don't add up. That means you're a bubble. Right? So this is the stuff that, again, that causes markets to implode, and that's why the S&P dropped the way it dropped. Like the bottom fell out of it. That's why Boeing dropped the way it did. Like the bottom fell out of it. And we can go down the list of how many stocks that dropped like that. And you're like, man, there's and you know, a lot of people that was in them stocks that were long that was buying at the very top. Guess what they were saying? Man, this got to be the bottom. It dropped some more. Man, this got to be the bottom. It dropped some more. Man, this better be the bottom. It dropped some more. Man, I'm finna go get this gun and go down to Wall Street and shoot somebody. If they don't stop this bleeding, bro, this better be the bottom. Am I lying though? Right? Because y'all seen this stuff.
You ain't lying.
Y'all seen the comments people putting up on Twitter and Facebook, and they can't believe it. They crying. Y'all seen the memes that been coming out like that dude from Kansas State when he's like, "Oh my God," he's leaning back like, "Oh my God." Right? You just dropped 100 on your team that night. You can't even believe it. Right? You like, this ain't plausible. Because but when people take that kind of approach, what does that say about that person? That means they was what? They were living in what? In euphoria. That's what they call irrational exuberance. Go read the books on irrational exuberance. Go read those old financial guru books on irrational exuberance and complacency and being an entitled mindset, and let people pump your head up, because that's basically what Trump did. Whether you for me against it, I'm just saying, he was on Twitter every other day pumping the markets. He made people feel entitled or complacent, excuse me, to a degree. People got very complacent. And at a point when markets are hitting all-time high, 339, 330, 339, whatever, and the people just running the market, it was like the market could do no wrong. Bad news was good news, and great news was like biscuit wheels and gravy valley. And with the wind to your back. The market just did what? Melt up, melt up, melt up, melt up, melt up, melt up, melt up. Bears were starving, reels were showing, Summit was touching their back, but they were right. Their thesis was right. The quantitative information was right. The fundamentals was right. But when the market is right, even when the market is wrong, you can't fight against what? Big money. You can't fight against institutional money. And on top of that, you had the Fed at your back. So that's what happened. The market melted up on artificial inflation, no organic growth. It was just buybacks that caused you to beat your earnings on earnings per share. Because keep in mind, anytime you buy shares back, what does that money go to? Your earnings per share growth. That's how come there's artificial beating on their earnings. Having ramped up earnings per share growth, but you go look at the margins and the actual money that was coming in revenue, it didn't add up. So it was a lot of complicated earnings report you had to sift through to see if the people really even be earning. Because they was buying back shares. It was crazy, man. Again, y'all can go back and look at some of my old posts, man. I'm not lying, man. I like, this is artificial. They missed their earnings, and people like, man, you crazy, man. Just, well, all right. I'm like, okay, my day coming. I mean, I'm not anti-market. I'm again, garbage in a way where people, again, finna get hurt, and that's where a lot of people got hurt. Because a lot of y'all knows, like I know, people were buying at what? They were buying at what? 335. They was buying at 334. They was buying all in on Boeing at 350, 360, thinking that thing finna get recertified and come back, because they kept lying to the public saying, what? We close. We finna get certified. We gonna be certified. They was telling the FAA they gonna get certified as if they was the ones gonna do the what? The check again. And so people got exposed. And that's why, again, just speaking about Boeing, that's why they dropped the hardest. That's why they imploded the hardest. They dropped now over what? Over 80%. Since this coronavirus, they didn't drop about 80% of where they was at, around about 330, 340, 350. Like, how are you Boeing? You see what I'm saying? Keep in mind, this is Boeing. When people say that, that's how they say it. Like, that's Boeing though. I'm like, so, they garbage. Because we found that they got exposed too. Did they not? They got exposed. all them leaks and stuff, man. It was like every other day something nasty was coming out about Boeing. Turned out they was a garbage ran company like everybody else. And so guess what? Look at that drop from what they call a drop from grace, right? A wretch like me. Look at that there. Woo wee. This is where I'm shorting her up in here. 330s, 319, 320. I'm shorting up in here. I've been short ever since, guys. Look at here. I've been short ever since. That's from 330 all the way down to where it's at. Hit what, $90 today? It hit 90 today. Boeing, bro.
Hey, wasn't Boeing the one that you back a couple years ago when they said they couldn't find those people that where the planes crashed into the water? You remember that back in the day?
Indonesia, yeah. Was that the one? That was Jakarta. Jakarta. I might have said Jakarta. But you had the Indonesian crash.
Okay.
That was Qatar.
Yeah, I don't know what actual plane that was. But good question, over. Good question. But I know the Indonesian Lions Air. That was definitely Boeing. Obviously, that's when the one crashed in Indonesia in the ocean, right? Obviously, at that point they barely could even recover the bodies because it was the ocean. That was the first major crash off. That's that MCAS. And then right after, look at what, about 3 months, how many months later, 3 or 4 months later, in come Ethiopian crash. Right? Again, what the stock do? Yep. It went from 448 to down about 340, 350. Anybody else, that stock would have been cut. It would have been cut in half. So people had corporate interests in Boeing. You know why? Because it was in mutual funds, it was in pension funds, it was in ETFs, defense plays, commercial airlines. It was a very, very, very weighted down stock component. I mean, Boeing at that point, I think covered about 7, 8, 10, 12% somewhere of the Dow Jones by itself. Some crazy number like that. So that means it's a very weighted average. People were scared. It was, again, too big to fail. Then guess what? Reality set in. It took the coronavirus, unfortunately, to pop the bubble of what? Boeing. And that's why it fell the harder, because it was a house of cards built on lies, greed, corruption, right? Greed over safety. Y'all saw the reports. I ain't making this up. Go look at the breadcrumbs. Breadcrumbs painted a picture that they were garbage. I don't care how much a person love a company. That's why I don't love none of these companies. All of them pumping up. They're garbage. Don't get caught up in thinking that just because there's something about it that seems to be great, or you have this kind of, people that have that fake patriotism. But it's American company. These American companies are garbage, just like any Chinese company. And my money going to your company. Run a tight company. Do right by your company then. If not, you know what I'm saying, you ain't finna, woo me, because y'all know as well as I know, again, people are buying hand over fist at 360, 380, 370, 350. I saw the post. I know people that trade this stock that was uber bullish. They were uber bullish. They was fighting me almost like they was like physically fighting me through their little keyboard, because I was hitting them with the point. I was hitting them with that. Yeah, and they couldn't take it. They couldn't take it. But in the end, and I can go show y'all right now. Hey, Eva Monica, what's going on, sis?
Hey, I didn't know y'all was still live. I was about to talk about work from home jobs.
Yeah.
It don't matter. We going. You know how we do. Going overtime. We just y'all know how this stuff. Maybe round robin. We getting out. Our financial sense on, getting our financial prowess building on. Because again, we are what we have in terms of ability to keep our own selves. What's the saying? How the saying goes? Steel sharpens steel.
Yep.
Right.
Iron sharpens iron.
Iron sharp iron. So again, show me what executive of Boeing that's calling you right now to kind of reassure you about how good the company going. Go. When the last time Boeing called you?
I ain't gonna never call you.
When the last time Boeing called you and said, hey, I thank you for being a good shareholder. Well, they say, well, you supposed to come down to shareholder meeting. Bruh. Y'all get my point? So it ain't personal. You just a number. You're a CUSIP. You're a prospectus. That's what you are. Put it in that perspective, which basically boils down to the what? A CUSIP number. That's what a prospectus is, right? Legalese, right? You're a CUSIP number. Yep. Y'all heard me saying you just a number.
Just a number.
You're expendable. You don't want to share it, give it to somebody else. And
that's right.
And so guess what? I take the same approach. I keep my mentality game tight. I'm gonna play them like they're trying to play me. right? Excuse my language. It's like the pimp and the prostitute
That's
relationship.
right. Talk to.
You know what I'm saying? So again, I'm gonna be the pimp, and Boeing gonna be the prostitute because they trying to pimp me. But I'm gonna reverse the game on it, right? They what they call reverse the game. I'm gonna reverse split them, right? But again, I'm just making it put it in context. So again, in that moment, I'm shorting. You know, 380, 360, 380. You got the market melting up when it shouldn't have been melting up. Y'all saw how the market was acting during that time, especially Boeing. Bad news came out that was just devastating. Guess what the stock did the next day? It went up. It went up 10, 20 points. So I stayed patient, guys. I stayed patient. I kept saying, okay, well, okay, yep. I'm gonna take my peaks, I'm gonna take my troughs, I'm gonna stay diligent, because when the levee break, for lack of better terminology, right? For my Louisiana people, I know what that's like. But when the thing breaks, I'm gonna be the first one on that gravy train to the downside. I stayed disciplined. I stayed within my fundamentals. I stayed within my thesis that I was right, even though when the market is nutty. And again, the drop from 330, 340 here, as you can see, that's when it started happening here. Again, even technically, if you look at it from a place of even the fundamentals, VWAP was lost, right? It came up and tested again, got rejected. It broke beneath the 20-day moving average here, which is this light blue line, if you can see it. And then this is the 9 moving average. And again, this is the obviously a weekly chart, so you know it's extended for that weighted value of time. It broke, obviously, the 20, hit the 9. It hit it almost like a, look at that, to the T, like a hairline. And it propped right at that 9. So I let you know that's what? That's manipulation. That's big money. Protecting this bottom, right?
Right.
And then guess what? It finally broke. It broke below the 9 moving average on the weekly. And guess what? Lights out. That's why the fall was so heavy on that first day. All right. Now, and guess what? That was February 24th, right? During that week, right? And so from that point to down to the 28th, I think that was the end of that week, that the trading week, whatever. That's when they made that big move from basically 320 down to what? 268. Now think about that. If you bought them puts, if you just bought the $300 puts at 324, and you bought the $300 puts, not only did it exceed the $300 handle, it went down an additional what? Bro, are you kidding me? That's an additional $32 off that weekly expiring $300 put at the 324, and them contracts at that time was not that much. They were not that bad, and you did that in 1 week. So again, I'm just, I know I'm throwing out a lot, but that's how you start to put this stuff into context. Because again, they had more to lose because they were doing all the the huffing and puffing, right, and making a lot of false promises, and and y'all heard the press release. Oh, the plane gonna be certified now. The plane gonna be certified this week. It's gonna be certified next week. No, okay, well next month then. Then they cut their production. That was a big blow. That means their suppliers had to eat the bag. And then they say, okay, well, we'll cut it back a little bit. And then they dropped that press release in January that guess what? We had to suspend production altogether. That means you making nothing. Dagger. And that was during this time right here. That was that dagger, right? Here we go, around this point here. That's when it really fell from around the 20-day moving average down within this point here, during that time of January. Where we at? January, around this point here, when it was up in here. Where we at? Okay, up in here. Damn, I'm gonna move back some. But it was around that point there. And then it just kind of trended sideways, treaded water, and then the levee broke. So again, I'm just saying, man, but guess what? Even at this point right here, how many people like when it fell like 268, they said, guess what? This Boeing, I'm finna add right here. Because this is a defensive play. It's Boeing. They're gonna bounce back. Next week, it went lower. Man, it said 250, man. This got to be the bottom. I'm adding right here. Guess what happened the next week? It went lower. Man, it's at 235. Man, I'm buying here. It went from 230, 240, all the way down to 163. That person that bought up here at 240.
Ooh, nice job.
Yeah, they at the soup kitchen for real. They really at the soup kitchen right now.
That's tough right there.
They can't even get a box of ramen noodles during the coronavirus quarantine. They can't even get no ramen noodles, right? Everybody at least got some canned good. They got straight ramen noodles and MSG, powdered chicken flavor. They're gonna ride this coronavirus out.
Take it easy on
Just keep it real. So again, this is the reality why you have to be disciplined and always remove your emotions away from investing in trading. I don't care if you even long-term investing, right? You know, so again, Warren Buffett even tell you that some of his old basic colloquial quotes. When everybody's fearful, you what? That's when you start what? Buying. When everybody's what? Buying and being greedy, that's when you start being a little bit more cautious and fearful. Like, oh, let me slam the brakes a little bit. So it's the irrational, it's the opposite of irrational exuberance, right? Because that's how the market moves, right? The market will have you convinced it's going to do one thing and then opens up, it does the exact opposite. So if you ain't planning for the exact opposite and you just thinking you're just going to have a free for all, that's how people get hurt. So you need to always watch your back, right? And when people always say watch your six, y'all know what they mean when they say watch your six, right? Watch your back. Well, in the military, I got a military woman on with me, and some of y'all might be in the military. Not only do we watch our six, right? We watch our 3, we watch our 2, we watch our 7, we watch our 9. I watch my 11. All right, and it's the same thing as we have in this conversation here now. We're doing the same thing in essence, right? We're watching each other's 360. Because you need other people to watch the market in a way where it protects everybody. That's what a good think tank does. It's like, hey, I was watching gold sector today, and this is what I saw. You're like, okay, good, that's good information. I know, oh, I was watching the technology sector today. This is what I saw for the tech side, right? The spiders of the financial, utilities, industrials, consumer staples, energy, you name it, telecommunications. I mean, all these different values that we kind of see as the weighted sentiment for market participation. And then you just again, that's what a good think tank does. So again, retail has to have its own little it's kind of a moment where you circle your own wagons, because again, they're not going to do it. Boy's not going to call you. Again, you got investor relations. I mean, how many people really call investor relations? I'm just being honest. How many of y'all, who ever called investor relations of a company and asked them questions about the company?
I have.
Okay, now what stock was it? Even my asking.
Oh, there's been quite a few of them actually.
What was the most latest one you called?
Oh, it honestly has been a while.
It's been a minute. So again, when you called though, what was you trying to get out of that call? If you don't mind me asking.
Well, I was trying to gather when the next news was going to be released.
Good question. I'm happy you asked that, because I knew that was going to be the question. Why do you have to call and ask when the next news release is going to be? Because at that point, the stock was going through probably a drought, right?
Typically, yeah.
See? Now, typically, you would think that HR, investor relations, people like that would already know that, right? Because investors are kind of get in antsy, right? Stock probably get pummeled. It probably fell below some very key moving averages, this, that, and the third, right? And the volume start dissipating. Institutional money start kind of drying up. And you're like, man, drop some news, man. Bring the stock back, man. Come on, man. Give us a balance. Give me something. And it just kept going lower. It just kept going lower. It kept going lower. You get my point?
Yep.
But you invested in because you're thinking they got your best interest in. Even at the point where you probably think they had an ace in the hole to drop, to save the stock, they still they saved it. They was like, no, I'm going to hold this little moment and then drop a press release. So again, they're doing the same thing. In essence, they're playing what?
They're playing a game.
Exactly. It's the again, it's the pimp and the prostitute mentality, because you just a member to them. You just a prospectus, right? And in their mind, they say, okay, if you don't like it, then you can always sell your shares. Well, it's easy to say that, right? They'll never say it outright, but basically it's implied. What are you gonna do? Right? Weather the pain. Okay, well, you bought in a little too high, right? That's how they're looking at you. Well, you didn't get it a little cheaper, but you say you long-term holder. But you say to yourself, okay, well, you can't come out and update your shareholders if nothing else. Hey guys, we got something in the works. Again, that's what you would think, right? Just from ethical values, right? Well, they care less. And then you end up seeing that they dropped a Form 4D or one of those Form 8K. Somebody got some new shares from within the board. Somebody got a little, pretty much a little a raise, right? Or somebody sold some shares, right? Oh, y'all selling shares? Oh, this was just a one-off. It was just a one-time event. Whoa, we ain't even got a press release yet about how well the company's doing though. And I hear that somebody's selling shares. What's up with that? You know, and that's how, again, you get my point. You know what I'm saying? So this is why you got to be on top of your game, because we understand the risk that's involved, right?
Yeah, the investor relations don't care.
They can care less.
They don't even work for the company. 9 times out of 10.
Yeah, some of them probably even third party. Even it's funny too. Some of them probably even third party, because it's funny too when they do a conference call. Because I mean, I can't count them in the conference calls I sat in on to hear earnings report, and you got like the little, little operator, right? Them some of them even third party. They pay for them. The professional service. They don't even got their own people in house to even regulate their conference call. They go out and buy another company, pay another company to even run their conference call, just to kind of parlay people in like J.P. Morgan, Merrill Lynch, Deutsche Bank that's calling in to kind of ask about the earnings. I'm like, man, again, when you learn as you go. Again, experience is the best teacher, right? So again, when you put all that into one little humble pie, well, what do you take away from that? I'm not depending on them, to get me where I need to go. The stock, obviously, is the vehicle, but it's dependent upon their performance value to take it, obviously in your mind, to take you where it needs to go, where you want it to go as far as your goals. So ultimately, I'm not going to get emotionally invested in any company, because all of them are pump and dumps. Because some of the greatest companies out there at some point folded, or they can fail. How many of you guys ever thought GE would be where it's at today? GE been around since your grandparents. Am I lying? And look, where the stock at today? How much GE trading at right now? Peanuts on the dollar. Ford been around since your grandparents. How much the stock trading at today? Ford, of all companies, about $4 or $5 right now. Ain't Ford like $4 or $5? Legacy company, offer a great dividend, but as a growth stock, do you think Ford a growth stock? Meaning a growth stock that you want to have in your portfolio? Anybody? Anybody got shares of Ford? I mean, if you is, I ain't coming at you that way, but y'all know what I mean when I say that. You trading it basically for the dividend. I guarantee you. I guarantee you. If you hold it for, if you hold it, you holding it for the dividend and the dividend only. And right now, it does look attractive. I'm not gonna lie. Ford look really attractive down here at about $4 a share.
I remember when Ford was $3 back in 2007, 2008. I'd leave it alone for a while.
But obviously, the market crash caused that. That was the market crash, right? So again, even in a say again, Sister Monica.
I think it was at like 10 something. They went all the way down.
Oh yeah. So right now Ford is at $4.54. Shut the front door. And it was at a low today. Actually, it was down to $4.10. Now again, had I been not busy today, because I've been watching Ford, I ain't stupid now. Don't get it twisted. $4.10, $4. Yeah, I nibble in on Ford, because guess what? Let that dividend get ready to roll around, and it's at the point where it's at its bottom. If you time the thing just right, you coming at the bottom, you get the upside in the stock price, and you get that 10%, 10.66 yield. Bro, I ain't finna fight against that. And you can get a lot of shares. You get a double payout. Share price increase, and you get that dividend at 10.66. So I'm saying, and so that's how you time the market. That's what fund managers do. That's what they got people in their offices to do. Everybody got a stat to look up. Somebody got some historical data to look up, right? And then from there, they say, well, okay, we'll take a position here, right? Or we'll add to our position here, right? Drop that 13D filing form. Let's get it. And keep in mind, you don't get a chance to see the 13D filing form to what? Sometime 2 and 3 months after it's dropped. Then you find out they had what? They got into a position. Then you say, well, how do I find out that before they get into it? Well, if you learn how to read the tea leaves, the volume, liquidity, right? Things like that, you learn how to what? See when big money coming in, because that's not what? Day traders putting that kind of liquidity into a stock, ramping it up that high. Am I making sense? For some of you guys, some of you guys know how to read volume counts, y'all know what I'm saying. Again, so this ain't. That's when it becomes not, again, not rocket science. So again, go all the way back. Look here. Looking forward back here. Look at this here. On the 3rd of March, $6-7 a share, all the way down here to like $4.10. Okay, back it out further. Go back to the daily. Again, look at this. This is crazy. $10 a share. Again, back on the 15th. Of 2019. Again, just kind of seeing when they're trending around that point there. Same way here, $9, trended sideways, chopped out somewhat, kind of like in a little flag, like it want, establish a little bull flag, and then it broke again. Again, Ford just been tripping over itself ever since. So instantly at this point here, what was people saying during this time frame here between October, November of last year? If y'all remember the talking points, they were saying what Ford has to do what? Reinvent itself. They have to reinvent itself, or they're gonna what? They're gonna phase out their best-selling vehicle to Ford F-150. They need something more than the Ford F-150. Right? Well, what do? If we can't beat them, join the income what? The Ford what? E-Mach 5.0 electric vehicle. Let's get into this electric space. Let's see if we can really compete. We got the money, old money. We can probably compete. Right now, again, look where your stock is at though. You have to really do some really bang out innovation to kind of really turn the ship around. Now it's gonna bounce at some point. The market bounce, but is it gonna bounce at the rate that a lot of other stocks are gonna bounce? That's what you got to ask yourself. So, and if it does, are you satisfied with that? Because again, this is my opinion. Again, this is my opinion. It's not investment advice. This is solely my little ragged opinion, right? And I could be wrong. But if $4 is the bottom, I don't know if the market really going to reset that yet and accept that, because I think there's still a little bit more uncertainty in the S&P 500, obviously in the overall market. But if $4 does hold, or if it comes down to pink up against 4, even if it slightly breaks below 4, and then kind of gets back up in there 4, that'll give me a sign, right? Because now we're establishing what, Eva Camille, we're establishing what? That supply and demand zone. We're establishing a point where that's support.
Oh, sorry, I was.
No, you will. We're establishing a point where we got a demand zone around that $4 level. Again, y'all know when the stock comes down to up against a point of support and then bounces, and if it keeps doing that, it's establishing a track record, right? Past performance becoming what? A window into what? Future profitability or future potentiality. Obviously, in this case, support.
A look back.
Right. So I do what? I take a small position there. I said small. I ain't saying big. I said small. I'll ride that $4 level, and if it holds, and if we get more clarity, and it bounces, obviously because we get more clarity in this coronavirus. Well, the best thing you got going for you, even if the stock only goes up like $1 or $2, $3, which is still good, but they got that dividend yield. Right, so you get a 2 for 1. You get a 10.66 yield, which is astronomically like crazy, right? And then you get a stock price bounce about $2 or $3, which is pretty decent for a stock that's cheap. So again, this is just me laying out how I view things in terms of my thesis and how you can quantify and find alpha in the market, and even stocks like this that are not necessarily a growth stock, not like it used to be. It's not a growth stock. Again, my opinion, but it's an opportunity, right? It's an opportunistic moment. That's all it is. Because I can't trust for it. Look what the stock price at. Look what the stock price at. See what I'm saying? Then you say to yourself, okay, well, look where it came from. Right? I was have to go way back on probably TradingView because trading not gonna let me do it on this chart. But if I go back to TradingView and pull up forward chart and look at it from a historical context perspective, and I say to myself, okay, well, man, again, this stock fell from the bottom did fall out of this stock, because it just hadn't rebounded quite yet. But again, I'm excited for that yield, that 10.66. Right? Go back. Matter of fact, y'all can see my chart here. Let's go back to even 2009, right? 2009 Ford was trading at like what, maybe $1.52. Hold on, let's go all the way back. How far can I go back on this? Let me go back to all chart on Ford. Right? Let's go all.
Ford fell from heaven.
Man. Look at that chart right there. This is since 1960. This is 1960. Come on, 1968. Man, that was a good year. Where y'all was in 1968?
Wasn't even thought of. Wasn't in the nutsack or any of that.
Space.
Where some of y'all was in 1968? Woo, good luck, plasma. Good luck, amoeba.
I was in somebody's dream.
plasma, using some Wranglers, some what Jordashes or something. Hey, bro. Ford at that point was trading at what, $1.60 something. Right? Again, this is Ford. Ford been around since when though? How long Ford been in business? 1800s?
Yeah.
Long time.
Right? Somewhere around there, right? Right? Long time. So at its peak, Ford was trading at how much a share? I think it has a few forward splits and all that stuff too. I could be wrong, but you can go back historically. You see if they have forward splits or reverse splits. You know how that stuff go. Sometimes it don't reflect in the overall chart. But even if you map that all in, just hypothetical, right? But either way, here, $35 a share. And that was back in 1999. What a good year, right? 1999. Right? Prince album.
It's 1999.
Right? Ford was partying. They had a nice little ramp up too in the 1999 and 2000. Look at that. From 2007, 1997, at that point when it launched from $11 all the way up to like 35, right? Going into obviously 1999, which is around April. But again, then it dumped. Something happened here, right? Again, we know about the 1987. This definitely, not 1987. We know about the 2008 crash, obviously, because again, here you go, right? Obviously, we know what caused that, right? Market just obviously imploded on itself at the point when the market sold off, right? So at that point, went from what, $8 to again $1.50, all the way back down to $1.50, back down to when 1968. It V-shaped recovered. And that's when the market went on an 11-year bull run, right? We just ended the 11-year bull run, obviously under the coronavirus. Unfortunately, sorry guys. I don't mean to be the bearer of bad news, but we have ended the 11-year bull run. But Ford began to again retrace itself, trying to gain back some of its gains. Got back up near about $17 a share, $18 a share, and ever since then, it's rolling back over. All right, you rolling back over here now. So they've been essentially trying to find their footing, over the past 30 years, 20, 30 years, somewhere around there. And they've yet to do it. And they got more competition now. Income Tesla, right? Income other cars that, obviously started revamping and innovating. So again, I ask y'all right now, whether you know this stuff or not, you're learning, does Ford seem to be a growth stock to you, a growth stock right now?
Nope.
What would cause Ford to be a growth stock ever again? They probably got to get bought out or something, maybe. Good luck.
Some kind of flying car or something really innovative.
Oh, they're going to have to come out. Right. It's going to be kind of like y'all remember the movie Avatar? Y'all watch that movie Avatar?
Uh-huh.
When people blew up the tree, the home tree, but it's like, man, and the village kicked him out the village. He's like, he got to do something stupid to gain their attention again. That joker went and found two rock Mark II and came flying in like he was in a Chevrolet, sitting on some 10-inch rims and with some switches. That joker came back like big time. Ford gonna have to come back like Tour Mark II. Bruh. I'm just keeping it 100. That's the only way they're gonna come back.
Yep. You gotta do something really, really innovative.
We're moving into what now? ESG. We're moving into environmental, social, and governance now. We're moving into electric vehicles. We're moving away from fossil fuels. We're moving into the Greta Thunberg rites of passage. Since they're using her, right? We're moving into that lane. And Ford just an old gasoline, relic. And they got the new Ford Mustang. That thing bad. It's bad. I'd be a buyer of the car, but again, and I just be a short-term holder of the stock. But y'all get my point. Y'all follow me a little bit? You know what I'm saying?
Oh, I'm here.
So when you're looking for yield in the market, and you're looking for investments that can give you, what you're getting into before you get into it. That's just my point. You know what I'm saying? You know what you're getting into. This is not rocket science to that degree. I want that yield. Ford pays what? 10.66 right now. They just increased the dividend. Which we pulled up that day when Sister Monica was on. We pulled it up. It increased to 10.66. Who wouldn't want a 10.66 yield value in terms of what that is from notional value? If you even got like a hypothetical, if you even got 100 shares in Ford, obviously 100 shares at a $4 stock, that's $400. If you bought $1,000 worth, right? You get that yield. That's a nice little dividend paycheck. So again, that's just Ford. And I kind of went off on a tangent on Ford, but I mean, you guys get the point. You see what I'm saying? You guys get it.
Yeah, man.
So that's why I say just think it all the way through, guys. I don't claim to know it. I don't know. I'm learning just like everybody else. But I will try to think it all the way through, right? And so I say the same for Boeing. Again, America's sweetheart darling, right? Y'all, how many times you heard analysts say that? Man, that's America's sweetheart company. That's Boeing. Like, so? That's Boeing. I'm like, and?
Right?
Hey, get your game, get your business there, get your game right. You know what I'm saying? Get about your business, right? You know what I'm saying? Then I talk to you. Again, I do understand though. I'm not crazy. If they get that recertification, which is a big word, if they get that certification, and that don't mean if they don't, and that's before they go bankrupt. Hopefully they don't go bankrupt before then, because they are now what? They are in credit alert status now. They are in credit alert status now. They've been reduced down to I think what a negative triple B. They get ready to be and then I think a negative triple B and a negative D in some aspects. I think the SP 500 is hitting them with a degrading in their credit rating. So that means people don't, now you become shaky in terms of whether or not we'll lend you money, because they maxed out that last what? They maxed out that last loan for 13 billion. They maxed it out, and they did it fast. They didn't do it over time. They took 7 billion out, then they came back and got the entire rest of that loan because of the coronavirus. And guess what they didn't do though? They did not slash their dividend. So that means they're using shareholders' money and they're using debt to finance the dividend to keep people happy to stay in a junk stock because they don't have no growth. They got no planes moving off the factory line. They got no certification in terms of when that plane gonna come back. Actually, they got a debt that's recurring and revolving because they got to pay for all those airline companies that got that 737 MAX plane sitting in the yard collecting dust and moles and spiders, right, and causing more problems and more. They got all that to deal with, and they can't compete for government contracts the way they used to, because now people don't want to give them that kind of business that they got all the other stuff on their plate. So Raytheon, Lockheed Martin, right, other companies like that are getting all the government contracts when Boeing used to get them. They can't get their space program off the ground. That Starliner, it was junk on its maiden voyage flight. It crashed, basically. It didn't do what it was supposed to do. So NASA scrapped them out the race for the space flight. Now Tesla and Virgin Galactic of all places, they getting all the money now in that sector. So again, make me feel good about Boeing just because it's been around for a long time. I'll wait. I'll wait. Again, so it's a pump and dump. It's a pump and dump. Prove me wrong. You know what I'm saying? Prove me wrong. Pull out your data. So again, until I see that those things coming into place, or I see a recertification, then you may get me to, again, I'm an opportunist. If they get that certification, I'll buy. Till then, I'm going to keep shorting it. I'm going to keep shorting it.
There you go.
Right? Till the blocks fall off. I'm still short right now. Right? You know what I'm saying? I ain't let up on it too. And I've been thinning it out. I've been, again, to the tune where, again, man, I don't even know if y'all, I still got that thing short. Matter of fact, because y'all not been adding to it, I've been adding to it and taking away. My average on Boeing right now, it was like, I think today, my average, I had like I was average at 230. I mean, at share price 230. I added to it again today. I brought my average down to 180. My average now is 180 short, 180 short. So that's $80 away. Right? And again, just for training purposes, I got over 100 shares short, minimum. Minimum.
Whoa.
Minimum. All right. So yeah, I'm playing the game. This is the game they play against us.
Dig it.
When they run you out your trade, shake you out, market maker shake you out. You blow a day trade when you don't have it to blow. They play a dirty game.
Right?
I ain't lying. Y'all been through it. You like, man, that was my last day trade, man. I was saving that trade. It reminded me, y'all know I like to use those analogies, right? It reminded me of the movie I Am Legend. Y'all remember the movie I Am Legend with Will Smith?
Yeah.
same thing we're going through right now. Matter of fact, I'm legend, right? Trying to find the cure, right? You know when he got that bacon, he was saving that bacon for years, right? A lady came in and fried his bacon. And I was saving that bacon
Right.
for that was gonna be my celebration. I was saving that bacon. You fried that bacon up. Like, no, you didn't fry my bacon. So again, again, make it make sense, guys. That you have to make this market make sense, and you have to have fun in the process where you don't be overly, overly tight. Where you can kind of, again, overthink this thing. Don't overthink it. It sounds good in theory, but you can't practice it if you have good practice. Good good things that you do to kind of keep yourself in check, right? Again. So yeah, man. So hey, man, this is the world we live. Yeah, and I love it more than I hate it. I guarantee you that, because I haven't found an opportunity out there yet. Me personally, where you can make this kind of money, given the right opportunity, right? No distraction, level head, ample amount of liquidity, ample amount of knowledge, ample amount of money that you can utilize when it matters most, where you can make these kind of gains.
Right.
Right.
Yeah.
Again, I go back to you again, Sister Camille, because you came out of the out of our little flower born reality. You took your own reign by the hands, but that day you made that $8,000 in one day. Man, I was never in a position to make $8,000 in a day ever before that, unless I hit the lottery. You only know how you felt on that moment, and you did it in a matter of 2 or 3 hours.
Yep.
Now you take a person raw off the street, not that's your case, but a person raw off the block in our own little ways, because we all raw off the block. I don't care if it was in corporate America or not. And then somebody say, well, hey, let me show you this, and you learn it, and then you make $8,000 in one day in about 3 hours.
Ooh, I was tripping.
Right. What is that gonna do to your psyche? Stop.
I was all messed up as a beginner.
You be shook up, right? You be shook up when you had that kind of gain your first day when you make that kind of money.
Yeah, just seeing it go up. Yeah, that was like, oh.
You been thinking somebody gonna knock on your door, like, man, hey, let me get some of that RS here. Let me get that. You thinking, you having all kind of wild thoughts. Right?
Yeah, beautiful.
Yeah, it's a good feeling.
Yeah.
Then you tell yourself, I could do this again.
Yep. I just got a little bag while we was talking.
See? Over there hitting the forest market up right now.
Yeah.
Over there getting it. See, that's what I'm talking about. That's what I'm talking about.
Yeah.
And someone right now gotta wait till tomorrow 8 a.m., put their monkey suit on, go out the door, burn gas, break, stop by Starbucks and get that $5 coffee and go to the grind, to deal with the coronavirus, deal with the headache, just to make a little money. Nothing against that, but again, y'all know what I'm saying. The goal is the least path of resistance. Let's get there.
Yep.
Right. Again, I'm in the same boat with everybody else. I'm learning like everybody else. I'm learning like everybody else. I am no different. I am no different.
Well, I learned from you, so.
And we learn from each other. We learn from each other, so that's why I love it, because it's a peer review. That's basically what it is. It's a peer review village where everybody's comparing information and data based upon what we're able to obtain, right? How level we dig to find information, right? We're data chasers, right? Data hounds. I used to say back in the old days, we're data hounds.
Right.
A hedge fund manager got people to do it for them. They got people in house to do it for them. You know what I'm saying? We got each other. Get excited. Reese and Cephas, right? In living color. Reese and Cephas. Together forever.
Reese and Cephas.
Old school, y'all remember that?
Oh man!
Or the other dude, what the group? We still together. Right? They try to kill each other every day, but they still together. All right. Yeah. And so again, real quick, right? All right, I'm getting ready to go eat me some dinner. I know you guys been rocking out too. Remember when the buddy came here, our brother Trade Doc came in, he dropped that knowledge that the future was what? That the market was what? something happening, and the market start ramping up.
Right.
Yep, and the market started melting back up. It went all the way from 235, which it closed at, up to 247. It peaked up by 10 points before 8 o'clock. Coming out of 4 o'clock retail trading, it went up by 10 points between 8 to 4 o'clock. 4 o'clock to 8 p.m. Did it not? We watched it go up, right?
Yes, we did.
So instantly people started feeling bullish on the market, didn't they? I'm pretty sure some people did because of the way the market closed, right?
Yes. Well,
that
was the close of the market, and then it started running up.
Yeah, it went back up. It went up another 10 points, right? 10 points from 235 up to 245, right? I think so. Oh, somebody talking about. I'm gonna close you guys. I don't know what's going on. Right. But yeah. So real quick, let me show y'all this right here. Right. This is why you don't panic. You stay with your thesis. Right. You stay with your game plan. Let me show y'all this right here. Again, not that it matters, right? Because we know the market's turn. Where's the futures at right now? Where's the futures right now? Oh, I'm sorry. Is it showing? Can you see my screen?
They're down.
It's blurry. I can't see what the numbers. I can't see the numbers.
Oh, it's probably.
That's the future chart.
Yes.
Oh, the futures are down. Yeah, that chart to the right.
They went up 10 points after hours from 235 all the way to 2. Matter of fact, it went up more than 10 points. It went up around about 246, 247. We watched it, right? It melted up 10 to 12 points after hours. And remember how I broke down to y'all what they're trying to do? What were they trying to do? Get it up off that That 50 level retracement on the Fibonacci bands, right? Because that's a major point of support for the SP 500. It's a psychological level too. They need 235 to hold. They need 235 to hold. It needs to close above 235 psychologically for traders, right?
Yes.
And so you had a repo injection market that came up because the repo operation came into the market. Remember, I broke that down to you when they did the repo operation early, and they did it to get the market up off the lows, so to speak, right? Even though it wasn't the daily lows, but it was at a point where they need that 235, that 50 level retracement band on the Fibonacci to hold. That way you can keep investors feeling confident, right? So instantly you saw that, you say, okay, well, the future market probably going to be up, right? That's how we learn stuff, right? We say, okay, the future market probably going to be up because they're trying to keep the market up. The market already, right now, and that one no more than maybe about 2 hours ago, because right now it's 10:30, right? We've been grinding all day today, right? Y'all know what? Y'all remember when YouTube used to shut down after about 8 hours? Y'all remember that? YouTube
on a live chat, right?
Yeah, it shut down. Now
it was 6 to 8 hours used to kick us off.
It went, exactly, right? Now you can go hard all day. It seems like I went live today around about what? I started mine around
12 hours, boy.
I started today about 10 because I had my errands to run. Brother Chaos Rain held it down, him and Chris, so I came back.
Yeah, I was gonna fire Chaos. I was gonna fire him.
He was going in. I saw you in the back chat going at each other. I said, "Get him, Mo, get him, Mo." And he was getting a bit, but I definitely appreciate that, brother, because he held it down for us and helped us, get through a little bit of the dead part. But again, just going over where we are, man. Look what the market's at now, and it's going lower. Look at this here. Look at this. Why did the market reverse? If it melted up 12 points after hours?
Because it was fake. It was pump.
Did we not say that? Did we not say that?
Try to get people trying to infuse money into it. Try to get
right. Did we not call it? We were all here together saying this is artificial. This is fake. Right? This is artificial. Don't fake fall through. Who's saying all that? Now you down. Here we go right here. This is why we study. Just why you can't get us. You ain't finna just get us like that. You ain't finna get us like that. Because I know people that was buying the market during that point. I can go show you right now on Stock Twist.
People jumped in that. I mean, you got to know that if you jump in something like that, that's not long term. That's like a scalp. And you hit that and get out. Especially in a market like this.
Exactly. I can show you right now when people are buying that fake artificial pump up after hours, and some of them trapped because they were buying retail. Not even the futures at that point, because SPY office still open to 8 retail style. They was buying the S&P 500 at that point. And now, if the market sits where it's at now or goes lower, they fried. They fried turkey right now. They fried kale. See, this is why you ain't finna get us. You're not finna get me, right? And see, that's why, again, when I choose to not close certain positions, I stand my ground. I stand my ground for that reason. I understand my risk, but I stand my ground because I understand the complexities of the market, where there's more weakness in the market, right, to the downside than it is strength to the upside. It's risk off right now. Y'all know what they say when they say risk off or risk on, right? When they say it's risk on, that means what? It's risk to the upside. I mean, risk is worth taking to the go long. When they say risk off, that means guess what? Don't be trying to go long, bro. Don't try to just be trying to test.
You're
not gonna win that one.
Yeah, I'm not lying. That's when every time you hear analysts say that, or these big talking heads, these hedge fund managers say that, man, it's risk off time. You know what they're saying, right? That's code word for saying, hey,
don't go along.
Right? No. Retail don't understand a lot of time because they ain't probably picked up on the lingo yet. That's what they do. Oh, we're gonna go all in. Let's go all in. Right? They would sound like what the little dude named, the little gummy, Mr. Bean. We're gonna go. They would go all in and get crushed the next day on a liquidity flush. Right? No, that's what happened there with him. Got him. They finna get a liquidity flush like none other. It's gonna be like hellfire and brimstone coming down on their backs. Because they ain't learned how to get. Now we going down about 700 here. We finna crack. They go 700. There's your futures market, ladies and gentlemen. Welcome to the wild. What Buddy be saying? Welcome to Mr. Toad Wild Ride. Welcome to Mr. Toad's Wild Ride.
It's getting ready to go down.
And look at gold trying to pop.
This is good for my SQQQ.
There you go.
Yeah.
I don't know if you held any of it, but again, you probably got up out of there. But again, if it holds, then that's gonna be in play tomorrow. Again, gold trying to rebound and bounce. It's still struggling. It's been beat up. It's thinly liquidated from off its highs. Again, everybody getting beat up. Look at oil, guys. Can y'all see this oil chart? Look at oil, you guys. Who would have thought a barrel of crude sweet oil is $22 a barrel? Y'all can go buy about a few barrels and put it in the backyard right now. That's like crazy, bro.
I need to go gas my car.
Right. And you load it in your little hatchback and drive it home. That's easy. A barrel of crude oil WTI is $22 a barrel.
What?
Bruh, go get y'all chemistry set out and learn how to turn that fossil fuel to regular petrol for your car. Load up, man. Don't even worry about going to Shell and paying the tax on it. Make your own.
Man. Be in the garage blowing yourself up.
Getting mixing that stuff up, boy. Even pouring you a little bit of that, that 99 proof golden grain liquor in there too, boy. You got that nitric oxide, that special brew, right? You can outrace everything on the street tomorrow.
Ain't nobody out there be out there driving.
Right, you're right, because that Rona got everybody inside the house. You ain't lying about that one. Ain't nobody out there testing it. Except them people in Florida. I take that back. My dang old family down in Florida. Them joker boy spreading that virus.
Yeah, they crazy.
They're wake up next day with that Rona and a venereal disease. Good luck. Good luck. You want to party that hard. But look at this. Seriously. $22 a barrel. Come on, real quick. All right, then I'm gonna go get some dinner. I know y'all. Thank y'all for hanging out with your brother again. I do appreciate y'all. Know me. I'm very humble. But again, this is what we studied for. This is what we game plan for. Again, y'all know I was born in this. I was born in the all-nighters, and this is how I came up, right? We have learning how to trade and stock. We looked at like 1 million charts in one night from 6 p.m., 7, 8 p.m. to always like when the market opened at 4 a.m. Jokers just be going to bed. The market be opening up. We've been up studying that late. Right? Yeah. That's how I came up.
Yeah. That's when I first started.
Yeah. You know what I'm saying? I'm grateful for that now because I'm like, man, see, that's a worthy sacrifice. I'll take that. To what I know now, and I'm learning more. Look, guys. Oh, I ain't making this up. Look at here, guys. Let's go there. Let's do it. Let's get it. Look at here. When the last time oil was at $22 a barrel? Let me pull my chart so y'all can see this here. That way, come on. Matter of fact, let me go to the overall. When the last time oil was at $22 a barrel?
I can't see the date.
Was that 2005?
Let me blow it up here. Let me blow this thing on up here. Let put a little something strange for a little piece of chain.
Oh.
Hold up. Let me pull it. Let me do this right here. Let me do it this right here. Let me do that thing right here. Let me hold up. Which one? How can you trying to see how you can blow it up. Yeah, I think y'all can see it. Can y'all see that line I put on there?
I can see the line.
Yeah.
Okay, let me get a fuchsia color. Let me get something that's look a little, that's a little bit more.
I can see the line. I just can't see the date.
Okay, yeah. So let me come over here and see if I can. All right, I got to squinch it in and pull it like this here. All right, let me squinch it back.
I can see it now. I can see it.
You can see it a little better now?
Yeah, I had to turn my thing sideways.
Your phone? You're on the phone? Okay. So right here, guys, if y'all can look at the bottom of that date down there.
February 2002.
Right? February 2002.
No, that's January 1st, 2000.
January, okay, you were January, February, because it's it's right there. My bad, because I did
you
move.
Moved
my bad.
it.
I did move it. You right. So again, what year is it is? What year is this right now? It's what 2000 what? It's 2020. And this is what 2000. How many years? Y'all know my math ain't good. How many years ago that was? That 18 years ago. Some of y'all got kids probably 18. Right? Y'all go with gas was trading that peanut, right? And gas was cheap back then. You go fill up about 3 cars.
You ain't lying.
Gas was about what? $2, $3, right before 9/11, right? Because y'all know 9/11 changed the game, right? Right. That's when it went back crazy. Yeah. So this is why, and again, that's how you could when we go back and look at data for as a quantitative value, right? When people see you got people who are statistical majors and people like that, they go back and do historical timelines into moments in history that kind of rock the economic aspect of our economy. So we know what happened during that point was 9/11, right? The war took off. What year was the war started? It was like what 2000 what 2, 3, somewhere around there. 2003. It was 3, right? 3, right? 2003. So that's when we knew it was going to war with Iraq, and obviously it was whether you for or against war, it was an unjust war, right? They didn't have any weapons of mass destruction. We know that now. But it didn't matter because guess what? It was a money grab, it was a land grab, it was an oil grab, it was about the resources of the ground. And I can say that because I'm a veteran. So guess what? I earned my right to say it. Now whatever. So guess what? Oil was $22 a barrel. After the fake war kicked off, it went all the way up to how much a barrel? $140 a barrel. Y'all remember that point gas was how much for a gallon? 5 people in California paying like $7, $8 a gallon.
Yep.
A gallon, bro. You had to ride a moped. You had to ride a moped just to get the gas.
Mine was 40 to 5. I remember that.
Still walking.
Bro, you had to walk to the gas station to bring it back to the car, to even put it in their car, to even make it to the gas station, to put a little bit more.
Hey, that's when I learned.
I remember hearing those stories, though. I'm not lying. I remember. Oh, go ahead, Mom. I'm sorry.
Oh, I said that's when I learned to do a fuel budget, a gas budget, and I only fill it once a week. I was like, I don't care where I gotta go. I better do it en route because I'm not.
Right. You were driving like you was under the coronavirus at that time. You could only go one place right back home.
I keep the same budget to this day.
We was on the coronavirus way back during that time because the gas prices forced you inside the house, bro. You couldn't even go out and play. You couldn't burn them wheels. Matter of fact, I remember it was so bad. You hated to even have a poly traction moment because you burnt gas. Like if your child was running and you ain't going nowhere, man, I just burnt some gas. People used to make just like that. Man, I just burnt $1 $1 worth of gas just that fat. Man, oh man. It was so funny, man. It wasn't funny, but it was funny. So a barrel of gas at that point, a barrel of crude oil was $146 a barrel in 2008. Obviously, I was even going into the crash that we had, and we were still feeling the residual of the Iraqi war. Keep in mind, because that was a lot of debt that we accrued, right? We accrued, same way. But we were still under that debt, guys, that we kind of took on the back end of the war, right? Because how long did the war last? Right?
5 years.
Just what 10 over what you talking about, right?
10
Yeah,
years?
we kept kind of, we really, on the back end.
Last year? No, 2 years ago, maybe 16.
It seemed right. It seemed like right, but how much trillions of dollars went into that war? Trillions.
Oh my God.
Trillions.
I held a few of it in my hand.
And guess what? They kept telling what? The American people do what? This is for what? This is for the what? Country. This is for country, right? This y'all remember the talking point? This is for country. Everybody got to knuckle down and kind of bear the sacrifice. And they were pumping trillions and all into the defense budget, right? The defense budget went through the roof. The defense budget was like stocks like Raytheon, Lockheed Martin, Boeing,
Right, Halliburton,
BlackRock, even BlackRock fund managers. I mean, a lot of Schlumberger, y'all know them, Exxon, Shell. Man, come on, man. This is why we got to get on our game, our financial literacy game when it comes to again understanding economics in relation back to private companies, in relation to government values, government contracts. Obviously, Sister Monica, she's giving you a game on government contracts, how that works. This is how they play the Main Street, and they leave you stuck holding back. So they told you, hey, it's worth it to pay $5 or $6 at the pump, because at the end of the day, it's gonna be really good for y'all on the back end, right? Remember they kept saying that. So okay, prove to me ever since then. Here it is, 2020, and you just not back down to how much a gallon? About $2 or $3. It took 20 years for the gas prices to get back to around about $2 to $3 a gallon. And at some moments in between that, we had some little moments when it kind of you got some little happy moments, right? And I say that because y'all remember when even with Obama, when he got in office, at one point they had got the gas budget down at some point, and guess what? That's when it was right here. See it right here? It barely came back down after a while, and that was around about some 14 something years into after the war scenario kicked off. So you see, again, people tell people to miss you with that craziness when they come to you about that about economies and companies. Man, miss me with that foolishness. Miss me, because now you know how to go back and look at the data and see what was going on during that time in history. So this is not this is unprecedented, right? Because again, you're talking about $22 a barrel. We haven't been back this far since 2002.
Wow, that's 18
so that
years
means
ago.
Yeah, fossil fuel people had children then that's going to college right now. Bro. And now
That's why they did all that mess. They be lining their pockets. They get all those contracts over there.
Yeah. And we right back. Look at that chart right there. That long chart period between 1986 all the way around, to this point here when the gas was trading at $20-some odd a barrel. So this is what you call greed, inflation. This is them doing a marketing blitz, running the price of barrel oil up. Come on, really? Really? $1.46 for a barrel of, man, stop. That's price gouging. That's criminal. That's criminal. And all of a sudden, America found all this kind of untapped reserve just out of thin air, and we're producing more oil than even some of the Middle Eastern companies all of a sudden. Really? Oh, y'all just found this oil. Oh, okay, I get it. Y'all just happened to pull one of those Beverly Hillbilly moments, right? You were just kind of shooting at a possum, and then everything, some bubbling crude came coming up. Really? Really? Oh, y'all knew that was oil already there. And you were just trying to use everybody else's oil at this point. Just you can get in there and set up a strategic hole and keep an eye on the people in that region. Now you got the oil, the land, the restructuring, the rebuilding, all the contracts. Come on, man, don't play with me. Y'all better learn how to, man. Look, I know y'all get it, but again, when I say stuff like this, y'all know exactly what I'm saying, without me having to say it outright. Yeah. So how are you putting all this trust in these people? That's my question.
Trust in those.
So I'm saying that from a place, even as an investor. So when you're thinking about these companies, right? Because the government, fund the money into private companies, right? Again, that's what a bailout is. If hello, light bulb goes off. That's what they do when they do bailouts. Airline industries, Boeing, all the cruise, all that stuff. People got Lehman Brothers, all that mess. AIG, all that. They banking out, they bailing out criminals, white collar criminals, basically.
Right.
And they convince you that it's okay.
Exactly.
Right? and they tell you to have put away 3 months or 6 months worth of what revenue. In the case of an economic downturn, you need to have dry powder on the side to protect your family. But that's what you pay taxes for. So when a true economic headwind hits, who do they bail out first, you or the corporation? Go.
The corporations that got billions, and the average person lives paycheck to paycheck.
And they already fat, and the corporation already fat, stacked with it,
big and fat.
And they say, well, it's for to keep the economy running because we need. No, you don't. Let them fail. Exactly. They'll let you fail and don't come bail you out.
Right.
Matter of fact, drive past you and hit a mud putt on you purposely, just to get you drenched in mud, like loser.
Right.
Loser.
I don't give those people money.
And spin off on you. So again, I say that to say this. Again, get the kind of mentality behind you. You don't even tell you this, but get the mentality under you. When you're dealing with your money, you call the shots how you want. These companies, again, look, you doing them a favor. They ain't doing you one.
Exactly.
Right? They need to earn your money. So don't let them finagle you and sway you into saying, okay, well, we're gonna do something here in a minute here to kind of the shareholder, whatever, man. I'm a ride. I'm a trend again. Trade the trend. Trend is your friend. When oil fell from grace here in 2008 under the market crash, how many people y'all think that was preaching all in the market and this you patriotic this that third, right? This for the country, right? God and country. How many of those people turned around and started shorting the market then? Wouldn't that have been unethical then? Why would you want to short it then? Stop, man. People became billionaires on this dump right here. People became billionaires off this dump and millionaires. 146 all the way down to $32 a barrel. Shorting this, that's how people become billionaires. That's how Ray Dalio and what the guy named David Tepper, all them guys, right? A lot of them guys became billionaires. Lee Cooperman, Bill Ackman, from another Mark Cuban, obviously gained more billions. Man, we're gonna list some of these people, some of these famous short sellers, so we can go even back and find some of them real, troopers out there. The guy that called the crash. Matter of fact, the guy that called the crash. Y'all been in the movie with the Boiler Room.
Right.
Some of y'all been and watched the movie The Boiler Room. Bro. Overnight, you know what I'm saying? So we have the same ability. Ain't that something? Ain't no fun when the rabbit got the gun.
Dig it.
So again, I'm just saying it because your day, you can easily be in that moment, or you can be that person. Once you get to that level in your trading, and really learn how to, again, manage a lot of things that we're stressing every day, that could be you. And some of these people are average, everyday people. They was nobody special. They didn't have degrees from MIT, none of these places. They were average people. Some of them, they'll tell you their story. They were poor and all this stuff. We immigrant family, this and this. We were poor and, whatever. They shorted the market. They showed you how patriotic they were. They were claiming patriotic, but they shorted the market. That was supposed to be looked at unethical. That's what everybody's screaming for now. They're trying to get everybody. They're trying to get Trump to ban short selling right now.
Oh yeah, I meant to say that. Yeah, they don't want you to short.
That's what everybody's crying for. Bulls are crying now because they had a good melt up in all 2019. Right? I'm still a bull, but I'm speaking strictly from a bear perspective now because again, I trade both sides. But people crying right now and telling Trump the force enforce the value that we shouldn't have no short selling during this time period right now. I'm not lying. Y'all been seeing some of the articles and people crying about short sellers. Like, why would you do that? You weren't saying that the market was melting up. You were saying ban going long for a moment. We go ban going long right now. Nobody go long right now. Everybody stop going long right now. Imagine that. Man, people are like, man, you crazy, man. I wish you would tell me I can't go long. Again, guys, I'm just saying, man, this is, you know what I'm saying? What's good for the goose got to be good for the gander. You can't have it both ways. So guess what? We're in the game now. We're here now. We're kicking the door in, and we're saying, hey, we're coming at the market from a different perspective. We are our own generational class in the market. No matter what our age group is, doesn't matter. But at this time in the market, we're dealing with what? What the market is providing for us.
Yep.
And we saying, okay, what's the market looking like from a historical context? When we backdate it, when we do our 52-week charts, then we do our what? Our what? Full, year-to-date charts. And then we do our 3-year charts and our 5-year charts and our 3-month charts. And again, our forward chart back to 1968.
Right.
Our oil charts all the way back to 2002, when the last time it was at this price a barrel. And then we see whether the pivot points are, right? Because that's what you're looking for. Where's the bottom in oil?
Right.
You know what I'm saying? So if I say where's the bottom in oil, right, and it's dumping the way it's doing, I go back to 2002. I say, oh, I see a major point of support around about what? About what? $18.93 a barrel. Boom. Well, where did I get that number from? You pull that out your hat. No idea. I went to the what? The charts.
Right.
Chart told me that. So roughly about $19, $19.50, $18.9. That's the support. Those are the pivot points. I'm not making this up. So guess what? If big money waiting for this thing to get down to what? This point here, this round at the bottom here, right here, as you can see here, if they waiting to come in here at 1908, then we'll see. It has potential to go there. No, why? Because it's closer to that point than it is back before. Right, and it's to its highs. I bet you that. Right, and it's obviously actively trading right now because it's the future market. So you still moving. You see, it's still pulsating over here. They're trying to get it off them lows. They're trying to save it.
They ain't gonna happen.
Yeah, so it could easily go down to that point. So guess what? If you think about taking a position on oil, because it's still showing a mad weakness, right? Well, how do you say it's showing weakness? Well, look at this big bearish engulfing candle. That's enough to make me feel like that looks like a firecracker. That looks like a mad firecracker right there, bro. Right, them old school firecrackers, right? Now the TNT sticks like on that's a mad looking firecracker right there. That thing ready to explode to the downside some more possibly. But who knows? It may reverse at some point. But again, this is how you chart stocks. This is how you go back and look at historical precedents and say, this is the next level of support before it breaks. If it breaks this level of support here, again, which is, again, 1931, 1950, whatever, it's penny on dollar. The next major leg down is roughly around about 1650. After that, really? Yes, the next level down by 1650. Then at the mad point of the real bottom is around about $11.10. So that's why Trump came out and said what they have to do, what buy a lot of what reserves. They've been loaded the reserves of oil since it's so cheap now. They're trying to save the oil market, right? Remember he said that on that last Friday press release when they did that press release last Friday. Y'all remember that?
Yeah, I missed that. I wasn't. I didn't check him out.
You probably heard, probably laid in some sound bites or seen
the sound bite,
or just magazine. They think about buying some of the oil reserves. It's so cheap. Guess what? You know how much oil was trading at that time when he said made that press release?
No,
it was at $32 a barrel.
Woo.
So that means it dropped additional what? $10 more since then. So that means that press release did not save the oil market, apparently.
No, they ain't got nobody to buy nothing. I mean, nobody's working. They got to pay. Ain't nobody gonna buy nothing.
Not only that, people don't see what value in it. It doesn't have a demand. Like, obviously right in terms of that, but in terms of people who buy this stuff, like on the institutional side, businesses is at third. They're like, man, no, bro. I'd rather get it cheaper. That's what y'all waiting for. Why are you trying to run me out there in front of a Mack truck and pay for a higher that I can get it? Because everybody trying to wait each other out.
Right.
This is greed, even on an economic downturn. Game is about low, sell high. So again, I'll be the same way. So I'm just trying to call the nearest people. I'm trying to call Marathon or somebody maybe in PA Hey man, can I get one of them barrels? I don't know how to do it, but I'm gonna call somebody. Hey, I can get one of them barrels, bro. You know what I'm saying? Come on, man. I throw you a little extra there, man. Let me get one of them barrels. I know it's only $22 a barrel, man, on the market, man. Come on, man. Work with me. Work with me, man. Work with me. You know, so yeah, you know, hey, you know, we study, we learn, so we can earn. You know, so I just, you know, I hope we taking something from this, man, and that's what it's all about. You know, that's
I always, you know, hey, it's what we've been doing for the whole time I've been trading. So
yeah.
definitely,
It's vantage points. You're here to leverage vantage points, right? You're here to establish a vantage point, a launching pad, a point of leverage, right? Because that's what life is about, leverage. Because if you're not leveraging it, somebody's leveraging you. Let that marinate, right? You learn how to play chess, not checkers here, right? Not to be the brunt of the joke, but the one that's delivering the joke.
right?
Right? So, because now you're moving from a place of leverage, right? You're not desperate, and again, you're not, you know, ignorant to some of the most, you know, in our mind, some things that's very detrimental to your well-being. People can't play you. They can't play you on that 30-year note. Like Monica, you know, caught the people up the other day. That was like something sweet when she came in here saying that, talking about that thing. She caught them joker red-handed, right? Sister Monica, you there?
Nah, she gone.
Okay, I can't. I moved on. Yeah, it's late, but yeah. So again, you know, that's the futures market. 100% right, brother Ebnar. Right, Ebnar. Knowledge is power. Knowledge is power. Hey, what's going on, family? Got some guys going on. I see people came in. I'm sorry. I you know, get to talking and get to showing my screen. I get, you know, lost in translation, so to speak, as they say. But yeah, there's your future market one more time, guys. Before I go upstairs and get me a late dinner, right? Get my little late dinner, right? Because I'm sacrificing. There's your future market. Why is the future market down almost 1,000 points? Bro, sis, why are we down 1,000 points?
Because they're pumping money.
Or they pumped money into it and it didn't do any good, so it's back down.
They were trying to buy the support.
And there's no demand for it.
They used, they fired up the printing press like Gutenberg. And it did, again, how many times they've been trying to catch this falling knife?
Too many.
Jerome Powell somewhere right now probably on cocaine. He got some strippers. He can't take it. He can't take it. His beloved debt bubble didn't burst. Trump definitely can't take it. Y'all can tell Trump demeanor didn't change. His demeanor didn't change. Listen, watch people, study people posture, their body language, their words, their inflection in their tone. When that point when you was sounding very confident and arrogant, now he's eating humble pie with earthworms in it and maggots. He can't talk that talk the way he was trying to, you know, talking it before. Because you definitely can't walk it because the data don't say so. Again, I ain't wishing bad on nobody because all of us are going through this right now. So we're all affected by the Rona. However, again, if you got your game down tight, you should be able to weather these storms. This ain't the first time we done been in a scenario like this. So again, you overextended yourself at a point when we fired all the bullets out the gun earlier when we didn't necessarily fire the bullets out. Y'all remember, y'all heard that talking point. Why are you cutting rates now? We don't need to cut rates. Why are you cutting rates here? We don't need to cut rates. Why are you asking for negative zero interest rate? We don't need negative zero interest rates right now. We saving that stuff for a rainy day. That was the contrarian people of the market. That was real, true, unbiased, nonpartisan, bipartisan, economics or economists, economists were saying, why are we cutting rates here when we didn't need to cut rates?
Right.
Right. And now those people are what? Are the smart people in the room. They're the smart people now. You fired all the bullets out, and now we only got one bullet left. I'm not lying when I say that. We got one bullet left in the chamber, guys. And what's that one bullet? If anybody know, that's falling the interest rates. What's that one bullet we got left?
Is it negative interest rates?
Exactly. How far are we away from negative interest rates?
Soon, if I had to guess.
A quarter basis point. Which obviously relates to, obviously in terms of the technicals, around about 0.27, 0.28 before we go into negative status.
Mm-hmm.
That means we got one bullet left. This is Russian roulette, bro. Spin that 6-shooter revolver around, drink your little whiskey, and call on your deity. And what? Your turn, bro. Bro. Europe, a lot of them countries already down there at negative interest rate. They fire all their bullets way too soon, prematurely. They just unloaded like it was a video game, unlimited bullets. That's why they're hurting the worst right now. Us supposed to be in the benchmark of the global economy. Greed kicked in, and we fired bullets off when we didn't need to. Nobody saw Rona coming. Nobody saw Rona coming, or nobody saw Rona lurking. So again, I'm not playing Dr. Doom. I'm playing Dr. Let's learn from this, and we're going to make sure that we're good to go when moments when everybody's panicking. You got your little extra sitting away in the stash somewhere. You got the ability to go into the markets and pull out of it when people are worried about where the next meal is coming from, where the next paycheck is coming from. Where's that governmental system going to kick in, right? You have a skill set unique, unlike any other, even though it's anybody can participate in it. It's not like it's, for a certain breed of people, although it is, but you practice for this moment. So right now we're not panicking. We're not in fool's gold mentality. Again, you want your family safe again, but as far as being able to find a way to get a bag, again, utilize it properly, you're not panicking. You're not trying to rush into the market to save it either. I'm going to go save the market. I'm going to go buy a Boeing at 260. This is too much. I can't take it. It's too low. You got to bounce. And you already down now 160 points. You like that dude that y'all remember that little meme came out with Buddy that showed the apple on leverage on Robinhood that went viral? Y'all remember that?
I think so.
Everybody remember that meme. That he showed the apple in the earnings. That's when Apple went game bust to the upside. He used leverage. They messed around and gave him it was a mistake. Actually, they gave him like 10x leverage, something like that, 9-10x, something crazy, and he went all in down there on Apple puts. And Apple went skyrocketed. It went up like 30 bucks a share. That dude went down like $50,000-$40,000 on that trade, something like that. And he was like a young dude too, and his face was looking at it. He recorded it in real time.
Oh, I remember that.
Y'all know him. That dude, man, he famous now. He famous.
I remember that.
He famous. And he got to pay that money back, of course. He don't get no do-overs with that. He don't get no government bailout on that. Ain't no broker do-over on that. So again, he probably had to move it back in with his parents. They probably been cussing him out every single day. Again, you're gonna learn today, kind of mentality. You know what I'm saying? So we're beyond that now. We don't have to worry about that anymore. Well, not that we had in the beginning, but again, you learn as you go. You learn how to mitigate risk. You learn how to be more cautious. Again, and it's pretty much your decision making. Let me just put it in the context again. But again, don't be emotional, because people hype them up to do that. I know a few people, I guess, in passing that know this guy or whatever. Because y'all know, chat rooms are, small. We're a small world, small community, people. But I can only imagine the people that was pumping them up to do that. And it's like, man, do it, bro. Do it, bro. Man, do it, bro. And he in trouble now. What I'm saying? It's amazing. So, we're not going to get caught like that. We're not going to get caught. Matter of fact, let's do this here in closing, right? Because we're going to get ready to get out of here. right? We're gonna do this here. Since we getting ready to get out of here, because I gotta go eat dinner. I know you guys. Thank y'all for hanging in this late, tuning in. I'm humbled by. I appreciate it. I can't stress it
you,
enough.
bro.
I know we having fun. But we learning though. At least we learning. We having fun in the process, and we learning. That's what it's all about. What's going over, Chris? Right? We learning, right? But again, that's why this stuff is awesome, right? Because you can have fun and learn. That it makes for you really can retain it, right? So let's run over here real quick and see if we can do this here, all right? All right, let's see if we can do this here. Hi. I mean, I ain't raining on nobody parade, but this is why we study, right? Because you don't want to be what? This guy. This guy. See this guy right here, guys? When people say, I'm going to make you famous, right?
Yeah, him.
Him.
Yeah, that guy's an idiot. Yeah.
What, 11 November the 1st? You got them expired on November the 1st. The Apple had October 26, 27, somewhere around that thing, if I can remember clearly. Because again, that's he bought how many contracts? What that is right there? 300 what? 58? Good. No calls now.
Wow. Come on, man. Dumb kid, man.
Leverage now. Look at him. See right here? He used a leverage. They gave him a leverage 227 puts. 50 puts. 242 puts. I forgot when we have to go pull the actual data. Anyway, we know what it is, right? That earnings, right?
Apple was on a major bull run, right? He did puts.
Right. They were digging into him, right? They were digging into Bears. They were just blowing through Bears' account. That's when they were artificially inflating Apple, right, to save the market, right? That's when Apple became the golden child. On Eddie Murphy, moving the golden child. I need the knife. Well, Apple became that knife that everybody needed to save the equity markets or to keep them inflated, I should say. And then this guy comes along. This guy, right? The contrarian trader that got that leverage and said, I can beat the markets, right? And so you don't want to be this guy. When I'm saying that, you don't want to be so much a contrarian and have a myopic view or become too staunch where you don't understand, again, the risks that are facing you. Again, looking at his position, I don't think he even hedged it. He just went all in on puts. To my knowledge, I have to go pull up the entire trade because some people had all, I don't think he had any calls. No, I don't think he had no calls. Let me not even try to give him any credit. So again, body language, right? So I don't think you mess with me. I don't know. Let's see here. Look at this guy. There you go. So he had no calls. See, there it is. That's the entire position. So I was right. No calls at all. Can y'all see this thing? Can y'all see it?
Yeah.
I hear it. I don't know if you can hear it too. He don't like it, man. He ain't gonna say nothing because he's just looking at it. But look at his face. He's feeling good about himself. He's feeling confident. Right? He's confident. We finna get it. Boy, he's scrolling down. I'm finna get it. Well, I'm finna go buy a Lambo after I get this hit this lick. Apple was traded how much a share at the time? $247 a share, right? Y'all remember? Market opens up. What he said? What? He said what? Good.
Holy shit.
He gagged. He said good. I ain't kicking the man while he down after the fact, but this is a learning lesson. This is a learning lesson, guys. We're here to learn. Matter of fact, I want y'all to hear that. That look good. I'm sorry.
Yeah, you can play it back. Damn kid, man. There's no way he could have analyzed or did any type of analyzation on this chart to determine that Apple was going to go down. There's no way.
Crazy.
He bet the house on it. The house he don't have. Yeah.
That's crazy.
Can y'all hear me?
Yeah.
Testing. 1, 2, 3, testing. Can y'all hear me?
Yeah, we can hear you over.
Okay. All right. So real quick. Test. All right. So again, learning moment. All right. It's a 4-minute video. I'm gonna get off here and go eat dinner. I'm sorry to keep y'all this late. I appreciate y'all hanging out. But this is why we learn. This is why we study. This is why we sacrifice. This is sacrifice. But again, I ain't making light of this guy, making fun of him. But this stuff is learning, because you learn from what? History. History is supposed to be the what? The blueprint. What not to do. Right? For some of y'all think about gambling in the markets and thinking it's a gamble, don't get caught slipping. Learn how to be disciplined. Make money from being disciplined. So this guy, all right, this guy, right here, right, checking the money, right? I'm finna make a lick. I'm finna get that bag today. I'm loaded in put. Look at whoa. Look at how many he had here. 102 sales, 102 put buys, 154 buys. So obviously he had more put buys than he had what the sales was his head, because he did have a little small head. It was small. He had 102. Yeah. He had 256 put buys to the downside and 242 in the bottom. He was trying to buy the bottom of Apple. I was on that put for the retail for the hedge at 230 puts, right? That's what puts for it, right? Again, he will put heavy, makes to the downside. So just putting that in the concept for people to understand, puts and calls and selling puts and all, or just buying and put outright. So roll that beautiful bean footage, bro. Right, you sit in the car, y'all hear you got the car running, right? You hear the car running? Out of that car, because if you hit big, he's gonna probably hit that gas pedal, right? He's gonna probably trash about the parking lot, probably go straight to the bank, or go get us some like the bum stop. He's gonna go hard, bro. I don't paraphrase it, but yeah, y'all know. Hey, let's have a little fun. All right, let's roll that bean footage. Mark, oh, what's up? Drew.
I'm weak.
Yo. She ran down so fast. Oh boy. Yeah, you gotta rewind that, man. He died right there, man. So as it opened up, he died.
I can only imagine.
Yo, man. Oh my goodness.
2 or 3 seconds in, you down 60 racks.
Oh my goodness.
In 2 seconds, 60 racks.
He was feeling good too. Yeah, I got this.
I'm gonna lick.
Ding, 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 ding. 60,000 in the negative. That's tough, boy. He probably wanted to drive the car off the highway then.
Don't be this guy.
Yeah.
$2, $5, $10, $20. Yeah, you may have to lose. Well, why just throw it away just because you have to lose? Don't be this guy. Don't be.
It's like a fucking frog.
Look at the eyes. You don't even want to look at it. Now, this is unreal. Oh, okay, we're gonna come back. Come on, come back, Apple. Deep breath. Hold it in. Because we're gonna come back. Right? All has been there with point, right? It's gonna bounce. Right? You ever tell yourself that? It's gonna bounce.
Yeah.
Right? We all been there. It's gonna reverse. Let me just it's a little longer. Let me just sit a little longer.
Just a little bit.
Just a little bit. And live it turn to what? A lot.
Sure do.
A lot turn to a deluge. a thunderstorm.
Yeah, boy, trust me, I know.
And even then he could have walked with about 14 racks. and live to fight another day. At least to live to fight another day to get back some of that that 40-something racks that he lost.
Right.
So at that point, he was down like 42,000. As you can see here, 42,774. Roll that beam footage.
The market was like, yes. He was like, who's this clown?
Yeah. We coming back. We coming back. We coming back.
Did you see a long, deep phlegm in the throat? That long, deep swallow? That's when you...
Yeah. Yeah.
You know you didn't mess up, don't you? You said you bought
fucked up, right?
8 o'clock, right? You bought that bottle of beer at 8 o'clock, right? You know you didn't mess up, don't you? Sniffling, checking everything down there. Ain't nothing down there, bro. That stuff empty there, bro. That stuff gone.
Yeah, it's gone. It's out of there.
Whoop, whoop. he put the weekly chart. Like that was gonna say he went to the weekly chart. Like, man, like that's gonna save it. He went to the weekly chart. Like, oh, maybe if I hit the weekly tab, that's when you're nervous. You don't know what to do. You're in disbelief. 74 cents all the way to $4.95 with leverage.
Oh my God.
Contracts just, bro. This guy.
He just want to commit suicide.
Right, not to throw him on the bus, but everybody put him on the bus again. But this is a learning lesson, right? So people out there thinking this is a game too. Don't get it twisted. This is our PSA for the night before we rock up out of here. This is our PSA.
Right.
Public service announcement coming to you, courtesy of Mr. Go All In. That's his nickname, Mr. Go All In. Like Mr. Steal Your Girl. You got Mr. Steal Your Girl. You got Mr. Go All In. This is Mr. Go All In right here. Right.
Right.
That's Mr. Go All In right there. Roll that beat.
The new coronavirus was coming.
Right. Yeah, he pulling all that down. Bride and groom, airborne. Yeah, he checking all that down.
I'm weak. Did you see the notification? It says, "Congrats on your new debt."
I definitely say, let's read the notification up there. We swipe that thing down. He's nervous now. He don't know what to do. He's just hitting buttons and scrolling like that's gonna help. Maybe I might have passed. Yeah, right there. Let's scroll. He scroll down. What did I say? Fuzzy who? Fuzzy mumbo chops. That's one of the buttons there. That's the button. That's the button. Buddy hit him up like, bro. I ain't laughing, but God, dog, bro. Congrats on your way. Bro. Congrats on your new dick, bro. Hey, good luck with that baby, right? Good luck with your new wife, bro. Dog, bro.
Nah, he's getting a divorce for sure.
No.
He getting a divorce.
Yeah, nah, he's gonna get rid of that notification really fast.
Y'all notice why he went to the notification because you know he homeboy gonna light him up, right? Somebody gonna light him up. That's why he went. Let's be real. There's somebody gonna light him up. Super one turn said, "What? You control the narrative. This guy has it. What? That's the guy. I guess this guy has it posted in what? Probably like 16 minutes, 16 seconds, whatever it was. They probably already figured it out."
Someone check on him. He hasn't posted in 16 minutes.
I'm gonna have to use that one. Congrats on your new debt.
Hey, real true story. Make it just get right. Right? Make it just get right. Look what he was listening to, guys. That was a motivation music before what he started. It's Paul, right? Because the playboy name. So it's Paul that he was listening to what? Bride and Groom, the airborne toxic event. Somebody might want to pull that song to see how he would pumped up for the bro. Roll that bean footage. Let's go there. He's like, man, let me get out of here, man. I'm just talking trash about me right now. I'm gonna come back. I'm gonna come back. This is gonna be a comeback story. I'm gonna come back. I'm gonna come back. I still got a little money in here. You saw what he did with the eyes? That's just like, hold up, man. Is this thing on? Is this real? He started feeling good about himself. Started feeling good. Hold it back at 10 racks. Look at the eyes like, hold up. What happened? What look good? Like, that's gonna change the thing. Eyes with the blanket boy, just nervous. Oh man, it's getting ugly now. It's getting ugly.
Oh man.
Look at that face. Look at blanket like, man, bro. Moving balls over y'all. People do that before, like that's gonna change the thing. Bro, how you moving that ball over, bro? They ain't gonna change nothing. That ain't gonna change nothing, bro. I don't care how you do all this fidgeting, you ain't still close that position. That's the point I'm really making here, guys. You see how he still tried to double down? This is why you don't double down on a bad position. When you know you got 3 bad ties, you don't buy one good one. That's just not a good investment. Don't double down on garbage. You buy industry, not into no. So again, he didn't even have the audacity to close that position out. Again, whatever. You don't need me to whatever. You see the buying power he had? He messed around and got that leverage, and he taking all that other stuff there like that matters right now. He fidgeting hard, bro. He fidgeting hard, bro. He just taking a whole lot of, I don't know what's going on in his head. I can only imagine. Lights out. Light out. That was that over, Chris. Sorry.
You good? Yeah, boy, that's tough. That's tough right there, boy.
Oh, I'm not laughing at him. I'm tripping on the idea of that actually happening. I mean, I understand. Now, we saying things could happen in terms of something could happen, right? You could have, whatever, I don't know. Again, we just talking about something just anomaly thing happened. Maybe you got diarrhea and you couldn't hit the button. Somebody knocked on your door and it started you at the wrong moment as an emergency. I had to act happen to me, but that kind of loss like that, no. Dude lost $52,000 in a matter of 2 or 3 minutes. Well, 3 or 4 minutes, somewhere around there. Yeah, but said sleepless night every night. Rough stuff, right? Sleepless night. Man, I can only imagine.
Night.
So anybody that's watching right now that's new and thinking just, I'm gonna skip, studying and preparing, and I'm not gonna keep my head level, right? I'm not gonna, get ahead of myself. I'm not gonna play that game, right? You're not gonna play that game look, I don't care if it's $2, $3, $20. It's not worth it.
All right.
Right? It ain't worth it. Right? Again, you want to do it like that, gamble like that. If you got like that, that's fine. But if not, man, you got better odds in Vegas. Because he didn't even hedge it right. He didn't even hedge it right. So again, that's why it's important that we know our limitations. It's important that we know our limitations. And it's okay to stay in the confines of it. And if you take a small loss or even take a mid-level loss, you can live and see another day. You can get it back. But to go to straight zero when you don't have to, unless something really caused it to happen, real emergency, something like that, then by all means, it's just not worth it. I mean, it really isn't. So for us, again, going forward, we're going to be again cognizant of that. We've always been, in our own right, but it's good to hear it sometimes, and it's good to see it. Because when you hear people tell stories like that, or people think you kind of just shooting the breeze, right? They're like, you just talking, right? And then you show them that video right there, right? You show them. Matter of fact, let me get that video. I'm gonna post it because that's gonna y'all need that video there. Not that y'all gonna make that mistake, but just for future references, people need this video here in their life to remind them what not to do. Right? What not to do.
Mm-hmm.
Right? So again, we need not get caught out there trying to play, Again, now had he hit, it'd have been what, bells and whistles and confetti, whatever his drug of choice is. If the old drug, not saying he is, what he'd have free range.
How much do they take out of that if you hit a trade? I don't know how Robinhood works with that.
On the leverage?
Yeah.
You get all the difference of the profit that from the leverage. At the profit value within that is let's say 40 racks. You get that that value of 40 racks along with the leverage is within the margin. It's how did that work? God dog, I forgot. I'm trying to explain it here in detail.
Okay.
It's if the price of it was, if the margin, let's say that thing in this case like 54,000. So I don't know, his leverage was, I think 100,000. I had to go back and look at it. I think he had 100x because they had messed around and gave him like a ridiculous amount of margin. It was by mistake when they came back and said it. Robert even put out a press release on it. That's how serious it was. They even put out a press release.
Yeah.
Yeah. I think it was 100 racks, but so I think he used, man, how much leverage did he use? God, I have to go back and look. But whatever the difference of it is, though, he would have, he would have had the profit of that of the difference. And he would have had that difference. So let's say hypothetically, if he used maybe 50% of it, right, of the 100,000. So that would have gave him what, 50% of it, let's say 50 if he hit like 100,000. So again, roughly about 50 grand, somewhere around it. Just my math might be off, but he would have got the difference of the margin. You know what I'm saying? That was used.
That's close enough.
Yeah, because I remember I had hit licks in Robert when I was trading like that, doing some of the little penny stock moves back in the days. So again, if you put in 1,000, they give you 2,000, right? You put in 2,000, they give you 4 grand, right? 2 for 1. And if they only gave you 75% using that in that stock because it was a risky stock, or they only gave you 50% of the margin allowed it, then whatever that margin value was that they gave you, it was 23% of the margin, 40% of the margin, and that was the base, value in the margin. Everything over that is yours, right? And so, that's how it worked in that point. But yeah, big lesson learned. We take solace in saying that we'll never want to be that guy. Again, not throw salt on him, man. It's over now, though. I'm pretty sure wherever you at in the world, that was a very expensive lesson. It probably, I don't know if he's still trading or not. I don't know him, but again, I need people somewhat in some small circles. I guess they know him, but I don't know.
He probably gonna be trading in Pelican Bay.
Man, he got to pay all that back. I mean, all of that back. He got to pay all that back.
Yeah, you're gonna be paying that back for a few years.
Yeah, because y'all know about the story. The guy that lost his house, he had to give up his house on that. It was K-Toss. Another guy used a whole lot of leverage against that stock. I think it was like K-Toss was a defensive play, and he went all in on it short. All right, and I think it was at that point that stock was like what, $4 a share, $4 or $5 a share. He shorted it, and they dropped some news the next day. It got halted, and it opened up on a massive short squeeze. I think he lost over 100,000 or 400,000, something like that. He had to sell his house. He had to he went into straight debt. Obviously, bankrupt. It was ugly. So those things. And that's what happened when you use margin. That's why they say margin is so dangerous in a moment like this, because guess what? I know we make a lot of it to a degree, but how many people lost their account, like margin accounts, in this coronavirus scenario when people just extra bullish on the market? A lot of margin accounts got blown up. A lot of margin accounts got blown up, and some of them got blown up at a tune where, again, some massive, pretty much close to what Buddy lost right there. Right? Yeah. Because as long as that trade is open, even in a halt scenario, and it opens up lower, when you had these limit down, drop halts, you don't get no do-over. You still owe that money. You know what I'm saying? Wherever it opens up at, and hopefully you sell right after that, you still owe all that money back. You owe all of it. So that's why people like, man, you might want to be in cash right now. You might want to move to cash, because being in margin and being involved to market could be very dangerous, especially if you don't limit your risk. Right, so it's important. So again, that's why we got to make sure we're on top of our games. Right. So if you're gonna use margin, use it respectfully. If you're gonna, again, do other ways to hedge your bets, option. Hey, all right, Sister Monica, have a good night, sis. Peace out, talking to us. Sister Monica going in for the evening. Again, I'm about to follow in a bit and go up here and get a late dinner. But again, it was well worth it. Again, we burned the midnight oil today.
For real.
Yeah.
Thanks for all the help, bro.
Long day, so I'm still checking myself here again. Hope I ain't got no crazy feelings. Y'all know I've been sitting there nervous. I've been pumping water, everything. That post office here, I want to be like Buddy. Had a scoop. You gotta move that Rona. Make a lot of it, but that was a scary mess today. But yeah, guys, so that's it. Again, I don't want to keep you guys no later than that. Again, not like I'm keeping you, but I know we've benefiting off the information where we can. I hope you took something from it, guys. I learned a lot from you guys as always. So it's all in the game. So again, looking at the future here in the back in the day, this is what we got dealing with going into tomorrow. So if you got any open positions out there, as of now, the momentum side, if you got puts, obviously, or shorts, obviously, that momentum is still on your side. Again, gold is down. Gold was up, remember, about $6. Now it's down about $8. So gold still keep getting wrecked. The same way equity markets are getting wrecked. So the correlation between gold and the equity markets is done. It's the market's still out of whack and nutty, because that's supposed to be the hedge against markets. The Dow and SP going up, going down. This should be going up. So we still got this. I don't know what's going on, but I know what's going on. But I don't know how to call it. Gold can't seem to find its footing. So people selling everything. So this is an event, like they were saying, that's probably worse than the 1987 pretty much crisis that we had during that point. What I'm hearing from analysts, they're saying that this probably could be worse, because they can't really get a handle on it at a point where, and that's mostly because they put a lot of self-inflicted aspects and wounds into this, because they overinflated the bubble. But either way, for us, again, we're gonna get through it. We're gonna get through it, and we're gonna make some money in the meantime too, and we're gonna make some money on the outside of it too. Some of these stocks gonna be dirt cheap, and we're gonna time them just right to a degree. Get some of that snapback. I'm gonna try to go live as much as I can. And what I got, brain speak. I'm gonna try to get Dr. D on. Hopefully before the end of the week, if I can, over Chris. Definitely want to hear her, get her over her expertise. So guys, look out for that. Some of you guys might be interested in Forex. got a nice little treat coming for you if we can get Dr. D to come on, let her break that down on the forex market. Then, yeah, you got to get her on. You know, she's a trooper. One of her mentor was a billionaire, obviously, and then she turned around and started training people who were millionaires. So she's been in the fire. She knows exactly how to break down forex market like no one that can. So also try to get Sister Kelly on too to break down options in depth to hear from that sister. So that's the goal. So we'll bring some people on, let them have the floor and get at it.
Later, fam.
All right, so I'm out the door again. Closing remarks again for the troopers that came through, got on the mic this evening. Again, thank you, brother RT, coming through. Thank you, over Chris.
Sir, thank you for having me.
It's been an honor. So you guys get to close us out as we always do over here. So we'll go down the line, ladies first. So Mr. Camille.
Oh,
words.
Popcorn.
It's fine.
Hey, I'm grateful for the opportunity every day to learn and get better at my craft. And do your due diligence and definitely work with your fundamentals and technicals to make your trade happen. And hey, we're here grinding every day, and happy for any and everyone that takes on this craft, and it's well worth it. So I'd like to thank African Emporium, my brother Chris Logic, and the brother RT that came through.
Thank you.
And yeah, man. So I see y'all in the morning.
Mm-hmm. Good. Thank you, sis. RT, you got any last words?
I just appreciate you giving us your wisdom and actually everyone here and your time. I know you do a lot of hard work, and like the fact that you did all this work by yourself and with others, and you're teaching it to us. So I appreciate that. And I appreciate that this environment allows us to make money by ourselves if we put in the dedication and effort. So thank you.
Thanks. Appreciate that. Humbled by that, man. We're going to keep building it. So that's why I love it, man. We got a nice little village. Again, no matter where, where you trade at, meaning, each individual person, Discord, groups, wherever you are, as long as you find it, value in it, stick with it, so it don't have to necessarily be over here. It can be anywhere. But if you find value in it and it's benefiting you, again, stick with it and grow. So you're right. I'm definitely humble for that. And I'm humble, again, from my perspective, to be a great little port or two that we can build from. So thank you. So awesome. So brother Chris, last words, family.
Oh man, shoot. Just keep learning, and I'll keep it short and sweet. Keep learning, and just learn the skill, and do your best to examine everything in the market, and stay green. Power and profit.
Facts.
Right.
Thank you, Over. Thank you. So that's it, guys. So I do appreciate everybody again. Thank you, back chat. Thank you, guys, again, for sticking out through the day, in and out. I know you guys were busy. You got families. You got things going on. Again, one thing for sure, if we are kind of in quarantine, no matter where you are in your neck of the woods, again, the greatest thing in this is that at least we was able to entertain each other for a little bit, kind of get through this evening. So, that's a win-win for us all. We got some knowledge out of it, or at least some different ideas to kind of look at the market. So it's always a win from that perspective, right? Because again, we're utilizing it to put ourselves in a better predicament. We're all searching for financial freedom, period. At the end of the day, point blank, period. We're searching for financial freedom. So this is just one of many vehicles that probably help us get there throughout our endeavors in life. Again, I know it sounds like one of those kind of coach speeches, right? Like we've heard them before, but sometimes you need that kind of, basic, simplistic understanding of what, you got really, ahead of you and inside you to pull out every single day to find that opportunity, right? Because again, we're not doing something that's just pretty much outside of our own wheelhouses. We know enough at this point to be able to execute properly, right? Well, what's left to do after you know enough? Go execute, right? Go do what you know you was trained to do or what you're learning to do, and stay within the confines of what you can do too. Period. Don't go outside your lane. Stay in your lane. Mitigate risks. Understand, the environment that you're trading under, right? So again, basically look at the totality of the entire piece of the puzzle. Don't just look at the one particular puzzle piece and say, man, it's this. No, look at everything. Analyze everything. Leave no stone unturned, right? Period. Make sure you analyze everything. Right. So again, with that said, I'm humble, as I always say. So I say peace, power, profit to the back chat. See you guys again. Hopefully tomorrow I get to go live. That's my goal. If everything kind of works out on my end, I do have a couple smaller errands to run. Hopefully I'm not them out early. So in the event I can come on live and do some live, again, day trading again like we were doing a little bit earlier, especially yesterday. Then we'll do it all over again, and sharing the wisdom of what we can learn from the markets. All right. So with that being said, again, peace, power, profit. Ubuntu, I shade the whole nine. I see you guys again back here tomorrow. All right, guys. Peace, everyone. Good night.
Peace. Good night.
Later.
Peace, family. Peace.